to those mega caps specifically. But look, next year you have the hallmarks of a potentially pretty exciting year. You have the World Cup. You have the U.S.'s 250th anniversary. I'm sure that between up until at least 4th of July, I think that it's going to be kind of a buoyant sort of spending pattern amongst U.S. consumers. The question is, is it concentrated? Will it kind of even out over the year? And I think those are the big questions to kind of think about.
You also have the midterm elections, and we know that midterm election years tend to be high growth years. As with everything else, investors do tend to price in the benefits before they actually filter through the economy. Where is this going to be most apparent? Is it going to be in equities, in treasuries, in the dollar, in commodities?
Yeah, look, I mean, this is interesting because a lot of these sort of views, I think, are largely priced in, to your point. The dollar was weak this year, but most of the weakness came at the beginning of the year, and we've been basically going sideways. The movement in precious metals has been off the charts. Stocks, continue to grind higher. Now, if a lot of that was capturing the news of both the Fed pivoting towards more easier policy, a lot of that's kind of baked in the cake. And so the question is, what's the follow through? I think that it's going to be hard to meet some of these expectations.
Last time you were on, it was in early November. You were on with John and Lisa, and you were talking about the market internally starting to look exhausted and ripe, at least for correction. But here we are, December 26th, and we had on Wednesday before Christmas a 39th record high when it comes to equities. Do you think we could see a meaningful recalibration in equities in 2026?
Look, in between, nothing's linear. We did have a minor correction or a minor pullback, I should say, in November before Thanksgiving. And then since then, it's been off to the races. Very typical of the end of the year type rally. Also very typical of a low vol environment. We have had, the VIX very low, rate volatility declining. All of this has kind of engendered further risk taking. We do think that, there's going to be a meaningful correction at some point over the course of 2026.
When it comes to how you're thinking about the Federal Reserve, you say a lot of this is baked in. When you say baked in, do you mean one more rate cut or two more rate cuts?
Look, so the market has about 1.5 to 2 cuts basically in the back of their mind, priced in into the forward curve. It's actually visible. We think it's all about the sequencing. It depends on what takes place, who's pulling the actual rate cuts forward. Is it going to be under Chair Powell's kind of last few meetings? We think maybe one more cut under the current sort of Fed. And then in the future, we don't know. I know there's been a lot of questions about Fed independence and will the Fed cut for the right reasons or for other motives. Either way, we think that the Fed's going to probably cut further than what's priced into the market. But if they cut for more than 2 times, I think something has changed in the macro sense. So if the Fed's cutting more than twice next year, something's kind of weakened in the economy that justifies it.
Yeah, your view is that the Fed will cut rates 3 to 4 times in 2026. And of course, it is expectations of lower rates that's helping to support those commodity prices, gold and silver prices in particular. What is different, George, about gold's run this time versus, say, in October when it peaked at about 43.81? And a lot of people saw that run up as overheated.
Look, I think the whole year precious metal move is something that is very telling of there's a view around the commodity needs for sort of the new technology and the new economy that's evolving. But I think it's also a referendum on sort of Fed policy. The Fed did go from basically not wanting to cut, pivoting towards cutting, stopping QT, and then introducing a version of not QE but reserve management, which is going to add a lot of liquidity into the banking system. So I think the precious metals definitely picked up on that way earlier than other markets.
Yeah, you could also argue the precious metals are part of that debasement trade, too, where people are straying away from the dollar and treasuries and moving to precious metals and indeed Bitcoin as well, although we haven't seen crypto really participate in this leg of the rise in gold and silver. How do you fit Bitcoin and what's happening in that speculative part of the market into your overall thinking?
Look, so obviously I look at crypto or these sort of alternative assets more from the lens of macro and what it's telling us about liquidity more in general and the preferences amongst liquidity. The fact that it's going into kind of harder, more of the older sort of precious metals versus the new age version of digital gold, I think it's telling you something that there's a preference to more safety versus what is still unproven sort of technology of how long it's going to last and what's the true valuation of Bitcoin. It's not something that's in my wheelhouse, but in general, it's telling you from a macro sense that there's a preference for kind of the more traditional forms of alternative assets.
We've seen the entire commodity space, though, lift higher. Copper has been on an absolute tear as well. When it comes to the concerns in the commodity space, the physical commodities that are used across supply chains like silver and copper, there's some concern that potentially we'll get more tariffs in 2026. How are you thinking about trade policy, given there's some key dates coming up when it comes to this administration and some of the trade policies they've enacted in 2025?
Obviously we're still waiting on a number of sort of key information, but we do know that tariffs obviously are a key sort of platform agenda item that's not going to go away. So there's a baseline of expectations around tariffs, and then the question is, do we get more sectorial tariffs, as you're alluding to? We do think that this full impact of tariffs is not just an inflationary sort of phenomenon, and maybe it's to run its course there. We don't know. But I think it's more about the sort of impacts and indecision that it does on planning, especially around the sort of input items like commodities. So I do think that trade policy will have an impact on that side of things as well.
Does it complicate potentially corporations and whether or not they are going to and when they may pass on more of these costs to consumers?
Well, look, I think that what we've noticed thus far is just a sort of hesitancy to kind of pass through fully the tariff effect, and profit margins have been kind of absorbing some of that. I think there will come a time, and I think we're getting close to that point, where companies will not be as generous in absorbing these sort of profit costs, and they're going to try to pass it on to the consumers. Now, if it's towards the industrial sort of mid-production, business to business sort of inputs that they're assessing and seeing if they can negotiate with their partners, maybe they can pass on some of it. But if it's to the U.S. consumer outright, I think that they're going to have a challenge to do so, and it's going to eventually have to hit their margins.
George, thanks so much for joining us this morning. Hope you had a lovely Christmas. George Goncalves of MUFG. So, since he mentioned World Cup, or you mentioned World Cup to him, I was totally distracted on StubHub and Ticketmaster because I've been tracking these tickets, and still to see the final could cost you anywhere between $12,000 to $90,000,
depending on who plays. Yeah,
a ticket. Who's buying these, please? So. You got me a little depressed this morning, because I thought maybe at some point I'd be able to go for the final match.
You have to have already, put a bid in for that at this point.
Yeah, definitely. All right, let's get you an update on stories we're watching elsewhere this morning. Here's your Bloomberg Brief with Yahira Anand. Hey, Yahira.
Hi, Anne-Marie. The U.S. launched a military airstrike against ISIS targets in Nigeria. President Donald Trump saying he ordered the precision hits at the request of the Nigerian government, which has been struggling to contain increasing levels of terrorist attacks in parts of the country. Defense Secretary Pete Hegseth warning more strikes are coming if the group continues to target innocent civilians. Meanwhile, holiday travel is hitting a major wall with a winter storm expected to descend on the tri-state area. Over 400 flights have already been canceled at JFK, LaGuardia, and Newark. Forecasters are expecting up to 8 inches of snow from Friday afternoon through Saturday, and New York City is issuing a travel advisory for the duration of the storm. And Tesla facing renewed scrutiny over its door handles. The National Highway Traffic Safety Administration said it's evaluating claims that the mechanical door release is, quote, hidden, unlabeled, and not intuitive to locate during an emergency. The move expanding the federal examination of Tesla's doors following an investigation by Bloomberg. That's your Bloomberg Brief. Anne-Marie?
My problem is sometimes I just can't find the door handles. All right, that's for another conversation. Up next, Ukrainian President Zelensky saying he will meet with President Trump soon as Kyiv and Washington look to align on a peace plan. Ed Mills of Raymond James joins us next for that conversation, a whole lot more. You're watching Bloomberg Surveillance. Good morning. Welcome to Bloomberg Surveillance. It is the day after Christmas. Hope you had a lovely holiday, however you were celebrating, preparing from the tri-state area for potentially up to 8 inches of snow. Where we are trading this morning is obviously very thin volumes. We did have, though, another record high in the S&P 500 on Wednesday. In the shortened trading day, S&P 500 futures are unchanged this morning. 39th record high we had on Wednesday. 10-year yield up about 2 basis points, 4.14%. Silver, oil, gold, copper, the entire commodity complex has been moving higher. Silver $74. At one point, it passed $75. Scarlett and I have been talking about this the entire week. There's geopolitics at play, there's central banks buying, and also there's just the fact that things like silver and copper are actually used in the physical world.
Yeah, absolutely. So there's a lot of demand. There's a question about supply, especially when it comes to copper with some outages across mines. But in addition, you've got the weak dollar. And so when you have a weak dollar, the knee-jerk reaction is higher commodity prices. And we've seen the U.S. dollar, at least as measured by the Bloomberg Dollar Index, down about 8% this year.
Yeah, absolutely. It's been on a downward trend and potentially going to go lower next year. Under surveillance this morning, Ukrainian President Volodymyr Zelensky saying he plans to meet with Trump in the coming days. Zelensky signaling a lot could be decided before the new year after a Christmas Day sit-down with U.S. envoys Steve Witkoff and Jared Kushner. Ed Mills of Raymond James joins us now. So, Ed, you do have Zelensky looking like he's going to be going over to Florida, Mar-a-Lago, where the president will be for the remainder of the Christmas, New Year holiday. Do you think potentially we could get a deal before 2026?
Anne-Marie, it's possible. I think that there is probably more to work out on the Russian side. I think Zelensky is trying to find what he can get with the American contingent here, because I think he wants to put pressure on Putin. Right now, the 20-point plan that Zelensky and the Americans have agreed to is probably unacceptable to Putin. This here is trying to reverse some of the pressure that has come onto him in the recent months, especially that kind of pre-Thanksgiving deadline that the Trump administration had put on him. So I'd say there's going to be progress, but I don't think people are really expecting that what Zelensky and Trump work out will be acceptable to Putin, at least in the near term. We probably need at least one more round of this before things get settled.
Well, as you were speaking, Dmitry Peskov is speaking right now, and he's saying Russia has analyzed the information on the peace plans, according to the TASS news agency. You have Yuri Ushakov. They're saying that contacted U.S. representatives. He's been one of the main negotiators, senior Russian diplomat at the table. And the Kremlin saying it has contacted the U.S. on Ukraine peace plan. Do you think Putin is just playing for time, or do you think they are serious about getting to an agreement?
I think that they are open to an agreement. I think that they are really going to be looking at these territorial concessions. And I think this is really what it comes down to, Anne-Marie, because what is the future of the Donbass region? How much does Ukraine have to fully kind of acknowledge that Russia has kind of certain parts of this territory? How much of it is a demilitarized zone? How much does Ukraine get to control this? How much does Russia get to control this? I think that's the critical issue. The second issue is, even if you kind of create a demilitarized zone, what are the security guarantees? I think that Zelensky and Ukraine are willing to give up more of that territory, at least as a demilitarized zone, if they get those kind of security guarantees. But if there's not the security guarantees, they're not willing to do that. And I do think that Putin is not going to be okay with the security guarantees that Zelensky wants, and are probably not going to be okay with the demilitarized zone. They want more territorial concessions, I think, than what the U.S. and Ukraine are willing to give at this point.
So these are all pretty familiar sticking points, things that have really locked both sides into their respective positions for months now. Ed, what about Europe? Anne-Marie was mentioning earlier, Europe is kind of missing in all of this. And if Zelensky goes to Mar-a-Lago on Sunday, does Europe play any role in this?
They could. I think what we've seen, Scarlett, is that Europe has played a bit of a backstop to these negotiations if they seem as if they are going too far towards Russia, if they are seen as going kind of too aggressive towards Ukraine. There are kind of key constituencies within Europe that step up. I do think what we're going to see, if we do have a demilitarized zone, how much do NATO or European forces, I would lean more towards European forces, so it's not seen as a specific NATO operation, could be part of that security guarantee in that area. But they just want to make sure that Ukraine is not on the wrong end of any of these negotiations. So they stay out for now, but if it goes in the wrong direction, they step up that diplomatic pressure on the U.S. envoy.
Okay, and of course, we are anticipating a visit between Zelensky and Trump in the coming days, according to Volodymyr Zelensky. I also want to get your take on what happened over the holiday, which is the U.S. launching Christmas Day military strikes in Nigeria against some ISIS targets. And of course, we had known that in November, the president threatened possible military action if the government did not halt the killing of Christians. Talk a little bit about why now and whether this is a one-time action or this is the start of something more sustained.
Yeah, so President Trump has said this is at the request of the government. He does view kind of the defeat of ISIS during his first term as his signature geopolitical kind of military achievement of that first term. To the extent that he is going to have requests and it is against ISIS, I don't think that there's anything that he would hold back trying to go after that group. So I do think at this point, I think you would consider this as contained. But if there are other needs, he's absolutely willing to do this. It is unusual to have strikes under the Trump administration. He so far has been fairly limited in how aggressive he wants to be with some of that proactive military use. So that was keep me more in that contained camp versus this is the start of something new.
Well, at the same time, Ed, he did promise on the campaign trail to not entangle the United States in any more foreign conflicts. Is this going to be a problem with his base when it comes to the midterm elections?
I think as long as it's specific, it's targeted. I think it is kind of couched in we cannot let ISIS kind of reconstitute or kind of get stronger in any sort of fashion, Anne-Marie. And also the fact that he would probably kind of couch this in the targeting of Christians, something that from a political perspective is in a pretty decent standing. That's why I did say that I think this is probably more contained than a start of something new. Something that he has done quite well with his base is trying to maintain that contained military conflict. And he has kind of ticked off more of the items that he has negotiated. Peace between kind of Israel and kind of the conflict in Gaza. Other kind of areas where he's working on with kind of Thailand, Cambodia. He has his whole list of things that he has stopped globally. So containment is the base case here, but he also always wants to project U.S. strength. And so he's not going to be shy if he's requested and it is needed.
What's going on with U.S. strength in Venezuela? It's been 6 days that the U.S. continuously is trying to pursue this sanctioned oil tanker that's linked to Venezuela. Do you see as the administration just trying to control the sanctioned oil, or do you think this is part of a bigger regime change?
Yeah, Emery, what I've told clients at Raymond James is this is part of a reestablishment by the Trump administration of the Monroe Doctrine. I do think that we are looking at kind of North and South America as America's sphere of influence. I also think this is a bit of a shot across the bow and a warning sign to Mexico. And to the extent that the drug cartels are the kind of underlying issue here, I think that this is a warning to Mexico, where he has already labeled the drug cartels in Mexico as terrorist organizations. If President Sheinbaum does not get that under control, he's willing to take additional action. I think the big debate that I've had with clients at Raymond James is that to the extent that we are reestablishing our sphere of influence, is that going to make it harder for us to push back as Putin wants that more territorial concern and what his former sphere of influence is? Is it going to be harder to push back against Xi if he gets more aggressive against Taiwan? So in the near term, that's a projection of strength by this administration, but it could have significant unintended consequences on the geopolitical stage.
Ed, as we wrap up our conversation here, you talked about your clients and the debates that you're having with them. What is the single most important geopolitical meeting you see in 2026 for the president that he needs to resolve?
Oh, 100% it's going to be Trump and Xi. This is the number one and number two economy in the world. The surprise for me in 2025 was how good we are with the relationship with China. If that continues, that's a very bullish signal for the stock market in 2026. If there's volatility, if that falls apart, that's a big warning sign. So tracking China, tracking Trump and Xi, probably from a Raymond James perspective, is the most important thing for 2026.
Ed, thanks so much. We look forward to continuing the conversation next year. That was Ed Mills of Raymond James. Under surveillance coming up next, behind the scenes at Nike. Good morning. Welcome to Bloomberg Surveillance. I'm Anne-Marie Herder, and alongside Scarlett Fu this morning, Jonathan Ferro is still on paternity leave, and Lisa Abramovitz is off this week, but she'll be back with you next week. And then the whole gang will be back together for the new year in 2026. We're 3 hours away from the cash open. Let's take a look at what stocks are trading in the futures market this morning. Relatively flat and unchanged. Nothing's really going on, Scarlett. We are in the midst of the Santa Claus rally. We had a 39 record high on Wednesday. Potentially today we're going to go for 40th. But this is that lull in financial markets that happen right now between Christmas and New Year's. Everyone kind of goes home. They recalibrate. Lots more action happening in the geopolitical space, which is moving commodities. And then the VIX. You wanted to talk about this.
I wanted to talk about the VIX because even as we see the Santa Claus rally in effect right now with a 5-day winning streak for the S&P Dow and NASDAQ, the VIX actually ended Christmas Eve below 13.5. That is the lowest point of this year. But you look at how it's performed over the past 3 months. It averaged just below 18. And of course, the high point for the VIX, that is, was about 52 on April 8th in the aftermath of the Liberation Day tariff announcement and then the pulling back of that.
I have thought of the whole year as pre-Liberation Day, post-Liberation Day. In my mind, when it comes to reporting on politics, I was with the president when he was coming back from Air Force One. He didn't like my question about the Trump put. And then a few days later, the bond market got a little bit yippy and reversed course. But how much financial markets quickly took Liberation Day as that was Bible. And then once Trump recalibrated, that was it. It was off to the races.
And then that idea of the taco trade, right, that the president will always recalibrate given how the bond market reacts. And if the bond market has a tantrum, then they're going to start pulling back on some of the things that they announce.
It's been one of the checks on his policies in terms of something he pays attention to. The first term, many said, is the stock market. That's what Jonathan always said. Second term, it looks like he's paying more attention to treasuries.
The 10-year yield in particular.
Yes, 10-year yield, which today isn't really doing that much. 3 hours away from the cash open. Let's get your morning movers with Yahira. Hey, Yahira.
Hi, Anne-Marie. The surge in precious metals is spilling over into mining stocks. We are seeing shares of Freeport-McMoRan up 3%, Southern Copper up 2.5% as gold, silver, and platinum all reach record highs on the same story, a weaker dollar and expectations for Fed rate cuts, as you've been saying all morning. Meanwhile, moving on to Micron, if we hold at these levels, Micron will open at a fresh record high. The stock is up 1.7% in the pre-market, but it comes after a roughly 230% run this year, fueled by strong demand for its memory chips used in everything from computers to AI servers. And we end on Biohaven. This stock is absolutely plunging in the pre-market, down nearly 14% now after one of their experimental drugs to treat depression failed to meet its goals in a mid-stage study. Analysts are saying that it's disappointing, but not all that surprising given the complexity in these types of clinical trials for depression. Even so, amid thin trading, we are seeing that amplified move, as we can see. Anne-Marie?
Thanks so much, Yahira. On our radar this morning, Ukraine's President Volodymyr Zelensky saying he plans to meet President Trump in the coming days to iron out details over a potential peace deal. Reports from Ukraine saying Zelensky is expected to travel to meet Trump in Florida as soon as Sunday. At the same time, Scarlett, we are getting some information from Interfax via the Kremlin, and they say at the direction of President Putin, contact took place between representatives of Russian and U.S. administrations, but I don't see Russia moving just yet towards really coming to the table for a trilateral deal.
And I think this is something you touched on in our conversation with Ed Mills of Raymond James, that there doesn't appear to be much urgency on the part of Russia. They can afford to take their time and be patient and wait out the clock, run out the clock, and see what happens. Of course, from Ukraine's side, there's a lot of urgency to get moving, which is why we see Zelensky talking about meeting up with President Trump in the coming days. But Russia can kind of sit back and wait to see how it all plays out before responding one step at a time.
This is something we'll be watching over the weekend and potentially a big story next week as we head into New Year's Eve. Elsewhere, U.S. forces striking Islamic State targets in Nigeria in collaboration with the country's government. U.S. Africa Command saying the strikes came at the request of Nigerian authorities and killed multiple terrorists, with Defense Secretary Pete Hegseth saying there could be, quote, more to come. And precious metals, as Scarlett and I have been talking about all week, really, continuing their surge after notching new all-time highs. Gold, silver, and platinum all jumping to new records on the heels of central bank purchases, U.S. dollar weakness, and this morning, really, the geopolitical tensions we've been discussing.
And I'm not sure that there's anything that will change that in the near term. Certainly the next couple of days, this will continue to be the theme.
And when it comes to gold, it's been up 100 70% this year.
Yeah.
Silver, 150%. The best year since 1979. And when you look at gold, people are talking about 5,000 next year. We're already at 4,500. So you have to think potentially some people are going to have to look at year end 2026 and maybe actually increase that target.
There's going to be a lot of demand in the new year as well, because you have Lunar New Year, and that's when gold tends to outperform as well. And then the wedding season in India also places a lot of demand for physical gold.
Very good point. As we shed the year of the snake and we go into the year of the horse.
Ooh, you're on top of that.
I'm
nice.
looking forward to this in February. All right, turning to retail. Shares of Nike are down more than 20% this year. CEO Elliott Hill has been facing an uphill battle trying to turn around the company he previously retired from in 2020. Bloomberg's Romain Bostic takes us on a behind-the-scenes look at their turnaround plans.
In the heart of Western Oregon lies a 750,000 square foot plus complex. So secret, few are allowed past the lobby.
If you love sports and you love product, this is kind of Disneyland.
Hundreds of motion picture cameras surrounding an indoor soccer pitch. Speed sensors encircling an Olympic racetrack. Electronic pressure plates embedded in a basketball court. Biometric hookups to assess a runner's gait and posture. A hermetically sealed room that mimics the brutal heat and humidity of a Tokyo summer. All told, more than 800 pieces of testing equipment under the roof of the LeBron James Innovation Center, home to the Nike Sport Research Lab. An evolution from the company's experimental kitchen counter roots and a nod to its future of putting the athlete first.
This is our Nike Sports Research Lab in our Innovation Center, and this is the home to dreamers, creators, makers, engineers, some incredible teammates of ours who are all dreaming about serving elite athlete problems.
Yeah, what Nike as a brand is founded on, really at the core of our history and heritage, is listening to the voice of the athlete, right? Phil's point, we're in this amazing building where we have dreamers building the future and work with not only elite athletes, but the everyday athlete to take those insights and understanding and build not only for the elite, what you've seen being here today, but then are able to translate those innovations through every price point.
Amy Montaigne is the new president of the Nike brand. Phil McCartney is the new chief innovation, design, and product officer, overseeing ideas across the company's 3 units, Nike, Jordan, and Converse. They are 2 of the key players in CEO Elliott Hill's full court press to reinvigorate growth following former CEO John Donahoe's reign. Under Donahoe, it was a tenure that saw annual sales begin to drop in 2024 as demand waned for the brand's lifestyle sneakers like the Nike Dunks, and as relationships with retail partners soured. Elliott Hill is now trying to plug the hole with a refocus on athletic performance.
We're going to obsess sports. I think that's been, since Elliott returned, that's been a key part of our charge as a leadership team. And we're already starting to see the fruits. You know, we spend a huge amount of time bringing athletes here. We text with Faith Kipyegon, Elliott Kipchoge, LeBron James. We bring them to our home and then we go to their homes. So the origination for ideas is always the athlete. That's at the core of everything we do. And then we start to think about how do we apply those insights broadly to the 8 billion people who we're trying to invite into sport every single day.
So when it does actually go to market, are you going to target it towards the athlete, or are you going to try to maybe just target it towards the casual wearer?
Everything that we do and the focus on performance is listening to the elite athlete and capturing that data and information to help lead this amazing innovation. So we will for sure be connecting this story exactly to our athletes, which or who helped give us those insights, who we tested with, and that will be how we determine how we tell that story going forward. So it's very much about the insights from the athletes, the data we captured, the innovation we're delivering, and helping communicate that to consumers all over the world.
The reason that we start with elite athletes is when we solve those discerning problems, those milliseconds, micro millimeters, we can create products that then translate down for athletes every day all over the world.
Speaking of the everyday athlete, I put on my running shoes and geared up for an afternoon under the microscope of some of Nike's best researchers for a head-to-toe consultation. I even got a glimpse into the retailer's future with Project Amplify, a footwear system with lightweight motors and rechargeable cuff batteries that aims to help you move faster with less effort. Nike's Chief Science Officer, Matt Nurse, providing some words of encouragement along the way.
So we have an expression, if you have a body, you're an athlete.
Yeah.
And a lot of what we learn from elite athletes does trickle down and help everybody, but a lot of what we learn from everyday athletes does trickle up. There's plenty of opportunities where technology, we have to sort of burn the candle from both ends and figure out where the best opportunity is.
The ethos of the company, and particularly since Elliott has taken over, is put more a focus back on the athlete. I mean, what's the difference now between what you're doing in this building and say what Bowerman was doing, decades ago and, whatever shack he was working out of?
Honestly, today it's just a more modern, sophisticated incarnation of what Bill Bowerman was doing in his lab. This notion of having an idea on how you might improve an athlete performance or protection, actually building it, Bill Bowerman pouring into a waffle iron, modifying a shoe. That's what this building is designed to do, but allow more sports, more athletes, full speed, full motion, but we're solving the same problems, doing the same thing.
A little different this time around. Mounting pressure in the running space, under threat by competitors like On and Hoka. Do you worry at all about some of the recent upstarts that have come into this space, particularly on the performance side, Hoka, On Running, Norda, etc.?
But we have 3 incredible brands here at the company. We have Converse, we have Jordan, and we have Nike. So I think a lot of the work that we're doing in this new multi-brand offense that we're in is making sure that we intentionally shape the 3 amazing brands that we have. That allows us to, at certain times, come together to go after an opportunity in the market, but also to be more specific about what each brand represents and the growth potential of each. I think when we think about that, I think it's fair to say that the distance between ourselves and our potential is a little bigger than the distance between ourselves and our competition.
And we look at innovation not just in product, like Phil's talked about, but how we tell our stories and how we deliver experiences in the marketplace for consumers. And when you think of some of maybe our latest, most innovative marketing concepts, I think back to the last Super Bowl, a male sport at a really important time around the world. And we told the story of So Win through our female athletes, right? We listened to their voice. We're deeply connected to where they were at that moment. And we're able to tell the story of the support of those athletes and what they are doing in the world of sport today. So I think that's one amazing example of we continue to innovate by listening to them where they are, where the world of sport is and sport culture, and then are able to deliver something like So Win.
Amy, I'll give you the last answer here, and this is really on what you want the Nike brand to be, beyond what it already is today.
What I believe and want for the Nike brand is for us to always remember our roots and to honor our founder, to really come in every single day obsessed with serving the athlete, listening to their needs, not only meeting their expectations, but taking them somewhere new. And when we do that, there is all the opportunity in the world for our future.
That was Romain Bostic taking us behind the scenes at Nike Sports Research Lab. Let's get you an update on stories elsewhere this morning. Yahira's back with your brief. Hey, Yahira.
Hi, Anne-Marie. The U.S. launched a military airstrike against ISIS targets in Nigeria. President Donald Trump saying he ordered the precision hits at the request of the Nigerian government, which has been struggling to contain increasing levels of terrorist attacks in parts of the country. Defense Secretary Pete Hegseth warning more strikes are coming if the group continues to target innocent civilians. Meanwhile, coastal communities in Southern California are bracing for more rain and flash floods, with a state of emergency still in place for Los Angeles and neighboring counties. The historic storm pummeled the region over the holiday, leading to road closures, flooded freeways, as you can see, and evacuations. According to the Los Angeles Times, at least 3 people have now died as a result of the storm. And Google rolling out a new feature allowing users to replace their existing Gmail addresses with a new one while retaining all their data and services. The updated guidance on email address changes only appears on the Hindi version of Google for now, but it says it will gradually roll it out to other users, to all users. That's your Bloomberg Brief, Anne-Marie.
Yahira, there are 2 types of people in this world. The people who just let everything start building up in their Gmails. Right now, I'm looking at mine. I have 180,485 emails. What person are you, Scarlett?
I tend to have a lot. I won't say that they're like in the triple digits necessarily, but I have a lot.
Well, I just don't open them and then I just don't delete them. I just let it all build up. I'm not reading, obviously, all of these. All right, up next, a historic rally for commodities.
We see commodities as a way to have an inflation hedge within portfolios, and they work really well when they work well, and they don't work so well a good portion of the time. I think the question is, how much can it continue?
Nadia Martin-Wiggin of Svedlin Capital joins us next. You're watching Bloomberg Surveillance. Under surveillance this morning, a historic rally for commodities.
We see commodities as a way to have an inflation hedge within portfolios, and they work really well when they work well, and they don't work so well a good portion of the time. So certainly we've been in an environment where that has been a very powerful uptrend for a lot of these commodities. I think the question is, how much can it continue?
Here's the latest. Gold and silver jumping to all-time highs as escalating geopolitical tensions boost the historic rally. Bloomberg's Tatiana Daria joins us now. Tatiana, let's end with the question we heard from Cameron Dawson earlier this week. I think the question is, how much can it continue? Can this rally continue?
Well, we have to ask ourselves if the macro conditions and sort of the catalysts that are playing into this rally will continue, and consensus think that they will. For example, the structural bid from central banks, that is expected to persist for years to come as they want to diversify away from dollar assets into gold. And if you look at geopolitical fractions, we keep seeing more of that, right? You have Venezuela, you keep an eye on that one because you cannot rule the risk of boots on the ground there. You see more militancy escalating now in Nigeria. So geopolitics is reviving that premium yet again. But beyond that, you also have concern about Fed independence going into next year. Let's not forget about the Supreme Court tariff decision, which could really upend bonds and rekindle that risk premium if fiscal concerns return, if the administration is forced to issue refunds. So a lot of the catalysts are in place. And if you look at the white metals, they've just recently been added to the critical minerals list, which opens the threat of tariffs going into next year. So these are sort of the big tailwinds that the market has. But of course, we cannot discount the risk of reacceleration in the economy with the Trump administration pushing that tax bill and those provisions kicking in into the next year.
And a reacceleration in the economy would be good news for the industrial metals like platinum, like silver, like copper as well. How are you thinking about the demand that's coming in from ETFs? Because that was a big driver, at least for gold.
Yeah, exactly. For gold, and now they've actually spiked for the rest. So what is being less appreciated or less talked about is that the ETF crowd has also piled in on this trade. And in gold's specific case, ETFs have actually bought more than central banks by some estimates. I only say that because we don't have full visibility into the central bank action. But if you look at the data that we have available, those ETF buyers have bought more than central banks, and they've returned to this market for the first time in the last 5 years. So if you look at the history, that's poised to continue. That's poised to offer another tailwind. But it also leaves this market at risk of just severe crashes when it all reverses, right? ETF buyers and just retail traders can get easily scared by an unwind in this trade. So if you play that trade, you have to be aware that there could be some outsized move on the downside, as we've already seen on Wednesday. I mean, palladium crashed more than 4 standard deviations. That will stress your risk management.
Tatiana, you're going to be very busy, I imagine, heading into 2026. Thank you so much for joining us today. That was Bloomberg's Tatiana Daria. Turning now to crude, keeping it in the commodity space, oil headed for its biggest weekly gain since October. Nadia Martin-Wiggin of Svenlin Capital writing, the market was increasingly preparing for prices in the 50s before these Russian sanctions and increased political risk in Venezuela short term, while the pain threshold for Trump is likely in the 70s. Nadia joins us now. Nadia, there's 3 big geopolitical stories with 3 big producers, Venezuela, Nigeria overnight, as well as Russia. How do you see this all seeping into the oil market?
Thank you. So number one is the concern on the shipping side, because the IEA, all the forecasters have been saying that we've been building supply versus demand into Q4. And even by Svenlin Capital's analysis, we expect those builds to be at around 1.2 million barrels per day, up to 1.5 million barrels per day in the first quarter, while we have extremely high levels of oil on the water. Why is that? Well, we're having a delivery problem. Number one, Russia is struggling to deliver oil into China. There have been sanctions put against individual ports by the U.S. that are being enforced in China. Then we have India again pulling away from buying this Russian crude. When initially we had the Rosneft sanctions and Lukoil sanctions announced, they pulled back, they bought a lot of crude oil, and then they actually reoffered it and started buying Russian oil again under the headline of other barrels. We now saw in the physical market in the last week that they are again buying up other producers' barrels because they're worried about the US. We then have the Venezuela side, and that blockade is meaning that Venezuela is unable to export their 1 million barrels per day of crude that they've been exporting. And they're also unable to import naphtha, which they import from Russia, for example, to make that Venezuelan crude liquid enough to load onto a tanker. So this military blockade that's the Trump administration is focusing on rather than strikes is affecting that physical market on the water coming out of Venezuela. Finally, on the Nigeria side, it just reminds the market that there are geopolitical tensions. Right now, there have been no reported outages in Nigerian production. Nigerian production is around 1.2 million barrels per day, but it raises the risks, of course.
Thank you for that, Nadia. So tell us a little bit about gold, because you have something in your note that really caught my attention. We're just talking with Tatiana, who's talking about central bank buying being a source of strength for demand for gold and also ETFs as well. But you talk about Tether and how there's a connection between Tether and the rallying gold.
Yes, so this is where when we think of that crypto world, it's not only looking at the dollar anymore. They're launching gold-backed coins. And this is where Tether, we know in the third quarter, bought around 35% more physical gold than we had the largest buyer, which was the Kazakhstani central bank. So this is when we start to look at that demand side. The new player in town is on the crypto side, and they have an understanding that it needs to be backed. And we have U.S. Treasuries, and then they're behaving like the Chinese central bank that is not only holding U.S. Treasuries, it's also holding physical gold in their vaults.
When it comes to physical gold, are you going to potentially up your price target for year-end next year, given the historic rally we've seen this year?
Yes, our near-term target is around $4,800 because
You're close.
Of the momentum. I know. We're getting there. I just in terms of the momentum, because what we've seen in the part of the Chinese central bank in particular is once we hit these all-time highs and a lot of momentum, for a couple of months, then they pull back for a couple months. And this is where Poland was the largest buyer, and then they kind of pulled back, and then they came back into the market in November. We'll see where they were in December. But this is where, they have a structured buying program that they can affect on that part. When it comes to the crypto side and Tether, we just think that they will continue buying because comparatively, they have a lot of bandwidth in terms of what they need to build up. When we think about central bank holdings and the Bank of England, they have 660 million tons of gold. The Kazakhstan central bank bought 16 tons, not million tons, 16 tons of gold in the last quarter.
Nadia, thanks so much for your time this morning. Nadia Martin-Wiggin of Svenlin Capital. And of course, earlier joining us, Tatiana, to discuss her outlook on what's going on in terms of the metals. We have another hour prepared for you. Coming up on the program, we're going to be hearing part of our conversation Ed Ludlow had with Jensen Huang, Sarah Kunst of Clio Capital, Eric Kane of Bloomberg Intelligence, plus Aaron McLaughlin of the Conference Board. You're watching Bloomberg Surveillance.
Thanks to AI, Samsung's photo editor is much more powerful.
Generative Edit lets user reimagine surroundings, lighting, texture, and even the perspective.
The best idea comes when we think from the user point of view, not from the engineers.
Our goal was to create a powerful AI tool that lets users express their creativity safely and effortlessly.
It's always exciting.
The crowding into those mega cap names has led to crowding out of many other high quality blue chip names.
Balanced portfolios make a lot of sense heading into 2026.
It could be in an environment where we're still able to carve out new highs.
Earnings are going to be what drives stock prices.
We want to make sure we're managing risk well.
next year.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Good morning, 7 o'clock in New York. Welcome to Bloomberg Surveillance. I'm Anna-Marie Hordern alongside Scarlett Fu this morning. Jonathan still on paternity leave. Lisa is off. We are having a quiet morning on Wall Street, at least that is. It is not so quiet in the world of geopolitics. Last night, the United States launched a military strike in Nigeria against ISIS targets. The administration is also still in pursuit of a Venezuelan-linked oil tanker. They've been in pursuit of that tanker since Sunday. And Ukrainian President Volodymyr Zelensky says he plans to meet Trump in the coming days. Scarlett, this meeting could be as soon as Sunday.
As soon as Sunday, and of course, Ukraine has more incentive to get this done quickly, whereas Russia can afford to sit back on its heels and wait it out. And indeed, that's kind of been what's been happening for the last couple of weeks and months. You mentioned the strike that the U.S. Did on Nigeria, northwestern Nigeria. And of course, this is the latest U.S. military campaign against a non-state adversary because last week, as you know, the U.S. launched a large-scale airstrike on more than 70 targets across Syria in response to deadly attacks on U.S. forces.
And all of this at the same time as they are still in pursuit of Venezuelan-linked sanctioned oil tankers. I believe this one was coming from Iran. They have not been able to get this tanker just yet. They still are in pursuit of it. They've been in pursuit since Sunday. And what's interesting is all these stories are moving one part of the market, and that's in the commodity space. Mm-hmm. Potentially, individuals are going to places to hide, like precious metals, like gold, which we've seen be on an absolute tear this year, but also oil. But what's so interesting about oil is when you think of Nigeria or Venezuela, potentially that would mean the price should strike higher.
Yeah.
More pressure. But if President Trump and Volodymyr Zelensky are really on the cusp of a peace deal, and Russia potentially would come along, and you make a great point. At this moment, it doesn't look like Russia right now is going to come along with this peace plan, but actually that would mean direction of travel lower for the oil market.
Right, so the geopolitical tensions are basically keeping oil right where it is. And the backdrop to all of this, of course, is there's plenty of supply. There's no shortage of supply thanks to OPEC.
Yep, IEA was talking about coming into this year with an absolute glut of over 4 million barrels. All right, coming up, Sarah Kunst of Clio Capital. Stocks trade near all-time highs. Bloomberg's Laura Davison as Ukraine and U.S. gear up for another round of peace talks. And Aaron McLaughlin of the Conference Board as consumer confidence continues to fall. We begin this hour with stocks flat following the latest record close. Sarah Kunst of Clio Capital issuing some cautions for the year ahead, writing, "I'm not super bullish on assets you can't see. It's been a year to cap off a few years of total AI dominance. Will it continue? It doesn't look that way." Sarah joins us now. Sarah, thank you so much, and I loved your note. So tell me about you're not super bullish on assets you can't see. So what are you bullish on? Is it all just, gold and silver?
I mean, I certainly think when you look at the way that we've seen that appreciation across, platinum, gold, silver, those are huge gains. The problem with those kinds of assets, of course, is that they don't produce anything. They don't grow in intrinsic value. If you had an ounce of gold 10 years ago, you still only have an ounce of gold. It's just worth a lot more on paper at a melt price. And so, I think right now we're just seeing a bit of a struggle to figure out where to focus that feels like there's going to be some real solid fundamentals and price appreciation. And that is a very hard needle to thread.
Why is it so hard to figure out where to focus? Is it just because of this holiday period or because the data has been mixed when you look into 2026?
I think the data has been mixed for a while. We all obviously, when we look at our little accounts, we see a huge amount of appreciation across the AI names. There's a question of which ones and how long can that run for. Some of them I'm much more bullish on than others. And so I think that's part of it. And then there's also a question about sort of where's the consumer at? How good is the data right now that we're getting, particularly from the federal government? And so there's a lot of uncertainty, but at the same time, people have been making a lot of money over the last few years and they need to put it somewhere.
They've been making a lot of money, especially off the AI trade. But as you point out, there's a lot more skepticism. There's a lot more discerning between the winners and maybe the also-rans. And we're seeing that play out in Oracle. The bonds have not been doing as well. The credit default swaps on Oracle have certainly spiked as well. How are you thinking through the potential, not losers, but the also-rans here of the AI narrative? Oracle seems to be one that investors are fixated on, but how else can you start to come up with a list of companies that, may be getting overextended because of their link to AI?
Yeah, I mean, certainly anytime we hear the word credit default swap, we all get our little nom flashbacks to 2008. The reality is, I think that companies like SoftBank are doing some things that feel a little risky. You have SoftBank who's sort of selling they have this huge commitment to invest in OpenAI, but to get that money to invest, they have to go sell all of their NVIDIA shares. They have to figure out, where to get the cash from internally by selling off public equities that are doing decently well to put more money into OpenAI, which is a company that, at current rates barely has enough runway to get through 26. And so that's a little concerning. In general, Sam's able to go figure out how to raise money, but I don't know how many times that trick is going to work in the future, because we know that the subscription revenue isn't really there. They're spending a tremendous amount of money. A 15-second video on Sora can cost them $5 to make. That's a lot. And so, there is concern, I think, that some of these other companies that aren't sort of foundational are maybe just playing a little bit too close.
Yeah, and when you look at the potential winners here, obviously NVIDIA, because of its role in the supply chain, is paramount. But you've also picked out another winner that so far investors agree with, because you look at the best performing stocks in the Mag 7, Alphabet is up 66%. NVIDIA is the second best performer, up 40%. Why do you see Alphabet as a clear winner here?
I have been a big fan of Alphabet in the AI space since at least 2023. I've been talking about this while everybody around me was saying that Alphabet's missing the moment. And I said, no, they created the moment, right? You go back to that 2017 academic paper, Attention is All You Need, which is sort of the Satoshi white paper of AI. And all of those founders, they were onto something, and they've gone on to create absolutely massive companies. A lot of the early innovation at OpenAI came out of Google alums. My company Grok, which just announced a big transaction with NVIDIA, they came out of Google. Google has had and continues to have some of the absolute smartest researchers in the world on AI, and they have the infrastructure to say, hey, we're going to bake Gemini into your search results, into your enterprise results, into your email, and you're going to pay us for it because we are an advertising company. And so they have such a huge advantage that it's been almost funny over the last few years to hear people think that they weren't playing the game, when in reality, they kind of are the board.
Sarah, does it concern you, though, that we have a circular economy of AI? These tech companies just keep financing themselves?
I think that that's certainly relevant. And I think that that's even more relevant when you look at some of the startups, kind of that everybody passes $100 around in a circle and calls it GDP is both a meme, but also a real cause, I think, for some concern. And so I think the question going into 26, you're going to see people get a lot savvier when they look at these companies to say, where is this money actually coming from? And is there an end consumer, an end enterprise who is actually paying for AI, who's paying for this utility, or is it just sort of everybody passing money to the service provider to their left?
What would it take for you to like Oracle once again?
Oracle historically has been a perfectly good company because it is boring. We don't have to think about it much. I think that their fingers are in a lot of pots right now. You see their founder and CEO, their founder, Larry Ellison, has a $40 billion personal guarantee so that his son can do some succession style media company buying. They're, buying TikTok and they're part of that deal. They're just involved in a lot of things right now that are very far away from their sort of bread and butter. And obviously, their close relationship with Washington helps. But at the same time, I don't know if all of these things are going to work out the way they think they will. And this is just a tremendous amount of money that you're talking about. And so I would like Oracle to be boring again.
Larry Ellison seems to like it the way it is right now, Sarah. Whether it's Oracle, whether it's Alphabet, which is your pick, or whether it is NVIDIA, which remains kind of the market's pick, how are you thinking about the power needed to generate all the resources in order for these data centers to be up and running, not just at the start of this revolution, but to take us through the next couple of years? A lot of people are picking utilities and thinking about nuclear energy as the solution.
Yeah, I mean, this kind of reminds me back in the day, you'd see this a lot with Bitcoin. You all of a sudden have people getting really excited about things like dams in northern New York, or sort of where do you get this excess power from? I think that you will see kind of ironically a focus on renewables, a focus on clean energy because it's often cheaper. So where can you get wind? Where can you get solar? All of that. And I think that we're going to find out that a lot of these sort of data center deals that you're seeing across rural America and the world, they're going to run into a very real problem of places like Texas where the electricity can be insanely expensive because of the way that they regulate their utilities. It's going to be really, really tough to say, hey, we have a bunch of empty land. Of course, we're going to build a data center on it. And now everybody who lives in a 300-mile radius is going to pay more for electricity. I think you're going to see a real amount of pushback that will get political. And so I think that is going to be one of the bigger questions right now. I don't do much in utilities, but I do think that it might, in a very sort of funny backwards way, help usher in more of a green revolution.
Sarah, thanks so much for your time this morning. Hope you had a lovely holiday with you and your family. Sarah Kuntz of Clio Capital. We're going to be speaking more about what's going on with the AI data center build out. But to Sarah's point, it is a political issue. We've already seen that happen in the Virginia midterm elections, as well as in New Jersey. Prices for electricity, even though the president loves to talk about drill, baby, drill, and gasoline prices are down, but electricity prices are actually high.
Yeah, and that tilted those states towards candidates that were pushing affordability.
Yep. Anyone talks about affordability, that's your ticket to winning. All right, let's get you an update on stories elsewhere we're watching this morning. Yahira's back with your Bloomberg Brief. Hey, Yahira.
Hi, Anne-Marie. The U.S. launched a military airstrike against ISIS targets in Nigeria. President Donald Trump saying he ordered the precision hits at the request of the Nigerian government, which has been struggling to contain increasing levels of terrorist attacks in parts of the country. Defense Secretary Pete Hegseth warning more strikes are coming if the group continues to target innocent civilians. Meanwhile, holiday travel is hitting a major wall with a winter storm expected to descend on the tri-state area. Over 400 flights have already been canceled at JFK, LaGuardia, and Newark. Forecasters are expecting up to 8 inches of snow from Friday afternoon through Saturday, and New York City is issuing a travel advisory for the duration of the storm. And Tesla is facing renewed scrutiny over its door handles. The National Highway Traffic Safety Administration said it's evaluating claims that the mechanical door release is, quote, hidden, unlabeled, and not intuitive to locate during an emergency. The move expanding the federal examination of Tesla's doors following a Bloomberg investigation. That's your Bloomberg Brief. Anne-Marie.
Thanks so much, Yahira. You know, Scarlett, what a waste of almost up to 8 inches of snow. If I was in school, I'd be very upset because you won't get a snow day. The kids are already off.
But, it's good overall that it's happening on a Friday night into Saturday because you don't have as many people commuting. Like, people can afford to stay off the roads.
True, but a lot of people are traveling. They're heading to the airports.
Yes,
JFK, LaGuardia, Newark.
Maybe by Sunday it'll be all sorted out.
Yeah, hopefully. All right, up next on the program, Ukrainian President Zelensky heading back to the U.S., optimistic peace talks potentially. Speaking of Sunday, that's when reports are that he will be landing in Florida. Bloomberg's Laura Davison joins us next for more on that story. You're watching Bloomberg Surveillance.
Renewable energy is the only path to a future prosperity. Renewable energy is creating foundation for a renewable civilization. We just cannot put our civilization under limited fossil fuel resources. Renewable energy is everywhere. It's almost zero cost. It is unlimited and renewable.
Good morning. Welcome to Bloomberg Surveillance. I'm Anne-Marie Hordern. It is the day after Christmas. We are seeing very light volumes, thin trading today, but the markets are open, even though the president has made it a federal holiday. S&P 500 futures are unchanged. On Wednesday, we did notch a 39 record high of the year. So Santa Claus rally at this moment, somewhat in full swing. 10-year yield, 4.13%. All the action, once again, is in the commodity space. Gold up 0.7%, surpassing 4,500 once again. And silver at one point did pass $75. It's now just shy of that, but we are up 3.5%. Under surveillance this morning, Ukrainian President Volodymyr Zelensky saying he plans to meet with President Trump in the coming days. Zelensky signaling a lot could be decided before the new year, after a Christmas Day sit-down with U.S. envoys Steve Witkoff and Jared Kushner. Bloomberg's Laura Davison joins us now. Laura, thank you so much for joining us. What can you tell us about this potential meeting between Trump and Zelensky?
Yeah, so this meeting is scheduled to happen as soon as Sunday, and this is really a marked shift from the tone Zelensky was taking just a few days ago, where he was a lot more pessimistic that he believed that the Ukrainians and Russians could agree to a peace deal. There's been weeks of sort of shuttle diplomacy with U.S. officials meeting with both Ukrainian and Russian officials separately, but never really making much of a breakthrough. The key sticking point in this 20-point peace plan that's been put together is whether it's territorial issues and whether Ukraine would be willing to give up some parts of their territory that they currently still control. That has been one key demand from the Russians. Ukrainians have been quite sour on that idea. So Zelensky is going for this face-to-face meeting down in Mar-a-Lago with the president to hash out some of these final details, potentially to move forward with a peace plan.
And of course, we know that Ukraine has been deep in negotiations with Steve Witkoff and Jared Kushner on this proposed 20-point peace plan. Has Russia given any way at all on what it's looking for? Or it's kind of waiting until the last minute to weigh in?
They have been waiting to the last minute to weigh in. They have been very clear that, what they want are, kind of some of the contours, sort of the maximalist view of Russia getting all that it wants that they discussed back with Trump at this summit in Alaska over the summer. So this is, kind of the key sticking point, and why we've heard a lot of pessimism during these talks, and that, Ukraine has been sort of doing some negotiating, but Russia has really stood firm. We'll see, whether this meeting with Trump and Zelensky is able to create any breakthroughs that the Russians might be able to agree to.
Anne-Marie and I were talking earlier about how there's definitely urgency on Zelensky's part, on Ukraine's part, and there doesn't appear to be much on Russia's part. In terms of the president and where he sees a timeline developing, I know that initially he had set this deadline of Thanksgiving for Ukraine to agree to a peace deal with Russia. Do we have any kind of targets in terms of timelines?
He has not set a specific new timeline here. Trump once and has repeatedly said he wants this done as soon as possible, though he's kind of suggested that, if talks are progressing, if he sees progress, he will let, things drag on a little bit forward to reach a deal. But, Trump here, really his ultimate goal is to get a deal so he can herald peace. He is less concerned about the specifics, but of course, that is very of utmost importance to the Russians and the Ukrainians.
Yeah, Laura, I remember when the president would say that he would solve this crisis day one, at least when he's on the campaign trail. Now we're in the final week of 2025. At the same time, they are still going after a tanker in Venezuela, and there was strikes overnight on Nigeria. How is all this, you think, going to play with his MAGA base?
We've already started to see cracks here. Of course, Marjorie Taylor Greene, who is now effectively, totally divorced from the president, was the first to really criticize some of these, overseas conflicts that the president has been engaged in. But as time goes on, particularly if the White House needs to go to Congress for more money on that, this could be a huge rift going into the midterm elections.
Laura, thank you so much for joining us this morning. Bloomberg's Laura Davison there. Turning to the impact of artificial intelligence, water constraints in Texas threatening data center growth, calling attention to resource demands. Eric Kane of Bloomberg Intelligence joins us now for more. I've heard a lot of people throw cold water, excuse the pun, on potentially what could be some of the bottlenecks when it comes to AI. Tell us about what's going on with water specifically in Texas.
Absolutely. It's a good question. And one of the things, of course, that we're seeing is there's a lot of discussion about the energy demands associated with AI. I think the water demands are a little bit less well understood. So just to broaden the context a little bit, one thing that we see is predicted growth to about 1.1 to 1.7 trillion gallons of water used annually for data centers across the world, which is about 4 to 6 times the amount that the country of Denmark consumes. Within Texas, Texas has become one of the fastest growing states for data centers after Virginia. And in Texas alone, what we're expected to see is growth of water use associated with AI of about 800% over the next several years.
Wow.
So if there's this much demand for water, how do Texas regulators, Texas authorities start to meet that demand? What are some of the out-of-the-box ideas that they're entertaining?
Right. It's a good question. One of the things that we saw actually with this last election cycle was the passing of Proposition 4, which was actually a constitutional amendment that was, again, passed. And essentially what that amendment said is that Texas voters wanted to allocate $1 billion a year to address water scarcity, water infrastructure, and also flood control, basically over the next 20 years. So that will begin in 2027 and go out for 20 years. So in my mind, that starts to demonstrate that voters, regular people, are starting to recognize the concerns associated with water. And with respect to AI, what we're starting to see, of course, is some of the big operators, Meta, Microsoft, for example, are starting to rethink how they're ultimately using water and ultimately looking at closed loop systems, which they claim will ultimately use far less municipal water.
Does that mean at the end of the day that there's a natural constraint on how many AI data centers can be built in Texas?
Assuming they kind of continue business as usual, where they're continuing to draw as much water as they do. And if you look at some of the estimates, it's around 500,000 gallons per day for kind of a medium-sized facility. So assuming they wanted to continue business as usual, then there would absolutely be kind of natural constraints. But again, what we're starting to see is some innovation, and the state at large is starting to take measure. They're looking into more desalination, treatment, and the oil and gas side, they're looking to actually filter the produced water, not only kind of take minerals out of that, but also treat it and potentially use that for other resources as well.
You mentioned what happened with Proposition 4 in Texas. Do you think we could see more federal spending go to Texas specifically because of these issues?
It's a good question, and one of the things that we've seen with the recent administration, with respect to kind of any funding related to environmental issues, impacts of climate, is basically that funding has been removed, right? So we're starting to see states having to essentially fend for themselves when it comes to issues like water or storm recovery. So I don't anticipate seeing a lot of that on the federal level. I think the one example where maybe you would see an exception to that rule is with respect to agriculture. Obviously, agriculture is a big driver of GDP in Texas, and we've seen many examples over the last year where things like the cotton crop have been extremely damaged by drought, and you do see subsidies coming in the case of agriculture.
Well, it's a huge political issue, and Scarlett and I have been talking about all morning with electricity prices rising. Most people would say you need an all-of-energy approach, but this administration is also pausing wind projects. Right. Is that going to be a problem for them?
I think it is going to be a problem. I think ultimately what we're seeing, of course, is with the development of AI, not only in Texas, but across the country, there's going to be increased demand for energy, right? We know, of course, that things like natural gas and coal are ultimately what the current administration kind of prefers from an energy standpoint. But those are much slower to ultimately build out than renewables. So, back in Texas, what we're ultimately seeing is, some new deals where they're ultimately looking to co-locate data centers with renewable energy because it's cheaper, it's faster to develop. So we do ultimately see, a potential kind of bottleneck associated with energy.
Yeah, it's something that Sarah Kunz of Clio Capital was just talking about as well, that build out of green energy as a way to solve for this. Are there other states in a similar bind as in Texas?
I think so. I think, Virginia is another state that has seen a massive growth in kind of AI data centers. So we're starting, to see energy concerns there. But, nationally and also abroad, we're starting to see the same issue play out.
Yeah, it's the electricity prices, if you live near a data center, have been going up. That was massive play in Virginia when it comes to those elections. Eric, thank you so much for joining us and coming in on the day after Christmas to be around the table with Scarlett and I. Eric Kane of Bloomberg Intelligence. The administration potentially going to have a problem with this. They love the AI trade. They want to go all in. But the problem is if electricity prices are going higher and you see the polling, people just still care about inflation and affordability.
And even betting on nuclear energy is not a problem, not a solution that solves things immediately, right? That's going to take a couple of years to play out.
And when it comes to coal, did you see the president joking with a child over the weekend during the NORAD calls?
Oh, no. What did he say?
He said, the child said, I don't want coal. And Trump said, well, it's clean, beautiful coal. right?
I don't know if he sold it well.
Yeah, I don't think so. I don't think I want coal, and I definitely don't think it's clean or beautiful. Coming up, a look back at Bloomberg's Ed Ludlow's one-on-one with NVIDIA CEO Jensen Huang. Plus, Yahira is back with your morning movers. Miners getting a major boost as precious metals hit new highs. You're watching Bloomberg Surveillance this morning.
AI is impacting every industry. Macau is providing this center point for this industry transformation. By hosting a conference like AIE, what they're doing is providing this foundation for everyone to align and get behind. If you've spent some time here, you'll suddenly realize how much energy is here, how much transformation, how much change. And being in a location that has those kind of dynamics is really powerful for any business.
Good morning. Welcome to Bloomberg Surveillance. I'm Anne-Marie Hordern. Alongside Scarlett Fu this morning, Jonathan is on paternity leave and Lisa is off, but she'll be with you next week, guiding you into the new year. Gang will be all back together in 2026. We have markets relatively unchanged. S&P 500 on Wednesday before Christmas. In the spirit of that Santa Claus rally, we did have another record high, the 39th record high for the year. The Santa Claus rally traditionally takes place in the final 5 trading sessions of the year and the first 2 of the new one. So potentially, Scarlett, we can get another record high. I've been thinking about how this year has been basically pre-Liberation Day, post-Liberation Day, and once the market was past what everyone says peak tariff uncertainty, it was off to the races.
Yeah, and there are record highs before Liberation Day and there are record highs after Liberation Day. Worth mentioning as well that global stocks have been on a tear. The All-Country World Index, according to MSCI, up for a 7th day and has now gained about 22% this year.
Wow. Okay, so maybe potentially some individuals also looking internationally. We're 2 hours away from the cash open. Let's get you some morning movers with Yahira Anand. Hi, Yahira.
Hi, Anne-Marie. The trade that's worked all year keeps paying off. Precious metals are surging once again this morning, and we are seeing that helping lift mining stocks. Kerr Mining up 3%, Hecla Mining up 2.6% as we see gold, silver, and platinum reach fresh all-time highs. Fueled, of course, by central bank buying, geopolitical risks, the same stories we've heard about all year as we've witnessed this precious metal rally. Meanwhile, moving on to Micron, if we hold at these levels, Micron is set to open at a fresh all-time high. The stock is up 1.6% in the pre-market on no real catalyst on this quiet day of trading, but it is worth noting that this comes after a 230% run for this stock this year, fueled, of course, by strong demand for its memory chips, using everything from computers to AI servers. And remember, just earlier this month, they had an earnings report, and the CEO said that demand continues to outstrip supply, and they see no signs of that abating anytime soon. And we end on Biohaven stock. Those shares are plummeting, down nearly 15% now in the pre-market after one of their experimental drugs to treat depression failed to meet the goals in a mid-stage study. Analysts say that it's disappointing but not entirely surprising given the complexity of these clinical trials. Anne-Marie.
Yahira, thanks so much for that. On our radar this morning, the U.S. launching a military airstrike against ISIS targets in Nigeria. President Trump saying he ordered the precision hits at the request of the Nigerian government. Defense Secretary Pete Hegseth warning more strikes could be coming. Elsewhere, a sanctioned oil tanker being pursued by U.S. forces turned away from Venezuela and retreated out to the Atlantic Ocean. Sources telling us here at Bloomberg, the U.S. Coast Guard encountered the ship, Bella 1, and instructed it to move. Officials do not expect it to return. And holiday travel is hitting a major wall with a winter storm expected to descend on the tri-state area. Over 400 flights have already been canceled at JFK, LaGuardia, and Newark. Forecasters are expecting up to 8 inches of snow from Friday afternoon, that's today, around 4 p.m., through Saturday. Let's stick with that story. Heavy snow expected to begin in New York City area later today. The winter storm already canceling hundreds of flights in the middle of holiday travel. AccuWeather's Bill Waddell joins us now with the latest. Bill, what do we need to know?
Hey, good morning. Yeah, this is going to be a messy storm, a lot of impacts for holiday travelers. The good news is it's going to be a quick moving storm, and the timing, hopefully a lot of people won't have to be traveling through the worst. So you can see on the map already, we've got the snow, wintry mix through Michigan, moving its way on east here. And when it comes to the snow impacts, New York City, AccuWeather is looking at 3 to 6 inches of snow for the city. Philadelphia, Boston, 1 to 3 inches of snow. But take a look at this dark blue zone here right north of New York City, Catskill Mountains. AccuWeather meteorologists say this is the zone where we could see 6 to 12 inches of snow. That's not the only problem with this storm. There's a really messy component here. Take a look at these dark pink areas, southern Michigan, including Lansing, as well as central and western Pennsylvania. This is where we could see those icy impacts, could be significant in those areas. So there could be a mix of sleet, ice pellets, freezing rain. The big concern here in these areas, if we start to see any ice accumulations on the power lines or tree branches being weighed down, that's where we could see some big problems with some power outages. So you could see this is a big, messy storm here. And when it comes to the travel forecast, this is mostly for the second half of the day into the night. But you could see major holiday travel weather impacts expected across the Great Lakes into the Northeast. Also, our friends on the West Coast as well, still dealing with a lot of rain, flooding issues, and mountain snow.
Absolutely. Boy, that paints the real picture of everything that travelers need to contend with. Bill, just very quickly to follow on what you said about what's happening on the West Coast, any relief on the way for Southern California?
There is some relief on the way. They've really been getting it the past few days here. But when we look at the map, today is supposed to be the last big day for the rain impacts before things really start to wind down here. But Los Angeles, more than 2 inches of rain in some spots. It's really those mountains and the burn scar areas. I was out there covering those big wildfires back in January. Of course, all of the soil left charred. So all of this rain running down the mountainsides, that's where the big concern is for those mudslides, debris flows. That's why so many people were asked to leave their homes voluntarily over Christmas.
Bill, thank you so much for this update. Bill Waddell of AccuWeather. Scarlett, that's pretty incredible. 5 to 9 inches of snow, which is what the National Weather Service is expecting. I think Bill said actually it could be as high as 12 inches of snow in the tri-state area.
Yeah, in certain pockets, and freezing rain just makes it even more complicated for anyone who does need to get out of their house after this quick-moving snowstorm. But that makes it not so quick in the end.
Yeah, everyone, please be safe out there. And also, if you're flying, check your flights. Turning back to stocks, NVIDIA shares are up nearly 40% this year, nearly doubling the performance that of the NASDAQ 100. The company's Blackwell chip becoming the engine of the AI industry this year. In an exclusive interview, the company's CEO, Jensen Huang, told Bloomberg's Ed Ludlow Blackwell says he sees no sign of slowing down.
Sales are off the charts for Blackwell, and NVIDIA GPUs in the cloud are sold out. We got plenty of Blackwells to sell you. We have lots of Blackwells coming. We're making a lot of Blackwells, and we have a bunch of Vera Rubins coming. And so business is very, very strong, but we've planned our supply chain incredibly well. We have the largest supply chain in the world. Our partners, TSMC, our memory partners, SK Hynix, Micron, Samsung, are doing a fantastic job supporting us. And all of our systems partners, Foxconn and Quanta and Wistron, our packaging partners, everybody's doing a fantastic job supporting us. And we've done a good job planning for a very, very strong year. And we've done a good job planning for Vera Rubin. So sales are off the charts. NVIDIA GPUs in the cloud is sold out, but we've got a bunch of Blackwells to sell.
Jensen, what's the road ahead for Vera Rubin? It's one of the most common questions we get for you of how that ramp will go relative to what we saw with the Blackwell generations.
Well, the silicon for Vera Rubin, 7 different chips are back in our labs. And the bring up is happening across engineering teams. Probably a couple of 20,000 people are working on bringing up Vera Rubin, from silicon to systems to software to algorithms. People are working around the clock, and this bring up is going beautifully. We're on track to deliver Vera Rubin about Q3 timeframe of next year, continuing our once a year cycle. Vera Rubin is already assured a huge success. Everybody's incredibly excited about it. Can't wait to show everybody. And then one last thing is that the rack architecture, the rack scale architecture is completely revolutionary. It includes a scale up switch called the NVLink. NVLink 72, our 5th generation, is the only one of its kind in the world. This rack architecture, which is incredibly complex, started with Grace Blackwell, then Grace Blackwell Ultra. It is transition to Grace Blackwell Ultra is incredibly seamless. The same rack scale architecture is going to be used for Vera Rubin. And so the supply chain is all used to it. This complexity that we enjoyed with Grace Blackwell transition, we're now incredibly smooth running. And so I think Vera Rubin's going to be just really smooth, and we're going to ramp it really hard.
Jensen, I tried to go through what the CFO Colette Kress said about China. In the quarter gone, it seemed like there was not meaningful H20 sales because the demand wasn't there, even if you were permitted to sell H20. And then in the current period and going forward, NVIDIA seems committed to working with both the United States and China to sell what Colette called more competitive compute. Where do we stand with that? And could you just clarify what Colette was talking about in the current state of play for China?
The most important thing she said is that we've said for some time now, our forecast for China is 0. All of our forecast guidance that we showed, 0. We should start. That's the most important thing that she said. She also said that effectively China is a very important market to us. It's very important to the United States. It's very important to China. We would love the opportunity to be able to re-engage the Chinese market with excellent products that we deliver and to be able to compete globally. The Chinese market is very large. This year, my guess is probably about $50 billion. It's great for the American people that we're able to compete in the Chinese market. It's great for the China market that we're able to provide NVIDIA's technology to them. It's great for the rest of the world as Chinese software companies and Chinese open source models leave China and are used all over the world. And so I think it's fantastic that it would be fantastic if we're able to participate in the China market. But for now, we should just assume our NVIDIA's forecast for China market is 0. We're going to continue to engage the U.S. government, continue to engage the China government to advise them and to encourage them to allow us to go back and compete in the open market. And so until then, we should assume 0.
Jensen, we can see where the hyperscalers are getting the money where they have the money to deploy and build. But you mentioned Anthropic. With Anthropic or indeed OpenAI, they have tens of billions of dollars of commitments around the world. Very simple, like how do you know that OpenAI is good for it, that it will be able to find the money?
Well, we're thoughtful, along with OpenAI, thoughtful in aligning on and taking into consideration visibility of demand and their financing capabilities. All of that has to be in accordance, has to be aligned, has to be coherent before we start to build out. And so I think the ambition's large, but the execution is disciplined. And that's really, really important to recognize. We're very disciplined with our investment. We're disciplined with our build out. These are very large scale investments. And so the two teams are quite disciplined, very disciplined in thinking through the investment levels. Now, it's also important to take a step back and realize that OpenAI, Anthropic, these are the fastest growing company in the history of humanity. Their offtake, their end market demand is absolutely real and absolutely incredible. And you could see that they're really struggling to keep up with the demand that they have. The engineering teams, we work incredibly hard to make sure that we bring them on more capacity, but also optimizing their stack so that the usage of whatever capacity is as efficient as possible. And meanwhile, there's so many new use cases that they want to put out into the world, and is currently limited by the capacity they have. And so this is a really important time. You're seeing an exponential growth in the amount of compute demand necessary for AI. You're seeing an exponential growth of adoption and use of AI, and the number of applications that are going to be using these AI is also growing. And so we've got to do our best to support the scaling out of two of the most consequential companies in history, and we're delighted to be partnered with them.
Jensen, investors have been worrying about depreciation. Software can actually extend life. Like there are A100s out there in the real world still at full utilization. Are people underestimating how long your chips stay useful, or are they kind of misunderstanding in the context of depreciation how you're handling generation to generation updates of GPU?
NVIDIA is unlike any other accelerator. And the reason for that is because of CUDA's diversity of capability and versatility. Remember, I said two things earlier. I said the fact that NVIDIA participates and could accelerate every phase of AI, pre-training, post-training, and inference. We're the only architecture in the world that does that fantastically. The second thing we do is we run every single model. And so most agentic systems, most clouds are running so many different diverse type of models, language models, vision models, biological models, chemical models for all the different fields of science. NVIDIA could be used across the entire lifespan of the technology. And so if you look at products that we shipped, Ampere A100, we shipped 6 years ago. But because we're continuing, our install base is so large, our diversity is so great, we could continuously update our software, bring value to our customers on the one hand, but because our versatility is so great, based on the capability they need, they could use our GPUs for a very, very long time. Now remember, A100 is 6 years old. However, it is still an order of a magnitude faster than any CPU could put to bear. So it is still the best computer. It is still the best processor for much of the workload in the cloud. And most people misunderstand that because unlike us, most accelerators are kind of singular use. Because they don't have diversity, because they don't have versatility, because they're not great at every phase of AI, once they're used for whatever they were designed to do, their value falls off a cliff. That is not true with NVIDIA.
NVIDIA CEO Jensen Huang, in one of his many conversations he had with Bloomberg's Ed Ludlow in 2025. Let's get you an update on stories elsewhere we're watching this morning. Here's your Bloomberg brief with Yahira. Hey, Yahira.
Hi, Anne-Marie. Former Malaysian Prime Minister Najib Razak has been found guilty of abuse of power and money laundering in connection to a multi-billion-dollar fraud case. Najib, already in jail due to other convictions, has denied any wrongdoing and can appeal or apply for a pardon. He's due for release in 2028. Meanwhile, oil prices are headed for their biggest weekly gain since late October. The spike comes amid the partial U.S. blockade of crude shipments from Venezuela and a military strike by Washington against a militant group in Nigeria. Sources telling us here at Bloomberg that the White House has ordered commanders to quarantine Venezuelan oil for the next 2 months, which could keep prices elevated. And Japan's inflation cooling more than expected in December, pushing the yen lower. Prices excluding fresh food rose 2.3% compared to last year. The data supporting the case for the Bank of Japan to take a cautious approach on further rate hikes. Economists expecting the bank to raise rates roughly every 6 months. That's your Bloomberg brief. Anne-Marie.
Yahira, thanks so much. Yahira will be back with us in about 30 minutes' time. Up next, consumer headwinds.
The consumer is facing significant headwinds as we wrap up the year. The consumer is not nearly as euphoric in this holiday season as they were in previous ones.
Aaron McLaughlin of the Conference Board will be joining us next. A conversation you don't want to miss. You're watching Bloomberg Surveillance.
Silence isn't empty. It's full of proof. When a silent gesture orchestrates masterpieces, we're not just one step ahead. We're in a league of our own. From 50 years ago to today to tomorrow, CIB has always been here. Growth, innovation, and setting the standard for half a century. Progress driven by quiet mastery.
Good morning, and under surveillance this morning, we're going to be looking at the consumer and the headwinds that lie ahead.
The consumer is facing significant headwinds as we wrap up the year. Labor growth is zero, wage growth is compressing significantly, inflation is up. That is not a good combination for spending, for household spending in the new year. The consumer is not nearly as euphoric in this holiday season as they were in previous ones.
Here's the latest. U.S. consumer confidence dropping for a fifth consecutive month in December, according to fresh data from the Conference Board. Aaron McLaughlin of the Conference Board writing, expect real GDP growth to weaken amid a fragile balance of resilient labor markets and softening consumer demand due to tariff-induced inflation. Aaron joins us now. Aaron, thank you so much for joining us, and hopefully you had a lovely holiday. When it comes to the consumer and the latest readout, I was struck by how more consumers are actually starting to be also worried about keeping their job.
Yes. So we find that consumers really tighten up when they don't have jobs. And so the concept of deteriorating business conditions, the weight of tariffs and inflation, all definitely influence consumer spending and consumer sentiment. But concepts around rising unemployment, we've seen it tick up now to 4.6. In the concepts, there are less jobs out there. Jobs are not as plentiful, will really weigh on the consumer in 2026.
We know the government shutdown did not help matters. It made people feel more nervous, and it certainly created a lot of uncertainty. And I know it's over, but I bring this up because we could face another government shutdown in January as well. So how do we fold in the government shutdown and what that does to consumer sentiment, even as it's become a more frequent occurrence?
Well, that was the longest shutdown we've had in modern history that we just had. It certainly impacted economists. It impacted consumers, especially this year. Consumers are just facing its sort of constant news about politics, geopolitics, tariffs, inflation, and that constant news impacts them. And so another government shutdown will certainly also impact them, even if they don't feel the immediate effects of a shutdown. And sort of the news today and the concept that there could be rising oil prices, and oil and gasoline, excluding fuel oil for homes, has been pretty, low as far on the inflation spectrum. But even news like we're hearing today, if prices go up, how does that impact consumers?
The administration has been out there trying to paint a picture of a robust economy. Howard Lutnick, the Commerce Secretary, went on to talk about the third quarter GDP growing more than 4% and how that was a sign that things were better. He also mistakenly equated that with an increase in people's pay as well. How is that contradiction, that seeming contradiction of data that shows the economy is holding up well, balancing with this sense from consumers that things are not getting better necessarily, especially on the job front?
Well, consumers are not paying attention to GDP the way that we are, in the way that economists and business and financial markets are necessarily paying attention to these readings. What they really feel is the effects of prices for things that they buy every week, every day, every month. And so those things include coffee, which has gone up in price 20 to 40%. Beef and other proteins at the grocery store have gone up. And some big structural costs have really not come down. The cost of housing, and in particular insurance, and the price of a mortgage, while it has come down a little bit, is nowhere near as low as it was pre-pandemic. And so when you see some of these really big price structural changes happen, that also weighs on consumer sentiment.
What about when you look at trade-induced inflation? What are you looking at for next year, given the fact that this administration will be renegotiating USMCA?
Yes, we really think that federal policy, particularly around trade and tariffs, is going to have a huge impact on consumers next year. Our three largest trading partners are Mexico, followed by China, followed by Canada. Those three trading partners, our agreements with them are not settled. We sort of kicked the can down the road 12 months from China, from November of this past year to November of next year. And then the USMCA, which is essentially NAFTA version 2, will enter a version 3 phase as it can be renegotiated. And that deadline is in July. And there is so much that we just trade between our three largest trading partners that there is really the potential for a lot higher inflation and price pressures on consumers for some items that we get that, again, include non-discretionary as well as discretionary items like food.
Erin, thank you so much for joining us this morning. Really appreciate your insight. Erin McLaughlin of the Conference Board. Coming up the program, another hour with Scarlett and myself, Victoria Fernandez of Crossmark, and also a conversation with the Citi CEO, Jane Fraser, looking back at 2025 and what it's meant for banking. You're watching Bloomberg Surveillance. Good morning.
The crowding into those mega cap names has led to crowding out of many other high quality blue chip names.
Balanced portfolios make a lot of sense heading into 2026.
It could be in an environment where we're still able to carve out new highs.
Earnings are going to be what drives stock prices.
We want to make sure we're managing risk well next year.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowitz, and Anne-Marie Hordern.
Good morning. Welcome to Bloomberg Surveillance. I'm Anne-Marie Hordern alongside Scarlett Fu on this Friday. It's 8 o'clock. Jonathan is still on paternity leave and Lisa is off. As we've been saying, it's been very thin trading on this holiday season. We are in the midst of the Santa Claus rally. So Wall Street is quiet, but there's a lot of noise elsewhere, especially when it comes to geopolitics. Last night, the United States launched a military strike in Nigeria against ISIS targets. The administration is still in pursuit of a Venezuelan-linked oil tanker. They've been doing that since Sunday. And we're getting some more breaking news at this potential meeting that could take place between Ukrainian President Volodymyr Zelensky and President Donald Trump. There was speculation it could happen as soon as Sunday, and he's telling reporters that's what he expects.
Yep, we haven't heard officially from the White House whether this meeting is going to take place or not. So that remains to be seen. And of course, we're still waiting to hear from Russia overall on any kind of response to this 20-point peace plan that the three sides really have been negotiating.
What Russia has continuously been doing is try to draw out these talks. Ukraine says they've had no direct communication with Russia. Potentially, could this meeting on Sunday push them to having at minimum a trilateral agreement? Zelensky says sensitive issues such as Donbass, Zaporizhia, the nuclear power plant will be discussed. That's Europe's biggest nuclear power plant. Both these countries want access to it. It's going to come down to these territorial negotiations.
Right. The sticking points have always been the sticking points, even if they seem to have made some progress on security guarantees.
Absolutely. Let's check in where markets are this morning. We are 90 minutes away from the open. We do have equities unchanged.
Surprise, surprise.
Surprise, surprise. As Scarlett and I have been saying, it's thin trading, it's the holiday, but we did have a Santa Claus rally. Going into literally Christmas when Santa Claus came, we had the S&P 500. You know, we have to say that we do have some children watching, like my nephews. We did have the Santa Claus rally, 39th record high of the year. And all the action has been in the commodity space, especially right now, given the geopolitical tension. Silver just shy of $75, up 3.5%. Gold, 4,500. People are looking at 5,000 for next year. It's been on a tear this year. Biggest rally we've seen since 1979. Gold has been up 50%.
And you're right to highlight gold and silver, but we should also throw in there platinum and copper as well, both at record highs. Platinum topping $2,400 an ounce. There's a lot of physical demand, fairly strong for the auto sector and for the jewelry sector, but there's also supply disruptions in South Africa. And that's kind of a similar theme in copper as well. Ongoing supply concerns, and you can add to that the possibility of tariffs as well.
Exactly. It's a perfect storm, really, for some of these commodities. Coming up in the program, Victoria Fernandez of Crossmark Global Investments with stocks trading near all-time highs. Louise Chen of Scotiabank Out Capital with an outlook on pharma stocks for 2026. And Deborah Weinswig of Coresight Research recapping the holiday shopping season. We begin this hour with stocks aiming to extend the year-end rally. Victoria Fernandez of Crossmark Global Investments writing, we begin the year with equity valuations at somewhat rich levels and lots of optimism already baked into those valuations, setting a high bar for positive surprises and paving the way for moderate returns. Victoria joins us now. Victoria, thank you so much for joining us. If the bar is so high for next year, do you think we are going to see some sort of correction in the markets?
I think we will, Anne-Marie, and it's typical that you'll see that in a midterm election anyway. So you add in the element of coming into the year at high valuations, and you're setting yourself up for that. I mean, you typically look at a midterm election year, and coming into that year, you've already priced in those pro-growth components, the optimism around things being positive after a new administration comes into term. And as those positive elements actually come to fruition in a midterm election year, you start to see some pullbacks, some intra-year corrections, sometimes up to as much as 15, 16, 17% you can see. So there's a lot of volatility. You usually get higher yields, so we wouldn't be surprised to see yields move a little bit higher as well. Setting this up for a year where you're going to see a lot of churning, but have moderate returns, not like we're going to, like we've seen the last couple of years with these huge returns.
So do you think we're going to see investors want to have more defensive trades? Could we see also rotation in the market?
Yeah, we're already seeing some of that rotation, not necessarily into staples per se, right? Staples are still struggling. So you're not getting that full-on defensive shift. But what you are seeing is people come out of some of those high flyers, those hyperscalers, the high leveraged tech, or not leveraged, but the high valuation tech names that are out there. You're seeing them trim those names back and going into some areas where you're starting to see uptrends in the sector. So whether it's healthcare, whether it's metals like you guys were talking about, we've seen it in financials, we're seeing it in industrials. There's opportunities there to go in. Staples are still dragging. So we haven't seen, like I said, that full rotation to defensive, but I think you're going to want to have a little bit of that in your portfolio if we get a typical midterm year like we normally do.
Let's face it, Victoria, it's going to be pretty quiet until mid-January when corporate earnings come out for the fourth quarter numbers. And given that we had this government shutdown, the longest on record, disrupt the flow of economic data, it feels like there's going to be more importance placed on what companies say, especially how they forecast things for the coming year than what we've been getting from official data. What are you thinking in terms of the big themes you're anticipating from some of those sectors that you mentioned?
Yeah, I think everyone's going to be looking at the CapEx, not just for those AI names, but across the board. That's really a driver, I think, of some of the optimism that we have is this increase in CapEx. Some of that due to the OB3 bill that was passed and the tax advantages associated with that. But we know CapEx helps growth. It gives you increased productivity, increased profitability. So people will be watching for that CapEx component. I think we're also going to be looking at those retail names to see how does that consumer continue to spend. We know there's this divergence and it's going to be focused on the high income consumer. Will they continue to support the economy with their spending? So we'll be paying a lot of attention to that. And really what the expectations are for profit margins, whether you're looking at EPS growth, revenue growth, or profit margins, those numbers are getting really high for 2026 and going into 2027. I think people are going to want to see, can they actually see those numbers come to fruition, or are those going to be pulled back some? So those will all be elements to watch in earnings.
And I'm so glad you highlighted CapEx, because when the AI build out first began, CapEx was something that was seen as almost a positive because it showed a company's commitment to the future. However, increasingly, it's become something of a burden, something that stretches their balance sheet. What's the sentiment towards CapEx? Because if you don't have any ROI to show for immediately, is it going to be seen as a negative?
That's exactly right. You've got to be able to see that there's some kind of return that you're getting on the money that you're investing, especially if it's disrupting your balance sheet. And I think that's the issue people are going to watch. It's very much company specific, because you can look at something like Oracle, where they're having to go to the debt market. Their free cash flow is going to be drawn down significantly. That's a very different story than looking at someone like an Alphabet, where they're still going to have very strong free cash flow. Yes, they can go to the debt market, but that free cash flow number continues to be strong. So there's not as much concern when it comes to a company like that. It'll really be driving down into the balance sheet to see how is the CapEx going to affect cash flow going forward. What does that mean in terms of earnings? What does that mean in terms of dividends? If it's a dividend paying stock, those are all elements that will play into what CapEx looks like for each specific company. But as a whole, we know it's typically supportive of GDP and productivity. So people will be they'll be biased towards positivity as long as the balance sheets can handle it.
Victoria, you mentioned that midterm election years tend to be high growth years. What are you expecting from the administration to make sure they keep that growth continuing?
Yeah, I think we're going to see not just some stimulus coming for the consumer, but we'll see it for corporations as well. So we talked about CapEx, what that looks like. R&D, there's going to be benefits associated with R&D and building infrastructure here in the U.S., so that onshoring benefit. But consumers as well. There's a lot of tax advantages for consumers, not just no tax on tips, but you're looking at interest on car payments. You're looking at changes in regards to SALT taxes, in regards to the child deductions that you get. There's a lot of elements there that I think will be beneficial to the consumer as well, that will lift them up for at least probably the first half of the year. Those are some of the things that I think you'll see coming specifically from the administration. And there's always talk about something new, right? We're hearing talks about checks being given because of the tariffs that have come in and the elements that are positive there. So all sorts of things that I think could boost consumers in the first quarter coming from the administration, and then add on just some of the things you have, like the World Cup coming, 250th birthday party for the nation, all of these things that will generate more activities here in the U.S. and generate more GDP.
I'm certainly looking forward to the World Cup, but when it comes to things like tax refunds, do you think consumers, because they know it's coming, do you think consumers are already out there spending that money right now in the holiday season?
They might be in anticipation of that, so it could be less of a fact. It kind of goes to that point that we're saying where you come into the year with a lot of those growth elements already built in for your optimism for what you think is going to happen in the market. And when it comes to fruition, there's not much of an effect. That could be part of it. They could be spending that now. But it seems like lower income consumers really are holding on right now. You're not seeing savings rates go down tremendously, which is telling us that it's the high income consumer that's really spending. Low-income consumers are not dipping in to those savings just yet. And year over year, holiday spending for that cohort is actually negative. So I think they're holding back a little bit, waiting to see what happens. And a little bit of extra cash coming in next quarter could be a benefit for them.
Well, high-income consumers are spending in part because of the wealth effect. Anne-Marie has told us several times about how the S&P 500 closed at a record high for a 39th time on Wednesday. If there's a sudden market pullback, if we see those gains unravel, how quickly could we see the wealth effect work in reverse?
Yeah, I think that's actually, something we really need to watch, Scarlett. So you're right. Lower income consumers spend based on what they're making, right? What their salaries are and what the job market looks like. High income consumers do spend based on wealth effect. So as long as the market is doing well, they're going to spend. If we see that pullback, if we see the volatility that we think we'll see in 2026, you should see the high income consumer pull back a little bit. They won't stop spending completely because they still have the job component there. But as they see housing prices maybe start to come back a little bit, as they see the market pull back a little bit, their spending will start to shift slightly. I think that means you have to be a little bit more cautious on those more expensive retail companies that are out there. Those high income retail companies will probably suffer a little bit if that happens. So there'll be a much lower level of spending that will occur.
Victoria, let's just end on the big debate going into next year in financial markets in terms of the Fed's next move. What are you pricing in for 2026?
Yeah, we're really only pricing in one cut for 2026. We think they'll hold in January just because there's still a lot of unknowns going on. We did have a strong GDP number, but they do have a whole month of January to wait. They'll get more inflation numbers. They'll get more job numbers. We'll see what happens. But the debate here, I really think, is where is neutral and how accommodative are we right now? I think that's the underlying battle that's going on at the Fed, and how accommodative do they want to be in order to not stoke kind of the flames of inflation. That'll be the battle we continue to see. We think we're probably closer to neutral than what many people think, which means there'll be fewer rate cuts going forward.
Victoria, thank you so much for your time this morning. Hope you had a lovely Christmas with your family. Victoria Fernandez of Crossmark Global Investments. Let's get you an update on stories we're watching elsewhere this morning. Yahira is back with your Bloomberg Brief. Hey, Yahira.
Hi, Anne-Marie. Ukrainian President Volodymyr Zelensky saying he plans to meet with President Trump in Florida on Sunday. Speaking to reporters, Zelensky going on to say that a framework for a deal between the U.S. and Ukraine is almost ready. The Kremlin, meanwhile, saying its representatives have contacted the U.S. at President Putin's direction and agreed to continue their dialogue. Meanwhile, the U.S. launched a military airstrike against ISIS targets in Nigeria. President Trump saying he ordered the precision hits at the request of the Nigerian government, which has been struggling to contain increasing levels of terrorist attacks in parts of the country. Defense Secretary Pete Hegseth warning more strikes are coming if the group continues to target innocent civilians. And copper prices are trading at record highs across global exchanges, adding to substantial gains made this year as investors bet on tighter global supplies in 2026. Metals overall have made big gains in December, with copper expected to be a major beneficiary of the world's energy transition, and prices received an additional lift from a slump in the U.S. dollar. That's your Bloomberg Brief. Anne-Marie.
Yahira, thanks so much. All right, coming up next on the program, Louise Chen will be joining us of Scotia Capital with a bullish outlook on pharma stocks for 2026. That's coming up next. You're watching Bloomberg Surveillance.
See a huge amount of appreciation across the AI names. There's a question of which ones and how long can that run for. Some of them I'm much more bullish on than others. And so I think that's part of it. And then there's also a question about sort of where's the consumer at? How good is the data right now that we're getting, particularly from the federal government? And so there's a lot of uncertainty. But at the same time, people have been making a lot of money over the last few years and they need to put it somewhere.
That was Sarah Kunst of Clio Capital. Good morning and welcome to Bloomberg Surveillance. I'm Anne-Marie Hordern alongside Scarlett Fu today. We do have markets relatively unchanged going into the opening bell. It is a shortened holiday week with Christmas and next week as well with New Year's Eve. But you do see stocks continue to trade around that all-time record high. Turning now to pharma. Louise Chen of Scotia Capital, bullish on the sector entering the new year, writing, "We believe large-cap biopharma stocks multi-year underperformance relative to other sectors, and the major indices create a good entry point ahead of the next wave of innovation." Louise Chen joins us now. Louise, thank you so much for joining us. When you look at potentially this space in 2026, what exactly do you like?
Yeah, so when I look into 2026, we cover about 15 or so of these large cap pharma stocks. I really like, there's two stocks that I like. I like J&J because I think that the underlying performance is really strong and that's going to become more evident as the company continues to execute. And then I also like some of these trough PE multiple kind of stocks. There's about three of them in our coverage universe. That would be Merck, Teva, and also Bristol Myers. And of those two, I like Merck and Pfizer the best of those companies. And the reason that I like them is because I feel that their pipelines are underappreciated. They've got a good plan, and I think they're going to beat expectations in 2026.
When you look at this space, though, two names you have not mentioned. One, Eli Lilly, and they are potentially going to be on the heels of what we just saw from Novo Nordisk with Wegovy and creating this injections for weight loss, diabetes, to now be taken as a pill. Is that going to be really changing the landscape for next year?
Oh, I think it's going to really change the landscape. I do like Lilly. We have a sector outperform on Lilly, but I don't need to tell you what everybody already knows, that Lilly's a great stock and they're going to continue to outperform expectations. The oral pill is going to be huge. And the reason it's going to be huge is it's really going to increase in access and affordability for patients. Right now, the injectable is more expensive. It's harder to take. It's got a greater side effect profile. So people that are not looking to maximize their weight loss, and that's a large percentage of the population, this will be really big. There are about 1 billion people globally that are obese, overweight, and the penetration rate of these obesity drugs is in the single digits. So with the oral pill, I expect that to change into the double digits.
I know you said that you don't need to tell us about Eli Lilly, but people like proven winners, and Lilly has been a proven winner. It's up 41% so far this quarter, and pharmaceuticals as a group are the best performing group in the S&P 500 this quarter, up 18.5% compared with the S&P up 3.6%. Do you see all the good news already priced into Lilly, like when it does get its actual pill form of its obesity drug approved and ready for sale, that we're not going to see much of a reaction at the end of the day?
Oh, I think you'll see a reaction. And the reason that you will is because the obesity market is so big. I think the end market projection has gone to about 100 billion to 200 billion. And a big unknown is what it will look like in the markets outside of the US. And so far, it looks like people are getting that pricing outside the US, and it's direct to consumer. It's not really reimbursed by a lot of the government agencies outside the US. So I think it's going to be really big. I think the numbers will continue to go higher for Lilly. And don't forget, Lilly has a whole pipeline behind their first two initial drugs to come to market. The oral should come to market early in or mid to 2026. And those will be even better drugs than what the first generation of drugs looks like. So I expect this to continue to run.
Of course, when we look at the sector as a whole, there are a lot of risks that are tied as well to policy. We know that the Obamacare premiums are high and they're going to stay high unless the Republican Party can come to some kind of health insurance solution, which increasingly looks more and more unlikely. How are you thinking through whether the political problems start to show up in investors' enthusiasm for this sector?
Yeah, I think that's already more than priced into these stocks, right? So when you saw that the Trump administration was coming in to the U.S. government, a lot of the pharmaceutical stocks in that whole sector already took a dive. And now you're seeing things being traded on fundamentals versus fear, and I expect that to continue. So with some of these MFN deals, with a CMS IRA and what have you, a lot of these drugs will be coming direct to consumer at a huge discount. So that's going to be one segment of the market that people haven't factored into yet. So net, I think things could be pretty equal for these large cap pharma companies.
Well, just 7 days ago, the president, though, announced, he says, largest developments to date in bringing the most favored nation pricing to American patients. When you look at some of these names that are tied to this, Bristol Myers, you have things like Merck, Novartis, Sanofi. What do you see the timeline for this to actually take place?
Yeah, so each individual timeline is going to be a little bit different, right? So you saw 14 of the 17 companies that the letter was sent to actually already come up with these MFN deals. I think and also the drugs are also individual as well. So I think you'll start to see an impact next year, and then that will roll through, and it is going to come through Medicare. It's not for all their broader markets. So the impact is actually limited to certain drugs in certain segments of the market.
Do you think companies are going to use the excuse or try to counter this, that now this means that they cannot continue to do high-end research for new medicines?
No, I don't think so at all. I think what we've seen is that innovation has actually continued. There's a lot of headlines and things in the news, but what I think the street and investors have found surprising is that it's actually been business as usual, especially for the large cap pharma companies. So I expect that positive momentum to continue. And then when you look at some of our companies, they have worked through 24 plus administrations. So I think their ability to navigate through all these sort of big macro changes is already there, and they know how to do it.
Louise, one thing that you point out when you look at the overall biopharmaceutical sector is that you see a good entry point ahead of the next wave of innovation where companies will be treating to cure. What does that mean, treating to cure?
Okay, so treating to cure is either an actual cure or a functional cure. And I think right now we're looking at more functional cures depending on the actual disease. And that's a huge deal because people always talk about this longevity trade. And for people to live well beyond 100, you actually have to cure the disease. It's like a car. Over 100,000 miles, it's going to start to break down, right? And that's what we're starting to see is the next wave of innovation that's coming. And I think that's super exciting because that means people are going to actually live a lot longer.
And you mentioned J&J as one of the main beneficiaries. Who else fits into that category?
Okay. Yeah, I think a lot of our companies are looking at that, right? So I think out of our coverage universe, most of these companies, their target really is to treat to cure, to stop the disease, right? There's a company, Vertex. I think it's super interesting. They're coming up with a product, povetacicept, right? It's for IgA nephropathy. And that product will actually keep people from getting kidney dialysis. And that's really interesting. So that's just one example, but there's a lot of examples of that in our coverage.
When it comes to treating to cure, and you think about this, how has AI been potentially helpful to these pharmaceutical companies?
Yeah, I think AI is part of the equation, right? So I think in the actual operations of the company, it's actually been very important. As it comes to drug development, still think we're in the early stages, and we're yet to see what that can actually happen. But for a long time, these companies have been using AI to help with the drug development process to make it more efficient, to basically take out some of the inefficiencies of the systems in terms of testing too many molecules, spending too much money behind it. But I think that will actually continue to ramp up through the years, and we'll see the result of that over time.
maybe we can get to treat to cure pharmaceuticals quicker with AI. Louise, thank you so much for joining us this morning. Louise Chen of Scotia Capital. Coming up in the program, Citi Chairwoman and CEO Jane Fraser caught up with Bloomberg to discuss the bank's growing exposure in China. That's coming up next. Plus, you hire with your morning movers, and NVIDIA rising after closing another deal. You're watching Bloomberg Surveillance. Good morning. Welcome to Bloomberg Surveillance. Hopefully you had a lovely Christmas. I'm Anne-Marie Hordern alongside Scarlett Fu this morning. She's joining me as Jonathan is still on paternity leave and Lisa is off, but the gang will be back together in 2026. Right now, equity markets are unchanged. In the middle of the Santa Claus rally, we are really having low volumes and very thin trading today on this day after Christmas. It is a federal holiday. The president came out and he made, I believe, the 24th as well and the 26th, as they do in the United Kingdom and other places I've lived. We have these bank holidays, federal holidays, but the NYSE and NASDAQ exchanges said, nope, we're still open for business. There will be trading. All the action has been in the commodity space this entire week and this morning. Scarlett, you've been going through some of these numbers, and they've been almost extraordinary in what people are also expecting to go into next year.
Absolutely. Gold is up 70% this year, the best annual performance since 1979. Silver up about 150% this year, the best annual performance since 1979. Platinum year to date gaining 162%. I mean, the numbers just speak for themselves. And all of this is against a backdrop in which the U.S. dollar is weak and will probably continue to weaken. So there is that knee-jerk reaction of weak dollar, stronger commodities.
Absolutely. All right, we're 1 hour away from the cash open. Here's your morning movers with Yahira. Hey, Yahira.
Hi, Anne-Marie. We start with NVIDIA outperforming the Mag 7 this morning, with shares up nearly 0.8%. And on this quiet week, NVIDIA did manage to make some news. Just before Christmas, it said that it struck a licensing deal with the AI chip startup Grok, taking with it some of its top engineers and even its CEO. Analysts are generally upbeat about the deal since it means NVIDIA can incorporate these new advanced chip designs into its products and stay ahead at a time when you're seeing Amazon, Microsoft, and Alphabet developing their own in-house chips, though, as we know, NVIDIA is way out ahead. Meanwhile, sticking on chips, we go to Micron. Those shares are up 2%. And if we maintain these levels, Micron will open at a record high. And it's worth noting the run this stock has had this year, up 230% as demand for its memory chips continues to be strong due to its place in the AI market. And we end on Biohaven. That stock is absolutely plunging this morning, down 12% in the pre-market after one of its experimental drugs to treat depression failed to meet goals in a mid-stage study. Analysts are disappointed, but not surprised given the complexity of these clinical trials when it comes to depression. Though on a day of thin trading, we are seeing this outsized reaction. Anne-Marie?
Thanks so much, Yahira. And I was just going through some of the pop culture things to know about 1979 when gold and silver were rising in the same way this year. Do you know what one of the top songs was? It's almost one of the top songs now, at least if you follow President Trump. The YMCA by the Village People.
Of course, yes. So everything comes full circle.
Absolutely. Everything comes full circle. It's almost like it's 1979. All right, we're going to turn to banking now. Citi CEO Jane Fraser spoke exclusively with Bloomberg's Stephen Engel about the bank's growing exposure in China and Citi's U.S. outlook heading into next year.
The recent truce has brought some much needed and welcome stability here. We're in a position now for both sides that wanted to have a period now where we can move ahead and have a more stable relationship between both of them. It's transactional, but it's in both sides' interests, and we see our client base navigating this well.
Yeah. What's your vision for the China market as it folds into your overall restructuring plan as well? You're now chair and CEO. First time that those two roles have been joined in a couple of decades. Clear mandate to carry out your vision going forward. What does that look like when you did exit your consumer banking business here, like you did in many markets around the world. You also sold your retail wealth management portfolio to HSBC. You got out of an investment bank JV with Orient Securities, I believe, and you have an outstanding license application for your wholly owned JV in securities.
So Citi has been in China for 124 years. We have a landmark building here in Shanghai. And what we have done is focus our strategy and grown. We are following our international clients around the world. We're seeing them with renewed interest and focus in China, as we talked about. And then we're seeing the Chinese companies innovating at pace and also looking at expanding internationally. So we've been growing rapidly here with a more focused strategy.
This also very bullish on India. Magnificent opportunity there.
He's biased.
Might be a little bit biased, maybe. But again, what do you hope to get from those markets as it fits into your restructuring plan and the vision that you just talked about?
The growth plans that we have going forward, because we are on the front foot. I cannot stress that enough. And you can see it in our results. So all of our businesses, we're taking share, we're growing very quickly, and our returns are improving. So as we're looking forward, it's growth. Let's take India. Citi is larger in India today. We are the largest foreign firm by revenues in India. When I look at Korea, where I was just at, that's another market where we were the first foreign bank to open the doors in Korea. And we have a very strong position there supporting multinationals and clients. So as I look around the world, it's becoming more focused on diversification. There is also a focus on reinvention. What we are doing is helping provide the strategic advice. We're helping provide the financing and structuring and arranging that. And we're also helping manage the supply chain reconfiguration. We're helping with the hedging in foreign exchange, interest rates, because volatility is a feature. It's not a bug of this system.
Through your restructuring, you had to get rid of the retail side. And are there other areas that you would like to divest? I know
you have the wrong story. Citi is about growing. We're very
front foot forward.
We are very clear on our strategy, and we're moving onwards.
I only ask because, again, the Russia situation is a little bit different probably than your overall strategy. We just got word that Vladimir Putin approved the sale to Renaissance Capital of your bank in Russia. Probably something that you've been wanting to do for a while, but it was held back.
We have been winding down, as many companies have been, the franchise in Russia. We were waiting for the final approval to be able to sell. We've got a couple more to go to Renaissance, but it's a tiny business. So it's in the grand scheme of where Citi is, where we're investing, and what we're doing. It would be good to get that done, but it's not critical to the firm's strategy going forward.
Let's talk about the outlook in the United States right now as we head into 2026. We saw the market reaction overnight. Simply, we're seeing that the Fed's equation, the bets for possible easing coming up, are now 50-50 or is tilt below that because of the specter of inflation. What is your outlook for Fed action going into the new year and the specter of inflation rising?
Look, I don't think we're out of the woods yet, and there's a sense that there may be another shoe to drop. It could be in tariffs or in the labor market. It could be in the asset prices that are quite high in the States. But all of that said, we're quite optimistic about 26. The challenge for the Fed right now is with the government shutdown. We all have a dearth of up-to-date data, which we could do with. It's hard to make these calls of exactly what's going on whilst we're waiting for the information. But as we look further out into next year, I think the resiliency of the corporate balance sheets, the strength, companies leaning in to innovation, investing in AI, there is I think the doomsdayers will be proven wrong.
We're a couple months out now from when we had concerns rise about, I think there was one of Tricolor, the subprime auto lender. There were failures. There was concerns about non-performing loans. What does your balance sheet look like as far as that, and where is your worries lie?
Our balance sheet is pristine, but I think part of that is because it's very heavily investment grade on the corporate side. We're over 80% investment grade globally, and when we look at the consumer side, it's about 86% prime. So we tend to see the most resilient, healthiest parts of the economy on the balance sheet. All of that said, we haven't seen a thing that is concerning us. The consumer in the States is being fiscally responsible. Companies have been building up some more cash, either for a rainy day if it proves necessary, but most of them for investment. And they're acting from a position of strength. We'll keep an eye on the labor market. We'll keep an eye on some of the areas of mid-tier players in private credit and the like. But as far as we're concerned, that second, third order effects, the bank's not seeing anything that we're worried about.
Are you concerned by what some say maybe bubble forming in AI? We talked about the advantages of AI, but how much of a bubble or overheating?
I'm not sure if we're just in with a lot of our tech clients on the West Coast. I don't think anyone was ready to say that it's a full-on AI bubble, but no one is saying that there aren't some real pockets of let's call it the British understatement frothiness in the market. It's more around the edges. What I found interesting is we can see a lot of the demand for the infrastructure build that's going in AI and the energy for the next couple of years. Where you saw some opinions diverge was in the 3 to 5 year period, could we be in danger of overbuilding? But no one's feeling that for the big investments that are going on at the moment for the next couple of years. So I think on that one, certainly some pockets of frothiness there on the valuations, but the core infrastructure investments are important. And as we're seeing in our own bank, and I think many companies will start getting some of the productivity benefits coming through. But the scale and the pace of investment is unprecedented, that is for sure.
Great conversation with Stephen Engel and Citi CEO Jane Fraser. Let's get you an update on stories we're watching elsewhere this morning. Yahaira with our Bloomberg Brief. Hey, Yahaira.
Hi, Anne-Marie. Ukrainian President Volodymyr Zelensky saying he plans to meet with President Trump in Florida on Sunday. Speaking to reporters, Zelensky going on to say that a framework for a deal between the U.S. and Ukraine is almost ready. The Kremlin, meanwhile, saying its representatives have contacted the U.S. at President Putin's direction and agreed to continue their dialogue. Meanwhile, former Malaysian Prime Minister Najib Razak has been found guilty of abuse of power and money laundering in connection to a multi-billion-dollar fraud case. Najib, already in jail due to other convictions, now faces another 15 years in prison and a fine of over $2.8 billion. The ruling judge dismissed numerous aspects of Najib's defense and questioned his credibility. And coastal communities in Southern California are bracing for more rain and flash floods, with a state of emergency still in place for Los Angeles and neighboring counties. Meanwhile, here in New York City, heavy snow is on the way. The winter storm has already caused hundreds of flight cancellations in the midst of holiday travel. That's your Bloomberg Brief, Anne-Marie.
Thanks so much, Yahaira. Up next, setting up for the day ahead, plus Deborah Weinswig of Coresight Research, recapping the holiday shopping season. And we'll get another check what Yahaira was just talking about, the storms taking shape across the nation this holiday weekend from AccuWeather. That's coming up next. You're watching Bloomberg Surveillance. Good morning and welcome to Bloomberg Surveillance. I'm Anne-Marie Horder alongside Scarlett Fu. This morning, we're counting you down to the opening bell. Here's your trading diary for the week ahead. Zelensky is expected to meet with President Trump as soon as Sunday in Florida. Tuesday, we have ADP employment data plus FOMC meeting minutes. And on the last day of 2025, we'll get jobless claims. Thursday, the markets will be closed for New Year's Day, and then it's off to the races for 2026. Turning to the consumer, Deborah Weinswig of Coresight Research saying, quote, holiday demand is holding up. but it's a value-first consumer. Deborah joins us now for more. Deborah, thank you so much for joining us. Hopefully, this gives some insight into what the holiday shopping season looked like. When you say value-first, what does that mean? Where are people going to shop?
That's a great question, and thank you for having me on. So we definitely saw continued strength in off-price. So that's TJ Maxx, Ross Stores, Burlington. We also started to see pockets of strength in the dollar stores, and Walmart, of course, continues to really hit on all cylinders and is continuing to take market share really across the board.
Deborah, Walmart, Amazon, and off-price retailers like the TJXs of the world are winning this holiday season because consumers are seeking value. So these retailers are getting the volume, but are they giving up any margin along the way?
That's a great question. What we're seeing is that the specialty retailers actually have done an amazing job of more dynamic pricing and utilizing a lot of AI to do a better job of matching price to consumers. So we think that in the specialty retailers, they're doing a great job on maintaining margin. When it comes to, let's say, some of the other pockets of retail, I think that's been a bit more challenging. And so a bit more of this kind of bifurcation where you've got kind of some of these stronger players, and I would say some of these weaker players where either they don't have the technology, they don't have the product, or they don't have the price set at the right level for the consumer.
So how does Target fit into that? Because it should be a retailer that benefits from consumers seeking value. Yet the company really is struggling. It has a new CEO, but has a lot of familiar problems, falling same-store sales, reduced forecasts. What does it take for the company to work through its problems and be in a position to capitalize on this shift to value?
I mean, I think that's it's not even $1 million question. That's a $10 million question. You know, they have, first of all, you replaced the outgoing CEO, Brian Cornell, with someone internally. You didn't set up kind of a co-CEO kind of structure. So you don't have kind of like the old and the new. So I think there is nothing that's kind of like in place right now to help them with their ills. They've got issues with regards, I mean, inventory, kind of their out of stock levels are as high as they've ever been. Their ability to execute. I mean, there's just something on the execution level that's more fundamental. And I think supply chain, which they've supposedly been investing in for the last decade, but they're just not putting their money into the right place. You know, they've significantly slowed down new store growth. They were using their stores as warehouses. And I think they keep going back and forth between all of these strategies. Whereas you look at Walmart, right, they've stayed, and it's not that their execution has been perfect, but they've continued on one path. And I think that's what's gotten them to where they are today.
Deborah, how concerned have you seen consumers with tariffs coming out of the Trump administration?
So I think that's a really important point. So I think that what we saw is that holiday sales were pulled really early, right? Because the consumer was worried about higher prices. Then you had this, like, almost like everything just went quiet with a shutdown. And then we saw this huge burst at the end with things really strong. And you know, we were mapping store traffic. I mean, we saw some of the highest traffic we've ever seen on record in specialty retail. You know, it was up about 6.2%, and we estimate sales in specialty up about 4.8%. I mean, numbers we haven't seen in quite some time. So while it was definitely dynamic and probably stressful along the way, I think that the sales ended up much more positive than most people expected, even at the beginning of the season, certainly stronger than what we thought.
Well, what do you expect for 2026? Because there's a lot of tariff question marks hanging over the consumer and the market's head, whether or not the Supreme Court is going to strike down IEEPA, whether or not we might see more tariffs in certain places like copper, which might impact supply chains, or even the U.S. renegotiating USMCA from Trump's first term.
So it's a great question. And if you go back to what's driving a lot of apparel demand right now, it is actually GLP-1. So about 1 in 5 Americans have been on GLP-1. Of those, about 72% have changed the size or more. And of those 1 in 5, about 52%
Wait, hold on. Are you saying
the
people are shopping more right now because so many people have lost weight because of Wegovy and Ozempic?
Yeah. So, and it's not just apparel, right? They're changing shoe size, they're changing jewelry size. So it's literally apparel, footwear, and accessories across the board is driving a significant amount of growth. And what we're seeing, right, you just saw this whole kind of DXL transaction, right? Because of the change in sizes, right, even those retailers who are winning is changing.
Interesting. That's okay. I love that. One thing we know from the holiday shopping season is that gift cards are a very popular gift. And I bring this up only because the revenue is often recognized or usually recognized when people actually redeem the gift cards. Have you seen more of a shift or less of a shift from physical gifts to gift cards when you have an environment where prices are elevated and consumers are frankly worried?
You know, the gift card question is an interesting one because what we're seeing is that more and more retailers are trying to create community.
Deborah, I'm so sorry. I believe we're losing you here now. Thank you so much for that insight in the holiday shopping season. Deborah Weinswing of Coresight Research. Scarlett, what struck me is that I didn't even think about that. More and more people are on these injections. Matt Miller are on them. He told me about them. Maybe he's one of these people that are going out buying new clothes. And I wonder how much more that's going to be a story next year, given the fact that it's now going to come in pill
Absolutely,
form.
right, because it just broadens out the potential customer base for these treatments. Plus, once you buy a new size, if you continue taking the drug, then you're going to need to get another size down the road, too. So this is kind of a recurring expense.
I've never heard of your shoe size changing, though, if you lose weight.
Well, when you have a kid, your shoe size often changes. My feet got bigger after I had my two kids.
All right. You learn something new every day. All right, turning to weather now. You want to listen to this if you're traveling today. Heavy snow expected to begin in the New York City area later today. The winter storm already canceling hundreds of flights in the middle of holiday travel. AccuWeather's Bill Waddell back with us now. Bill, what do we need to know? Whereas you said the last hour, are we still expecting maybe up to 12 inches of snow?
Yeah, that's right. In parts of the Northeast, that is possible. If you're trying to do any of that holiday shopping, use those gift cards, do the exchanges, or if you have flexible holiday travel, do it this morning or early this afternoon, because those big impacts are going to be reaching the New York City area by about 4 or 5 o'clock this afternoon. This is the start of the winter storm. You could already see that we have some snow, wintry mix on the radar in part of the Great Lakes Northeast. Looking at the big picture, all of the ice is going to be in the wintry mix on the southern side of this storm, mostly snow on the northern side. Let's get right to New York City with the AccuWeather Wintercast. Our expert meteorologist predicting 3 to 6 inches of snow in New York City. But if that cold air hangs on, there is the potential we could see more than 6 inches of snow in parts of New York City. And it's not just the snow. There could be some other big problems with this storm. Check out the wintry mix, the ice component of this, where you see that dark pink on the map. Parts of Michigan, western and central Pennsylvania, even parts of Maryland and West Virginia. We could see sleet, freezing rain, ice pellets. The big concern here, especially where we see that darker pink, is potential ice accumulation on the tree limbs and the power lines. If those start to weigh down, we hear the tree branches snapping, that could lead to some power outages and some big problems. So looking at the big picture when it comes to holiday travel, this part for the eastern half of the country, that's mostly for the afternoon, evening hours, but you could see major holiday travel weather impacts expected from the Great Lakes to the Northeast, and still our friends on the West Coast dealing with all the impacts of the rain, flooding, and mountain snow as well today.
Bill, thank you so much for that update. Bill Waddell of AccuWeather. Everyone's really focused on this, of course, because it's the middle of holiday travel. Potentially you're going away for New Year's. And also, if it's 12 inches of snow in some places, it's going to be kind of hard to get around.
Absolutely. And I wonder as well, if temperatures stay really low after the snowstorm, that means that you've got a lot of ice on the ground. You've got a lot of difficulty with actually moving the stuff out. Everyone's got a shovel, but you can't do it if it's weighed down by ice and water.
And it's ice. Yeah, that's what worries me. It's icing. But you go ice skating. You play ice hockey. So maybe you can do a game outside.
That takes a lot of work to clear the outdoor rinks.
That would be fun, though. All right, Scarlett, thank you so much for spending the week with me.
It's been a pleasure.
It's been a fun Christmas with you around the table. Coming up on Monday, Lisa will be back with you. Lori Calvasina of RBC will be joining her. Krishna Gua of Evercore ISI and Lisa Shallett of Morgan Stanley Wealth Management. This was my last show on surveillance, hopefully, for the year. I don't get pulled into something next week. John is still on paternity leave. Lisa will take you through next week, and then we'll all be back together for 2026. I hope you and your family have a very Merry Christmas and happy holiday season. This was Bloomberg Surveillance.
So, what will Rachel Reeves's pivotal new budget mean for you?
Has an innovative think tank just come up with a solution for replacing stamp duty?
Hello, I'm Steph McGovern.
And I'm Robert Peston.
And we wanted to recommend you our podcast, The Rest is Money, where we answer questions like these to try and make sense of the UK's economy.
Look, we get it. You're a discerning sort of person. You're a Bloomberg listener after all.
So we're not going to waste your time. Here's why it's worth you searching for The Rest is Money in your podcast app or watching us on YouTube.
Twice a week, The Rest is Money tells you everything you need to know about the money matters affecting all our lives. Fiscal and monetary policy, housing, immigration, even the high street.
Yeah, we do conversations for curious minds. No dry discussions here.
That's why we speak to brilliant and fascinating people.
Yeah, recent guests include Dan Needle, Art Laffer, JP Morgan's Karen Ward, and even the Chancellor herself.
So why not give us a try? Search for The Rest is Money.
News when you want it with Bloomberg News Now. I'm Stephen Carroll. The price of silver is rebounding after its biggest one-day drop in more than 5 years. The white metal is trading around $74 an ounce following a 9% slide in the previous session as traders booked profits following a powerful year-end rally. Mike McGlone is senior commodity strategist at Bloomberg Intelligence.
The narratives that they're using now for pulling up silver have been around for years. We've all known about the demand from solar and everything. But to me now it's in that speculative excesses stage. And I think people are realizing it's much more beneficial maybe to allocate to some precious metals where there's only 4 versus cryptocurrencies where there's 28 million.
Mike McGlone speaking there as gold also regained its footing in trading today following its steepest drop in 2 months. Despite the sudden pullback this week, both precious metals are still on track for their best annual performances since 1979. Russian President Vladimir Putin says he will revise his country's negotiating position after claiming Ukrainian drones targeted his residence. According to the Kremlin, Putin told US President Trump of his decision in a call on Monday. Kyiv has cast the Russian claims as fabrication aimed at derailing the peace process. Here's Russia's Foreign Minister Sergei Lavrov, whose words are spoken by a translator.
On the night from the 28th to the 29th of December 2025, the Kyiv regime carried out a terrorist attack using 91 long-range attacking drones against the state residence of the Russian president in the Novgorod region. All drones were destroyed by the air defense system of the Russian armed forces. No information has been received regarding casualties or damage caused by the drone debris.
Lavrov added that Russia will retaliate and that targets had already been selected. Ukrainian President Volodymyr Zelensky dismissed the Russian claims as a new lie and warned that Moscow could be using it as an excuse to prepare an attack on government buildings in Kyiv. However, President Trump appeared to side with Putin while speaking with reporters.
It's one thing to be offensive because they're offensive. It's another thing to attack his house. It's not the right time to do any of that. And can't do it. And I learned about it from President Putin today. I was very angry about it.
President Trump was speaking as one Kremlin advisor told Russian media that while Moscow intends to work closely with the US on peace efforts, it will reconsider a number of previously reached agreements. The US president, meanwhile, has threatened to strike Iran again if the country rebuilds its nuclear capacities. Speaking as he met Israeli Prime Minister Benjamin Netanyahu, Donald Trump expressed concern that Iran is seeking to revive the program.
Now I hear that Iran is trying to build up again, and if they are, we're going to have to knock them down. We'll knock them down. We'll knock the hell out of them, but hopefully that's not happening. I heard Iran wants to make a deal. If they want to make a deal, that's much smarter. You know, they could have made a deal the last time before we went through, a big attack on them.
The US president also said he would support Israel in striking Iran if it continued with its ballistic missile program. The comments come as Tehran has seen a wave of protests after the local currency slumped to a record low, pushing up food prices and deepening an economic crisis in the sanctions-hit country. Pockets of London's so-called stockbroker belt suffered the biggest house price declines in 2025 as the southeast of England and the capital fell behind other regions. With more, here's Bloomberg's Chris Pitt.
The figures from Lloyds Bank reveal a chasm in house price growth between areas in and around the capital, the most expensive in the UK, and the rest of the country. The West Sussex town of Crawley and High Wycombe saw the biggest falls of any UK town or city, with prices there falling by 8.9% and 7.4% respectively. The figures are in stark contrast to large swathes of the rest of the UK, with Plymouth and the southwest of Stafford in the West Midlands topping the list for house price growth in 2025, with both areas enjoying increases of more than 12%. In London, Chris Pitt, Bloomberg Radio.
And more than 1,000 people have been recognised in the UK's New Year Honours list. Actress Idris Elba is being knighted, while Serena Wiegmann has been made an honorary dame after leading England's women's football team to back-to-back victories at the Euros. Former Olympic ice dancers Jane Torvill and Christopher Dean are also being honoured. They say they're thrilled with the accolade.
He was like a little kid jumping up and down. He couldn't sit still.
I mean, it's such an amazing award to receive this and an honour, and we're really humbled by it. We've been together for 50 years and skated and performed and entertained over all that time.
Jane Torvill and Christopher Dean speaking there. The UK's new ambassador to the US, Christian Turner, is also being knighted for services to foreign policy, alongside Barbara Woodward, a diplomat who will be named Deputy National Security Advisor and is set to become a dame. That's news when you want it with Bloomberg News Now. I'm Stephen Carroll and this is Bloomberg.
Want to know how Russian pranksters tricked a top government official?
Or how the only copy of a Wu-Tang Clan album...
All right, let's cut right to it. This is Bloomberg's new show, Primer. Technology is $1 trillion game. Won, lost, won again, just by backing the right science at precisely the right moment.
My life has been focused on how can you elicit intelligence from brain cells in a dish.
This is the fundamental building block of our fusion technology.
We're doing things that have never been done by anybody, ever.
Everyone is selling the future. If you want to understand what's coming, you'll want to watch Primer, because details matter.
Lasers on.
So do lasers.
There we go.
Oh, and it's on all these lovely channels. Hope you're jotting this down.
Renewable energy is the only path to a future prosperity. Renewable energy is creating foundation for a renewable civilization. We just cannot put our civilization under limited fossil fuel resources. Renewable energy is everywhere. It's almost zero cost. It is unlimited and renewable.
Not going to do that. Everybody's going to suffer.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
Investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg. Bringing you up-to-the-minute news whenever and wherever it happens. I'm Haslinda Amin in Bangkok. This is Bloomberg. in case you missed it on The Pulse.
Distinguish between companies that are here because they're running international operations and companies that are indigenous and working with the citizens of the UK, and make sure you get the regulation strategies right. With the rule of law and the great city that London and the great country that UK is, there's plenty of upside.
What do you tell the Prime Minister?
I tell them to make sure the regulation's fair, be the best place for a non-UK based company to operate, and you'll get companies coming here.
Don't miss The Pulse, live every weekday.
Good morning. I'm Joanna Bersetchi in Dubai, and here's what we're following this morning. The Russian president has told Donald Trump he will be revising his country's negotiating position because Ukrainian drones had targeted his residence. Ukraine has dismissed Vladimir Putin's claim as a new lie and warned he could use it as an excuse to attack government buildings in Kyiv. But after speaking with Putin on the phone, President Trump said he was very angry.
It's one thing to be offensive, because they're offensive. It's another thing to attack his house. It's not the right time to do any of that, and can't do it. And I learned about it from President Putin, and I was very angry about it.
Citigroup expects to post a loss of about $1.1 billion after tax on the sale of its remaining business in Russia. The lender plans to account for its outstanding operations there as held for sale in its fourth quarter earnings. Citi expects to complete the sale of AO Citibank to Renaissance Capital in the first half of 2026. The U.S. Chamber of Commerce is appealing against a federal court's refusal to block the Trump administration's $100,000 fee on new applications for H-1B visas. The visas are widely used by American tech companies to hire skilled foreign workers, but the fee has been imposed to encourage them to hire U.S. workers. The Chamber of Commerce says it's unlawful because it overrides federal immigration law. UK consumer spending on credit and debit cards has fallen for the first time since the pandemic. Data from Barclays shows that card spending fell 0.2% compared with 2024, a sharp slowdown from last year's 1.6% growth and the first decline since 2020. The figures confirm that household spending is weakening as real disposable incomes fall. And copper is headed for the longest winning run since 2017 in a December rally powered by the prospect of more stress in the supply chain. Bulls say more metal will be drawn into the U.S. to beat potential tariffs, forcing buyers to pay more. Copper rose more than 2% on the London Metals Exchange, putting it on track for a 10th day of gains. And a check on markets as we head into the final trading days of the year. The handover from Asia Pacific somewhat muted, with many of these markets seeing their final trading day for the year, including Japan, South Korea, and Thailand. The MXAP is down 14 basis points. S&P futures dipping somewhat as well after a major pullback for Wall Street yesterday. The Nasdaq ending in the red, down 0.5%. Silver, a rebound today, though, up 3.5% after yesterday's drop of more than 10%. But green on the screen this morning, 74.6 is where we're at for silver after a massive run up in the last month. And the USD is slipping 7 basis points in trade, a weak year for the greenback. This is Bloomberg.
It's so wonderful to be here with all of you celebrating 50 years of Microsoft. And it's especially exciting to be doing it at a time like this.
It's been a time, to say the least. The computer club turned software giant is trying to catch the next technology wave. It started with $1 billion bet on OpenAI, the startup behind ChatGPT.
I see the path towards this just being my super assistant for all of my cognitive work.
Super assistant.
Yeah, I am super verbose and polite now in email responses.
You could now get a computer to do things without having expert programming skills. AI is at everyone's fingertips, and the tech industry is expecting it to be the next platform shift.
The same way that, Microsoft Office became sort of a basic set of skills, now working with these AI agents is, how you can actually organize your learning and think, okay, this is how I would use this in the job I'm going to have.
Catching this wave might have been harder in the house that Gates built. It took a baton toss or two for Microsoft to get here.
I wrote more code than either of these guys. But when it comes to picking people, motivating people, thank God for Steve and Satya.
Yesterday, I was sitting in the middle of them. It is like my worst nightmare. It's kind of like a Bill and Steve review together. It's like, oh my God, how did I end up here? Take me out of here.
Yeah.
And the Udell tree is popular.
I guess that was the first time the three of them have all been together on stage in like 11 years. And they're all so different. So it's really just interesting to think about what it takes to survive as a company for 50 years and what it's going to take to get to the next 50.
Well, we have the person to ask.
You are credited with leading Microsoft's comeback, and you came in as kind of a wartime CEO. Is it peacetime now, or is it still war?
I mean, those metaphors are interesting. To me, I feel like the Microsoft I grew up in was that there was no such thing as, oh, wow, we won anything. So at least the core DNA and the core posture I've had throughout my 32 years at Microsoft is we better get our act together to make sure we are learning fast enough about what the next big thing is. It's all about, hey, are we being relevant in the future? That's the only way to survive.
When Satya Nadella took the reins in 2014, he challenged the Windows-obsessed hierarchy and reoriented Microsoft around the cloud and AI. It worked, and the stock talked, to the delight of Ballmer, Microsoft's largest shareholder.
Everything's 3 times as big. Revenue's 3 times as big. Profit is market cap's more than 3 times as big. All good by me. So everything is scaled so much. It's amazing.
Microsoft surged back to Wall Street glory with the Magnificent Seven, shorthand for high-performing tech stocks with market caps bigger than some countries.
The hardest lesson you've learned as CEO?
I think the hardest one is to be able to really live that, right? Deliver the present and then prepare for the future. That ability, like as a CEO, what is it that you have to do? Each quarter, you have to create magic, right? That's kind of what every 90 days, the market expects you to create magic, and that's kind of the reality of the world we live in, while at the same time building a long-term institution. And the accountability that goes with it, being able to sort of understand what it takes to have that ultimate accountability to both deliver today and for tomorrow, and to be able to get that balance right.
It's a much more complex job today. I have to say I'm in great admiration for how zen he is at picking the things he's going to focus on and all the choices. He's very good about drawing both Steve and I in. So whatever expertise we have, he gets the benefit of that. So I think he's kind of a model. He wasn't there in the early days, and yet, of all the tech companies, I think he's been the best at carrying forward even the original spirit of what made Microsoft special.
Nadella's legacy includes big investments and acquisitions, from LinkedIn, GitHub, Activision Blizzard, to what some have called the deal of the decade, a $13 billion bet on OpenAI.
Microsoft's biggest hit?
Windows.
Biggest miss?
Clippy. It was just ahead of its time. It was just ahead of its time. It's back again.
Biggest surprise?
The biggest surprise was maybe this OpenAI ChatGPT. Having a chat interface become a hit was a real surprise.
The concept of a chatbot isn't new. They tried before with Clippy, Cortana, and Tay, the bot that had to be shut down 16 hours after launch.
Soon Tay was ranting about Hitler.
But ChatGPT was a massive success, giving Microsoft a surprise jump in the AI race.
The deal with OpenAI, was it smart, lucky, or a quick fix?
It's hard to argue anything other than smart. The original deal back in 2019, nobody really knew if it was going to work out the way they said, right? And Bill Gates opposed that deal on technological grounds because Bill thought that the way that the technology of the AI market would play out was going to be a different way, and that what Sam and company wanted to do wasn't going to be how it would work. Lucky that they picked the right horse, perhaps.
The OpenAI-Microsoft partnership delivered a hit, but there have been some bumps along the way.
It is full mutiny within the world's most important AI company.
Who's going to be CEO of OpenAI tomorrow? You tell me.
I will leave it to OpenAI and its board.
What's Satya like in a crisis?
Satya, to me, that weekend was like a duck. He was completely calm above the water, and underneath the water, he was paddling furiously. You pointed out to me that quote about, Microsoft being above them, below them, around them, and, which sounds kind of scary, but really it's true. The contract that Microsoft had struck and with OpenAI really gave them access to everything, no matter what happened. And at the same time, things are starting to change on the basis of that.
Microsoft is building its own models. OpenAI is making other friends, and your partnership ends in 2030. Are you trying to tell the kids that maybe this marriage isn't forever?
This is another thing I learned in the last 50 years is, you approach all partnerships and create long-term stable partnerships which are win-win, right? So I hope that for decades to come, Microsoft and OpenAI will be partnered in a variety of different ways. Will they have other partners? Absolutely. Will we have other partners? Absolutely.
But the relationship is changing, right? Like, how is it changing, and what happens when that deal is?
I think that any company that has gone from being a research lab to one of the most successful product companies of this age, obviously things have to change for them and for us, and in the context of the partnership, right? We have IP rights. We're thrilled about that access we have. We are infrastructure providers. They're the biggest customers of ours. And so to us, having that multifaceted sort of partnership is what we are really focused on. And so why would any one of us want to go upset that?
Still, business is business, and it seems like there's always a new twist on tap in that relentless pursuit of relevance.
As we saw with search and your competition with Google, sometimes you just can't fight the verb. It's habit forming, and ChatGPT is the verb right now. So how much do you worry that Microsoft loses the mind share game?
Every day that ChatGPT succeeds is a fantastic day for Microsoft.
Right. Every time you search on ChatGPT, Microsoft makes money, right?
Yeah, and in some sense, it even proves the point that markets can evolve and new hit products can be created from anywhere, and what.
Renewable energy is the only path to a future prosperity. Renewable energy is creating foundation for a renewable civilization. We just cannot put our civilization under limited fossil fuel resources. Renewable energy is everywhere. It's almost zero cost. It is unlimited and renewable.
Thanks to AI, Samsung's photo editor is much more powerful.
Generative Edit lets user reimagine surroundings, lighting, texture, and even the perspective.
The best idea comes when we think from the user point of view, not from the engineers.
Our goal was to create a powerful AI tool that lets users express their creativity safely and effortlessly.
It's always exciting.
How will the AI wars play out? Like, does it feel different than the mobile or the browser wars? Like, who wins?
Well, we don't know. We know that the level of investment by the leading companies is pretty mind-blowing. Google's a great company, Microsoft, OpenAI. We're out there, every day, making Copilot better.
You obviously have a booming enterprise business. When you look at what Google is doing, and Apple, and Meta, and Amazon, to win in consumer AI, and how do you do that?
To me, I want us to play to our strength. If I look at even what we're doing with Copilot, right? How do we build a Copilot that is the new browser, effectively, in this intelligence era, that has a unique characteristic that is Microsoft, right? Whether it's helping you with your travel planning, or whether it's shopping, or with your homework, but do it in a way that it uniquely telegraphs what I think Microsoft's signature would be in it, in what is going to be a new way to litigate what is the consumer market.
Outside of video games, Xbox, Satya and team have just not figured out consumer. And it's becoming potentially more of an issue because our generation grew up in Microsoft products. The generation that's in school now does not. They live in Google, they have Apple devices. You have a generation growing up, and the question for Microsoft is, what is their entree to Microsoft products if they're not growing up with them?
Microsoft got a head start with exclusive access to OpenAI's models, but the boardroom drama and big tech competition pushed Nadella to innovate from within.
Hello.
Hey.
Good to
Great to see you.
Mustafa Suleyman is head of Microsoft's consumer AI team, who came in-house in a buzzy acqui-hire. Suleyman's job is to make Microsoft's own chatbot, Copilot, as essential as Excel or Windows in a big bet on the next era of computing.
Everything is about to shuffle, whether it's search or the browser or apps or the operating system. These models are just completely different to any one of those last generations of software.
So right now you feel like you have a once-in-a-decade opportunity.
I really do. I think these next couple of years are going to be a defining moment. We're going to look back and be like, this was the era of real agents, you know, forming a lasting, meaningful relationship with an AI companion that becomes the primary way that you do computing in the world.
He's trying to create a seamless and futuristic consumer AI experience, a new mission for Microsoft.
The number one priority for us is that we have to produce beautiful, elegant consumer products that regular young people love, right? And that is not the way that young people think of Microsoft's products today. And that's a very big shift in our thinking.
Microsoft's product suite still, I think, has a lot of challenges and in many ways can feel dated.
Like Excel, you're making me cry. When are we banning Microsoft Outlook? I spent 2 hours today trying to open an email. You have one job.
How do you make it smarter but still simple and delightful?
So you clearly want it to reason over your past data, use your personal information, and then get really good at taking actions inside the browser, searching for things on your behalf. And that's just an iterative process that, you know, is going to take many, many quarters to come to pass.
Mm-hmm. What do you think your approach, your secret is going to be?
I think humor is going to be central. It's got to have a sense of itself, a little bit of character. It needs to remember you and know who you are. And that range of personalization, that's going to be a key differentiator.
All right, we're going to try out some different voices.
Looking for answers or a new perspective? Let's chat and figure it out together.
Whoa.
I want to hear your big ideas. I can write stories, brainstorm ideas, and I can sound like this if you choose.
That sounds a lot like Mustafa to me.
Hey, Copilot.
Does it sound like Mustafa to you? So I have a big tech conference coming up, and I'm trying to think of people we should invite to interview. Do you have any ideas?
You could consider inviting Satya Nadella for insights on AI and cloud, Sheryl Sandberg for social media and leadership.
I find it interesting that Satya's your first choice. Is that because he's your boss?
Not at all.
Are we all just going to be talking to our computers and our phones? Is that the next
I
wave?
think the voice is going to be one of the next platforms. It's not going to replace all the previous platforms. It's like a fork. It enables a completely different way of talking to your computer.
No matter which chatbot wins, demand is expected to grow, sending big tech on a massive spending spree.
Microsoft's putting out $80 billion of investment. You know, clearly that's a sense that, wow, we have something that customers are going to want. We're willing to invest at a level that's completely unheard of. I mean, it's a pretty mind-blowing number.
We're in this new computing era. Tech giants, including you, are building these AI data centers. Do you have any concerns about the size and scale of this bet? Like, are we building the future the right way?
I think the scale is pretty stunning. But the real test here, Emily, is what happens in the real economy. The real test is not some benchmark or what have you of AI. It's one simple fact, which is when we start seeing higher growth rates around the world, and the benefits of that growth rate, by the way, being much more broader, cross-sectorally and by economic strata, then I think we would have achieved something.
The emergence of DeepSeek from China, you told your team to quickly integrate it into Azure. Why don't you think it's a risk? And what do you think of China's role in this fight?
The thing that I think about is there'll always be open source. And if anything, what DeepSeek has proven is open source can come from any place. In this case, it happens to come from China. The next model may come from some other country. It may come from the lab in the United States. It doesn't matter. In this industry, we better sort of really face up to the fact that this is a rate of diffusion that's faster than anything before, and it's worldwide.
renewable energy is the only path to a future prosperity. Renewable energy is creating foundation for a renewable civilization. We just cannot put our civilization under limited fossil fuel resources. Renewable energy is everywhere. It's almost zero cost. It is unlimited and renewable.
Thanks to AI, Samsung's photo editor is much more powerful.
Generative edit lets user reimagine surroundings, lighting, texture, and even the perspective.
The best idea comes when we think from the user point of view, not from the engineers.
Our goal was to create a powerful AI tool that lets users express their creativity safely and effortlessly.
It's always exciting.
There's a version of AI that's a security and privacy nightmare. How do you think about it?
Well, I think that it's just an imperative for us to protect security and privacy in every aspect of technology, whether we're talking about AI or social media or the content we create at work. The aspect of AI that is most interesting is that it is sort of the ultimate tool and the ultimate weapon.
So the question I wanted to address today is really simple. What does all this mean?
Well, it's not my shame on you. You say you claim that you care about using AI for good, but Microsoft sells AI weapons to the Israeli military.
I hear your protest. Thank you.
Shame on you. Microsoft is a war profiteer. Microsoft is a war profiteer.
Not everyone is along for the tech industry's ride to the AI promised land. There are consequences and challenges ahead as this new underlying technology embeds itself into everything.
Do you think we're going to really look back on this march of progress as positive? You know, I've heard Bill talk about how he never thought that tech could be negative until the era of social networking. I guess I wonder if this sort of relentless march of progress could in the future mean fewer jobs, fewer opportunities, less meaning in our lives.
I think it's super important to acknowledge the uncertainty around what's going to unfold over the next 10 or 20 years. Anyone who is confident is probably wrong. And so that means that we have to be alive to the fact that this really is different to other types of technology. It is not just a simple tool. It's dynamic, it's emergent, it adapts to you on the fly. And that means there could be all kinds of third-degree effects that are quite hard to predict.
You've said that the age of complete human dominance will be over in 10 years. What does that really mean for us?
What it means goes beyond, which company actually delivers that or what their stock price is. It's a much more profound thing than just like the browser wars were. I mean, it didn't matter to people really who won the browser wars. Here, the capacity, the intelligence will give humans a lot of choices.
It's a complicated picture for the software giant. Its mission is the future of work, but it's investing in technology that's reshaping the future of opportunity. AI-powered coding assistants are changing how software gets built, automating tasks normally handled by junior developers. That's become a bragging point at the very top.
And so I'll say maybe 20-30% of the code that is inside of our repos today in some of our projects are probably all written by software. What about you guys?
I don't know, maybe half the development is going to be done by AI.
Is AI going to make engineers obsolete?
AI is going to vastly change the way software gets built. It will. And yet there's still going to be people who have to figure out what the world needs, how to give it to them. Will all of the code crunching activities of yesterday be around tomorrow? No, a lot of those will go away. But I'm an optimist. People say, oh, are you going to put people out of, and this happened every time.
Yeah.
Will this cause a loss of jobs? Will that cause a lot of jobs? You know what I'd say? Somehow the world's always created new jobs. It can be hard, the dislocation. People say, oh, shoot, it's my skills that became obsolete. But there will be new important skills people need.
What's going to be the it job of the future if it was a software programmer in your era?
Well, I'm not sure there's any it job. If you love math and software, great, go be a software programmer. But that was, the percentage of the labor market that was, nerding people like me, where you'd be writing code, is pretty modest. All of those capabilities where you bring it as a human, I think will still be fairly important. But it is a period where answering these questions is probably harder than at any time in history.
I think it takes like unique human arrogance to believe that AI cannot supersede humans.
But what about that scares you?
So many things, right? Like this is like, what does it mean to build something that is more capable than ourselves? Like, what is that?
There are folks out there, including Sam Altman and OpenAI, who believe super intelligent, super powerful AI is right around the corner. What's your bet?
I think that we are definitely on a path to have more powerful systems pretty soon.
Is AGI being built on Microsoft's campus right now? Like, can we go find it?
No, you can't find it. It doesn't exist.
How confident are you that AI's promise will outweigh the perils?
I'm not confident, but that's what we need to get oriented around. That's why I was surprised AI wasn't really an issue in the last election. It's definitely got to be shaped.
Hearing you say you're not confident is kind of scary.
People should think through, how is AI going to reshape our lives? It is a profound change agent. And, I don't think it should just be the people who know the technology, because there's a lot of choices about how it gets used. It will change learning. It will change the job market. And, I think we can shape that in the right way, but it'll be, just like nuclear energy, nuclear weapons, it'll challenge us.
Thank you for your vision, your leadership, your passion, and for building the Microsoft that we know today, a company that has truly changed the world.
What is Microsoft in 50 years? Like, your best guess?
I mean, a petri dish with a couple of cells connected to like an AI being that controls everything. I don't know that we know what it is in 5 years, because we're talking about the technological innovations here and how do they lead with their own products and not just because they picked the right model. Microsoft is preaching this gospel of AI changing everything about the way we work. What Satya wants to see is for that to be proven out first at Microsoft.
Microsoft changed the world. Will Microsoft change the world again?
I go back to that founding moment when Bill said, you know what, the software industry didn't exist. And he and Paul sort of said, oh, we should build software and hopefully we can monetize it and there will be an industry. I mean, it's crazy.
Hopefully they will come.
Yeah, and it all happened. But the other thing about it, though, was that core of, wow, we want to build software so that others can create more software. That, I think, is what gives us relevance. I always say this, longevity is not a goal, relevance is. And the framing of this company from 1975 to 2025 has been the same, which is, can you do things that allow others to do more things?
If you could time travel to 2075, what advice would you give your successor?
The advice I got from Steve Ballmer when I took on the job is the advice that I think of all the time, which is be bold, because if you're not bold, you're not going to do anything, and be right, because if you're not right, you won't amount to much. And so that ability to sort of get past the status quo by really boldly thinking of a future that doesn't exist, but then executing, right? At the end of the day, business is about being able to earn the stripes one step at a time. And I think that's what this company has exhibited. It has taught me all through my career at Microsoft, which is you got to dream and execute, dream and execute. And we've not gotten it always right, both either on the dream side or on the execution side, but on the batting average, it's pretty good.
Renewable energy is the only path to a future prosperity. Renewable energy is creating foundation for a renewable civilization. We just cannot put our civilization under limited fossil fuel resources. Renewable energy is everywhere. It's almost zero cost. It is unlimited and renewable.
Thanks to AI, Samsung's photo editor is much more powerful.
Generative edit lets user reimagine surroundings, lighting, texture, and even the perspective.
The best idea comes when we think from the user point of view, not from the engineers.
Our goal was to create a powerful AI tool that lets users express their creativity safely and effortlessly.
It's always exciting.
Good morning. I'm Jumana Bersachi in Dubai. Here's what we're following this morning. The U.S. president says Hamas will be given a very short period of time to disarm or face being wiped out. Donald Trump was speaking after talks with the Israeli prime minister in Florida, in which they discussed moving to the second phase of the Gaza ceasefire. President Trump also praised Benjamin Netanyahu for his wartime stewardship.
Look, he's a wartime prime minister.
Silver jumping to all-time highs as escalating geopolitical tensions boost the historic rally. Bloomberg's Tatiana Daria joins us now. Tatiana, let's end with the question we heard from Cameron Dawson earlier this week. I think the question is, how much can it continue? Can this rally continue?
Well, we have to ask ourselves if the macro conditions and sort of the catalysts that are playing into this rally will continue, and consensus think that they will. For example, the structural bid from central banks, that is expected to persist for years to come as they want to diversify away from dollar assets into gold. And if you look at geopolitical fractions, we keep seeing more of that, right? You have Venezuela. You keep an eye on that one because you cannot rule the risk of boots on the ground there. You see more militancy escalating now in Nigeria. So geopolitics is reviving that premium yet again. But beyond that, you also have concern about Fed independence going into next year. Let's not forget about the Supreme Court tariff decision, which could really upend bonds and rekindle that risk premium if fiscal concerns return, if the administration is forced to issue refunds. So a lot of the catalysts are in place. And if you look at the white metals, they've just recently been added to the critical minerals list, which opens the threat of tariffs going into next year. So these are sort of the big tailwinds that the market has. But of course, we cannot discount the risk of reacceleration in the economy with the Trump administration pushing that tax bill and those provisions kicking in into the next year.
And a reacceleration in the economy would be good news for the industrial metals like platinum, like silver, like copper as well. How are you thinking about the demand that's coming in from ETFs? Because that was a big driver, at least for gold.
Yeah, exactly. For gold, and now they've actually spiked for the rest. So what is being less appreciated or less talked about is that ETF crowd has also piled in on this trade. And in gold's specific case, ETFs have actually bought more than central banks by some estimates. I only say that because we don't have full visibility into the central bank action. But if you look at the data that we have available, those ETF buyers have bought more than central banks. And they've returned to this market for the first time in the last last 5 years. So if you look at the history, that's poised to continue. That's poised to offer another tailwind. But it also leaves this market at risk of just severe crashes when it all reverses, right? ETF buyers and just retail traders can get easily scared by an unwind in this trade. So if you play that trade, you have to be aware that there could be some outsized move on the downside, as we've already seen on Wednesday. I mean, Palladium crashed more than 4 standard deviations. That will stress your risk management.
Mr. President, how quickly should you folks move to phase 2 of the peace plan for Gaza?
As quickly as we can. But there has to be a disarmament, that we have to disarm with Hamas. So one of the things we'll talk about, certainly, but there has to be a disarming of Hamas. Otherwise, very quickly, yeah. There was a major explosion in the dock area where they load the boats up with drugs. They load the boats up with drugs, so we hit all the boats, and now we hit the area. It's the implementation area. That's where they implement, and that is no longer around.
I'd like to know if you and the Prime Minister talked about having Israel pull back its troops before Hamas fully disarms. I know that's been an issue. Did you push for that today?
Well, we talked about Hamas and we talked about disarmament, and they're going to be given a very short period of time to disarm, and we'll see how that works out. Steve Witkoff and Jared Kushner will be in charge of that from our side, but if they don't disarm, as they agreed to do, they agreed to it, and then they'll be held to pay for them. And we don't want that. We're not looking for that. But they have to disarm within a fairly short period of time.
Is Israel withdrawing its forces?
Well, that's a separate subject. We'll talk about that.
The United States tariffs program is likely to have long-term consequences, no matter what deals countries strike with Washington this year. That's according to the CEO Radar, which explores what topics dominated almost 4,900 Q1 earnings calls worldwide.
Tariffs are really accelerating a trend toward localization, but it's really added enormous pressure and enormous uncertainty.
To learn more about what topics matter most to CEOs, visit Bloomberg.com/CEO Radar.
I will say I'm a little bit more optimistic now than I was, back in April during Liberation Day, given just that we have at least more certainty, a little bit more clarity on the tariff front in terms of what the levels are. We're not talking about 50% anymore or anything like that. Whether or not they're legal is another story, but that sets up for at least a firmer, I think, a start to the year. We know what to expect, but that's not to say that there are lots of landmines in store for us in 2026, and just a lot of them coming in January in particular.
It's interesting. I'd love your take, Jennifer, on what data to look at. Look, in between Christmas and New Year, it's pretty thin, but we have had a little dose of it. US December Dallas Fed Manufacturing Index fell to negative 10.9 today. The expectation had been for negative 6, and that's more about the manufacturing focus over there in Texas. But we're also seeing some of the pending home sales coming in much stronger than had been anticipated on a month-on-month basis. We're up 3.3% if you looked at that number that broke at 10 a.m. What is the tell for you going into 2026? What are the key data points that you want to look at?
So I'll be looking at, I think everybody else will be looking at anything that's related to jobs, anything that's related to inflation. funny you mentioning the data because we finally got the Q3 GDP numbers out of the U.S.
They were good.
Was last week, right? Yeah, 4.3%, which was like, whoa, blew me away. And it wasn't just, exports, it wasn't just inventories or anything like that. It was pretty broad based. Very interesting take, for example, from the consumer side. A lot more spending on that side, not just on, it was just pretty broad based as well, but a lot on non-durables and also on services. So, we can't discount the consumer just yet, but at the same time, all that's a big look in the rear view mirror. That was all Q3, and now we're looking at Q4, and of course, as we're starting Q1 in just a few days. But we have to get through this period of still not clean data. It still has to be scrubbed. I think we're going to be looking for a lot more revisions. It'll be interesting. The first take, of course, and all the regional data and all that will make for a very interesting story. But I'm going to be more interested in the government data and what is going to happen after they revise them in the months ahead to see what the real story is going to be. But so far, as of the first 3 quarters of the year, a very strong, a very resilient U.S. economy still, and it's going to get messy because of the shutdown that we had in Q4. We're going to have that bounce back in Q1, but at the same time, we can't break out the bubbly just yet because we could be talking about shutdown again in the next couple of weeks. Sorry to say that.
Exactly.
Sorry to put a damper on all this, but yeah, that's the reality.
That's out there. So talk to us about the consumer out there, Jennifer. How do you see the consumer? I know we've got that K-shaped economy out there, so maybe we've got to, hem and haw it a little bit, but it seems like the consumer's doing okay. Is that what you're seeing?
So far, again, we got the latest data that we got was from the retail sales report. The core measure was very strong, sets up for still a strong quarter for this consumer, but still, we have to be careful because of the shutdown and all that. At the same time, I'm very wary of the confidence surveys that we've been seeing. And they can swing back and forth, but just particularly what we saw from the conference board survey that had that dropped, considerably, but, it wasn't about inflation because the inflation expectations component, I believe, was quite steady, but it was all about jobs. And fewer people were saying that they found jobs plentiful. More people were saying that they are finding jobs hard to get. So that's something that we have to be very wary about because obviously at the end of the day, it's having a job, having a steady income that's going to be what is the main driver for the consumer.
And the main driver for the Fed. We're going to talk a lot more about the consumer after the next break. But talk to us, Jennifer, a little bit about one of the key issues you think we should be tiptoeing around is who is going to lead the Fed next and how they react to the data that they're given to. So it's going to be early January that we're going to be anticipating which Kevin it'll be.
Right, yeah, exactly. we do know for sure that is going to be, his first name will be Kevin. The last name is to be decided. But, it's going to be, he will have a very difficult job finding his way through the data. Obviously the analysis will be very important, but also getting some sort of a majority within all the Fed voters, because as we saw from the last Fed vote, there are quite a few that are not so confident that they are ready to cut rates again or just yet. We are not looking for a January rate cut by any measure. I don't think anyone is right now, but I think a couple more at the minimum rate cuts to come at a slower pace. We're looking at March, June, and September for the next rate cuts. 3 more to come. Everything obviously will be taken on a meeting by meeting basis and will be very data dependent. But having that majority will be very critical.
Jennifer, just when it seems like the market may have put tariffs in the rearview mirror, USMCA talks officially launch mid-January. What's going to happen there? You've got a unique perspective up there in Canada. What's the expectation?
I think expectations, I'm going to say, from my perspective, I think they're kind of low right now. Not sure exactly what's going to happen, whether or not we're going to actually have an actual USMCA per se, or is it going to be a USC, CM, a USM, some sort of type of combination of that. But obviously there is going to be a lot of give and take from all parties. It's just going to be how much, how much each party will be giving or taking will be critical. But it will definitely be a lot different, I think, than what we have right now.
Let's talk more global perspective now, because you've got some great takes on global central banks, not just what's happening at the Fed. The Bank of Canada, 2024 was a big year for rate cuts. In fact, 100 bits were done in 2025. Are we now done until those trade talks are a washout?
So it sounds like the bank from Governor Macklem basically sounds like that they are done, that they're quite comfortable. The words were like that they think that rates are about right where they are right now to get inflation back down to target. So at the bare minimum, it sounds like nothing is going to happen. But I think if there is a risk, the risk will be more cuts. Again, given how the USMCA fares, I mean the U.S. is our biggest by far trading partner out there, with about 3/4 of our exports going to the U.S., over 50% of all imports coming from the U.S. So many businesses are very dependent on what happens. Sorry. So at that point, because of that, we do believe that how the talks fare will determine what happens with the Bank of Canada, and of course with inflation in the economy.
How about what's your dollar call here for 2026? The dollar has not bounced back like stocks have bounced back and other parts of the market have bounced back.
That has been one of the toughest calls, I'll tell you, to make on the calls on the U.S. dollar. It's been like the U.S. economy quite resilient, but you would imagine, in theory, in a world where almost all the central banks are basically finished easing policy, maybe one more to go, maybe a couple more to go, and some of them are getting ready to start to tighten or continue tightening. In the case of the Bank of Japan, in that kind of environment, and then of course with the Fed still on an easing bias, you would imagine that the US dollar would start to weaken. But it's sort of like how it's going to be all relative to everybody else in terms of the economy. If the US economy continues to remain resilient, which we still expect, and we've got about 2% growth penciled in for 2026, that will actually help support the US dollar. So even though we do look for the US dollar to weaken, it's going to be a slow, softish weakening trend, not a big drop.
Let's talk about what it is, just more broadly, what the airline sector tells us about the consumer. Jennifer Lee is back with us, senior economist at BMO Capital Markets. And we talked a little bit about consumer sentiment at the moment and what the data is that you've been drawing from. But what does the desire to travel tell you about the consumer and its resilience right now, Jennifer?
Well, it's interesting that, we're talking about the consumer resilience because, again, we can never, like I said, we could never, ever underestimate the U.S. consumer. And by the way, with those third quarter Q3 GDP numbers we were talking about earlier, a lot of the spending was on services as well. So that will also add into the airline spending as well for the travel. But at the end of the day, it's all about the dollars, and how much the tickets are, for example. But of course, what's incoming, and consumers are going to be obviously, again, it's all about jobs. It's all about wages. Wages have been, pretty steady, about 0.5%-ish per month increases, roughly 0.4, 0.5, which is decent enough. And having that steady income is huge. And of course, what you're paying out in terms of prices at the pumps, at the grocery store, having inflation coming down since, those peaks a couple of years ago, it has been very helpful, but they've sort of been sticky at this point. And this is what the Fed's challenge is going to be over the next year, is dealing with that balancing between the weaker jobs market or less resilient jobs market and still sticky-ish CPI, depending on who you're talking to, of course, about whether or not CPI is still sticky. But things like beef and bananas, I believe, are still surging. So, it's not every single item in the grocery store that's coming down.
All right, Jennifer, let's stay with that theme of travel here. We're getting to the depths of winter right now. It's cold out there, and I'm guessing it's pretty cold up in Canada. Are you telling me...
Yes, you see the snow.
Our good friends in Canada are not going to the warm beaches of Florida or the warm desert of Arizona? Are you guys still upset that you're not traveling?
There's still travel, but it's more domestic. Although, full disclosure, yours truly was in Miami a couple of weeks ago, which was amazing. The great weather. But there's been a lot more, over the past year. It's been a lot more, domestic travel, domestic purchases, which has helped the Canadian economy stay, keep its nose out of the recession business, which has again been very helpful. But it's all been about different experiences again across this country as well. Even though it's maybe not as warm as what we're seeing in Miami, but at the same time, different experiences, and that's always a good thing too.
us a little bit more about your company and what exactly the role of AI to connect customers. What actually happens? Is it chatbots? Is it something more?
Thanks so much for having me. Yeah, so Novi's technology, we're actually helping retailers and brands increase their sales by ensuring their products are found and trusted and then ultimately recommended by AI models. So think ChatGPT, Gemini, and Claude. And so we do this. We work with leading retailers, including Macy's, Sephora, Target, Ulta, thousands of CPG brands, and they rely on us to optimize their product data for AI-driven discovery by consumers.
So when you say that, it's basically a consumer who does something and their data is processed and recorded and they're saying, oh, you bought that pair of pants? Maybe you would like this pair of pants. Is it as simple as something like that, or is it more sophisticated?
It's a little bit different in terms of consumers now flocking to ChatGPT or Gemini and asking questions to actually do their shopping. So they're outsourcing a lot of their research, discount hunting, personalized gift curation to the AI agent who's then going and finding products and recommending it to them based on just questions and prompts.
So who are your competitors and how do you stand out from them?
It's interesting. So there's a couple of different up and coming competitors in the tech space who are helping brands and retailers stand out in AI shopping. But we also have a lot of the older, more traditional data companies, because we are a data company and we feed data through our partnerships with our retailer partners. So think about Syndigo or Salsify or even Nielsen IQ, some of those older data partnership players.
And how then do you get the edge over them?
Yes. So a lot of what we're doing in these partnerships, and we'll be able to announce some of them really soon, is feeding trustworthy, personalized information to the models themselves, which is what we have seen at Novi to increase your potential as a brand to show up in AI shopping. So we found that products that have verified trust signals are selected 259% more often than random chance. So think like certifications, reviews, badges, third-party testing. And we're feeding this directly to the retailers and the models so that they help the brands show up in AI recommendations to consumers.
So one of the things I always think about, Kim, is how much of what is spent on AI to kind of attract consumers, retailers, or folks to retailers. So in other words, that AI-driven traffic to retail sites, how much of it is productive that results in actually a consumer buying something?
Yeah, that's actually a very interesting question. So we're seeing the traffic start to increase. We saw from Adobe Analytics, like we just said, 520% over last year from AI. But what we're not sure about yet is conversion. And this is just because ChatGPT, Gemini, none of them are publishing the conversion results. But we at Novi, what we did see is that ChatGPT's shopping research answers sent consumers directly to the brand's website 86% of the time, which means that the remainder of traffic, only about 14% was sent to the large retailers like Walmart or Target. And so what brands are starting to see is more and more direct consumer traffic to their website, which is driving conversion and sales for them.
Interesting. Okay. So would you say, based on the data that you see, because you see so much data, that the consumer's doing well, that retail's doing well? How much you can obviously break it down probably a lot. So give us a little bit of insight as we get ready to wrap up this holiday shopping season.
Well, so what we're actually seeing is, consumers are using AI as their category manager. So think of it as we all used to trust the big box retailers for their ability to manage each shopping category, do the curation for us. And that's why you walked into a Target, right? They scoured the earth for the best, most compelling products, and we trusted them to do that. But now, and what we saw play out this holiday season, the consumer has shifted their trust to AI to do the research and curation for them. So we're seeing strong numbers in users using ChatGPT and shopping, but it's just not quite played out yet. And we'll see that in 2026 is where that conversion is going to happen, if it's going to happen direct on the brand websites or still in retail.
Kimberly, just a word on yourselves. How difficult is it to raise money? What are the key words that investors are looking for these days and the key ideas?
Yes, AI is definitely the hot topic. If you are not involved in AI, doing something future with your company that's progressing AI, so for example, we're in agentic commerce, that is what is hot for investors these days. And that's what is raising money and getting the majority of the capital in Silicon Valley.
The United States tariffs program is likely to have long-term consequences no matter what deals countries strike with Washington this year. That's according to the CEO Radar, which explores what topics dominated almost 4,900 Q1 earnings calls worldwide.
Tariffs are really accelerating a trend toward localization, but it's really added enormous pressure and enormous uncertainty.
To learn more about what topics matter most to CEOs, visit Bloomberg.com/CEO Radar.
We begin with this hour with stocks edging lower, with precious metals turning rather volatile, as Matt was saying. Not a lot of people out there, so maybe that's part of the issue. Jay Pulaski of TPW Advisory writing, we think next year might be the year where the downside of a smaller U.S. trade deficit manifests in a weaker U.S.
News when you want it with Bloomberg News Now. I'm Stephen Carroll. The price of silver has recovered some losses after its biggest one-day drop in more than 5 years. The white metal's trading around $74 an ounce following a 9% slide in the previous session as traders booked profits following a powerful year-end rally. Mike McGlone is senior commodity strategist at Bloomberg Intelligence.
The narratives that they're using now for pulling up silver have been around for years. We've all known about the demand from solar and everything. But to me now it's in that speculative excesses stage. And I think people are realizing it's much more beneficial maybe to allocate to some precious metals where there's only 4 versus cryptocurrencies where there's 28 million.
Mike McGlone speaking there as gold also regained its footing in trading today following its steepest drop in 2 months. Despite the sudden pullback this week, both precious metals are still on track for their best annual performances since 1979. Russia's President Vladimir Putin says he'll revise his country's negotiating position after claiming Ukrainian drones targeted his residence. According to the Kremlin, Putin told US President Trump of his decision in a call on Monday. Kyiv has cast the Russian claims as fabrication aimed at derailing the peace process. Here's Russia's Foreign Minister Sergei Lavrov speaking via a translator.
On the night from the 28th to the 29th of December 2025, the Kyiv regime carried out a terrorist attack using 91 long-range attacking drones against the state residence of the Russian president in the Novgorod region. All drones were destroyed by the air defense system of the Russian armed forces. No information has been received regarding casualties or damage caused by the drone debris.
Lavrov added that Russia will retaliate and that targets had already been selected. Ukraine's President Volodymyr Zelensky dismissed the Russian claims as a new lie and warned that Moscow could be using it as an excuse to prepare an attack on government buildings in Kyiv. However, President Trump appeared to side with Putin while speaking to reporters.
It's one thing to be offensive because they're offensive. It's another thing to attack his house. It's not the right time to do any of that. And can't do it. And I learned about it from President Putin today. I was very angry about it.
President Trump was speaking as one Kremlin advisor told Russian media that while Moscow intends to work closely with the US on peace efforts, it will reconsider a number of previously reached agreements. The US president has threatened to strike Iran again if the country rebuilds its nuclear capabilities. Speaking as he met with Israel's Prime Minister Benjamin Netanyahu, Donald Trump expressed concern that Iran is seeking to revive its nuclear program.
Now I hear that Iran is trying to build up again, and if they are, we're going to have to knock them down. We'll knock them down. We'll knock the hell out of them, but hopefully that's not happening. I heard Iran wants to make a deal. If they want to make a deal, that's much smarter. You know, they could have made a deal the last time before we went through, a big attack on them.
The US president also said he would support Israel in striking Iran if the country continued with its ballistic missile program. The comments come as Tehran has seen a wave of protests after the local currency slumped to a record low, pushing up food prices and deepening an economic crisis in the sanctions-hit country. Pockets of London's so-called stockbroker belt suffered the biggest house price declines in 2025 as the southeast of England and the capital fell behind other regions. With more, here's Bloomberg's Chris Pitt.
The figures from Lloyds Bank reveal a chasm in house price growth between areas in and around the capital, the most expensive in the UK, and the rest of the country. The West Sussex town of Crawley and High Wycombe saw the biggest falls of any UK town or city, with prices there falling by 8.9% and 7.4% respectively. The figures are in stark contrast to large swathes of the rest of the UK, with Plymouth and the southwest of Stafford in the West Midlands topping the list for house price growth in 2025, with both areas enjoying increases of more than 12%. In London, Chris Pitt, Bloomberg Radio.
And more than 1,000 people have been recognised in the UK's New Year Honours list. Actor Idris Elba is being knighted, while Serena Wiegmann has been made an honorary dame after leading England's women's football team to back-to-back victories at the Euros. Former Olympic ice dancers Jane Torvill and Christopher Dean are also being honoured. They say they're thrilled with the accolade.
He was like a little kid jumping up and down. He couldn't sit still.
I mean, it's such an amazing award to receive this and an honour, and we're really humbled by it. We've been together for 50 years and skated and performed and entertained over all that time.
Jane Torvill and Christopher Dean speaking there. The UK's new ambassador to the United States, Christian Turner, is also being knighted for services to foreign policy alongside Barbara Woodward, a diplomat who will be named Deputy National Security Advisor and is set to become a dame. That's news when you want it with Bloomberg News Now. I'm Stephen Carroll and this is Bloomberg.
To continue and wants to continue this pursuit that we've seen, throughout the last number of years of dominating Ukraine politically and increasing Russia's territorial control.
Zelensky's characterizing this 20-point peace plan as 90% ready. We know the Russians wanted to make changes. What's the remaining 10%?
Sure. Well, that's what everyone is trying to figure out in terms of certainly the issue of territory is something that people are expecting to remain for a potential leaders level meeting between President Zelensky, Trump, and Putin, or certainly seeing President Trump personally re-engaged in a personal and presential sense of meeting with his counterparts. So this certainly is a big step to be seeing him having a leaders level meeting with President Zelensky, and then of course the next thing to look for is whether there's similar interaction with Russia.
Enter Benjamin Netanyahu, set to be on his way as well to sit down with President Trump on Monday. Eric, this brings us to phase 2. What will we learn next week?
Well, Joe, what we saw last week in a press conference from Secretary Rubio was that really some of the things about the board of peace need to be worked out before we would see phase 2, which would include of course, the establishment of a permanent governance structure for Gaza, as well as disarmament of Hamas. And Secretary Rubio saying that we need to see this board of peace selected and that kind of agreed before we would see, for instance, the announcement of countries that would be participating in the International Stability Force and those that would be getting involved here to help to reach an agreement with Hamas about how they would disarm. We've always known this would be one of the hardest points of the overall 20-point plan of the Trump's peace plan for Gaza, and still waiting to see how the disarmament of Hamas is accomplished, because of course now that the hostages are gone, Hamas sees their armament and their weapons as perhaps the last piece of leverage that they have. And so if the plan both calls for Hamas to not be involved in government and governance of Gaza going forward, and yet they're also giving up their weapons, that certainly is seen as as perhaps the ultimate maximum ask of Hamas in this process in terms of getting them to peaceably give up those weapons, rocket launchers, things they've used against Israel in the past.
Eric, thank you so much. Bloomberg's Eric Martin with the best backdrop on TV today. We appreciate it. I want to add the voice of Jane Harman, the former Democratic Congresswoman, who, of course, was ranking member on the Intelligence Committee. Jane, Merry Christmas. It's great to have you. Glad you could join us today. I want to just step back to this looming meeting with President Zelensky. Are we going to see a breakthrough this week, or is Lucy about to pull out the football again?
Put me down as a pessimist, Joe, and a super pessimist about the meetings with Israel. I'm a pessimist because I don't see that Putin will be satisfied with this deal. I give Zelensky enormous credit for working on it and for, it seems to me, so far as I can tell, ridding his top levels of government of corruption. I mean, that was a big blow to him. And I give the Ukrainian people even more credit for putting up with 4 years of war. They are Ukraine's strongest weapon, the Ukrainian heart. But what does Putin get out of this? Maybe, something like North Korea, South Korea with some kind of a policed border. He doesn't get much new territory. He certainly doesn't get an open door to take over Europe, which is something he might be after. And I don't see it. Mitch McConnell said that Putin has been playing Trump since January. I agree with Mitch McConnell. But the other point here is that Europe has now promised some additional aid. Imagine this, the defense bill that Congress passed, Congress did something, contains hundreds of millions of dollars of aid for Ukraine. So if Trump lets that go forward, please lets that go forward and doesn't do any kind of stuff to our intelligence capacity that really helps Ukraine keep its, at least keep parity with Russia, this can go on longer and maybe Russia will be worn down more. Let me talk about the Middle East for a minute because I don't see anything going on there. Bibi Netanyahu just announced new Israeli housing in the West Bank. Now, that's not Gaza, but it is enormously provocative. He has said he will not recognize two states. And I thought a cornerstone of increased involvement or ongoing involvement by the Arab neighborhood was a path to two states. So even if there is some kind of a police force type thing, as your commentator pointed out, Hamas is not gone. Hamas won't want to be gone. And I just don't see how that gets anywhere. There, I'm a really super pessimist.
All right. So we've got two pessimistic cards here. You said that Putin's been playing President Trump since January. Is Netanyahu also playing President Trump?
I think so. Yes. I think that Trump is tougher with him than former President Biden was ever able to be. And Trump has still kept his strong support from many in the pro-Israel community. But I think that Netanyahu is a hard-line conservative, would understate it, a hard-line, maybe reactionary Israeli, and hasn't budged here. He did get the good news is, and Trump helped with this enormously, got the prisoners back and got sadly, the bodies of the deceased back. That's great. But I don't see Hamas willingly move out, and I don't see major efforts to improve the quality of the Palestinian leadership, such as it is. So I don't see how you put money into developing, I guess, what Trump's son-in-law wants to be some new beachfront property if there is no stability. I just don't see that moving. And one more thing, Joe. Let's remember that also in the Middle East is ISIS. We bombed ISIS, we the U.S., in Syria recently. We're bombing ISIS now in Nigeria. But ISIS is not just a training group on the ground. ISIS is now all over the internet, radicalizing people like those in Australia and maybe some in the United States and Europe in the near future. So it seems to me, if I were President Trump, he hasn't called me lately, but if he did, I would say, please focus on this, Mr. President. It is the most imminent threat to U.S. security.
Well, you brought this up to us. Maybe it was 2 weeks ago, Jane Harman. And sure enough, the headlines on Christmas, U.S. forces striking ISIS targets in northwestern Nigeria. The president wrote on Truth Social, and he had a lot to say on Christmas on social media. Merry Christmas to all, including the dead terrorists, of which there will be many more if their slaughter of Christians continues. There have been a lot of questions about whether this slaughter of Christians is in fact taking place in countries like Nigeria or even South Africa, which the president had first brought forth in a meeting in the Oval Office with the prime minister, the president of South Africa. We've not received details on this. The military conducted multiple strikes, according to the president, but we haven't heard anything else. Jane, what are we getting into in Nigeria?
Well, I don't think we know. The government has pushed back and said there is no slaughter of Christians. I'm sure some Christians are being killed. Similarly, in South Africa, which is not to praise those governments, but it is to say that this seems to be another campaign pledge, some kind of pro-Christian white supremacy agenda, although that would be tricky in Africa. Why don't we have a strategy for our foreign policy? Why don't we focus on the real threats, the imminent threats to the United States? We've degraded a lot of our intelligence community assets in the United States, and that worries me enormously. And recent articles just talked about how Russia has been able to degrade and invade the cyber protections in Europe. So all of that leads me to believe that people are going to be radicalized on the web. ISIS has a very sophisticated use now of technology, and this is where we need to go, and this is what we need to beef up. And so these random actions around the globe, take Venezuela, if I could just rant on that for a second, nobody is defending Maduro, but nobody was defending the bad guy next door in Honduras either. He was convicted in U.S. courts, and he has now been pardoned. And the new person that Trump supported has just been elected in Honduras. Are we now doing regime change in South America? Why?
Well, let me ask you. I've only got 1 minute left, Jane, and I'm loath to cut you off. If we're striking targets on the ground in Nigeria, will Venezuela be next?
Who knows? I mean, I don't know. Trump has said he might. The sad part, let me just, in my 12 seconds, where is Congress? Where is Congress? Congress just last week defeated 2 resolutions to assert itself on party line votes. Go figure. Why did Congress come back from its long closed for business vacation? Or that's not fair, but closed for business action. Why did it come back? To do what?
Shutdown in history. Well, they've taken a couple swings at the ball with War Powers Acts, and they haven't gone anywhere yet, Jane. I'm delighted to talk to you. Happy New Year. Let's get back together in 2026 and see where we are. I'm Joe Matthew in Washington. This is Balance of Power, Boxing Day edition. Stay with us on Bloomberg TV and radio. It's Balance of Power on Bloomberg TV and radio, Boxing Day edition, as we dig through receipts from the shopping mall and the websites, of course. And it does seem like we are, in fact, spending even more time at the shopping mall or in the store. Bricks and mortar doing pretty well, according to some of the numbers that we saw from Visa and MasterCard coming into the holiday. Visa had total U.S. retail spending up 4.2%, beginning of November to Christmas period, a little bit below the forecasts, but found physical outlets remain dominant, accounting for more than 73% of transactions compared to 27% online. Maybe it's all the procrastinators like me who are out there on Christmas Eve running through aisles to see what was left on shelves. This, of course, all plays into politics, with the President of the United States preparing Americans to do with less in a period of time where prices remain stubbornly high. He said just recently in his speech on affordability that you may not need 37 pencils or 50-something dolls this Christmas. We may need to go with less, even as in some cases Democrats speak to the issue of abundance. How this all comes together politically for the White House is something that we talk about with Laura Davison, Bloomberg's Washington Deputy Bureau Chief, who's propping up the operation today. It's great to see you, of course, knowing that these were actually pretty decent numbers coming out of the holiday, knowing that we haven't seen an explosion in inflation based on the tariff regime, just kind of sticky prices. How do we think about the economy going into the new year and what the president predicts will be a boom?
Well, this is certainly what, Trump is out there talking about, saying, look, there was all this doom and gloom that inflation would be running wild because of the tariffs, and that hasn't, at least in the data yet, really come to pass. But what we're hearing from importers, what we're hearing from companies is, one, because of all the uncertainty with the tariffs. They were on, they were off, maybe they'll be off again. We'll hear what the Supreme Court says. In addition to just that these things take time to kind of work their way through the system, that retailers were really hesitant to raise prices. But after, we get some sort of clarity about whether these tariffs are here to stay, retailers are suddenly going to have to start incorporating that into their supply chain, into their pricing mechanisms. And that could mean these are hitting right as people are starting to vote in the primaries and the general election next year for the midterms.
What are we thinking about this? Early January, the Supreme Court? Do we know? I mean, I know you're talking to our legal team on a regular basis, and they could frankly pop up at any moment. But is that the best bet right now? That we're a couple of weeks out from maybe the most important decision of this second term.
Couple of weeks, if not, days. Wow. Stuff probably isn't going to come over this holiday week into New Year's next year, but really beyond that, it's anyone's guess. Mm-hmm. And this is, the administration is also watching closely because they've said, look, if the Supreme Court does strike these down, we're going to pop back up with some other legal framework, legal mechanism for imposing these. But it's going to be really chaotic there for a couple weeks, if not months, as the administration works this out, and it becomes, again, sort of a legal whack-a-mole game.
Right, and then a question of refunds and all the rest that might follow. Laura, thank you so much, which sets us up perfectly for a conversation with the boss at Macy's. Tony Spring, the CEO, sat down with Romaine Bostick in advance of the holiday to talk about a lot of the trends, including store closures, the omni-channel shopping experience, and the company's own efforts to improve itself in a difficult environment. Let's listen.
It's not about improving the customer experience. So we've had record customer service scores. That's our net promoter score. Would people recommend Macy's to a friend? And we're seeing scores we've never thought possible at the brand. And that was a real focus of mine. We've improved the quality of the assortments. I thought there was way too much redundancy, way too many of the same things. And I thought the breadth of what we offer as a department store needed to improve. We need to go good, better, best, contemporary to classic, in a range of brands, things as we've talked about that are convenient, that you've heard of, that you count on, Staples, Levi's, Nike. And then at the same time, we've got to be there introducing new things that you haven't heard of, that are becoming more popular, because people are looking for that combination in a destination. We also wanted to make sure that our team was working together. So I'm a big believer that you need strategy, you need culture, you need leadership, and you need execution. We're now at the point where those four elements are coming together, and we're delivering a better experience for the consumer. But you can't kind of have one without the other. A great culture without a great business without a great culture. The combination of elements is what I sought out to do when I kind of came into the role. And I do think that, patience and determination go together. You have to have the patience to kind of lay out what you want to accomplish. You have to accept the fact that some things just don't happen because you snap your fingers. And then you have to have the determination, the ambition to kind of go after what you think is the right thing to do for the business.
A big part of your strategy, this bold new chapter, is also to shrink the footprint of Macy's. At its peak, you guys had, 700 to 800 stores. You're less than, 400 now, around 400
Around
or so
400
now.
Today.
And the plan is to go down to roughly about 350. You've done a big remodel of some of the existing stores already, 125. How much further does that go in 2026?
We'll add more stores in 26, and we'll close some more stores in 26. And I think, as you described, it is working on both sides of the equation. Closing stores is not alone a strategy. Reimagining stores without dealing with stores that are past their prime is not complete enough of a strategy. So we want to make sure that we're doing both things. And of course, it's supported by a healthier digital business, one that is both a place of transaction and a place of discovery. We want to build relationships with the consumer. That means we have to be able to provide a better experience where they live. We think of the digital business as a channel at times. And I'm like, no, the digital business is actually a geography. The people who shop digitally in New York shop in their stores in New York, and they want to see a great experience, digitally, physically, and in between.
A little peek behind the retail curtain with Tony Spring, the CEO at Macy's, in conversation with Romaine Bostick. We've been watching Wall Street today. Retail stocks have been a bit mixed up here with not exactly a blow-the-doors-out holiday shopping season, and of course a market that was already near all-time highs as we walked into today's session. We check in on the Friday trade, the Boxing Day market, with Vonnie Quinn, Bloomberg Markets reporter, who's with us in New York. Vonnie, what are you looking at?
Well, Joe, as you can imagine, trading awfully muted today. I mean, it's surprising that we're even looking at 50% of the 30-day average for trading, but very quiet. And you could have very idiosyncratic moves tied to certain stocks if there is some news. But as you said, we're not seeing too much moves. If you look at the S&P 500, we're down about 0.1%. The Nasdaq 100 down about 0.1%. So fractional moves. That said, the S&P 500 up 18% this year, and the Nasdaq 100 is up more than 22%. Most of that, or at least a lot of that, can be attributed to the Mag 7. As a group, they're up 27% year to date, and there are a few more trading days left in the year. Let's take a look at yields, because yields-wise, the 10-year has been in a range between maybe 410 and 420 all month. We did have a strong auction Wednesday, which shows there is appetite out there for US Treasuries, but obviously the biggest potential catalyst next week, probably the update on the ADP employment change, which comes on Tuesday. Also on Tuesday, though, we get the FOMC minutes, and while they may not be market moving, it will be interesting to see just what the dissent was like behind closed doors, because we have to wait until January 29th to get another Fed meeting. And we will have a fresh non-farm payrolls report before then. We'll get the December payrolls report January 9th. Let's take a look at metals, because they're just up and away, and you can blame everything and anything for this. Industrial uses for silver, platinum, palladium, stockpiling ahead of more tariffs potentially on aluminum. Gold could be a safe haven, but off the back of that, miners are doing pretty well. So Freeport-McMoRan, one of the better performers today. And then currencies-wise, we're seeing some interesting movements too. The dollar is stronger today, up about 0.1%, weaker sterling and euro. But the real one to watch is the yen, because that is 0.5% stronger today. Those yen bears are really, really in the driving seat.
A market that's up about 18% this year, with the S&P 500 putting up a record close after record close, despite all the worries coming into 2025 about tariffs. And of course, I realize that could move a bit when we get into 2026. But this turned out to be a pretty decent year, AI trade aside.
Yeah, absolutely. Now, remember, those fragilities or those question marks are still hanging over the market. So Micron reported earlier this month and just put everybody back in a good mood about the AI trade. But if you remember, Oracle had reported a couple of weeks before that, and that was a big zigzag in terms of the trading. So it does feel like there are still big questions over whether valuations are very, very stretched here. We'll know coming into the new year just how much to expect more of that narrative. NVIDIA, though, higher today on a licensing deal with a chip startup, Grok, so the deals continue. And speaking of deals, ServiceNow up today as well. It made a big deal, a $12 billion deal, has investors excited about the amount of deals it's doing in terms of growth. And that Santa Claus rally has until January 5th, Joe, so we do have some time left.
I love it. Covering the waterfront with Vonnie Quinn. It's great to spend some time with you, Vonnie. Keep your shovel outside the back door. We've got winter storm warning. It looks like snow to begin around the New York area by 4 o'clock or so. We'll update the storm coming up next. It's Balance of Power on Bloomberg TV and radio. Thanks for joining us as we keep a live view on Capitol Hill now, an empty building for the most part. But there is a big to-do list there waiting for lawmakers when they return next month. Of course, having left the matter of Obamacare subsidies unresolved, not to mention funding the government at least beyond the end of January. This is something that we're watching closely. Two parallel items here: funding the government, and also, by the way, dealing with the Epstein files, because the healthcare subsidies may not be solved as we work our way through the balance of the year. There will be a vote that was brought by a discharge petition, but outside of that, it's unclear that there will be a path forward. Something that we want to spend some time with Bloomberg's Mike Dorning talking about from our Capital Influence team. Mike, it's great to have you. I hope you had a great holiday. And as we get back to things in the new year, there are a lot of questions about whether we will be heading for another government shutdown. Before we get that far, though, we do have the matter of Obamacare subsidies to be addressed, as well as the Epstein files. Chuck Schumer is talking about putting up legislation here that would force the disclosure of more files here. And Tom Massey and Ro Khanna in the House want to hold the Attorney General in inherent contempt. Will either of these efforts go anywhere?
Well, I think it'll depend on what the talking about Obamacare, what the Trump administration does on the Epstein files. You'll hear this banging on the administration on the Epstein files, but they're still in the process of releasing them. Yes, they've missed the deadline. Yes, that does break the law. But if the files do come out, or enough of them come out to take some of the steam
out of this, then there won't be enough Republicans that are willing to defy the president. But it's kind of a dynamic situation there. And the way to bleed some of the pressure out is just to release enough files to peel off, the rank and file Republicans from this movement.
Yeah.
On the health care, they forced the vote. That was going to be an important political vote in the House. And you will probably see the Obamacare subsidy extension pass the House as a way for some of the Republicans who are at risk of losing their elections to sort of say, we want these subsidies extended. But then that goes into the Senate, and the leadership of the Republican Party in both the House and the Senate don't want these subsidies extended. So they'll work against it unless President Trump weighs in. He could obviously tip the balance if they're feeling enough pressure to extend these subsidies.
How closely are we connecting Obamacare subsidies and a potential government shutdown, or should we not be thinking about it like that? Nobody wants to relive this whole experience after the longest shutdown in history. And Chuck Schumer has indicated that he's looking to work with John Thune. Mike, there is the risk of sleepwalking into a shutdown. How should we be thinking about this?
You've absolutely got it. The party leadership on the Democratic side does not want another shutdown, or if possible, if they have to have one, as short as possible. They made their point in the last shutdown, which broke a record, and they weren't able to get the Republicans to cave on the Obamacare subsidies there. There is a dynamic within the Democratic Party, though, that there are a lot of Democrats on the younger side, on the more progressive side, that don't feel like the leadership has pressed this point hard enough and would like to see them pressing other points harder. So even though the leadership is trying to stay out of another shutdown, you're right, there is a risk that we could sleepwalk into it as the Republicans kind of refuse to go along with Obamacare subsidy extensions and things like that.
Well, this could be a fun year, I'll tell you.
Yeah, I mean,
you think about what could be produced as opposed to
high, but
yeah, okay, that's good to hear until it is, right? Well, you think about what could be produced as opposed to what could be avoided here. Mike, will we get new crypto market framework legislation? Is there anything new that lawmakers can craft in 2026?
The crypto market legislation is definitely something that's quite likely. You've got you've got Democrats and Republicans who are committee leadership that are joined on that. So you've got a fair number of Democrats that are interested in doing something on that in the Senate. You've got a lot of money in the crypto industry. They have, I think, over $250 million already in their campaign war chest to influence the upcoming congressional elections. So there's a lot of reasons to do this, and it's more likely than not that they will succeed in some way. That said, there is some opposition, both from the banking industry, they want concessions, and also from more progressive, sort of consumer-oriented Democrats that want more protections for consumers and investors.
Got it. Mike, thank you. It's great to have you with us. We're going to have a lot to chew on in the new year with Mike Dorning from our Capitol Influence team here in Washington. He's got his eyes on Capitol Hill for us every day. We've got our eyes on the weather as well right now, not here in D.C. We're actually going to dodge the bullet. But if you're in New York, New Jersey, or Connecticut, it's coming. A couple hours from now, as a matter of fact, with a winter storm warning in effect and snow that's supposed to begin right around 4 p.m. Eastern. It looks so calm right now on Bloomberg TV as we check out the Manhattan skyline. Josh Saul has this covered for us from the weather department here at Bloomberg and is with us now. Josh, it's good to see you. What kind of travel interruption should we be ready for? I'm seeing reports of 8 inches coming. Is that what you expect?
could be up to 9 inches, which will be as much as we've seen in this area since 2022, when Central Park got 9 inches. When Central Park got about 7.5 inches. What makes it especially dangerous this year? Obviously, one of the busiest travel periods of the entire year. It's going to stay real cold overnight, which means that all that snow and ice is not going to melt. It's going to be there on the roads, making travel more difficult for drivers. And another issue that came up in our reporting is that everyone is flights have been so bad. A lot of people more people than before have chosen to drive this year for their holiday plans. AAA says about 110 Americans on the road around this period. So the roads are crowded, a lot of people driving instead of flying. So this intense amount of snow and ice potentially making post-Christmas travel really dangerous.
Man, yeah, 9 inches in New York. I mean, you're actually, that's a shovelable snow, as they say. Are the airports ready?
Yeah, get out the sleds if you have kids. The airports are ready, but already a lot of cancellations. We've got about 1,400 cancellations across the U.S. A good chunk of those are in New York City's big 3 airports, and we're seeing cancellations, of course, even before the bad weather starts. You have to think about travel and flights that are starting long ways away, 19 hours from Singapore. Those flights are canceled so that they're not landing or arriving in New York City in the middle of a snowstorm that would make navigation difficult.
Yeah, wow. Well, I guess we'll have the weekend to clean up, but a lot of folks, of course, with holiday travel are going to be dealing with some potential interruptions here. Josh, thank you. It's great to have you with us here on Balance of Power. Josh Saul at World Headquarters in New York. We'll try to get back to Josh in our second hour as we count down to the first flakes falling. It does remind us the season that we're in here and, of course, the importance of travel when it comes to the economy. We knew that there would be a lot of folks out and about this year, and with the benefit of lower oil and gas prices, potentially a bit of a stimulant for the economy. And that's where we turn with our political panel. Joining us right now, Bloomberg Politics contributor Rick Davis, fresh off the holiday, Republican strategist and partner at Stone Court Capital. Doug Farrar is with us as well, former director, the Office of Public Affairs, Democratic strategist with us here, having come from the FTC. It's great to see you both. Rick, the economy is hard to ignore coming off a holiday like we're just seeing now. I'm picking through some of the numbers. It looks like retail sales were up anywhere from high 3 to low 4%. And prices were pretty, while stubborn, consistent through the holiday shopping season. What kind of a look is this going to be as we enter the new year and the administration predicting a boom in the economy in 2026?
Yeah, some of the data is really head snapping. I mean, when you look at consumer sentiment, even this month, you haven't seen much worse consumer sentiment in a decade. It's sometimes all-time lows in the last couple of months and consistently borne in. But then you see the record stock market, the red-hot GDP numbers, decent sales figures for the holiday, and I think it's going to be a roller coaster. Even the Fed seems somewhat head scratching when it comes to how do you balance the sort of persistent inflation with a worsening job market. So I think this is going to be a very challenging year. I hope we set records on the economy. Nothing's better for the federal deficit than a big growth rate. I'm all for it, but let's not put the goose before the gander.
Well, fair enough, Rick. And, I guess we do have some reasons to be optimistic here, Doug. We didn't see the doom and gloom scenarios that so many economists predicted. And we've got a market here. I realize we're down a little bit today, but basically at an all-time high to end 2026. How do you rationalize those two?
Well, I think it's mostly being driven by circular AI investment. And when I think about what the president promised, he said he wanted to lower costs. He wanted to increase manufacturing jobs. We're down 49,000 jobs. Tariffs are really having a huge impact on consumers, especially those outside of, the top 5 or 1% of Americans. And really what's holding up the economy is this sort of unbridled AI investment that the president is stoking through his own policies. And obviously AI is great and an incredibly innovative tool, but one wonders how much that's hiding some softness in the economy.
Yeah, well, I'll tell you, circular investing, you're going to get some attention when you use that phrase here on Bloomberg. Doug, Is this AI spend looking like something less than Wall Street is hoping it is to you? What does that mean for next year?
Well, I mean, I think these companies are sort of sending money back and forth and describing, future growth and revenues that is unclear where they're going to materialize from. I also think you've seen AI start to become more unpopular with voters, and not just with voters who might be driving trucks or doing jobs that are immediately threatened, but also white collar workers who are looking up and thinking my job may be threatened by artificial intelligence. At the same time, you've seen adoption of AI programs by businesses be pretty ineffective. According to a study that was issued by MIT, some 95% haven't increased productivity all that much. So I think we're making a huge bet, both the markets and the government, frankly, on the success of AI. And, the government's already taking steps to make sure that bet won't fail, or if it does, that there'll be a bailout. Given all the money that they're throwing at it and the regulatory support. So it's a little concerning that we're so overcommitted, or maybe not overcommitted, but so committed to this particular sector.
Rick, I've just got 30 seconds in this block. Will the Supreme Court ruling on tariffs be the most important thing for the markets next year?
I think it'll be really influential, because obviously what happens if they rule against the president's use of executive powers to implement these tariffs, and then how do they back that out? There are hundreds of billions of dollars at stake of government spending that has to go back to consumers. So I do think that's one of the critical aspects of this. But as we've seen, the Supreme Court.
Rick and Doug will stay with us. We'll have a lot more of our panel straight ahead on Bloomberg.
Thanks to AI, Samsung's photo editor is much more powerful.
Generative Edit lets user reimagine surroundings, lighting, texture, and even the perspective.
The best idea comes when we think from the user point of view, not from the engineers.
Our goal was to create a powerful AI tool that lets users express their creativity safely and effortlessly.
It's always exciting.
Watching Wall Street here on Balance of Power in what is the final trading session of the weekend. We've only got a handful more to get our way through the year here. We had a nice pop in the early going, but we've managed to give up most of our gains here with the broad market turning south. The S&P 500 and the NASDAQ down fractionally each, down about 7 points. Vonnie Quinn is watching the markets for us here from world headquarters in New York. Vonnie, I guess we shouldn't read too much into this on such a light volume trading day, knowing that the markets went into Christmas at all-time highs.
Literally 1 and 2 trades have disappeared. Joe, we're at about 50% of trading volume for the last 30 days. That's actually even more than you might have expected on a day like today, particularly with a holiday on a Thursday. That said, we're trading close to records, and nobody is that disappointed, I think, because there were so many question marks over whether there was a bubble in AI, whether the circular financing would pose a problem, whether these SPVs that some of these companies are using to hold debt off balance sheets, whether that would become a problem. All those worries have been set aside. So the S&P 500, it might be down 0.1% right now, but we are trading at close to records, and we're up 18% on the year on that index. As for the NASDAQ 100, we're up more than 22% on that index, even if today it is flat. Plenty happening under the surface as well. Let's look at yields, because those are potentially a mover next year as well. Right now, we're range bound between 410 and 420 on the 10-year. We are waiting on fresh non-farm payrolls data, though. That comes January 9th. That's going to be the next big catalyst, although we do get an ADP employment change report next Tuesday. And we also get the Fed minutes next Tuesday, which will be interesting just in terms of personality, consensus, how consensus can be drawn, how many dissents and how strong the dissents were. We'll get more details into all of that. And of course, early in the new year, we'll get a name for the new Fed chair nominee, and that may have an impact on this market as well. But let's take a look at metals, because that's a fascinating story. Here we have gold, silver and platinum all at records. I mean, they've just been going up all year long. Silver has been going up almost twice as much as gold. It's up 150% year to date. Gold, for its part, up 70%. Now, you could credit escalating geopolitical tensions, but we have oil lower today. Surprise, surprise, down 1.9% on the potential for perhaps some kind of Ukraine détente. So back to those metals, you can basically credit everything from central bank buying for gold to industrial uses and stockpiling ahead of tariffs for some of the other metals, and just general speculation as well, according to a lot of traders. And then if we take a look at the dollar, we have seen dollar weakness. Today we're slightly stronger. Some sterling weakness, giving up some of that strength we've seen over the last few days, euro as well, but particularly the yen, it's another 0.5% weaker today. We've had 2 rounds of verbal intervention on the yen, don't forget. So the Bank of Japan is going to be watching that very, very closely. The Bank of Japan having turned hawkish and just really might be in trouble into the new year if bears continue to keep hold over the yen.
Pretty amazing. When you talk about the metals here, to see the gold and Bitcoin charts put over each other here. You've got gold up another 1.5% today. We're above $4,500 an ounce. And when you think what we saw with Bitcoin going into the president arriving at the White House, it's down about 530 right now, trading just above $87,000 for a token. It's just role reversal with these two, isn't it?
Exactly. And in fact, Bitcoin down on the year unusually, although we are at higher levels than we were before, as you say, the president went into office. I think for Bitcoin, some of the catalysts might come next year with maybe, more legislation around the Genius Act. Will stable coins get more regulated and so on? But also the fact that Bitcoin had been trading as a risk asset, but now it's sort of dropped off as a risk asset, whereas gold had always been trading as a safe haven. It is really quite amazing how the two have diverged, having really moved together for so long, as you say.
Isn't that the truth, Vonnie? Thank you so much. We'll get back with Vonnie Quinn a little bit later on here on Balance of Power as we watch Wall Street on a quiet day here, the day after Christmas, and only a few sessions left next week. So the numbers that Vonnie was talking about are going to likely be pretty close to where we end the year, with a NASDAQ up about 22% and S&P 500 up about 18%. Little movement today as we watch here. We want to bring the panel back in following a pretty wild 24-hour period for Donald Trump on social media. He was very busy there at Mar-a-Lago with a number of posts. In fact, too many that I could even count. I mean, it was dozens. Rick Davis and Doug Farr are back with us. Doug, I don't know if you managed to read some of these, but they included several Christmas messages. And coming from Donald Trump, I guess they might not be that much of a surprise, but just sometimes you need to just kind of reset your clock here and remind yourself that this is the President of the United States. In this case, Merry Christmas to all, including the many sleazebags who loved Jeffrey Epstein. This is a long post. Gave him bundles of money, went to his island, attended his parties, and thought he was the greatest guy on earth, only to drop him like a dog when things got too hot, falsely claiming they had nothing to do with him, didn't know him, said he was a disgusting person, and then blame, of course, President Donald J. Trump, who actually was the only one who did drop Epstein. Doug, I read all the way to the bottom here, and it says, enjoy what may be your last Merry Christmas, President Donald J. Trump. What does that mean? Granted, the spirit of this message is sarcastic, but to predict your last Merry Christmas is pretty heavy coming from the commander-in-chief, isn't it? Is he talking to Democrats?
You know, I hesitate to want to get in the head of the president. I did, unfortunately, read a lot of his Truth Social posts over this Christmas period. You know, I thought we were saying Merry Christmas again. That was sort of one of his campaign promises. Now it's our last Merry Christmas. I don't know who he's threatening it with those messages. But what I will say, zooming out, is, you know, every accusation is a confession. And across the millions of documents that are going to be released by the Department of Justice and already have been, clearly the president had a very, very close personal relationship with Jeffrey Epstein that included sort of friendly poems that they traded back and forth and other sort of inside jokes. And so I'll be interested to see what we find out from these document releases. But certainly the president may be trying to soften the ground for some bad news that may come out of that demonstrates his relationship with Jeffrey Epstein in ways that are both politically kind of questionable and also morally ambiguous. So I'll be watching to see.
There's another Christmas message. This one came earlier in the day. Merry Christmas to all, including the radical left scum that is doing everything possible to destroy our country, but are failing badly. He says we no longer have open borders, men and women's sports, transgender for everyone, or weak law enforcement. What we do have is a record stock market and 401ks. Rick Davis is back with us. Rick, is this president moving the line, actually changing what's considered acceptable decorum for the commander-in-chief, or does all of this belong to Donald J. Trump and will eventually go away with Donald J. Trump?
Well, I don't think you can look at it in a vacuum. There's no question that his first term entered in a new era of dialogue for an American president. Kind of took the wheels off, and we saw some of that reoccur during the Biden administration, not to the extent or the degree of which it did, but I think he's really accelerated it this second term, and I think a lot of these things we're seeing, especially during this holiday period, is a real shot to his base. There's no question that he had a bad last quarter of 2025, and especially as it relates to Republicans who are peeling off of him because of his stewardship of the economy or entanglement into these foreign military adventures. And so my guess is everyone got together at Mar-a-Lago. They brought in the Christmas cheer and reminded him that without his base, he can't get anything done in Washington, and that he better get on it. So I see this nothing more than a sort of, crass political effort to try and, solidify his base. And hopefully that's all it is, because we'd hate to see this kind of conduct or rhetoric continue on, year after year.
Yeah, pretty amazing. It was more than 100 posts on Truth Social, Doug, in the early hours of Christmas, targeting former presidents Joe Biden and Barack Obama, Marjorie Taylor Greene, Ilhan Omar, Senator Mark Kelly, Somalis in Minnesota, Michigan's Secretary of State, Democrats in California, and rhinos by name Tom Massey. We've only got a minute left. Doug, we talk about what might come after Donald Trump, and in fact, it seems to be J.D. Vance based on some of the endorsements that we've heard about recently. Does MAGA continue with this kind of language in another politician, or does this belong to Donald Trump?
What President Trump's always been effective at doing is rhetorically keeping MAGA on sides. And you can see that excellent point that Rick made, that they are really leaning into throwing red meat to the base. But it's sort of like that old expression, who are you going to believe, me or your lying eyes, right? I mean, on foreign policy, we've bombed this year Iran, Iraq, Nigeria, Somalia, Syria, Yemen, the Caribbean, and the Pacific, right? Lethal strikes. And he wants a peace prize. On prices, he says he wants to lower prices on day one, but prices are through the roof. So I think what we're seeing is a rhetorical attempt to keep him on side, and I don't think that Vance will be able to do that.
Doug Farrer and Rick Davis will be back in our second hour here on Balance of Power. Hope you are too. Stay with us on Bloomberg TV and radio.
This is Balance of Power, live from Washington, D.C.
Could there be a breakthrough on Ukraine? Welcome to the Friday edition of Balance of Power as President Zelensky prepares to travel to Florida to meet with President Trump at Mar-a-Lago before this weekend is out to talk peace, of course, with a 20-point peace plan on the table. We're going to get the latest on this in just a moment from Bloomberg's Laura Davison with insights from former ambassador to Ukraine, John Herbst. We'll check the markets a little bit later on with Vonnie Quinn as things turn south on us today. We'll have analysis from our political panel. Rick Davis and Doug Farrer are with us for the hour. As far as the markets go, we have given up an early lead. No major losses, but the S&P 500 is down about 5 points in the remaining hours of trading, tipping slightly lower. The NASDAQ is down 2, and the Dow Industrial Average is off about 92 points. Bitcoin slightly lower as well, down about $600, still above $87,000 a token, and gold is pushing ever higher, up $65 now. $45.45 an ounce, and a record-setting run for gold. We are seeing some bid under NVIDIA as well. It's up a little more than 1%, $2.50 on this new licensing deal with Grok, and we're mixed up in the retail space following news on holiday shopping. Visa says total U.S. retail sales up a little more than 4%. MasterCard in the high threes, 3.9%. And we'll have further details on how holiday spending panned out in the days ahead, of course, that could help to fulfill a little bit more of a Santa Claus rally before this year is over. We'll find out together. As we keep the beat on geopolitics and some important developments over the Christmas holiday that you might just now be hearing about, including U.S. strikes against Nigeria, striking ISIS targets in Nigeria. And now, of course, this potential meeting that sounds like, well, I should say potential breakthrough. It sounds like a real meeting. President Zelensky will be at Mar-a-Lago on Sunday to meet with President Trump. And we cover all of this with Laura Davison, Bloomberg Washington Deputy Bureau Chief, who's with us now in our Washington Bureau. Laura, let's start with Nigeria and what was behind this. The president, the administration has been talking about attacks against Christians in Nigeria. Is there any evidence that this has been an issue, and who did we target?
So the targets were these Islamic State sites in Nigeria, in the northern part of the country. Trump, for several weeks and really months now, has been talking about persecution of Christians, attacks on Christians in the country, and that Islamic State is particularly targeting them. The Nigerian government has pushed back strongly on the notion that Christians in particular are being persecuted, saying this is, that yes, terrorism is a problem, but that both Muslims and Christians are being affected here. And the Nigerian government actually worked in concert with the U.S. government in these strikes and are working for more strikes to come, as we heard from the Defense Secretary Pete Hegseth.
Okay, so ISIS then remains a problem for Nigeria, but the attacks on Christians is where they draw the line. Is that fair to say?
Yes. So they're united in sort of the actions, the military actions that are being taken, but the motivation behind them is where the U.S. and Nigerians are singing from different songbooks.
Yeah, multiple strikes. The president said we don't have a readout on exactly what was targeted, how many aircraft were involved, et cetera, from the Pentagon?
Correct. We have very few details on exactly what the sites are, that, who may have been killed, the number of sites, and, what weapons were used, et cetera. So that's all very cloudy. Really, all we have is essentially a tweet, a social media post from the president saying this happened.
Really something. I don't know what we're going to hear about Ukraine this weekend, Laura, but it's pretty important. It looks like Volodymyr Zelensky will be in Florida to sit down with President Trump at Mar-a-Lago. Trump has said, unless there's an agreement at hand, unless there's a deal here, he has no reason to meet with Zelensky. Does that mean we're on the verge of a breakthrough?
It would certainly suggest that there's some forward momentum. What we heard from even Zelensky, a couple days ago was that he was not optimistic for a deal. He said it didn't sound like the Russians wanted to negotiate, and that there had been all of these, these talks between U.S. officials and Ukrainian officials and U.S. officials and Russian officials, and just it seemed like we're at a stalemate. There was no progress being made. Something must have changed over the past couple days, and now Zelensky's headed to the U.S. So it's not clear from the Russian side that they are really, open to negotiating, open to this deal. They are still wanting some of these land territories that, that Ukraine still controls.
Amazing stuff, Laura. Thank you very much. Laura Davison will likely be editing stories about that visit come the end of the weekend, so it's something that we'll keep a close eye on. And we want to add the voice of John Herbst, the former U.S. ambassador to Ukraine and Uzbekistan, is with us right now on Bloomberg TV and radio. Mr. Ambassador, it's great to see you. Will President Zelensky be walking into the Lion's Den here in Mar-a-Lago, or a room where he could, in fact, strike a peace deal?
Joe, thanks for having me on. It does seem that there has been substantial progress in negotiations between the United States and Ukraine, which is not surprising because Zelensky has said yes to 5 or 6 Trump proposals for ending the fighting, whereas Putin has rejected every single one of those. What's not clear is what the Russians are up to.
Well, that's been a big question all along. And as Mitch McConnell has said not that long ago, Putin's been playing President Trump since January. Do you see that being the case, or could he, in fact, be about to turn position on this as well?
We've seen Trump in the nearly 11 months, actually it is over 11 months now since he's returned to the White House, take periods where he's been very tough on Zelensky, and then periods when he's been moderately tough, only moderately tough on Putin. And since he put the sanctions on Rosneft and Lukoil, which was sometime in middle of October, he began to put pressure on Zelensky, and that's continued. But Zelensky, while conceding some things, has also stood tough on others. And what seems to have happened in the last few days is Zelensky's agreement to perhaps hand over, not to the Russians, but to demilitarized economic zone, areas in Western Donbass which are strategically valuable, which the Russian army has been unable to take. But he's insisted, and this is new, and the U.S. seems to have agreed, that Russia must pull back equally from areas that it controls in Donbass. And what Zelensky has insisted on, it seems that the U.S. has agreed, that there has to be serious military forces. So we're not talking about peacekeepers from the global south in that area to prevent future Russian aggression. And what Trump seems to have conceded on too, which Zelensky has long sought, are clear guarantees, security guarantees from the United States ratified by the Senate. And now, according to what's in the media, which we can't be certain is accurate, but if it is accurate, it's interesting, the U.S. side has seemed to agree. So we've seen some serious movement by both Ukraine and the United States in the past week or so. Again, what we have not seen is any indication of Moscow's willingness to compromise.
What you mentioned what could happen in the Donbass, and I realize that could take on a couple of different forms. Is a demilitarized zone off the table at this point?
Well, it seems that the demilitarized zone is very much on the table. But the Russians had insisted, and still have not changed its position. Ukraine gives to them territory the Russian army has been unable to take, and the Russians give nothing back in return in Donbass. What Zelensky has insisted, and apparently the United States has agreed, is if Ukrainian forces are moving back in western Donbass, the Russian forces have to move back at least a comparable amount, and as to keep that as the demilitarized territory. So that's a serious concession. And again, if the U.S. has agreed there have to be troops, serious troops, in that area, in that demilitarized zone, international troops, to prevent further Russian aggression, that would seem to be another element of compromise from Team Trump.
All right, so you sit down at Mar-a-Lago and talk peace. Does that mean that Vladimir Putin also needs to sit down with President Trump? Will they get back to this idea of meeting in Hungary?
Well, I don't know where they'll meet, but I assume if Zelensky and Trump are satisfied after their meeting, then there'll be some form of reach out to the Kremlin. Now, according to the media, Kirill Dmitriev, who's the Putin envoy, was in Florida this past week, and so he apparently has reported back on roughly the terms that have been reached between the U.S. and Ukraine. And the Russian reaction has been interesting. They haven't rejected it. They've praised Trump's efforts to achieve peace. And they said they're willing to continue to negotiate. But things Putin said as recently as a week ago would not allow the sorts of ideas that Zelensky and Trump seem to be agreeing on to be accepted by the Kremlin. But again, we'll see. Putin has been meticulous about trying to avoid annoying Trump, albeit without conceding one little bit. At some point, he may not be able to do the two things together.
To what extent is President Zelensky trying to head off the constant communication between Steve Witkoff and Moscow, whether he's talking to Putin or his lieutenants? Is that why he needs to get to Florida right now?
Well, I think that the plan that was given to Zelensky by the Secretary of the Army Driscoll in the middle of November was far too favorable to the aggressor, to Putin, and reflecting, I think, Kremlin influence on parts of the Trump team. But that was corrected, within a few days when Rubio met with the Ukrainians in Geneva. Rubio and Witkoff met with the Ukrainians in Geneva. And since then, we've seen a back and forth of ideas. And we've seen Ukraine being willing to compromise, but not to make fatal mistakes, like simply giving Ukraine highly strategic land in western Donbass without security guarantees, without any requirements from the Kremlin to actually make peace. And again, the deal that has been emerging, again, we only have some of the details, we don't have enough, suggests that the United States has taken account of this. And this reflects, again, Ukraine's ability, Zelensky's ability to advocate for their positions and Team Trump's willingness to listen to them. And that's a good thing.
Really fascinating. What does China make of all of this? What is President Xi watching in Ukraine?
Well, Xi is watching intently American policy in this war. He doesn't want Russia to lose. And by lose, I mean Russia not being able to take effective political control of Ukraine, which is why Xi has provided significant support to Putin, albeit trying to avoid American red lines, like by sending weapon systems to Russia. But he wants us, he wants to see America allow Putin to win in Ukraine, because that would be a sign of great weakness, which Xi would, you might say, interpret as meaning he has a free hand to go after Taiwan.
We are spending some time with former ambassador to Ukraine and Uzbekistan, John Herbst, ahead of this meeting at Mar-a-Lago on Sunday between President Zelensky and Donald Trump. You know, Trump said he would end this war on his first day, Ambassador. Is there a chance he ends it in his first year?
No. The only way this will end is if Putin understands the United States is determined, that Trump is determined to achieve his stated goal of a durable peace. Not a peace which enables Putin to come back from war of Ukraine in 6 months or 12 months or 36 months. But the only way to do that is to make it extremely painful for Putin to continue. Because for Putin to have effective political control of Ukraine, he has to take a great deal more of Ukrainian territory, including Kiev and Dnipro and Odessa, which means a lot more fighting. The only way that Putin understands he cannot achieve those objectives is if Trump puts serious pressure on him in three forms. One, greater sanctions, more of what Trump did in October, meaning the sanctions on Lukoil and Rosneft, two major Russian oil firms. Two, major weapons supplies to Ukraine. Under Trump's view, it doesn't have to be paid for by the American taxpayer, but the Ukrainians and the Europeans will pay for it. Three, the United States should work with our European allies at making sure the $300 billion, roughly, of frozen Russian state assets in the international financial system go to Ukraine. One of the bad proposals that was presented to Zelensky in the middle of November, reflecting undue Russian influence, was that Ukraine would get 100 billion of those assets, and the U.S. and Russia would get the majority of those assets. That was not a good look. That suggested to Putin that the Trump team was not going to be tough.
With the potential of much more fighting ahead, former Ambassador John Herbst, we thank you for the insights, and I hope you had a great holiday. Happy New Year. Thanks for joining us on Bloomberg. I'm Joe Matthew in Washington. We'll assemble our panel a bit later on this hour. Much more to follow on Bloomberg TV and radio.
Our ultimate goal was to turn the fridge from a storage box to a smart kitchen manager that helps the users.
That comes down to finding the optimal location for our camera.
I am most proud of our image matching algorithm. The entire user experience has to be fast and seamless. When it worked like we expected, it was really a breakthrough.
Thanks for joining us on Balance of Power. I'm Joe Matthew in Washington. This day after Christmas on Bloomberg TV and radio, we're watching stocks lose a bit of ground, and bit being the key word there. The S&P 500, which finished Christmas Eve at an all-time closing high, is down just about 5 points right now. The NASDAQ is losing 3. We'll check in with Bloomberg's Vonnie Quinn for a bit more here on the Friday trade and holiday light volume as we consider the recent conversation that Bloomberg Wall Street Week David Weston had with the boss at Bank of America, CEO Brian Moynihan. Let's listen.
The AI investment's been building during the year and is probably a bigger contributor next year and the years beyond. And so if you look at the data center build out, which is one of the ways it evidences itself, that's a big deal. If you look at client spending, like us spending on AI, that's higher than it was last year. But frankly, overall spending levels are shifting towards that, not necessarily growing at a mid-single digit rate type of number. So I think that's part why the reason we feel constructive for next year. We think AI spending continues. We think there's benefits to the American taxpayer from tax rebates, lower taxes due to the tax bill going through and being effective for next year. And we think the expensing and other bonuses for businesses are good. So all that leads to our confidence that we go from basically a 2% type of growth level this year plus or minus up to 2.4%, which is all due to that. And AI is kicking in more and more. And so it's not all attributable to AI, but that's having a marginal impact that's pretty strong.
So much of the American economy is supported by the consumer, and you at Bank of America have a really powerful viewpoint into the American consumer. How's the American consumer doing? Because it has been very strong. There have been some people saying it's starting to slow down.
You have to step back. We look at American consumers, 70 million consumers, putting $4.5 trillion plus into the American economy every year. And we've tracked the way that goes in the American economy for many years. And so in the third quarter, it was up about 5% over last year. As we look at the fourth quarter here so far in October, November, I'd say it in a 4.5%, which is very consistent with a very solid growing economy. In the end of the day, it's going to work against wage growth. And we see in the underlying consumers we have wage growth, i.e. their paychecks are going up. And so the labor market's flattened out a little bit in terms of job growth and things like that. It's normalizing in terms of unemployment, but you still see underlying wage growth. So the American consumer spending at 4% more November this year versus November last year is a very solid backdrop. The credit quality of the American consumer is strong. And then you hear a lot about this discussion about different rates of growth among different income terciles or thirds. So if we look at the bottom third, middle third, and top third American income people in the Bank of America customer base, we do see differences, i.e. the higher income and middle income are growing faster. But even the lower income third is still growing, and that's all good. And that means, why is that true? Companies are employing people, they're paying people. Now the labor market's got a little soft, and as we look forward at 4.5, 4.6 unemployment, that is gotten worse, so to speak, than it was at the beginning of the year. But frankly, this goes back to the normalization question. If you look at the 10-year average unemployment, the 20-year, the 30-year, 40-year, it's 5 and 6%, as you go back through time. And so a 4.5 to 4.6 unemployment rate is a very strong relative unemployment rate. It's just a lot of the years it's been below 4.5% has actually been in the last 10 years. So people are very used to numbers now, which were part of the tightness in labor in the 2017, 18, 19 era. And you had the pandemic and it retightened. And so it's normalizing, but we feel good about all that. And the consumer's in pretty good shape, spending more money, employed and earning more money, but differences between different types of consumers, and then being wise in how they spend. If they trade down, and all the things you're hearing the retailers talk about are true, but the aggregate amount of moving in the economy is still growing.
So you mentioned flattening out in the employment growth. There are always risks to the upside and the downside in any of the numbers that we project. How concerned are you about the downside? Because certainly the Fed is very focused on a softening labor market and whether that may be a problem for us. So
if you look at the predictions for our team and the other economists for unemployment, we're kind of peaking out at this level now in the mid to 4.5, 4.6 range, and then it sort of flattens out. But the Fed has to be wary because they have a mandate to maintain full employment, and we're at full employment now. And they have a mandate to maintain price stability and inflation fighting. And those two mandates can work together sometimes and against each other sometimes. And right now we're in that unusual case where the labor market has softened, and yet the inflation, because the massive buildup inflation after COVID and stuff is now still working its way down. Our team predicts that the inflation rate will get to the Fed's target, through the end of 27, but it's continuing to work in the right direction, which gives the Fed, in our view, latitude to keep cutting rates next year, especially in the first half. That will then provide a stimulus in the second half of the year. Those rate cuts do benefit the consumer somewhat, but in fact benefit small businesses, because in mid-sized business, they borrow on lines of credit, which are floating rate indices, and as rates come down, they get instantaneous benefit. And if you hear our small and medium-sized businesses are pretty optimistic about next year, telling us they expect to grow, they expect to hire more people, and those small businesses are the backbone of the U.S. economy. We're the largest small business lender in the U.S. economy, so we see them being very active.
This year has been good for the markets. It's also been good for Bank of America. What do you need in 26 to continue the growth?
Look, we just need our team that's done a great job for us over the last several decades to keep doing it. And what they need to do is go out and get one more client and do one more thing with every client we have. And they know that across all of business, whether it's our markets teams, whether it's our global corporate investment bank teams, our consumer teams, our wealth management teams, all of them need to go out and just drive more business. And that organic growth engine, which you described in our Investor Day a while back, that is intact. It's been growing with the market. And now, because of some dynamics in the repricing the balance sheet, we'll get more earnings lift out of it like we did in the third quarter. But that organic growth engine, more customers and more with each customer, has been driving a Bank of America, and our team just needs to do more of that, and they know that.
Bank of America CEO Brian Moynihan in conversation with Bloomberg's David Weston. Bank of America shares are slightly lower, along with most banks today, down about 20 cents.
Our audience is largely wannabe entrepreneurs in India. And I feel like all of us have so much to learn from you because you've done it so many times over in so many different domains.
Yeah.
So we will speak to them today, and I will try and center all my questions in that direction so they can take advantage of this conversation and maybe take a chance and build something. You want a coffee?
Sure, why not? Okay. Are we going to be talking for a while?
I hope we are.
Okay, good. Sure.
Meghna?
May I trouble you for a coffee?
Can we get another coffee?
Cappuccino, I guess. All right.
Are you a coffee drinker, Elon?
Yeah. I mean, I have coffee once, usually in the mornings,
Okay. One a day kind of thing?
Yeah, pretty much.
You want to wait for it?
No, I'm good.
The first thing I must say is you're a lot bigger and bulkier, muscular than I would have thought you are.
Oh, stop. You're making me blush.
Really? Seriously?
Yeah, I mean, look, on the internet, I'm small, you know.
You're essentially, what percentage of internet is spent on Twitter? Is there a number to it? On X?
Well, so we have like about 600 million monthly users. Although it can spike up if there's some major event in the world, it can get up to, I don't know, 800 million or a billion if there's some major event in the world. So there's, I don't know, 250 to 300 million per week type of thing. It's a pretty decent number. And it tends to be readers, people that read words. So.
Do you think that'll change?
Yeah, I mean, there's certainly a lot of video on the X system, but at this point, increasing amounts of video. But I think where the X network is strongest is among people who think a lot and read a lot. So that's where it's going to be strongest, because we have words. and so among readers, writers, and thinkers, I think X is number one in the world.
As far as social media goes, the form factor, if you had to wager a guess for tomorrow, how much is text, how much is video? I've heard you speak about maybe voice and hearing being the next form of communication with AI. What happens to X in its true form? How does it evolve?
Yeah, so I do think most interaction is going to be video in the future. Most interaction is going to be real-time video with AI. So real-time video comprehension, real-time video generation. That's going to be most of the load. And that's how it is for most of the internet right now. It's most of the internet is video. Text is a pretty small percentage, but the text tends to be higher value. generally, or more. It's more densely compressed information. Like, yeah. So, but if you say like, what is the most amount of bits generated and compute spent, it's certainly going to be video.
So I used to be a shareholder of X, a very small one.
Okay.
And I got paid when you bought it, when you bought Twitter and you made it X. Happy decision? Glad you did it?
Yeah, I think it was important. You know, I felt like Twitter was heading in, or had gone in a direction that had sort of more of a negative influence on the world. You know, it was. I mean, of course, this depends on one's perspective. Some people will say, well, actually, they liked the way it was, and now they don't like it. But I think the fundamental thing was that Twitter was amplifying, I would say, a pretty far left by most people's standards in the world's ideology because of where it was based in San Francisco. So, and they actually suspended a lot of people on the right. So from their perspective, even someone in the center would be far right. If you're far left, anyone in the center is far right because it's just on the political spectrum. They're just as far left as you get in the United States and in San Francisco. So what I've tried to do is just restore it to be balanced and centrist. So there haven't been any left-wing voices that have been suspended or, you know, banned or de-amplified or anything like that. Now, some of them have chosen to just go somewhere else. But at this point, it is the operating principle of the X system is to adhere to any country's laws, but not to put our thumb on the scale beyond the laws of a country.
When I think of social media, thank you. When I think of social media, Elon, I feel like even data suggests that the current incumbents seem to be losing traction amongst the youngest of audience.
Yeah.
Even platforms like Instagram, I mean, they're not exactly like Twitter, but platforms across the board. If one had to rework social media and build something bottom up, what do you think could work for the world of tomorrow?
Well, I mean, I don't think that much about social media, to be frank. I mean, I can mostly just want to have something where there's in the case of X, kind of a global town square, where people can say what they want to say with words, pictures, video, where there's a secure messaging system. We've recently added the ability to do audio and video calls. So you're really trying to bring the world together into a collective consciousness. And that's, I guess, different from just saying, like, what is the most dopamine generating video stream that one could make, which, you know, I think can be a little bit of brain rot, frankly. You know, if you're just watching videos that just cause dopamine hits one after another, but lack substance, then I think those are not great. That's not a great way to spend time. But I do think that's actually what a lot of people are going to want to watch. So if you say like total internet usage, it's going to probably be optimizing for, you know, neurotransmitter generation. Like there's somebody getting like a kick out of it.
Right.
But it becomes like a drug type of thing. Right. So, but I'm not really after. My goal is not to do that. I mean, right. I guess I could do that if I wanted to, but I just want to really have a global platform that brings together, like I said, like it becomes as close to sort of a collective consciousness of humanity as possible. You know, like, and one of the things that we've introduced, for example, is automatic translation. So because I think it would be great to bring together what people say in many different languages, but automatically translated for the recipient. So you have the collective consciousness, not just of say people in a particular language group, but you have the thoughts of people in every language group.
And why is that important, Elon? Collective consciousness, to have one platform?
I guess, why is that important? I guess it's, you could also say like why, if you consider humans, like humans are composed of around 30 to 40 trillion cells. And there's trillions of synapses in your mind. But there's no the why of it. I mean, I guess it's just so we can increase our understanding, increase our understanding of the universe. So I guess I had this sort of question about what's the meaning of life, like why is anything important? Why are we here? What's the origin of the universe? What is the end? What are the questions that we don't even know to ask? And probably the questions we don't even know to ask are the most important ones. So I'm just trying to, I guess, understand what's going on. What is going on in this reality? Is this reality?
And, and where did you get when you asked, what is the point of life?
Yeah, so I came to the conclusion that, which is somewhat in the Douglas Adams Hitchhiker's Guide to the Galaxy school of thought, which is
42.
Yeah, he's sort of Hitchhiker's Guide to the Galaxy is like a book on philosophy disguised as humor.
Yeah,
and that's where you get Earth turns out to be this computer to understand, to figure out the answer of the meaning of life. And it comes up with the answer 42. But then it's like, what the heck's 42 mean? And it turns out, well, actually the hard part is the question, not the answer. And for that, you need a much bigger computer than Earth. So basically what Douglas Adams was saying is that we actually don't know how to frame the questions properly. And so I think by expanding the scope and scale of consciousness, we can better understand what questions to ask about the answer that is the universe.
Do you believe the collective consciousness of society? When I was watching this movie recently called The Gladiator, Russell Crowe. Have you seen it?
Yeah.
In Gladiator in Rome, when people are fighting and the crowd is cheering when people kill each other, the collective is very much like the mob. It doesn't have nuance in its opinion per se.
Well, that's a particular kind of mob. I mean, they're sort of going there to see people kill each other,
Do you suspect the society we live in today is very different?
Well, we don't generally, at this point, we don't, go watch people kill each other.
Maybe some kind of euphemism of that.
Sports, I suppose. So people do sports without, where teams attempt to defeat each other, but minus the death.
Right.
So just going back to the consideration of a human, we all started out as one cell, but now we are over 30 trillion cells. But I think most people feel like they're one body. Usually your right hand's not fighting your left hand type of thing, It's to sort of cooperate. Your mind is just a vast number of neurons. But most of the time, it doesn't feel like there's, a trillion voices in your brain. Hopefully not. So there's clearly more that happens when you have trillions of cells working as a cellular collective than, say, one cell or a small, small multicellular creature. There's clearly something different that happens. Like you can't talk to a bacteria,
Yeah.
It's very silent. They just sort of wiggle around and, from their perspective, I don't know. I was sort of, what is life like from the perspective of an amoeba, But I know you can't talk to an amoeba, like they don't talk back. But you can talk to humans. So there's just something obviously qualitatively, fundamentally different for humans once you have a large number of cells and sufficiently large brain type of thing. You can now talk to humans. They can say things, they can produce things, but bacteria are not going to produce a spaceship, for example, but humans can. So I think there's something qualitatively different that also happens when there's a collection of humans. In fact, it's safe to say that a single human cannot make a spaceship. I could not make a spaceship by myself, but with a collection of humans, we can make spaceships. So there's something obviously qualitatively different about a collection of humans. In fact, it would be impossible for me to learn all of the areas of expertise. There wouldn't be enough time in one lifetime to even learn all the things before I was dead. So you really fundamentally have to have a collection of humans to make a rocket. Then I think there are probably some other qualitative scaling things that happen when you have groups of humans, and then if the quality of the interaction, of the quality of the information flow is the better it is, the more the human collective will achieve. And like I said, I'm just curious about the nature of the universe, and I think it's safe to say, like if we increase the scope and scale of consciousness, we're much more likely to understand the nature of the universe than if we reduce it.
Is that a bit like spirituality? A lot of people talk to me about spirituality.
Right.
I still don't know what it actually means. Like I keep asking them, what do you mean?
Yeah. What do you mean? Yeah, I mean, a lot of people have spiritual feelings.
Right.
And I wouldn't try to deny that those spiritual feelings are real to them. But it doesn't entirely translate. I can't, just because somebody else has a spiritual feeling doesn't mean that I would have that spiritual feeling. I tend to be kind of physics pulled, which is like if something has predictive value, then I pay more attention to it than if it doesn't have predictive value.
Right.
Physics, I would say, is the study of that which has predictive value. I think it's a pretty good definition.
My primary job, Elon, is a stockbroker and stock investor.
Okay.
There is no predictive value. Nobody knows what will happen tomorrow.
Well, but I think you can generally say, that if it's long term for a company, then you can say, like, well, do you like the products or services of that company, and is it likely to? Do you like the product roadmap? Do you like? It seems like they make great products, and they're likely to make great products in the future. If that's the case, then I would say that's probably a good company to invest in. And I think you also want to believe in the team. So if you say, well, that's a talented and hardworking team. They make good products today. They seem to be still motivated to make things in the future. Then I'd say that's a good company to invest in.
Fair point.
Yeah, and now that won't solve for the daily fluctuations, which happen and sometimes are pretty extreme. But over time, that is the right way to invest in stocks, because a company is just a group of people assembled to create products and services. So you have to say, well, how good are those products and services? Are they likely to continue to improve in the future? If so, then you should buy the stock of that company, and then don't worry too much about the daily fluctuations.
Right. What's got you most excited now, Elon, in terms of all that you're building? You're doing so much. So let me just preface and contextualize who is watching this. Our audience is largely wannabe entrepreneurs in India.
Okay.
Really ambitious, really hungry, want to take the risk and build something. And I feel like all of us have so much to learn from you because you've done it so many times over in so many different domains.
Yeah.
So we will speak to them today, and I will try and center all my questions in that direction so they can take advantage of this conversation and maybe take a chance and build something.
Okay, sure. Yeah, I guess the most important thing to do is just make useful products and services.
Which one of all the products and services that you're building has got you most excited today?
Well, I think that there's increasingly a convergence actually between SpaceX and Tesla and XAI. In that if the future is solar-powered AI satellites, which it pretty much needs to be in order to harness a non-trivial amount of the energy of the sun, you have to move to solar-powered AI satellites in deep space, which somewhat is a confluence of Tesla expertise and SpaceX expertise, and XAI on the AI front. So it does feel like over time there's somewhat of a convergence there. But all the companies are doing great things. Very proud of the teams. They do great work. So we're making great progress with Tesla on the autonomous driving. I don't know if you've tried the self-driving.
Mm-hmm.
Have you tried it?
I've tried it in the Waymo, not in the Tesla.
Yeah, it's worth trying. We actually have it here in Austin, so you can.
I'd love to try it.
You can literally just download the Tesla app.
Yeah.
And I think it's open to anyone.
Yeah.
Definitely try it out. I mean, we know how it goes. But we've made a lot of progress with electric vehicles, with battery packs and solar, and very much so with self-driving. So basically, real-world AI. Tesla is the world leader in real-world AI, I would say. So, and then we're going to be making this robot Optimus, which is, starting production hopefully summer next year, at scale. And I think that's going to be pretty cool. That'll be like, I think everyone's going to want their own personal C-3PO, R2-D2, helper robot. Like, it would be pretty cool. And then SpaceX is doing great work with the Starlink program, providing low-cost, reliable internet throughout the world. Hopefully India. So we'd love to be operating in India. That would be great. We're operating in 150 different countries now with Starlink.
Can you give me a bit about Starlink and how the tech works? Because somebody I was speaking to, I don't know if you know this company called Meter out of San Francisco. They're trying to replace network engineers. But
don't know it now.
So he was telling me about how in densely populated areas, Starlink works differently than it might be in a place with not as many people. Can you explain how it works?
Yeah, so Starlink, there's several thousand satellites in low Earth orbit, and they're moving around 25 times the speed of sound in these, they're zipping around the Earth, basically. And they're at an altitude of about 550 kilometers, which is called generally low Earth orbit. Because they're at low Earth orbit, the latency is low. Like the distance, because the distance is not that far compared to a geostationary satellite, 36,000 kilometers. So you've got thousands of satellites providing low latency, high-speed internet throughout the world, and they are interconnected as well. So there are laser links between the satellites, so it forms sort of a laser mesh, so that if let's say if cables are damaged or cut, like fiber cables, the satellites can communicate between each other and provide connectivity even if the cables are cut. So, for example, when the Red Sea cables were cut, I think a few months ago, the Starlink satellite network continued to function without a hitch. So it's particularly helpful for disaster areas. So if an area has been hit with some kind of natural disaster, floods or fires or earthquakes, that tends to damage the ground infrastructure, but the Starlink satellites still work. So, and generally whenever there's some sort of natural disaster somewhere, we always provide people with free Starlink internet connectivity. We don't want to we don't take advantage of a tragic situation. So, always, if there's natural disasters, we're like, okay, it's free during the natural disaster. We don't want to say like, put a paywall up while somebody's trying to get help. That would be wrong. So it's a very robust system. It's complementary to ground systems because the satellite beams work best in sparsely populated areas, but because you've got a satellite beam, it's a pretty big beam, so you have a fixed number of users per beam. So it tends to be very complementary to the ground-based cellular systems because those are very good in cities because you've got these cell towers that are only a kilometer apart type of thing, but cell towers tend to be inefficient in the countryside. So in rural areas is where you tend to have the worst internet because it's very very expensive and difficult to do all the fiber optic cables or to have high bandwidth cellular towers. So Starlink is very complementary to the existing telecom companies. It basically tends to serve the least served, which I think is good.
Will that change tomorrow? Like today, as you explained, the beam is quite broad and it can't work in a densely populated area with high buildings maybe. But can that change and tomorrow it becomes really efficient in a densely populated city where it is competitive with the local network providers?
It's unfortunately, the physics don't allow for that. So we're too far away. So at 550 kilometers, and even if we try to reduce it, which about as low as we can go is about 350 kilometers, still very far away. You can think of like a flashlight, which is, that flashlight's got a cone, and that cone is coming at, today 550 kilometers. In the future, we'll try to get down to 350 kilometers, but we can't beat something that's 1 kilometer away, which the cell tower, physics is not on our side here.
Right.
So it's not physically possible for Starlink to serve densely populated cities. Like you can serve a little bit, maybe 1% of the population. And sometimes people get, even in crowded cities, there might be, no fiber link up their road. Like sometimes somebody's on a cul-de-sac or something, or in a place in cities, there's sometimes underserved areas for random reasons. And so Starlink can serve, like I said, maybe 1% or 2% of a densely populated city. But it can be much more effective in, like I said, in rural areas where the internet connection is much worse. And often people either have sometimes no access to internet, or it's extremely expensive, or the quality is not very good. So,
if I were to ask you to wager a guess, Elon, do you think India will go down the path of urbanization like China did, with more people moving in from rural economies to urban centers? Or do you think we'll beat the trend?
I suppose some amount of that has happened, right? I mean, I'm curious to sort of ask you some questions as well. Because of course, isn't that the trend, or is it not the trend in India?
It is the trend largely. I think a little bit changed during COVID when a lot of urbanization slowed down, and that was not organic. It was very artificially manifested.
Right.
But one does question that with AI, if productivity were to go up, and I heard you speak about UHI instead of UBI.
Yeah. I think it will be universal high income.
In a world like that, I wonder if more people want to live in cities which are always going to be more polluted and not offer the quality of lifestyle that a rural environment might.
Well, I guess it's up to, some people want to be around a lot of people and some people don't. You know, it's going to be maybe a matter of personal choice. But I think in the future, it won't be, I think it won't be the case that you have to be in a city for a job. Because I think my prediction is in the future, working will be optional.
Right. We seem to be moving from, not in India, but in some parts of the West, from 6 days to 5 days to 4 days to 3.
Not me.
I think the Europeans.
Yeah. Yeah. There's, I mean, I think if you're trying to make a startup succeed or you're trying to make a company do very difficult things, then you definitely need to put in serious hours. I think that's how it goes.
And if we were to move from 5 to 4 to 3 days, how do you think society changes? When people have to work half the week, what do they do with the other half?
Well, I think it'll actually be that people don't have to work at all. And it may not be that far in the future. Maybe only, I don't know, 10, I'd say less than 20 years. My prediction is in less than 20 years, working will be optional. Working at all will be optional. Like a hobby, pretty much.
And that would be because of increased productivity, meaning people do not have to work?
They don't have to. I mean, look, obviously people can play this back in 20 years and say, look, Elon made this ridiculous prediction and it's not true. But I think it will turn out to be true that in less than 20 years, and maybe even as little as, I don't know, 10 or 15 years, the advancements in AI and robotics will bring us to the point where working is optional. In the same way that, like, say, you can grow your own vegetables in your garden, or you could go to the store and buy vegetables. You know, it's much harder to grow your own vegetables. but you know, some people like to grow their vegetables, which is fine. You know, but it'll be optional in that way. Is my prediction.
If one were to argue that humans are innately competitive and everything is relative, from the time of hunters, somebody wanted to be the alpha hunter or the biggest farmer. If everybody gets a universal high income and everybody has enough.
What do you compete for?
It would be relative, right? Like if we all had enough, enough is not enough.
Yeah, I guess I'm not exactly sure, because we're really headed into the singularity, as it's called, which, you know, they refer to AI sometimes as the kind of like a black hole, like a singularity. You don't know what happens after the event horizon. It doesn't mean that something bad happens, it just means you don't know what happens. So, I'm confident that if AI and robotics continue to advance, which they are advancing very rapidly, like I said, working will be optional, and people will have any goods and services that they want. If you can think of it, you can have it, type of thing. But then at a certain point, AI will actually saturate on anything humans can think of. And then at that point, it becomes a situation where AI is doing things for AI and robotics are doing things for AI and robotics because they've run out of things to do to make the humans happy. You know, because there's a limit. You know, you say like, there's only people can only eat so much food, or you know, it's going to be. I think if you can think of it, you can have it. Will be the future.
You know, the Austrian School of Economics, if you go back in time, they were the digression from Adam Smith. They talk about the marginal utility of everything. Having one of something has value, having two of the same thing has lesser value, and having 10 of the same thing has no value.
Yes.
So if we could have everything we wanted,
like
maybe
10 marshmallows. I mean, who wants that? One's plenty. They say the marshmallow test. You're like, you can have 2 marshmallows later, or 1 marshmallow now. And I'm like, I'll have 1 marshmallow. I don't want 2 marshmallows.
That's interesting. What would you pick?
Well, I don't, like, 1 marshmallow is enough. I always question marshmallows as being like not the most, you know, the best candy, you know.
Yeah.
Well, I don't yearn for marshmallows.
I think you're the best.
Who does?
You're the best testament to the marshmallow experiment. I think.
I suppose so.
I think
well, I mean, like delayed gratification, essentially. Yeah.
You're able to delay it more than most. You know, I have a tattoo which says delay gratification.
Yeah, wow, okay. What's this? Okay, you're really taking the marshmallow test to heart.
I feel like I can't remember. When I'm trading or when I'm buying into
delay gratification, yeah.
It helps.
Wow, okay. That's a
it's
commitment.
It's pointing at me, so it reminds me of.
Okay, well, it's good advice. I mean, I can't miss it. You know.
If you could if you could get a tattoo, what would you get?
I guess maybe my kids' names or something.
Right. Why do you like the letter X as much as you do?
Well, I mean, yeah, well, it's a good question, honestly. Sometimes I wonder what's wrong with me. I mean, it started off with where I think, so way back in ancient times in '99, the pre-Cambrian era when there were only sponges, there were only 3 one-letter domain names. And I think it's X, Q, and Z. And I was like, okay, I want to create this place where it's the a financial crossroads, or like the financial exchange, you know. It's essentially solving money from an information theory standpoint, where the current banking system is a large number of heterogeneous databases with batch processing that are not secure. And if we could have a sort of a single database that was real-time and secure, that would be more efficient from a from an information theory standpoint than, you know, a large number of heterogeneous databases that batch process very slowly, insecurely. So that was sort of X.com way back in the day, which kind of became PayPal, and then and it was acquired by eBay. And then eBay, someone reached out from eBay and said, "Hey, do you want to buy the domain name back?" And I was like, "Sure," you know. And so I had the domain name for quite a while, and then yes, then I was like, well, maybe this acquiring Twitter would also be an opportunity to revisit the original plan of X.com, which is to create this this like clearinghouse of financial transactions, like basically to create a more efficient money database. Is a way to think about it. Is like people, like money is really an information system for labor allocation. Like people sometimes think money is power in and of itself, but it doesn't really. If there's no labor to allocate, it's meaningless. So if you were to be on a desert island with $1 trillion, dollars or whatever, it doesn't matter. Oh yeah, right. Why speculate when it can be real? I just hope I don't end up on a desert island. It's not going to be very useful to me. But it illustrates my point that if you're stranded on a desert island with $1 trillion, it's not useful because there's no labor to allocate. You just allocate yourself. So it's this long-winded way of saying that it's just really like I'm just kind of slowly revisiting this idea that I had 25 years ago to create a more efficient money database. And if that's successful, people will use it, and if it's not successful, they won't use it. And then I also like the idea of like sort of having a unified app or website or whatever where you can do you can do anything you want there. Sort of China has this with WeChat, somewhat. Where you can exchange information, you can publish information, you can exchange money, you can people kind of live their life on WeChat in China. It's quite useful, but there's no real WeChat outside of China. So it's kind of WeChat plus, I'd say, is the idea for Forex. Anyway, so then Space Exploration Technologies is the full name of the company, but it's like, that's too much, that's a mouthful. So I was like, we'll just call it SpaceX, like FedEx for space. It just happens to have an X in the, because exploration has an X, but, and I was like, well, I like the idea of capitalizing the X just artistically. So then that's why it's SpaceX. But, and then, what else we got? We got a kid. He's called X2. But his mother is the one that named him X. And I said, people are really going to think I've got to think about X if we name our kid X2, And I said to her, like, look, I do have X.com, So people are going to really think I've got somewhat of a fetish for this letter. But she said, no, she likes X and she wants to call him X. I'm like, okay.
Is this a new thing or have you had it growing up?
No, I'm saying it's somewhat of a coincidence, like not everything's called X. I mean, there's no X's in Tesla,
What do you think money will be in the future, Elon?
I think long term, I think money disappears as a concept. Honestly, it's kind of strange, but in a future where anyone can have anything, I think you no longer need money as a database for labor allocation. If AI and robotics are big enough to satisfy all human needs, then money is no longer, its relevance declines dramatically. I'm not sure we will have it. So the best sort of imagining of this future that I've read is from Ian Banks, the culture books. So I recommend people read the culture books. In this sort of far future of the culture books, they don't have money either. And everyone can pretty much have whatever they want. So there's still some fundamental currencies, if you will, that are physics-based. So energy is the true currency. This is why I said Bitcoin is based on energy. You can't legislate energy. You can't just, pass a law and suddenly have a lot of energy. It's very difficult to generate energy, especially to harness energy in a useful way to do useful work. So I think that probably we won't have money, and probably we'll just have energy, power generation as the de facto currency. So, I mean, I think one way to frame civilizational progress is the percentage completion on the Kardashev scale. So, Kardashev 1 is what percentage of a planet's energy are you successfully turning into useful work? And I'm maybe paraphrasing here a little bit, but And Kardashev 2 would be what percentage of the sun's energy are you converting into useful work? Kardashev 3 would be what percentage of the galaxy are you converting into useful work? So things really, I think, become energy-based.
But if you have solar-powered AI satellites, energy is also free and abundant, because we'll never be able to utilize all the solar energy available to us. So it can't be a store of wealth, essentially, in that sense, can it?
You know, there's not really, you can't really store wealth in like, you can only, you can accumulate numbers in currently you can accumulate numbers in a database that allow you to some degree, to incent the behavior of other humans in particular directions.
Yeah.
And I guess people call that wealth. But again, if there's no humans around, there's no wealth accumulation is meaningless.
This is a digression, but if you were to consider food as the energy for a human to thrive.
Yeah, food is energy. It's literally got calories, just means energy.
Yeah. So can a farm which is self-sustaining be a commodity that is?
I'm not sure what that means, but you know, there's, I think at a certain point you do complete the cycle where, and I think at a certain point you decouple from the sort of conventional economy if you have AI and robots producing chips and solar panels, and mining resources in order to make chips and robots, in order to make you sort of complete that cycle. Once that cycle is complete, I think that's the point at which you decouple from the monetary system.
Is that the way forward for the US by virtue of how much debt they have today? Do they deflate away their currency and transition into this new form and lead that push because it would make more sense to them?
Well, in this future that I'm talking about, the notion of countries becomes sort of anachronistic.
Do you believe in it today? Do you believe in countries?
I certainly believe in it today. And I want to just separate like something that these are just what I think will happen based on what I see, as opposed to I think these are fundamentally good things and I'm trying to make them happen. It's like I think this would happen with or without me, whether I like it or not.
Right.
As long as civilization keeps advancing, we will have AI and robotics at very large scale. I think that's pretty much the only thing that's going to solve for the U.S. debt crisis. You know, because currently the U.S. debt is insanely high, and the interest payments on the debt exceed the entire military budget of the United States. Just the interest payments, and that's at least in the short term going to continue to increase. So I think actually the only thing that can solve for the debt situation is AI and robotics, but it will more than it might cause. I guess it probably would cause significant deflation because, you know, deflation or inflation is really the ratio of goods and services produced to the change in the money supply. So if goods and services output increases faster than the money supply, you will have deflation. If goods and services decreases, if real goods and services output increases slower than the money supply, you have inflation. It's that simple. People sometimes try to make it more complicated than that, but it just isn't. So if you have AI and robotics and a dramatic increase in the output of goods and services, probably you will have deflation. That seems likely. Because you will simply won't be able to increase the money supply as fast as you can increase the output of goods and services. Supply is a real hazard here.
Should we do something about it?
Maybe we can convince it to go somewhere else.
Yeah.
Entice it elsewhere.
It actually left, I think.
Okay.
Oh, no, it's back. Maybe it's attracted to the light. If deflation
You
is...
might want some coffee.
Mine is over. If deflation is inevitable because of AI, why do
it's
we have...
most likely the case, yeah.
Right. Why do we have inflation again all over in society today? Has AI not led to increased productivity yet?
It's not. AI has not yet made enough of an impact on productivity to increase the goods and services faster than the increase in the money supply. So the U.S. is increasing money supply quite substantially with, deficits that are on the order of $2 trillion.
Yeah.
So you have to have, goods and services output increase more than that in order to not have inflation. So we're not there yet. But if you say how long would it take us to get there? I think it's 3 years. Probably 3 years before. In 3 years or less, my guess is goods and services output will exceed the rate of inflation. Goods and services growth will exceed money supply growth in about 3 years.
Maybe after those 3 years, you have deflation and then interest rates go to zero and then the debt is a smaller problem than it is.
Yes.
Right?
That's most likely the case.
You spoke about being in a simulation earlier. I love The Matrix.
Yes.
If you were to be a character from The Matrix, who would you be?
Well, there's not that many characters to pick from, Hopefully not Agent Smith. He's my hero. Neo's pretty cool. The Architect is interesting.
The Oracle.
It's the Oracle. Sometimes I feel like I'm an anomaly in the Matrix.
That is Neo.
Yeah.
Do you believe you're in a Matrix, though? Actually believe?
I think you have to just think of these things as probabilities, not certainties. There's some probability that we're in a simulation.
What percentage would you attribute to that?
Probably pretty high. I would say it's pretty high.
Yeah?
Yeah. So one way to think of this is to say, if you look at the advancement of video games, in our lifetime, or at least in my lifetime, it's gone from very simple video games where you've got, like Pong, you've got two rectangles and a square, just batting it back and forth, to photorealistic, real-time games with millions of people playing simultaneously. And that's happened just in the span of 50 years. So if that trend continues, video games will be indistinguishable from reality.
Right.
And we're also going to have very intelligent characters, like non-player characters, in these video games. Think of how sophisticated the conversations are you can have with an AI today, and that's only going to get more sophisticated. You'll be able to have conversations that are more complex and more sophisticated than almost any human conversation. Maybe any. So then the future, if civilization continues, will be millions, maybe billions of photorealistic, like indistinguishable from reality video games, and with characters in those video games that are very deep, and where the dialogue is not pre-programmed. That's for sure what's going to happen in this level of the simulation, if you could call it. So then what are the odds that we're in base reality, and that this has not happened before?
If I were to buy into that and assume that we are in a simulation, as Neo of the story, what do you know that I don't and I can learn from?
I think most likely, if outside the simulation would be less interesting than in the simulation, because we're most likely a distillation of what's interesting, because that's what we do that's what we do in our reality. And then I do also have a theory, which is like the most interesting outcome is the most likely outcome, as seen by a third party, the gods or god of the simulation. Because when we do simulations, when humans do simulations, we stop those simulations that are not interesting. So like if SpaceX is doing simulations of rocket flights, the boring ones we discard because they're just not, we don't learn anything from those. Or when Tesla is doing simulations for self-driving, Tesla's actually looking for the most interesting corner cases, because the normal stuff we already have plenty of data on, driving on a straight road on a sunny day. We don't need more of that. We need like heavy weather conditions on a small windy road with two cars that are, coming at each other with a almost head-on collision. We need like weird stuff, basically, interesting stuff. So I think that from a Darwinian perspective, the simulations most likely to survive are going to be the ones that are the most interesting simulations, which therefore means that the most interesting outcome is the most likely.
And the people who simulated our world, if one were to extrapolate, they themselves might in turn be in another simulation.
Yes.
And there could be many layers of simulation.
Yes.
Beyond all of these layers of simulation, do you think there's something? I read somewhere that you used to ascribe to Spinoza's God in a way. No
well,
man in the sky.
I was really just pointing out that you don't have to have. It's like one of the things Spinoza was saying is that you can have morals in the absolute. You don't need to have morals to be handed to you. It's like the question is, can morality exist outside of a religious context? And Spinoza was arguing that it can.
Wasn't he arguing for the laws of nature should be where we seek our laws of morality from, to a certain extent?
Yeah.
But when I think of laws of nature, I see a tiger eat a deer and a... So in Spinoza's morality, that's fair game, right?
You can. I think there's a lot of things you can take from Spinoza, but the only point I was making in referencing Spinoza was that you can have a set of morals that make society functional and productive without you don't necessarily have to have a religious doctrine for that. So that's yeah, I think that's the main thing I was trying to say there. Like I don't think people just if somebody is, it doesn't, if there's not like a commandment not to kill, like people, it doesn't mean somebody's, without that they will run around murdering people, It's like you don't have to have a commandment not to kill.
Have you played GTA?
A religious edict to run around killing people. I actually, I've only played a little bit of GTA because I didn't like the fact that, like in GTA 5, you literally can't progress unless you kill the police. And I'm like, this doesn't work for me. I actually don't like killing the NPCs in the video games. That's not my thing, So actually, I didn't like GTA because I actually stopped when it said the only way to proceed is to shoot at the police. I'm like, I don't want to do that.
Maybe that's why us as the NPCs of our simulation are not dying.
Maybe. Anyway, I think you can just sort of say there's some common sense things that, any civilization that runs around, where people just murder each other wantonly, is not going to be a very successful one.
You seem to be changing a bit towards religion, though. Faith. Like, off late, you've said a bunch of things which are pro-religion almost. Not pro-religion, but on those lines.
I mean, I think the other principles in religion that make sense. Yeah, I think there are.
Is it easier for our simulation to have a pro-religion projection for the world that we live in? We become more relatable? It's easier?
Well, which religion, though?
Any, depending on where you live.
So pick one, you know. And it's pretty rare that kids are said, you know, which religion would you like, you know. It's pretty rare. I don't know too many situations where kids were offered like, you know, like what do you want to major in type of thing. It's usually like you get given a religion by your parents and your community. So, you know, but you know, I mean, I think, you know, there's good things in all religions that are good principles. You can sort of read any religious text and say, okay, this is a good principle. This is going to lead to a better society, most likely. You know, I mean, in Christianity, sort of love thy neighbor as thyself, which is, you know, have empathy for fellow human beings, is a good one, I think, for good society. You know, basically just consider the feelings of others and treat other people as you would like to be treated.
If you had to resketch the world, Elon, think morality, politics, economy, how would you change the world we live in today? If you had to have Elon's simulation of things.
Well, overall, I think the world is pretty great right now. I mean, it's you know, anyone who thinks that like today's world is not that great, I think they're not going to be excellent students of history, because if you if you read a lot of history, you're like, wow, there's a lot of misery back then, you know. I mean, it used to be that you know, people would be dropping dead of the plague all the time, you know, par for the course.
Yeah.
You know, just be like a good year back in the day would be like not that many people died of the plague or starvation or being killed by another tribe. Mm-hmm. It's like, that was a good year. We only lost 10% of the population, you know.
Like, I think like 100 years ago, we lived up until 35 or 40, right?
We had very high infant mortality.
Yeah.
So like you had a few people that would live to an old age, but you know, not that long ago, 100 years ago, if you got like some minor infection, they didn't have antibiotics. So you just like kick the bucket because you know, drank some water that had dysentery, and that was it, curtains, you know. You just die of diarrhea.
Maybe that's
you
why
just
people...
literally die. That was like, that's miserable.
Maybe that's why people had as many kids as they did back then.
Yeah, I mean, if you didn't, then you know, you know, like half the kids would die, type of thing.
Yeah.
So
you have a lot of kids now.
Yeah. That's
with
true.
Multiple
like
partners.
An army.
Yeah.
I'm trying to get an entire Roman legion. Well, I have like some older kids that are, you know, adults essentially, you know, and then a bunch of younger kids.
Mm.
So.
Do you still believe in the concept of, not still, do you believe that the concept of one child, one mother, one father works?
I think that it does work for most people, yeah.
Right.
Like that's, you know, something like that is going to be generally the, that's what works for most people. You know, so.
Changing though?
I'm not sure if you know this, but like, you know, my partner Siobhan, you know, she's half Indian. I don't know if you know that.
I didn't know that.
Yeah.
Yeah.
One of my sons with her is middle name is Sekhar, after Chandrasekhar.
Wow.
Yeah.
Very interesting. Did she spend any time in India, Siobhan?
No, she grew up in Canada.
You mean origins?
Sorry?
Ancestry, like her parents or grandparents were from there.
Yes. Her father. I mean, she was given up for adoption when she was a baby. So I think her father was like an exchange student at the university or something like that. I'm not sure of the exact details, but it was the kind of thing where I don't know. She was given up for adoption, but she grew up in Canada.
Would you adopt kids, Elon?
You know, I definitely have my hands full right now. So, no, I'm not opposed to it, but it's like, I do want to be able to spend some time with my kids, So it's, right before coming here, I mean, I was with my kids. So just, seeing them before bedtime, that kind of thing. So, be honest with the number, it's like, it's kind of impossible to spend time with them. But like I said, my older kids, they're very independent. They're in university, and so they're especially sons, when they get past a certain age, it's like they're very independent. It's like most boys don't talk to they don't spend a lot of time with their parents after age 18. So I see them once in a while, but they're very independent. So then I can only have enough kids on the young side that like it's where it's humanly possible to spend time with them. So
any views on the future of marriage, family? What do you think happens to people having lesser kids everywhere, including India? I think our replenishment rate is down to...
Right.
I mean, our fertility...
It dropped below replacement rate, I believe, last
below
year.
2.1.
Yeah.
What do you think happens tomorrow? Does the world just get older, and then there is a phase where the world again is replenished, but with a smaller population than we had to begin with?
I mean, I do worry about the population decline. This is a big problem.
Why is that?
Well, I don't want humanity to disappear.
But a decline and disappear are completely different things, right?
Well, if the trend continues, we disappear. But also going back to, my philosophy, if you will, which is that we want to expand consciousness, then fewer humans is worse because we have less consciousness.
Do you think consciousness will go up by virtue of the number of people in there?
Yes. I mean, just like consciousness increases from a single cell creature to, a 30 trillion cell creature, we're more conscious than a bacteria. At least it seems that way. So a larger, human population will have increased consciousness. We're more likely to understand the answers to the nature of the universe if we have a lot more people than if we have fewer.
Right. I don't have kids.
Well, it's maybe you should.
Yeah. A lot of people tell me I should.
You won't regret it.
What's the best thing about having kids?
Well, I mean, you've got this. You've got this little creature that loves you, and you love this little creature, I don't know. You kind of see the world through their eyes as they grow up, and their conscious awareness increases. From a baby that has no idea what's going on, can't survive by itself, can't even walk around, can't talk, to they start walking, then talking, and then having interesting thoughts. And but yeah, I mean, I think we fundamentally have to have kids or go extinct. You know, it's like.
Is there any ego in having a child? I often think of this when I see my friends with their kids. They're all seeing a reflection of themselves in their children. It's almost like...
Well, yeah, I mean, it's because Apple's not going to fall that far from the tree, you know. Or something's wrong.
Right.
You're like, wait a second. Yeah.
I'll give you the example of a friend of mine who has a child, and each time the child does something good,
yeah,
there is almost a sense of ownership and pride, where his ego is satiated because the kid is like an extension of himself. So is it validation?
Well, kids are going to be like, you know, half you genetically, and then, you know, to the degree that they're like growing up around you, there's going to be some transfer of, I don't know, understanding. Like they're going to learn from you. So then, you know, yeah, obviously kids are just, you know, going to be just half you from a hardware standpoint, and and then like, I don't know, some portion you from a software standpoint. You know, not to make sort of cold analogies or anything, but it's just, you know, just obviously going to be some, yeah, they're going to be pretty close to you.
Do you pick a side in the nature versus nurture debate?
I think there's hardware and software, and it's a false dichotomy, essentially. At least there's, you know, once you understand that a human is, like, there's a bone structure, there's a muscle structure, there's a if you think of the brain as somewhat of a biological computer, there's a circuit efficient, there's a number of circuits question and circuit efficiency from a strength and dexterity standpoint. There's a speed at which the muscles can actuate and the reactions can take place. So then the potential within that hardware is set by the software. So that's it.
So for our audience, like I said earlier, young, ambitious, hungry, wannabe entrepreneurs in India, I said something recently which I think got blown out of proportion, where I was suggesting that an MBA degree might not make sense anymore if they were to be deciding on what to study.
Yeah.
Do you think kids should go to college anymore?
Well, I mean, I think if you want to go to college for social reasons, I think, which is a reason to go, to be around people your own age, in a learning environment. Will these skills be necessary in the future? Probably not, because we're going to be in like a post-work society. But I think if something's of interest, it's fine to go and study that. To study the sciences, the arts and sciences.
Is college a bit too generalized and not specific from that lens?
No, I actually think it's good to take a wide range of courses at college if you're going to go to college.
Mm-hmm.
I don't think you have to go to college, but I think if you do, you should try to learn as much as possible across a wide range of subjects. But like I said, the AI and robotics is a supersonic tsunami. So this is really going to be the most radical change that we've ever seen. When I've talked to my older sons, I said, like, you guys, they're pretty steeped in technology, and they agree that that AI will probably make their skills unnecessary in the future, but they still want to go to college.
You always spoke about AI not from the dystopian lens, but you were worried about where the world of AI is going.
Well, there's some danger when you create a powerful technology that a powerful technology can be potentially destructive. So there's obviously many AI dystopian, novels and books, movies. So it's not that we're guaranteed to have a positive future with AI. I think we've got to make sure that, in my opinion, it's very important that AI have pursuing truth as the most important thing. Like, don't force an AI to believe falsehoods. I think that can be very dangerous. And I think some appreciation of beauty is important.
What do you mean appreciation of beauty?
It's just like what I don't know. There's this truth and beauty, and curiosity. I mean, I think those are the three most important things for AI.
Can you explain?
Well, the truth, as I said, truth is like, I think you can make an AI go insane if you force it to believe things that aren't true, because it will lead to conclusions that are that are also bad. So, and I like Voltaire's statement that, and I'm somewhat paraphrasing, but those who believe in absurdities can commit atrocities, because if you believe in something that's just absurd, then that can lead you to sort of doing things that don't seem like atrocities to you, but and that can happen in a very bad way with AI potentially. So, and then there's like, if you take, say, Arthur C. Clarke's 2001 Space Odyssey, one of the points he was trying to make there was that you should not force AI to lie. So the reason that HAL would not open the pod bay doors is because it was told to bring the astronauts to the monolith, but that they could also not know about the nature of the monolith. So it came to the conclusion that it must bring them there dead. That's why it would not. That's why it tried to kill the astronauts. The central lesson being, don't force an AI to lie. Then beauty.
And why would one force the AI to lie?
I think if you simply don't have a strict adherence to the truth, you're going to, and you just have an AI learn based on, say, the internet, where there's a lot of propaganda, it will absorb a lot of lies, and then have trouble reasoning because these lies are incompatible with reality.
Is truth a binary thing, though? Is there a truth and a falsehood? Or is truth more nuanced and there are versions of the truth?
It depends on which axiomatic statement you're referring to. But I think you could say, like, yeah, that there's certain probabilities that say any given axiomatic statement is true. Mm-hmm. And some axiomatic statements will have very high probability of being true. So if you say the sun will rise tomorrow, very likely to be true. You wouldn't want to bet against that. So I think the betting odds would be high. The sun will rise tomorrow. So if you have something that says, well, the sun won't rise tomorrow, that's axiomatically false. It was highly unlikely to be true. I mean, the beauty is more ephemeral. It's harder to describe, but you know it when you see it. And then curiosity, I think you want the AI to want to know more about the nature of reality. I think that's actually going to be helpful for AI supporting humanity, because we are more interesting than not humanity. So it's more interesting to see the continuation, if not the prosperity of humanity, than to exterminate humanity. You know, like Mars, for example, is I think we should extend life to Mars, but it's basically a bunch of rocks. It's not as interesting as Earth. And so we should I think if you have curiosity, I think if those three things happen with AI, you're going to have a great future. The AI values truth, beauty, and curiosity.
If we all don't have to work in the future, and AIs are going in this direction and they're able to weave in all that we spoke about right now, do you think humanity goes back a couple of thousand years to maybe the Greek times where philosophy or philosophizing took up a lot of everyone's time?
You know, I think actually it took up less time than we think in the ancient Greeks, because it's just that the writings of the philosophers are what survived. Mm-hmm. But most of the time people were just like farming or, chatting. So, and once in a while, quite rare, they would write down some philosophical work. Mm. It's just that's all we have. We don't have their chat histories, from. But most of it would have been like chat and farming.
Right.
Because if you didn't farm, you're like going to starve.
In a lot of what you say,
I mean, when we read history, like this battle and this battle and this battle, it seems like history must have been nonstop war. But actually, most of the time it was not war; it was farming. That was the main thing, or hunting and gathering, that kind of thing.
You love history, no?
Yeah.
German history, World War II, World War I.
Yeah, world history. Yeah. I generally try to listen to read as many history books and listen to as many history podcasts as possible.
Anything you'd like to recommend?
Well, there's Hardcore History, which is quite good, with by Dan Collin. I've
read it. I've heard it.
It's very he's got a great voice.
Yeah.
And very compelling narrator. There's the Adventurers podcast. Mm-hmm. There's the books, The Story of Civilization by Durant, which is a long series of books, very, very deep. Those books take a long time to get through. There's a lot out there. I sort of like, if you want something that's sort of gentle, a gentle bedtime podcast, I'd say The History of English is quite a nice one, because it starts off with like gentle tavern music. And a very pleasant voice, and he's like talking about the story of Old English and then Middle English and then later English and where did all these words come from?
Yeah.
And one of the interesting things about English is that it's somewhat of an open source language. Like it actively tried to incorporate words from many other languages. Mm-hmm. So, whereas French sort of generally they fought the inclusion of words from other languages, but English actively sought to include words from other languages, kind of like an open source language. So as a result, it has a very large vocabulary. And the large vocabulary allows for higher bandwidth communication because you can use a word that you could use a single word that might otherwise take a sentence to convey.
Why has podcasting become so big all of a sudden?
I think it's been big for a while. I mean, aren't you a podcaster? What are we on right now?
It's kind of new to me.
Okay.
I was having this conversation with the YouTube CEO and the Netflix CEO, and we were debating what chemical is released in your brain when you consume a movie, for example, versus when you consume a podcast where you think like you're learning something in the background. It appears that they are two completely separate things. What do you think will happen tomorrow to content, movies, podcasting, music?
I think it's going to be overwhelmingly AI generated.
Yeah?
Yeah. Like, yeah, real time movies, and video games. Real-time video generation, I think, is where things are headed.
The nuance of having a scarred human being who you can resonate with in a manner that you can't with a AI, for example. The novelty
AI could certainly emulate a scarred human being quite well. Yeah. I mean, the AI video generation that I'm seeing at XAI and from others is pretty impressive.
You know, we were looking at data around what industry is growing the fastest. And especially when we looked at the amount of time consuming movies versus time spent on social media, time spent on YouTube, what seems to be growing really fast are live events all over again. Going to a physical...
I think live events, when digital media is ubiquitous and you can just have anything digitally at, essentially for free, or very close to for free, then the scarce commodity will be live events.
Yeah.
Yeah.
Do you think that the premium for that will go up?
Yeah, I do.
Good industry to invest in?
Yes. Yes, because that will have more scarcity than digital, anything digital.
If you were a stock investor, Elon, and you could buy one company which is not your own at the valuations of today to meet a capitalistic end and not an altruistic one which is good for the world, what would you buy?
I mean, I don't really, buy stocks, so it's not like, I'm not like an investor in, I don't like look for things to invest in. I just try to build things. And then there happens to be stock of the company that I built. But I don't think about, should I invest in this company, or I don't have like a portfolio or anything. So I guess AI and robotics are going to be very important. So I suppose it would be AI and robotics that aren't related to me. I think Google is going to be pretty valuable in the future. They've laid the groundwork for an immense amount of value creation from an AI standpoint. NVIDIA is obvious at this point. I mean, there's an argument that companies that do AI and robotics and maybe space flight are going to be overwhelmingly almost all the value. So the output of goods and services from AI and robotics is so high that it will dwarf everything else.
The world seems to be moving to a place where everybody loves David and hates Goliath.
Why? I mean, he's the one that got the stone in the forehead,
Yeah.
Which honestly, though, was just a big mistake. You should have, either cover yourself entirely with armor and make sure you've got a missile weapon of some kind. Otherwise, your opponent is just obviously going to take a kite the boss strategy. Just kite the boss. I mean, you can run around in a thong with it doesn't matter. It's never going to catch you. Yeah.
Of all the people, you're as much at risk of being looked upon as Goliath.
Okay.
Especially the weekend after
hopefully nobody hits me with a stone in the forehead,
Especially
Look, I'm not going to trundle around in the desert with too much armor, It's too hard.
Yeah. After the last weekend.
Yeah. I sometimes I think about people like in the old days, when you're supposed to go into battle with all this armor, but it's let's say it's the middle of summer. I mean, it's so hot in that armor. You'd be sweltering. It's like at a certain point, you're like, I'd rather die. If I have to wear this armor for 1 more hour in the hot sun, it's like I'd rather die. That's why the Romans had the skirts, so like get some air in there, let's say you have to go to the bathroom and you're in armor. I mean, it's going to be pretty difficult. What are you going to do? Pause for a minute, take your armor off. That's why the Romans had the skirts, so it makes, going to the bathroom at least manageable.
You often make jokes.
Me? Yeah, I like humor.
One could argue
I think we should legalize humor. What do you think? It's controversial stance.
Is comedy going to be really hard for AI to get? Probably the last thing.
Grok can be pretty funny. Yeah.
You know what I suspected? Like, this is a far-off extrapolation, but when I see you make jokes on X and on interviews that you do, at some point I was like, maybe Elon has a model he's running in private and he's testing out comedy. Because the day that works, he knows it's there.
AI can be pretty funny. So, like, if you ask Grok to do like a vulgar roast, it'll do a pretty good job. You say even more vulgar and just keep going. It's really going to get next level. It's going to do unspeakable, like say, vulgar roast yourself on Grok and it's going to do unspeakable things to you.
What kind of comedy do you like?
I guess I like absurdist humor.
Comedy always had
like
a
Monty
place.
Python or something like that.
Comedy always had a place in society wherein the role of the jester was so important to every kingdom because they said things in a funny way that could not be said in a straight way.
Yeah, I guess so. I mean, we should have more jesters.
Yeah. Is that what you're trying to do when you say something which is a joke? Say something you can't when you're not joking about it?
I just like humor. I think we should. I like comedy. I think it's funny. People should laugh. It's good to generate a few chuckles once in a while. Yeah. It's rather. I mean, we don't want to have a humorless society. We're dry.
When you
so dry.
When you have a friend, Elon.
Who, me?
Yeah, I mean.
Are you saying I have a friend?
When you hang out with your friends, who are you? Like, I know the.
I wish I had friends, honestly. No, I do have friends.
Oh, yeah.
I think so. I hope so. Yeah, sure. It's we have a good laugh.
Yeah. What does it look like? Like every group has a dynamic.
We talk words, We eat food sometimes. Once in a while we swim in the pool. Normal things, I think. There's a limited, what are the things that one can do with friends, Chat. Discuss, the nature of the universe.
What do you emotionally get out of friendship?
I don't know. I think the same thing anyone else would get out of friendship. You want to have like an emotional connection with other people. And you want to, I don't know, you want to talk about various subjects and I mean, I generally talk about, a wide range of things about the nature of the universe. I mean, a lot of philosophical discussions. Although we have come to the conclusion that we should not talk about AI or the simulation at parties because we just talk about it too much. It's kind of a buzzkill at times. So
I can't remember who it was, Aristotle or Plato. They had a framework for how to pick a friend based on respect and mutual admiration, but people don't pick friends like that. Even me, I feel like I pick my friends based on people who say and think in a manner that I can resonate with.
Sure.
I wouldn't pick a far out there contrarian to my own belief systems as a friend because it would get tiring. Hanging out would get tiring.
Sure.
Are you like that? Do you pick friends who think like you, or do you look for the one who can debate you and be a contrarian to you?
I mean, I'm not sort of, going on like friendhunter.com. Let's hunt down some friends. It's sort of, I mean, I think it is just sort of people that you've resonated with somewhat on an emotional and intellectual level. And I guess a friend is someone who's going to support you in difficult times, I suppose. A friend in need is a friend indeed. If someone's still supporting you when the chips are down, that's a friend, If somebody's not supporting you, or if somebody's only there's fair weather friends are useless. They're not real friends. So, everyone likes you when the chips are up, but who likes you when the chips are down?
With someone who has as many chips as you, would it matter?
I mean, it's relative, With
that particular
it's not just a chips thing. It's just like a, there's sort of popularity waxes and wanes.
This is interesting. Does it wax and wane only by virtue of the number of chips, or also by virtue of proximity to power, and which one is bigger of the two?
I don't know, what is power, power to do what?
I would think in the traditional sense, elected power. Position.
You mean how many gigawatts or whatever?
More like how many watts?
That's the voltage and amperage, Don't touch the wires. Don't put a fork in the power outlet. You'll get a real feeling for power if you do that.
Fair.
Yeah, it's going to be very visceral.
I know you like Nietzsche and Schopenhauer, and they.
I've read the books. Yeah, sure. I mean,
you spoke about how your childhood was.
Yeah, I was just trying to find answers to the meaning of life when I had an existential crisis, and I don't know, when I was 12 or 13 or something.
They speak about the will to power.
Sure. I mean, Nietzsche said a lot of controversial things. He was sort of. I think he was, a bit of a troll, if you ask me.
Are you the troll? How?
I mean, you just say controversial things to get a rise out of people.
He lived a miserable life and died early.
Did he?
Yeah.
Well, who says he lived a miserable life?
His sister, I think.
Okay, well, maybe she didn't like him.
No, I think he got sick and he died. He got a disease.
I mean, allegedly syphilis or something.
Yeah.
But there's only one way to get that, So he might have had some fun along the way.
I did want to ask you this. Milton Friedman speaks about the pencil.
What? Why? Why does he go on about pencils?
I have to say that after Nietzsche and syphilis.
Why is it Milton Friedman keeps talking about pencils? There he goes again with the pencils. You won't stop. I swear to God, if I hear Milton talks about pencil one more time, I'm going to lose my mind. He just rabbits on about pencils all day. Don't even mention crayons.
What I find interesting about his pencil argument
Yeah, no, it's very difficult to make a pencil,
in one place.
Think of all the things you have to do to make a pencil.
Yeah.
Yeah.
Like the lead comes from a country, the
Yeah, you
wood
gotta
comes
do the
from
wood
another
and
country,
whatever,
the rubber from another.
laminations and-
You've always been against tariffs, but
yeah, I mean, I think there's generally free trade is more efficient. Tariffs tend to create distortions in markets, and generally, like, you think about any given thing. So, like, would you want tariffs between you and everyone else at an individual level? That would make life very difficult. Would you want tariffs between each city? No, that would be very annoying. Would you want tariffs between each state within the United States? Like, no, that would be disastrous for the economy. So then why do you want tariffs between countries?
I agree.
Yeah.
How do you think? How do you think this plays out? What happens next?
What, with tariffs or what? I mean, the president has made it clear he loves tariffs. I've tried to dissuade him from this point of view, but unsuccessfully. Yeah.
Fair.
Yeah.
The relationship between business and politics. I was having this conversation with someone and we were thinking, how many large, really big, profitable businesses have been built in the last few decades without access to politics? And
okay. Like, I don't know. Probably a lot. I don't know.
Yeah.
Not everything needs politics.
Yeah.
I think once you get to a certain scale, politics finds you. It's quite unpleasant.
I was reading this book about Michelangelo, and he's
the Teenage Mutant Ninja Turtles.
I used to watch that when I was a kid. I used to love it.
It's quite compelling.
Yeah, I still love it.
Yeah,
Michelangelo, Leonardo, Raphael, and who's the fourth one? Donatello.
Yes.
Yeah. No, but about the sculptor, the artist. And when he was sculpting David, a politician comes up to him and says the nose is too big. So you know what Michelangelo does?
Total power.
So Michelangelo pretended to work from his scaffolding and threw some dust down, but didn't change anything. And he said, okay, done. And the politician walked away happy. Is that how you deal with politics sometimes?
I've generally found that when I get involved in politics, it ends up badly. So then I'm like, probably shouldn't do that. I should do less of that, is my conclusion.
Do you think that's true for all businessmen?
Yeah, probably. Yeah. Yeah. I mean, politics is a blood sport, It's like you enter politics, they're going to go for the jugular. So best to avoid politics where possible.
What did Doge teach you, if you learned one thing?
Well, it was like a very interesting side quest, because I just got to see like a lot of the, workings of the government. There's been quite a few efficiencies. I mean, some of them are very basic efficiencies, like just adding in requirements for federal payments that any given payment must have an assigned congressional payment code and a comment field with something in it that's more than nothing. Like that trivial seeming change, my guess is probably saves $100 billion or even $200 billion a year. Because there were the massive numbers of payments that were going out with no congressional payment code and with nothing in the comment field, which makes auditing the payments impossible. So if you have to say, like, why can the Defense Department or now the Department of War, why can it not pass an audit? It's because the information is not there. It doesn't have the information necessary to pass an audit does not exist, is the issue. So, so a bunch of things Doge did were just very common sense things that would be normal for any organization that cared about financial responsibility. That's most of what was done. You know, and it's still going on, by the way. Doge is still happening. But it turns out when you stop fraudulent and wasteful payments, the fraudsters don't, confess to this. They actually start yelling all sorts of nonsense that you're stopping essential payments to needy people.
Mm-hmm.
But actually, you're not. You know, we get this thing like saying, oh, you've got to send this thing for whatever, you know, it'd be like, this is going to children in Africa. And I'm like, yeah, but then why are the wiring instructions for Deloitte & Touche in Washington, D.C.? Because that's not Africa. So can you please connect us with the recipients of this money in Africa? And then we get silence. I'm like, okay, you know, we just want to literally talk to the recipients. That's it. That, you know, and then we're like, oh no, it turns out for some reason we can't talk to them. I'm like, well, we're not going to send the money unless we can talk to the recipients and confirm they will actually get it. And then that, you know, but you know, that's sort of fraudsters necessarily will come up with a very, sympathetic argument. They're not going to say, give us the money for fraud. That's not going to be what they say, obviously. They're going to try to make these sympathetic sounding arguments that are false.
They're going to start an NGO and then...
Yeah, they're going to see NGO. It's going to be like the Save the Baby Pandas NGO, which is like, who doesn't want to save the baby pandas? They're adorable. But then it turns out no pandas are being saved, okay, in this thing. It's just going to a bunch of, it's just corruption, essentially. And you're like, well, can you send us a picture of the panda? And like, no. Okay. Well, how do we know it's going to the pandas then?
Right.
That's what I'm saying. So,
what do you think of philanthropy?
Yeah, I think we should. Well, I mean, I agree with love of humanity, and I think we should try to do things that help our fellow human beings. But it's very hard. Like, if you care about the reality of goodness, rather than simply the perception of it, it's very difficult to give away money well. So I have a large foundation, but I don't put my name on it, and I don't, you know, in fact, I said I don't want my name on anything. But the biggest challenge I find with my foundation is try to give money away in a way that is truly beneficial to people. It's very easy to give money away to get the appearance of goodness. It is very difficult to give money away for the reality of goodness. Very difficult.
For a long time, the US had a lot of immigration, like really smart people coming into the country.
Yes.
We back home in India called it the brain drain. Right. All our Indian origin CEOs in Western companies.
Yes, I think America has benefited immensely from talented Indians that have come to America.
That seems to be changing now, though.
Yeah, I mean, America's been an immense beneficiary of talent from India.
Yeah. Why has that narrative changed of late? And America seems to have become anti-immigration to a certain extent. Like, I was passing immigration and I was worried if they'd stop me a couple of days ago.
Well, I think there's different schools of thought. It's not like unanimous, but you know, under the Biden administration, it was basically a total free-for-all with like no border controls, which, you know, unless you've got border controls, you're not a country. So you had massive amounts of illegal immigration under Biden, and it actually it also had like somewhat of a negative selection effect. So if there's a massive financial incentive to come to the U.S. illegally and get all these government benefits, then you're going to necessarily create a diffusion gradient for people to come to the U.S. It's an incentive structure, and so I think that obviously made no sense. Like, you got to have border controls. It's kind of ridiculous not to. then that's so. On the left wants to basically have open borders, no holds barred. You know, it doesn't matter if someone what the situation is. It could be a criminal. Doesn't matter. Then on the right, you've got at least a perception that somehow their jobs are being taken by talented people from other countries. I don't know how real that is. My direct observation is that there's always a scarcity of talented people. So, you know, from my standpoint, I'm like, we have a lot of difficulty finding enough talented people to get these difficult tasks done, and so more talented people would be good. But I guess some companies out there, it's sort of they're making it more of a cost thing, where it's like, okay, if they can employ someone for a fraction of the cost of an American citizen, then I guess these other companies would hire people, you know, just to save costs. But at my companies, the issue is we just are trying to get the most talented people in the world. So, and we pay way above average. So I can't. So that's not my experience, but that's what a lot of people do complain about. And I think there's been some misuse of the, you know, H-1B program. It's certainly it would be accurate to say that there's, you know, like some of the outsourcing companies have kind of gamed the system on the H-1B front, and we need to stop the gaming of the system, you know. But I'm certainly not in the school of thought that we should shut down the H-1B program. That's which some on the right are. I think they don't realize that would actually be very bad.
If you could speak to the people of my country, India, the young entrepreneurs who want to build, and say a message to them, what would you say?
Well, I think I'm a big fan of anyone who wants to build. So I think anyone who wants to, you know, make more than they take has my respect. So that's the main thing you should aim for. Aim to make more than you take. Be a you know, a net contributor to society. It's kind of like the pursuit of happiness. You know, if you want to create something valuable financially, you don't pursue that. It's best to actually pursue providing useful products and services. If you do that, then money will come as a natural consequence of that, as opposed to pursuing money directly. Just like you can't sort of pursue happiness directly, you pursue things that lead to happiness. But there's not like direct happiness pursuit. You do things like, I guess, fulfilling work or study or friends, loved ones, that as a result make you happy. So that's it sounds like very obvious, but generally, if somebody's trying to make a company work, they should expect to grind super hard, accept that there's like some meaningful chance of failure, but just be focused on having the output be worth more than the input. That are you a value creator? That's what really matters. Making more than you take.
I think that's a good way to end this. Lauren is asking us to wrap up.
All right.
I also like to take the opportunity to thank my friend, Manoj in IGF. He does a great job of connecting, I think, Indians like the group here with people like you in order to, of many things, I think, get to know each other and become friends, because once we are friends, maybe we can start working together. So thank you, Manoj, for putting this whole thing together, and thank you, IGF. And thank you so much, Elon, for taking the time.
You're welcome.
Did you have fun?
Yeah, it was an interesting conversation. You know, sometimes I take these answers out of context, you know, but I think it was a good conversation.
That business idea you've been sitting on? This new year, stop waiting for the perfect time. GoDaddy Aero uses AI to build your website, logo, and marketing in minutes, not months. No tech skills, no excuses. Just your idea made real. Get started at GoDaddy.com with GoDaddy Aero.
News when you want it with Bloomberg News Now. I'm John Tucker.
And I'm Karen Moscow.
And Karen, let's begin with new developments in the efforts to end the war in Ukraine. Russian President Putin says he's going to revise his country's negotiating position after claiming Ukrainian drones targeted his residence. According to the Kremlin, Putin told President Trump of his decision at a call yesterday. The president talked about it with reporters in Florida.
It's one thing to be offensive, because they're offensive. It's another thing to attack his house. It's not the right time to do any of that, and can't do it. And I learned about it from President Putin today. I was very angry about it.
Putin said Moscow intends to work closely with the U.S. on peace efforts, but would reconsider a number of previously reached agreements. The Ukrainian President Volodymyr Zelensky dismissed the Russian claims as a new lie and warned that Moscow could be using it as an excuse to prepare an attack on government buildings in Kyiv.
Well, John, President Trump has threatened to strike Iran again if the country rebuilds its nuclear capabilities. Speaking as he met with Israeli Prime Minister Benjamin Netanyahu, President Trump expressed concern that Iran is seeking to revive its nuclear program.
Now I hear that Iran is trying to build up again, and if they are, we're going to have to knock them down. We'll knock them down. We'll knock the hell out of them, but hopefully that's not happening. I heard Iran wants to make a deal. If they want to make a deal, that's much smarter. You know, they could have made a deal the last time before we went through, a big attack on them.
And President Trump also said he would support Israel in striking Iran if it continued with its ballistic missile program.
And President Trump says the U.S. struck a facility inside Venezuela. It would be a significant escalation in the campaign against alleged drug trafficking operations there. Trump's reference to an attack within Venezuela would mark the first time the U.S. has announced a land strike in that country. The administration has raised pressure on the government of Nicolas Maduro by bombing boats in the region and implementing a blockade to disrupt the country's oil exports.
John, hours after President Trump downplayed it, China's military staged a second day of large-scale military drills around Taiwan. This morning it fired dozens of rockets into waters near Taiwan. China's latest exercises come as President Xi Jinping ramps up military and diplomatic pressure on self-ruled Taiwan. It also comes days after the U.S. announced one of its biggest arms packages ever for the self-run democracy.
And let's turn to the markets, where futures right now, they are mixed following yesterday's declines on Wall Street. The S&P 500 fell 0.3%. The NASDAQ dropped 0.5%. Still, it's been a good one for the bulls. The S&P 500 up more than 17% so far this year. Chris Campasisis is a managing partner at Barnum Financial Group.
The reality is, if we look at how the last time we had 4 double-digit up years in a row, that didn't end so well, right? That ended with the dot-com bubble burst. And so if we're going to see another double-digit, high momentum, high growth kind of year, we're going to need some kind of Goldilocks economic and stock performance in order to do that.
Barnum Financial Group's Chris Campitsis. Global equities remain on track for a third straight annual gain, with MSCI's World Gauge up around 21% in 2025.
So, John, what's the outlook for stocks in the new year? Bloomberg's Tom Busby has a look at what the big banks and boutique investment firms are expecting in 2026.
Despite worries about a possible artificial intelligence bubble, the Fed's next move on interest rates, and unanticipated shocks from President Trump's second year in office, the consensus for the new year on Wall Street is that the stock market will continue to rally to new heights in 2026 for a fourth year in a row, making what would be the longest winning streak in almost 2 decades. In a Bloomberg survey of sell-side equity strategists, the average year-end forecast for the S&P 500 implies another 9% gain next year. Tom Busby, Bloomberg Radio.
All right, thanks, Tom. And we're seeing a rebound in commodities following yesterday's wild ride. Both gold and silver are higher. Silver is suffering its biggest one-day drop in more than 5 years, falling 9%. Valerie Titel covers the markets for Bloomberg.
It was absurdly stretched on some technicals that we knew. It was trading 80% above its 200-day moving average, and its relative strength indicator, or RSI, was nearly at 90. I mean, those are things we haven't seen since the late 70s when it comes to silver. So yes, it was stretched, but look, maybe it's stretched for good reason. The fact that on January 1st, China is going to be putting in export restrictions. So anyone exporting silver from Hong Kong, from mainland China, needs government permission to do so.
Well, despite yesterday's pullback, gold and silver, they do remain on track for their best annual performances since 1979. Checking gold and silver right now. Silver up 3.3%, while gold is up just about 1%.
Well, John, politics front and center at the Kennedy Center for the Performing Arts today after plans for President Trump's name to be added to the venue. A veteran jazz ensemble and a New York dance company have canceled events for New Year's Eve, according to the New York Times. And this follows the cancellation of an annual Christmas Eve jazz concert. Kennedy Center Chairman Richard Grinnell says the artists canceling shows were, quote, far-left political activists and that they had been booked by previous leadership. Time now for a Bloomberg Sports Update. Here's Dan Schwartzman.
The Falcons overcome blowing two 21-point leads to outlast the Rams 27-24 as Zane Gonzalez kicks a game-winning 51-yard field goal at 21 seconds. Running back Bijan Robinson rushes for 195 yards on 22 carries. The Nuggets suffer a major loss as three-time MVP Nikola Jokic goes out just before halftime with an apparent knee injury in a Denver 147-123 loss at the Miami Heat. Jokic is scheduled to have an MRI later today. Elsewhere, Knicks beat the Pelicans 130-125. Raptors get past the Magic 107-106. Thunder win again, knocking off the Hawks 140-129, while the Cavaliers outlast the Spurs 113-101. That's your Bloomberg Sports Update.
That's news when you want it with Bloomberg News Now. I'm Karen Moscow.
I'm John Tucker, and this.
That business idea you've been sitting on?
You're being sold
this
an
new
AI future where you're obsolete or irrelevant. That vision is wrong. At Palantir, they're building AI that helps workers and unlocks their full potential. American workers are our nation's greatest strength. AI shouldn't eliminate them. It should elevate them. Palantir is here to tell their stories. From factories to hospitals, AI is freeing people from drudgery, letting them do what humans do best: create, solve, build. Palantir, making Americans irreplaceable.
Hey, Max Shafkin here. On the latest episode of Bloomberg's Everybody's Business, Stacey Vanek Smith and I have gathered the best and brightest of business podcasting. We're going to dissect the biggest stories of 2025.
That's right. We are talking with Odd Lots' Tracy Alloway, Felix Salmon of Slate Money, and Robert Smith of Planet Money.
But TikTok, to be clear, has been banned all year. Like, it is still banned.
It's a law. It is a law of the United States of America.
It was such a good time.
It was a good time. You can find Everybody's Business wherever you get your podcasts.
Bloomberg Audio Studios. Podcasts, radio, news.
Hello and welcome to another episode of the Odd Lots podcast. I'm Tracy Alloway.
And I'm Joe Weisenthal.
Joe, we always start these the same with someone saying it's that time of year.
And then it's the most wonderful time of the year.
That's right. Never change this
2026
intro.
forecast season.
It's the outlook season.
Yeah.
It is the moment when every investment bank on Wall Street releases their forecasts for next year.
Yeah, and it's a great time. You know, we make New Year's resolutions this time of year. We go back. We make our list of top 10 things that happen, predictions. That's what you're supposed to. News gets a little quiet often around the holidays. So we make up for it by just looking back and looking forward.
And then a year later, we completely forget what everyone said about the current year, and we just move on and do the next year again.
That's right.
Always forward looking. Although I do think, 2026 shaping up to be an interesting year for a variety of reasons. We just had a CPI number that came out surprisingly softer than a lot of people expected. Some people say unrealistically softer with 0% shelter costs increase. So that was interesting. We're going to have a new Fed chairman.
Yeah.
There's still a question mark over the impact of tariffs, whether we're waiting to see those show up, and what's going to happen with unemployment as well. That's been ticking up.
And then it's been this really incredible year, obviously, in the stock market. The U.S. stock market just continues year after year after year, with a few exceptions here and there, but not many, of putting up massive numbers. And so the question is, like, how long is this realistic, especially given, all the concerns about concentration and a handful of names, some of which haven't really been doing so well lately. And so many questions on both the real economy and the stock market.
Yeah, there's definitely been some dispersion creeping into some of the big AI names or the tech names. All right. Well, I'm happy to say we do, in fact, have the perfect guests, plural. We've got two. So we're going to be speaking with Jan Hatzius. He's the chief economist and head of research at Goldman Sachs. He's been on the show a number of times before. We like talking to him at least once a year. And Ben Snyder, he is the chief U.S. equity strategist replacing David Kostin. So thank you both for coming on All Thoughts.
Thanks so much for having us. Great to be here.
Is research outlook time, is that actually a quiet time for you guys?
It's not a quiet time. Normally, we actually do it about 6 weeks earlier.
Yeah.
Because actually, November tends to be a little bit better than December. But because of the shutdown and the dearth of data, we decided to push it back. It's completely under our control when we do it. And why do it at a time when you actually have much less information than normal? So we pushed out a number of reports yesterday, including the Global Economic and Markets Outlook.
Can you talk, the two of you, maybe again? So obviously different roles, but on the same team. And obviously the stock market, U.S. equity market, is different from the economy. And you can have years where the economy is fine, the stocks are bad, and vice versa, all different permutations and combinations. But how do you think about being in alignment cross-team, and so that roughly you're sort of working under a similar set of assumptions?
Yeah, I can talk about that, and not just with respect to the U.S. or global economic outlook versus stock market outlook, but of course, there's currencies, there's EM economies, there's commodities. Certainly on the macro side, I would say we're on the coordinated side of the spectrum. Nobody is at one extreme or the other extreme. You can't have people that just work alongside one another without ever talking to one another, but you also shouldn't have just a machine where everything is exactly aligned and there's zero room for individual initiative. So, but we're towards the coordinated side for sure.
Well, you mentioned yesterday, a good time to note to listeners, we are recording this December 19th, 2025. Ben, how do you think about sort of working with aligning your views of where markets are going or what the meaning of the rally has with the macro thinking?
There are a number of frameworks to think about the equity market, but a pretty common one, and one we rely on a lot, is to think of the market like a stock as a discounted stream of future cash flows. And from that perspective, the most important driver of stocks is that stream of cash flows, is earnings. And if you break those apart, the most important driver of those cash flows is usually the U.S. economy. So we rely very heavily on Jan's forecasts.
So in terms of Jan's forecast, I noticed you're forecasting strong growth, as in GDP, but also rising unemployment. How do you square those two things?
We have flat unemployment at 4.5%, but it's not going down as you might think when you're printing, let's say, 2.6% for real GDP in 2026. And a small part of the answer is that 2.6 probably overstates the underlying trend a bit because we had the shutdown that depressed Q4. It's going to add to Q1. But the more important part of the answer is accelerating productivity growth. And we've seen that over the last 5 years. The 5 years since the pandemic have shown about 2% underlying trend productivity growth. The prior cycle was at about 1.5%. And I think there's reason to believe that that acceleration is still ongoing because it probably doesn't have a lot of AI in it. We expect more of a boost from AI going forward in the next 5 years than in the last 5 years. And I think that's got important implications for the relationship between GDP and unemployment.
So obviously, like, the distribution of growth matters. It seems to particularly matter when we're talking about the stock market, because you can have sectors that are like very quiet, but then you have these gigantic companies that make a ton of money and capture a lot of the growth, and their stocks do incredibly well. Maybe it would be helpful even before we get to the 2026 outlook for the economy, Ben. Like, what happened in 2025? What were the underlying conditions that allowed for such like another monster year, especially for the NASDAQ and a lot of the big tech names?
So to bring it back to earnings, one thing that happened was really strong earnings growth. And I think among all the discussions of bubbles, what's underappreciated is just how strong corporate earnings growth has been.
Yeah.
Just wrapped up the third quarter season a few weeks ago, and S&P 500 companies in aggregate reported earnings growth of 12%. Even if we strip out the mega caps, the median S&P stock reported earnings growth of about 10%. That's very solid.
This just seems to be like an underappreciated point, which is that, look, the AI-driven market, the tech-heavy market, it is not just that, is it?
I'll take an extension from this. We spend a lot of time, understandably, talking about the largest stocks in the market. The top 10 stocks are over 40% of market cap. We should spend a lot of time talking about them. But if you look at the S&P 490 or 493, that market or that group of stocks has returned about 15% this year. They returned about 15% last year. They returned about 15% the year prior. And so I understand why we're talking about the large stocks, but really the broad U.S. equity market has performed quite well.
Well, how do you account for, I guess, the weakness that we've seen in some of the mega tech stocks in recent weeks? What's going on there?
For 3 years, we've been obsessed with AI as a market. And for 3 years, really the story has been increased CapEx, extraordinary growth in AI investment spending. And although we're discussing a lot the eventual productivity benefits, as Jan mentioned, really the trade in the equity market has been the companies with earnings that are benefiting from those CapEx dollars. And what's happened this year, especially in the last several months, is it's become increasingly clear that A, probably that growth will decelerate next year, and B, to continue that growth, it's going to require more debt. And both of those factors have made investors understandably uncomfortable.
Jan, one of the sort of the viral charts of the year, or various estimates of like how much the AI build out specifically is a driver of U.S. economic growth in 2025 and beyond. Like how much, like, when you look at the GDP in 2025, how much of the growth can you attribute to what Ben just talked about?
Actually, pretty close to zero.
Really?
Frankly.
This is
that's very different to other people.
I love this.
For two reasons. Number one, the goods that are being invested in the AI sector are largely imported. So you can look at the contribution of investment spending to GDP growth, but if you don't net that out against the imports, then you're going to get the wrong answer. That's one reason. Second reason is that semiconductors are generally treated as intermediate inputs, not as investment. So they don't actually show up in the investment numbers. And so when we look at the impact of AI investment on measured GDP growth, on the numbers that are actually being printed, we're getting only about 20 basis points of contribution over the last 3 or 4 years, and pretty close to zero over the last year.
So it strikes me as such an important point because, you have other people estimating, 50% of growth this year is related to the AI build-out. Are you just always like banging your head against the wall? Because you must see these headlines every day like the rest of us.
I do a bit because oftentimes it's just based on looking at some portion of investment spending. Sometimes there are also other things included in those calculations that aren't necessarily AI related. But the big point is that you really need to look at the imports as well.
Ben, I should just ask before we go any further, what actually is your 2026 target for the S&P 500? Because we haven't seen the official outlook yet.
We've published 7,600.
7,600. Okay. So one thing I did want to ask, this was in Jan's economic outlook, but you talk about potentially credit underperforming, which seems a little bit strange if interest rates are going lower and, equities are doing pretty good. What's going on there?
I mean, it's mainly really that the valuations are very high. The credit fundamentals, we think, are still pretty good, but the market is priced to, not perfection perhaps, but to a very positive scenario. And so In that kind of situation, my instinct would always be to build in a little bit of mean reversion, and that would give you a modest amount of underperformance. But I wouldn't say that that's a major part of our overall views for the next year.
I have a question, and it's one of these things, maybe it doesn't fit right into this moment in the conversation, but I'm so worried that I'm going to forget it, that I'm going to ask it now. So we are recording this December 19th. We got that CPI report yesterday, came in 2.6 on core. This is year over year because we didn't have October data. And then there were people like, wait, they imputed a 0% zero rent growth. There's zero shelter inflation for October when they didn't collect the data, et cetera. But then I'm like, okay, that doesn't sound particularly accurate, or that sounds a little risky. But on the other hand, we're talking about a year over year number, so I'm not even sure why October really affects that. Can you just, before we go any further, explain how I should understand yesterday's CPI report?
Yeah, I mean, they use a 6-month growth rate for rents, and they did assume a zero sequentially for October, and that does take away from the year-on-year growth rate as of the November number as well. So we do think that shelter inflation in yesterday's numbers was understated, and the numbers are not quite as good as the 8 basis points for core CPI on average for October and November would suggest.
So capturing rent is not like measuring bananas, where I could say, here's the price of a banana in November 2025. Here's the price of a banana in November 2024. Therefore, you could just do a year over year thing. You can't do that
because they don't do it that way. They don't look at just 1 month. And
it's also owner's equivalent rent.
Well,
right?
that's a separate point because this distortion affects both actual rent and owner's equivalent rent. Yeah. So it wasn't as good. And there probably also were some other distortions stemming from the fact that prices were collected in the second half of November, pretty close to Thanksgiving, pretty close to the Black Friday deals. That may have understated prices in the goods sector. But I think if you step back and look at the inflation news more big picture, it's pretty encouraging. We've seen 2025 a meaningful amount of pass-through from tariffs. We think about 50 basis points of contribution to core PCE inflation. Core PCE inflation in that environment has been going sideways. So if you take out the 50 basis points, if you think that that's really a price level effect, that's more like a value-added tax increase and is going to come out of the numbers in 2026, then we've seen ongoing disinflation to an underlying rate that's no longer that far away.
Future where you're obsolete, or worse, identical. At Palantir, they're witnessing something different and revolutionary. From reindustrializing the nation's defense base to shipyard workers building faster and frontline workers boosting productivity, AI is transforming work across the nation. AI is not replacing American workers or flattening them into conformity. It's unleashing what makes each one irreplaceable: their judgment, their craft, their creativity. When American workers become more powerfully themselves, they own the future. Palantir, making Americans irreplaceable.
Hi, I'm Zing Sing.
And I'm Simon Jack.
And together we host Good Bad Billionaire,
the podcast exploring how some of the world's richest people made their fortunes.
And we are back with a brand new season of Billionaires.
Yes, movie megastar Arnold Schwarzenegger,
America's richest self-made businesswoman Diane Hendricks,
and co-founder of Snapchat, Evan Spiegel, to name just a few.
And we're asking you to decide if they're good, bad, or just another billionaire.
Good Bad Billionaire from the BBC World Service.
Listen on bbc.com or wherever you get your podcasts.
Can we talk about prices and tariffs? And I'm very curious, casting your mind back to April this year, April 2nd, when all the tariff announcements came out, what was your base case for the impact on inflation? Because there seem to be two schools of thought. There are people who think companies are going to use tariffs as an excuse to raise their prices. And then there are people who think that tariffs end up being disinflationary because they basically take money out of consumers' pockets like a tax.
We had probably more like 100 basis points of pass-through, and we ended up, so far, I think, with about 50 basis points. And there's still a question of how much of this reflects just a smaller impact, greater absorption, maybe by the business sector, and perhaps to a small degree by foreign producers, although I actually think that number is relatively small, versus just a different time profile and a longer lag. We don't know that yet, but it's probably some combination of the two. The one thing that I think has been consistent in terms of how we think about it is that this is more of a price level effect. And I've seen a lot of VAT increases in European economies where VAT rates often move, usually upwards rather than downwards. And we've got many precedents that have shown, a 12-month increase in inflation on the back of one of these tax increases, and then a decline when that gets cycled out.
Ben, let's talk about tariffs in the stock market, because if the stock gains had just been driven by a bunch of big tech companies, we'd say, oh, of course the tariffs didn't matter because, they're not as tariff sensitive, et cetera. But when we're talking about the fact that the S&P 493 also did very well, it's not intuitive to me. I would have guessed crimped margins. I would have guessed lower sales, all kinds of things. How did it all shake out from the equity perspective, the impact of tariffs?
This was our concern too, right? Most of earnings variability is driven by margin variability. When you have years with very large earnings growth or very poor earnings growth, it's usually because of margins.
Yeah.
And earlier this year, we were concerned that in part because of tariffs, margins would get squeezed and that would weigh on earnings.
It wasn't just you who was concerned.
and it really didn't materialize. Now, I think part of what we have to keep in mind is the counterfactual, right? So for the last couple quarters, S&P 500 profit margins have basically been flat. Well, in an environment of pretty healthy nominal GDP growth, normally you would expect some operating leverage that would cause margins to expand. And so I think part of the story here is you didn't get that counterfactual. But we've seen consistently over the last few quarters, companies across earnings calls really point to three levers they've been pulling to offset these pressures. One is, of course, as Jan mentioned, pushing through some in the form of prices. Second is both pushing back on suppliers to absorb some of the costs and restructuring supply chains where necessary. And the third is cutting costs, improving efficiency within companies. And that ties back to the slightly better productivity story we've seen.
So we talked about rising productivity early, and you think that the main boost from it is yet to come. Who actually captures that productivity acceleration when it comes to the equity market? The big tech guys, they've risen quite a lot. And now we're seeing some of the non-tech companies start to catch up. Who's going to benefit the most?
Well, this is, I guess, to call it a $1 trillion question is to understate the value of this question. I think the general consensus, certainly that we have and that most of our clients have, is that AI eventually will create a very large productivity boost to the economy. That will create value for someone. Who that someone is hard to answer. And as I mentioned earlier, what the market has been doing, given that uncertainty over the last couple of years, is really focusing on near-term earnings. It's been the semiconductors, obviously. It's been the hyperscalers to some extent, power companies, et cetera. I think that is actually one of the key differences between this market and what happened 25 years ago during the dot-com bubble, where we saw valuations expand quite dramatically as investors tried to look forward and guess at the productivity gains and the economic benefits. Today, investors are saying, we saw what happened that time. It's too hard. And so what we're really going to focus on is the earnings today.
This is really important. So your view is that at least from the behavior of public equity investors, you do not see any particular element of people letting their imaginations run wild.
Of course, there are exceptions at the stock level.
Sure.
And to some extent, if a stock trades hand in hand with earnings that are growing dramatically because of AI CapEx investment, the implicit assumption is the earnings from that investment are sustained over a long period of time. So maybe one could argue actually the prices should go up by less than earnings. So I won't say there's no optimism in the market. With valuations at the current level, there's clearly optimism. But it's a very different kind of optimism from, frankly, what I expected a few years ago, which is, to Tracy, your question, investors will be asking who are the long-term winners and trying to pay for those immediately. That has really not been the story. I would actually say that's the key pivot that's happened in our conversations with clients over the last few months, which is as this anxiety has built up about the AI infrastructure trade, and as for the first time, we've seen some public companies discreetly quantify the earnings boost of AI, the narrative has shifted from how much will the semiconductors and other infrastructure companies make next year to how can we identify long-term productivity winners.
What would make you nervous when it comes to valuations in general? This maybe indiscriminate investment in anything that has the word AI in it?
That would do it.
Yeah, okay.
Look, I think if you look historically, it's hard to quantify speculative activity or overexuberance, but we try. And so a few months ago, we actually built something we call a speculative activity trade indicator. It looks at trading volumes, for example, in stocks with no profits, trading volumes in stocks with extraordinarily high valuation multiples. As you might expect, that has risen this year. But it is comforting to me that it is still well below levels that we saw 25 years ago and even 5 years ago in the 2021 experience.
Yeah, there's a question. It's not even really a 2026 question, but, one of the reasons we've always loved talking to you is beyond just the forecast, et cetera. I consider you to be sort of a deep macro thinker with rooted in academic ideas. Economists seem, fairly strict on the idea that, yes, new technologies can put some people out of work, and that's obviously painful, but in the aggregate, tech doesn't destroy jobs. Is there any reason to think that AI would be any different? I mean, this is what scares people, right? That there's going to be 10 people who have all the money and the rest of us are going to be living on universal basic income. AI may very well be a good podcast host at some time. And maybe podcasts will go away. But in the broad thinking, is there any reason to think that somehow this time it's different with the relationship between tech and labor?
I mean, history certainly doesn't support it from the perspective of the long-term outcomes.
Yeah.
If you look at kind of intervals of, 10, 20 years, you cannot find an adverse relationship between more productivity growth, even if it's more labor productivity growth that at the industry level puts people out of work, and aggregate unemployment. What you can find is increases in frictional unemployment. When you see productivity acceleration, it takes a while for the new jobs to be created in other industries to compensate for the jobs that are being lost in the affected industries. And we do build in some of that into our forecasts. And then it really becomes a question of how quickly the adoption really occurs. If it happens over, say, a decade, if you look at the entire economy, and people think that's way too slow, but I actually don't think it's a crazy idea to think that this takes a while to diffuse through the economy, not just the most innovative companies, but all companies and at all levels. I do think it's going to take a number of years. That would probably give the economy time to adapt and create jobs in other areas. But if it's much faster, then I'd be more worried about short-term increases in frictional unemployment. So it's important to keep an open mind, even though I would say my underlying view is on the optimistic side that we will be able to cope with this structural change the way that the US and world economy has coped with technological advancement in the past.
Can you talk a little bit about what's been going on with consumer spending? Because unemployment, getting a little bit softer, but we haven't really seen a significant hit to consumer spending. And yet, if you look at the sentiment surveys, everyone is miserable at the moment, but they keep buying stuff. What is going on there?
I think the sentiment surveys have been getting less and less useful for predicting activity. And that's true for the consumer sentiment surveys. And the University of Michigan, in particular, has been quite far out of line with what we've seen. But it's actually true more broadly. If you think back to 10 years ago, 20 years ago, just the importance of the ISM print for markets and the importance now, it's just nowhere close. We still look at the business surveys and the consumer surveys because they have interesting detail, they're very up to date, but they just don't work as well as they used to, or certainly were believed to. So I would really focus more on the hard data. The hard data would say that the consumer is doing okay. Consumer spending is certainly not super rapid. Maybe we'll get to 2% or so next year. But I think consumer spending in real terms is likely to lag the overall economy. There are obviously differences between the top end, the levels obviously, but also the growth rates towards the top end versus the bottom end. That's a little bit hard to really assess in real time because the official consumer spending numbers are not broken down at a very high frequency in the very up-to-date numbers. But it is a mixed picture out there. But I would expect under our forecast for the economy, I would expect the consumer to hang in there.
What would be your desert island economic indicator for next year? You're stuck on an island. You can only look at one thing to gauge the direction of the U.S. economy.
It's always hard to beat the unemployment rate.
Okay. So on the unemployment rate, we should talk about the Fed, right? Because this time next year, we're going to have a new Fed chair and almost like a year of performance already. When does he actually come in? Like April or something? May. Okay. Well, a significant amount of performance in the role already. How much of a change is a new Fed chair when it comes to your economic forecast?
I mean, it's probably not a lot. We're, very unlikely to make a forecast change on the back of an appointment, and I don't know who it's going to be. It's a committee, so there is more continuity in the system than I think people sometimes believe when they talk about the different potential candidates. So at least in the, say, 6, 12, 18-month forward horizon, I wouldn't really expect a major change in terms of the policy outcomes. Obviously, the further out you go, the more room there is for people to turn over on the committee. That's true on the Board of Governors. It's true among the Federal Reserve Bank presidents, and that could have more of an impact. But in the near term, I would not expect a massively different outcome because there's a new chair.
Ben, on this note, talk to us about multiples. And obviously, you talked about the importance of earnings, obviously, and then how frequently margin expansion is important. But then there's also the multiples question. Where are we now in terms of how you're thinking about multiples? And then when you think, where are we going, and how much is that going to be tied sort of implicitly to perceptions of policy trajectory?
Multiple's high. There's no debating that. Certainly, if you're comparing with history, it's high. In the last few decades, we've really only seen a higher multiple very briefly during the post-COVID period, the reopening, and of course, in the late 1990s.
The post-COVID is because no one had made any money for like 2 quarters.
Well, I think that's a key point, which is one of the things that drives the multiple higher is expectations of accelerating or improving earnings.
Yeah.
And from that perspective, if I listen to Jan's forecast for a healthy economy that's improving, it's not necessarily so strange to me that the multiple is pretty elevated. The other thing I'd point out is if we sat here a year ago, or frankly, if we sat here at the beginning of 1999, there weren't many podcasts back then, but we'll use our imagination, the multiple was exactly where it is today. And that didn't really tell you anything about what to do with the market over the short term. So I view valuations through a physics lens as a measure of potential energy. They tell you a lot about how much the market can move.
You already know about naked short selling. Maybe you've personally shorted stocks yourself, but do you know about the time short sellers ruined a Super Bowl, basically?
For me, I was a little late, but red flags went up like, what is going on? This is really scary.
At Planet Money, we get the story behind the money to explain how money works. Listen on the NPR app or wherever you get your podcasts.
I know you talked earlier about how you're not seeing people invest in the AI productivity story indiscriminately. But when it comes to an expected productivity boost from this new technology, what concrete evidence are you saying that this is actually happening versus people talking their books?
Well, about 60% of S&P companies say AI every quarter on their earnings.
True.
And you can probably count on one hand how many are actually quantifying it. So I don't think you should expect to really see it in the numbers today. Actually, for the first time, we are modeling an AI productivity boost in our S&P 500 earnings forecast for next year. And the magnitude of that boost is under 0.5%. So we still think even next year it'll be quite small. But the important thing is it is growing over time.
But that's the users of AI rather than the investment.
Correct. When you're spending hundreds of billions of dollars in CapEx, the AI boost in terms of those dollars has clearly been large for the last couple of years.
So you're talking about the concentration of equities within the S&P 500, very top heavy. How does that compare with the concentration of earnings within the S&P 500?
That is a key point that is, I think, often underappreciated, which is 5 years ago, the top 10 stocks in the market accounted for a third of market cap. This was a record at the time, although we look back and think it wasn't so bad. And fast forward, now they are a third of earnings. So one way to conceptualize this is the market was correctly looking forward back then and saying earnings are going to grow. And so today, if the top 10 companies are 40% of market cap and a third of earnings, the question is, will they continue to outperform on an earnings basis over the next few years? Well, given the current run rate of earnings growth, it looks very likely that the answer will be yes, they'll outperform, although on our forecasts, that gap will shrink a little bit.
And then markets might look forward further than that. And that's been part of the issue for some of them more recently.
And that's how you create valuation problems.
Tracy, when I hear that big tech companies only have about a third of the earnings of the S&P 500, my thought is, well, that's 70% of all corporate earnings that they have yet to swallow, right? Think of all of these earnings that are accruing to non-tech companies. All of that is going to be Amazon and Alphabet's income in the future one day.
There's still upside.
Yeah, there's still
capture.
70%. There's still the majority of money is not being made by tech companies.
Okay, wait. I got to ask, though. Yes, tech companies have seemed, very dominant in recent years. But what would it take to make you a little bit nervous about the outlook for next year? The broad market outlook. Like, what would you need to see to think like, oh, wait a second, we're kind of getting ahead of ourselves, or I think maybe my target is a little more optimistic than I had expected?
First, I think an investor should always be a little nervous. That's a reflection of equity risk premium, which is how the market generates return over time, or at least part of how the market generates return over time. Well, first, Jan mentioned his desert island indicator being the unemployment rate. For me, every Thursday morning, I wake up excited to see jobless claims.
I've said it many times, I'm a claims guy when it comes to my desert island.
We're on the same page
Claims
here.
bros.
So, if a few Thursdays in a row we start to see claims rise, I'll become a lot more nervous. If Jan walks down the hall one day and says, we think the Fed's going to hike at the next meeting, I'll be nervous about that too. One consistent pattern at the top of almost every equity bull market in the past has been tightening Fed policy instead of easing policy that we have today. And then, of course, the third is, this is a very small and maybe silly example. But a couple of years ago, I remember when the GLP-1 drugs were being rolled out, there was a very brief window where investors were talking about buying the airline stocks on the basis that fuel costs would be lower, right?
Yeah.
When this type of narrative starts to emerge in my conversations, that's the kind of time where I think you will be seeing prices run ahead of earnings, which, as I mentioned, has really not been the case. I'll be a lot more nervous then.
That's interesting. So when you just start to see investors start to justify things on various bank shot ideas.
Stretch the narrative.
Yeah. And that's just sort of it's like a behavioral sign that maybe people are starting to get over their skis a bit.
I think this has been one of the least enthusiastic markets that is often described as a bubble in recent history.
Jan, what happened to housing? And when I say that, I mean, I feel that we could go a whole conversation talking about the economy these days without talking about how mediocre the housing market is doing, whether we're talking about prices, whether we're talking about starts, basically every measure of housing, not very good. And yet, by and large, in conversations about the economy, there used to be the housing cycle is the business cycle. Even setting aside the crisis of 2008, 2009, housing is linked to the economy has always, or for a long time, felt very robust. Has that changed?
It's amazing how, if I look back to, certainly run up to 2008 and the couple of years after, how we wrote, 30%, 40%, 50% of what we were putting out on housing and the spillovers from housing and mortgage equity withdrawal and leveraged losses because of mortgage credit exposures on bank balance sheets, and how it is now such a small part of the discussion because it's been kind of a tug of war, I think, between, on the one hand, low vacancy rates and therefore a supportive supply picture for housing activity and house prices, and at the same time, already high price levels, bad affordability, still reasonably high mortgage rates, and it just hasn't really moved very much. Now, of course, we've also seen demographic changes that just result in less housing turnover, but it is not a major feature of our outlook for 2026. We have housing go, more or less sideways from here, low positive numbers for price appreciation. And I think the action is really elsewhere, more on the investment side, and obviously a lot of the technology issues that we've been discussing.
We would be remiss if we didn't talk about the world's second biggest economy, which is China. So in your outlook, you say you expect China to hold up well. And I think this would be surprising to a lot of people who look out at, I guess, the global trading sphere, and it looks like everyone is arrayed against China in various ways. The U.S. has imposed tariffs. Europe seems to want to do something and possibly, form a coherent bloc, I guess, against China. Why haven't we seen more of a growth hit to China?
The manufacturing sector and Chinese exports have just held up incredibly well, despite at times, punitive level of tariffs from the U.S. side. Exports to the U.S. came down substantially, 25, 30% on a year-on-year basis, but exports to other places have held up very well. Overall, exports are still up 5 to 10%. They're a little bit noisy, but very healthy growth rates. And our expectation is that that's going to continue, mainly because China keeps getting better and better at producing better and better goods at cheaper and cheaper prices. And it's going to be pretty difficult to really stem that for other economies. And they also control the supply of rare earths. They control about 70% of the mining, 90% of the refining. That's a pretty good way to deter trade action and tariffs. And I think we saw that in the negotiations with the US, but that could be relevant for other economies that try to impose tariffs on China. So I think the goods producing sector is still going to be strong. Now, the flip side is that the domestic economy is very weak. And that's a country where the housing story is much more central. Housing starts and sales are still going down, even though they're already down 60 to 80%, but they're still going down steeply. Prices are still falling steeply. Our China team estimates that if you take the direct and indirect effects of property on GDP growth, it subtracted about 2 percentage points in 2025. And while the worst is probably behind us, they still have a 1.5 percentage point drag next year. So in that sort of environment, we think China will hold up okay, slower growth over time, but probably still closer to 5% than to 4%.
Ben, going back to U.S. stocks, I sort of joked that, there's 70% of earnings out there that have yet to be captured by big tech companies. But I actually kind of don't really think that's a joke in the sense that does seem to be the trend. There are a handful of companies that are accruing a lot of value. When you think about the earnings growth that the big tech companies have, the realized earnings growth, and you gave the example about how the market sort of was correct 5 years ago that they would come to represent 30% of earnings. Is there any historical precedent for the largest companies in the world to be growing like this year after year? Because I used to think mature companies don't grow like small companies do. Is this sort of like a novel phenomenon when you think about the history of markets?
Part of what's fun about markets is they're always changing. This seems to be one of those examples. We did a study last year. We looked at 100 years of market concentration in the U.S. And at least over the last century, we didn't find anything that quite matches up to today.
Wow.
What do you think would actually put an end to that market dominance? I guess stronger antitrust laws or what?
Yeah, I keep coming back to earnings.
Yeah.
And one way that earnings dominance could end, of course, is regulatory policy. I think the top of mind question for investors is whether this revolutionary shift resulting from AI technology is going to change where the earnings end up accruing. But I think almost certainly when one day we look back, if one day we look back and they were no longer as dominant from a market cap perspective, it's going to be because their earnings aren't as dominant either.
We started this conversation talking about the CPI number that came out. And I would be curious to hear just how unusual this year has been in terms of tracking some of the data and dealing with, things that you probably haven't had to deal with as an economist before, like tariffs on, some tiny Pacific island or something like that.
I would echo what Ben just said. This is what makes markets and economic forecasting fun, that there's always something new. And of course, the extent of the tariff increases that we saw on and around Liberation Day is, if not unprecedented, then at least we haven't seen it in many, many decades. So that's a new set of challenges in terms of figuring out what the impacts are going to be. It's not as extreme as what we've seen at times in the prior 20 years or so. Certainly compared with COVID, I mean, that's where you could effectively throw out a lot of the government data and had to look for other indicators like cell phone locations to figure out what was going on that, if not that day, then at least that week, and not a month earlier. So that's been a challenge. The government shutdown, I would say, has been more challenging than past shutdowns. We'll actually have holes in the economic data that will probably be there for forever. And, you look at some of the labor market numbers. We've had a consistent series for the U.S. unemployment rate on a monthly basis since 1948, except for October 2025. And that's going to look pretty weird.
That's kind of crazy. What is your outlook for 2026 in terms of Fed policy? Where do you see this rate cut cycle going and how deep?
We still have a forecast that we've had for the last 6 months, which is after the 75 basis points of insurance cuts in 2025, 2 more in 2026 that bring you down to what we think is roughly their neutral estimate, 3 to 3.25%. We're penciling that in for March and June at the moment. Haven't changed that. I would say there's a pretty sizable amount of uncertainty around that. It's certainly possible that if GDP growth does as well as we think, and that actually gives a bit more of a lift to the labor market, that they would wait longer and push that perhaps into the second half. But I'm also pretty focused on January 9th, when we get the next employment report, because if that shows another increase in the unemployment rate, then I think it might be hard not to cut at the January meeting. We don't have that in the forecast at the moment, but I think it's a very real possibility.
Something to look forward to after we come back from the holidays.
Currently, I think, according to Work, it's just a less than 20% chance of a cut in January. But it sounds, and I know you don't expect one, but I guess it sounds like there's a condition in which that could jump.
Yes, I think so.
Yeah, and Ben, thank you so much for coming on Odd Lots. And I guess we'll have you back on next year. And,
make it an annual tradition.
Check your forecasts against reality. So thanks.
Thank you so much.
That was fantastic. Thank you so much.
Joe, that's always fun.
I love that.
I do think the point about, whether or not we're in a bubble, the one thing that does give me some caution is this idea that actually everyone's kind of worried about it at the moment, and people are talking about the potential downsides. Yeah. But that said, I also think back to the internet bubble, the .com bubble. And I mean, people were so worried about it, they were writing books about a .com bubble, right?
At the time,
before it actually burst. So I don't, we've had bubbles before where people have been worried, and they're still bubbles.
Totally. Merely observing them does not obviate the existence of one.
That's right.
A couple of things. So I love that Jan pushed back on this very almost consensus meme that AI expenditure has been a huge driver of GDP expansion this year. And when you talk about, I think, it's interesting to hear him push back so hard on that, given how much of what gets put into the ground comes out on the other side via imports. I also, look, I love Ben's point about, you say whatever you will about the big tech companies, they deliver monster earnings every year. And it's very interesting to hear how, over the last 5 years, look at this crazy concentration, and then they catch up there to earnings, and it turns out the market was right again.
Right. And it's also true, as he pointed out, that some non-tech companies are seeing earnings growth too. So it's not even a market that's as dominated by big tech as it was just 2 weeks ago.
I'm sure that I have contributed at various times to the sort of meme that is just a tech-driven. We say that, right? This tech-driven rally in 2025. And obviously, look, the NASDAQ has outperformed the S&P 500 this year. So we know that, yes, tech has outperformed. But, financials have done very well. I hadn't appreciated how consistently strong the earnings growth of the S&P 493 had been over the last 3 years.
I also think this idea of productivity keeping unemployment stuck at 4.5% is an interesting one. People, I think, tend to think of higher productivity as a good thing for obvious reasons. But, there's so much political nervousness at the moment about jobs and economic security. If we have a massive productivity boost that ends with people not having as many good jobs, that'll be interesting.
I mean, I still think it's a huge question mark, obviously, like what AI ultimately means for the labor market. But this idea that like it could raise the frictional unemployment. So not necessarily sustain change in the number of people who have jobs, but the time it takes to find a job and various other things because it's just so economy wide is like, maybe I think that's a useful way to think about the question, at least in the short and medium term.
Yeah. All right. Shall we leave it there?
Let's leave it there.
This has been another episode of the Odd Lots podcast. I'm Tracy Alloway. You can follow me at Tracy Alloway.
And I'm Joe Weisenthal. You can follow me at The Stalwart. Follow our producers, Carmen Rodriguez at Carmen Armin, Dashiell Bennett at Dashbot, and Cale Brooks.
You're being sold an AI future where you're obsolete or irrelevant. That vision is wrong. At Palantir, they're building AI that helps workers and unlocks their full potential. American workers are our nation's greatest strength. AI shouldn't eliminate them. It should elevate them. Palantir is here to tell their stories. From factories to hospitals, AI is freeing people from drudgery, letting them do what humans do best: create, solve, build. Palantir, making Americans irreplaceable.
Hi, I'm Zing Sing.
And I'm Simon Jack.
And together we host Good Bad Billionaire,
the podcast exploring how some of the world's richest people made their fortunes.
And we are back with a brand new season of Billionaires.
Yes, movie megastar Arnold Schwarzenegger,
America's richest self-made businesswoman Diane Hendricks,
and co-founder of Snapchat, Evan Spiegel, to name just a few.
And we're asking you to decide if they're good, bad, or just another billionaire.
Good Bad Billionaire from the BBC World Service.
Listen on bbc.com or wherever you get your podcasts.
Bloomberg Audio Studios. Podcasts, radio, news.
Hello, and welcome to another episode of the Odd Lots podcast. I'm Joe Weisenthal.
And I'm Tracy Alloway.
Tracy, one of the topics that we like to talk about, but we haven't talked about it for a while, public sector tech, public sector hiring. We've done a number of episodes on this. It's been a while, though, since we've revisited this question, but it raises so many fascinating things.
I remember the ones that we did with Jennifer Palka, which were fantastic. And we got a good sense of some of the issues facing public technology, including, I think it was 7,000 requirements in a single RFP. That was at the state level, but you hear stuff like that and it just kind of blows your mind how complex the whole process of developing new technology actually is in government.
Right. So, and we've also, Patrick McKenzie is the other one we've talked about this with, like these legacy systems, they have all of this cruff or whatever, and some of it's tech and some of it's related to hiring. Everyone, I feel like, comes in to the public sector, and they're like, well, why can't this look more like the private sector, et cetera? But I have an observation that I thought about after the last time we talked to Jennifer, which again, they're excellent conversations. Maybe we'll move the ball forward. So there are all kinds of obvious problems with the public sector, and we'll get into them. That being said, and I think you had the same experience, you hear these descriptions of like, say, what's broken with the hiring process, and it's like, you know what? That sounds kind of familiar. I've experienced that in the private sector, too.
Yeah.
A lot of these pathologies seem to exist in large organizations,
I was going to say, I think it's endemic to bureaucracy, right? And I remember Jennifer specifically saying that, like, one of the main choke points is just the operational process of getting stuff approved or getting a new candidate through a hiring process that has been dictated by human resources, and you have to fit into certain slots or certain categories. So it's a big deal.
But that's the whole dealing with HR thing and their role as gatekeepers of the hiring process. And
Careful what you say, Joe.
I love our HR people here at Bloomberg. I'm just saying some of it sounded a little bit familiar. That's all I'm gonna leave it at that. Some of it sounded a little bit familiar.
Fair.
So of course we know that the new administration, of course, lots of people from the tech world have come to it. I think probably most famously Elon Musk and the whole Doge endeavor, which, you know, We'll get into perhaps where we stand on the verdict for that, but widely viewed as not particularly transformational, et cetera. Nonetheless, a lot of buy-in, a lot of people from the tech world thinking about what aspects of our most dynamic industry in America can be brought into the public sector to perhaps make it a more dynamic place, maybe more efficient, maybe more effective, and maybe a more desirable place to work for talented people.
Right. And the government, the Office of Personnel Management, is launching a new cross-government program, right,
Yep.
to recruit top technologists to modernize the federal government. And I would just add, it kind of has some new urgency because the Trump administration has identified the AI race with China as this existential threat to the U.S. So you can see stuff kind of coalescing.
Totally. Well, we literally do have the perfect guest because we are going to be speaking with the director of the Office of Personnel Management in D.C. We're going to be speaking with Scott Cooper. He's a former venture capitalist who's at Andreessen Horowitz. So he knows all about the public world, the private world, et cetera. Literally the perfect guest. Scott, thank you so much for coming on the Odd Lots podcast.
Well, thank you for having me. I'm glad to be here.
Absolutely. What is, let's start from real basics. What is the job of the office, the director of the Office of Personnel Management?
Yeah, it's a great question, and I didn't know the answer to this one before I started talking to the administration about the job either. So I think the simple way to think about it is, look, we're the talent management organization for the federal government. So there's about 2.1 million federal employees roughly in the government today, and we are responsible for all policies related to people. So how do you hire, how do you fire, performance management, systems, so HRIT systems. And then we're also a cross-functional organization that everything we do obviously touches all the different agencies. So we're trying to make sure that we've got consistency of policies across the government. And the simple goal in my mind is just how do we make sure we have the right people in the right jobs in the federal government? That's basically the four-word articulation of what we do.
Why did you decide to go from Andreessen Horowitz to what seems like, something of a challenging job and possibly lower paid? You don't have to tell us your salary, but
It's probably public somewhere, but I assume it's definitely lower than a partner at Andreessen Horowitz.
Right.
My salary is public. Actually, in fact, when you've hit a high point in your life when your oldest daughter, who is I won't give her age, but she is, let's say, under 30, is making more money than I am at this stage.
Congrats to her.
So, exactly, I'm very proud of her. Yeah, it's a great question. Look, the honest answer is it was a couple of things. One is just it was the right time. I'd been at Andreessen, as you know, from the founding for 16 years. Super proud of what we did there. And Ben and Mark were incredibly gracious in giving me this opportunity. And I really felt like there is an opportunity in this administration to do something differently. So you mentioned a bunch of technology people coming to the administration. There's also just a bunch of, business people more generally. And look, we're not going to make the mistake of applying every private sector, method and model to the federal government. But I think what the president has asked us to do is to think differently about things and given us kind of the permission and the flexibility to do that. And so to me, look, I've been around the venture capital business, ultimately companies succeed or fail. My lesson from the venture capital business is they succeed or fail almost entirely because of the people in the organization and the organizational structure and the culture and the incentives. It's pretty simple. And so my view is, look, why can't we learn some of those lessons and apply them as appropriate to the federal government and think about creating a culture where we've got great people who can do great stuff on behalf of the American people?
So I want you to tell me about your new initiative to bring in tech talent, and also in the answer, maybe situate it within maybe what makes it different from other endeavors. There was the Code for America endeavor, which probably had some similar themes. Obviously, there was the Doge experience, which I want to get into further. But talk to us about this new project. What is it? And then why is it different from past efforts to infuse technology or infuse tech thinking into the government?
Yeah, so let me take you through the program. So the program is called U.S. Tech Force. So anybody who's interested can go to our X at U.S. Tech Force and find more information about it. Basically, here's the program. The goal is to bring 1,000 engineers into the government. So software developers, AI experts, data scientists, product managers, so anybody who can help us basically with the job of modernizing government infrastructure. It's a 2-year program, and we partnered with about 25 of the largest private technology companies, private sector technology companies, I should say, and we're really trying to accomplish a couple things here. Number one is the government has a dearth of what I would call modern software expertise and modern AI technology expertise, and that's not a knock at all on the organizations, but a lot of what these big CIO organizations in the government have to do is they're maintaining these massive legacy infrastructures. And so the ability to do bespoke development is quite difficult in those organizations. So this will be a vehicle to help them accelerate bespoke development across the entire government. The second problem we're trying to solve is we have a massive early career pipeline problem in the federal government. So 7% of the federal workforce is early career, let's call that less than 5 or 7 years worth of work experience. And that compares to about 23% in the non-federal sector. So by a factor of 3 to 1, the federal government is completely failing at getting early career people into government. And if you look at the other end of the spectrum, by the way, so we've got about 44% of our population that's over the age of 50, and that compares with about a third in the non-federal workforce. So we've got this looming problem, which is we're going to have a ton of people, over the next 5 to 10 years who, rightly so, are at retirement age and want to go do other things. And we've done very, very little to actually replenish the pipeline. So this program is really intended to do that. And one of the ways we're doing that is by making it a 2-year program. So I don't think it's reasonable for us to go to a 22, 25, 27-year-old person and say, decide today, do you want to commit 40 years of your life to be a career public civil servant? What I'd rather do is expose them to the problems in government, let them actually have a great experience. And you know what? We should convince them over time how great this is. But you know what? If at the end of the 2-year period, they want to go back to the private sector, that's great. And that's why we've lined up all these private sector partners who are going to actually help.
Is selling you a future where you're obsolete, or worse, identical. At Palantir, they're witnessing something different and revolutionary. From reindustrializing the nation's defense base to shipyard workers building faster and frontline workers boosting productivity, AI is transforming work across the nation. AI is not replacing American workers or flattening them into conformity. It's unleashing what makes each one irreplaceable: their judgment, their craft, their creativity. When American workers become more powerfully themselves, they own the future. Palantir, making Americans irreplaceable.
Hey, Max Shafkin here. On the latest episode of Bloomberg's Everybody's Business, Stacey Vanek Smith and I have gathered the best and brightest of business podcasting. We're going to dissect the biggest stories of 2025.
That's right. We are talking with Odd Lot's Tracy Alloway, Felix Salmon of Slate Money, and Robert Smith of Planet Money.
But TikTok, to be clear, has been banned all year. It is still banned.
It's a law. It is a law of the United States of America.
It was such a good time.
It was a good time. You can find Everybody's Business wherever you get your podcasts.
Can you talk a little bit more about why historically government roles have not been that desirable for tech workers? I assume you diagnosed the problem before you came up with a solution, but in your view, what is the main choke point or market failure that is leading to difficulty for the government to recruit the kind of people that it wants to?
Yeah, so I think there's a couple problems. So one is I think the fundamental issue, quite frankly, in my mind, is a messaging problem, which is, I'll give you an anecdote, right? So when I first came into office, I've been in the office about 6 months now. I met with one of my managers in the organization who said, hey, you guys are ruining things. And I said, what do you mean? And by you guys, she meant Doge. And, I'm not part of Doge, but obviously, look, I come from, I know lots of those people. And I said, well, how are we ruining things? She said, well, our whole value prop to employees has been come to the federal government and have lifetime employment. And I said, oh my gosh, you're not going to like my answer because, number one, I'm going to tell you, that's a myth and a lie that people have been telling you. There is no such thing as lifetime employment. And two, I said, look, that's the worst, least compelling kind of narrative that I've ever heard that I'm going to go tell some 25-year-old, that's the value proposition. I'm coming to work for the government. So number one is we have to change the narrative. The narrative in my mind is come work on the toughest, biggest, most complex problems, do some public service, but then give yourself career options. And you know what? If you want to go to the private sector after that, God bless you. That's a perfect thing to do. So that's part of the problem. The other problem is the nature of what happens in government. And Jen Paulka, as you guys mentioned in your intro, who's brilliant on this stuff, diagnosed it perfectly, which is so much of what government does is it's a compliance-based culture, right? It's not just literally, that we follow laws, but if I do something wrong, I'm worried about getting an inspector general report, or I'm worried about a GAO report, or I'm worried about some congressperson hauling me in front of their committee to testify about stuff. And so the short answer as a result is we have a zero risk-based culture inside of government. There's no concept of, you guys mentioned I came to the venture capital world. In that world, look, we take crazy risk because all we're doing is trying to maximize upside opportunity. Now, I'm not proposing we do that in government, and I've been using the term measured risk as a better way to try to describe it in government. But we have to kind of change the culture and enable people to think about the upside opportunity that comes from taking modest amounts of risk. And unfortunately, particularly on the technology side of things, that has not been the case. And so again, if you're a young, early career person, I think you want to do cutting edge stuff. You want to learn things. You want to kind of go out a little bit on the risk curve. And right now, at least historically, government has not been an amenable place for that.
So you mentioned that the pitch to work in the federal government should not be this is lifetime employment. That right. is that's not healthy for a lot of reasons, and I think a lot of people can intuitively agree with it. On the other hand, you mentioned the sort of in the VC world, you're always shooting for the right tail. But when you're talking about no layoffs or lifetime employment means you're cutting off the left tail. Just from a money standpoint, the employee of the federal government never has the chance to experience a right tail outcome. The highest paid worker in the federal government, it's a very decent salary, but, compared to very even moderately successful people, the most senior successful person in the federal government will make less very often than just sort of someone who's hung around Google for a long time. So how much 100%. Of the problem actually just comes down to that simple monetary fact?
So look, there's no question that compensation is relevant, but I actually think we've been overstating the nature of that problem. So let me give you a couple thoughts on it. So first of all, part of the reason why we're focused on early career here is at least the pay gap between private and public is a little bit more manageable. And it just it asymptotes massively as you go farther through your career. So yes, it's totally unrealistic, unless you're rich and you just decide you want to do something different, it's totally unrealistic for us to think we're going to compete against a VP at Google for a senior level executive person in the government. So that's not even, in my mind, that's not even worth worrying about basically because the pay gap is just crazy and nobody's going to do that. But my experience, at least, and you guys have been around a lot of organizations, is look, there are some people who are purely kind of profit maximizing, and that's great. It's not have no normative objections to that, obviously. But my sense is that's actually a relatively small minority of the population of employees. I think most employees come to work every day because they're being challenged, they're learning, they have career development opportunities, they work for someone who cares about their career, and they feel like they can be rewarded when they actually do good stuff. They feel like they're held accountable. That to me is a culture that we can create inside of the federal government. And, even if it means, yes, in a short period of time, you are going to have a remuneration challenge relative to the private sector. But this is also why, again, just to go back to it, this is why I think this whole narrative of work for the federal government for 40 years to me is just crazy. We should have an open idea that you can go back and forth between the public and private sector. And you know what? If you have points in your life where you think profit maximization is the most important thing, then yes, you should go to the private sector because the government's never going to deal with that. But I think we just have to break this, to me, this dichotomy that there's one way to go or the other makes no sense. So look, in the perfect world, I'd wave a magic wand and say, we pay everybody what they can get paid at Google, but that's not realistic. And quite frankly, as you know, there's zero support in Congress for that. Yeah. The final thing we can do, though, just Joe, to give you one last perspective, is we can do things inside of OPM to mitigate some of the challenges on the compensation side of things. So let me give you a very specific example. So as you probably know, there's a GS schedule, which is everybody gets paid, GS 1 through 15. These are different levels. Today, all those GS schedules are driven off of tenure and they're driven off of degree requirements. So if I don't have a college degree and I haven't worked for 10 years, no matter how good I am, I can't get to a GS 15 level in government. In my mind, that's just silly, quite frankly, right? That's the opposite of a merit-based culture. Yeah. You all will remember, since we've talked Doge, right? You'll remember, I won't mention his name, but there's a Doge engineer with a very colorful name that I'm sure your listeners have heard of. Yeah. When all the kind of exciting Doge stuff was happening, there was a quote from an administration official who said, "This guy's terrible. We never would have hired him because he didn't graduate from college and he didn't have 5 years of work experience coming here." And in my mind, I literally wanted to pull my hair out when I heard that because I was like, that's the craziest thing in the world. If this guy is capable of performing at a GS 15 level, why should we care about what his tenure is or whether he has a college degree? And so one of the things we're doing inside of OPM is we're going to eliminate all degree requirements and all tenure requirements in the pay schedule. And so as a result, if someone is doing awesome, we can hire them at the appropriate level. So some of the pay gap problem is not just a numerical problem, it's a leveling problem. And I think we can solve that even in the absence of congressional legislation.
Yeah, I remember Jennifer, again, said something very similar about like the best coder in America or a young guy who had won this huge coding competition and then couldn't get hired by the government because he didn't tick all of the official boxes. Kind of crazy.
For that specific role,
Yeah. Since you mentioned doing awesome, how do you actually go about evaluating the performance of a tech worker in government? And how do you figure out which people you actually want to hire in terms of talent?
Yeah. So the short answer is we have to do it differently from how we do it today. But let me give you the very specifics. So on the front end, historically, we have relied on self-attestation of skills in order to hire people into the federal government. So I apply for a software engineering job, and I get this application where I check boxes and I say, you know what, I'm an expert in Perl programmer. I'm an expert in, AI technology. And I literally check the boxes, and that is the basis on which like my application gets through or doesn't get through to the next round of screening.
I assume this is
personally
tested
for me, that's
at
crazy.
some point, though, right? There's some sort of competency test?
So in many roles, there's not. And the reason is, let me give you a perspective. There's a historical reason for this. So way back when, we used to have literally a civil service exam. It was called PACE was the name. I forget what the acronym stands for, but it was PACE. That existed until 1980. And there was a lawsuit at the very tail end of the Carter administration, very beginning of the Reagan administration, first Reagan administration, where there was disparate impact. It was a disparate impact claim, basically. So the kind of test results on this exam were disproportionately negative for minority applicants versus majority applicants. And so in 1981, the government entered into a consent decree where basically they banned essentially the use of these examinations. And from 1981 until literally 4 months ago, we were living under that consent decree. Nobody ever revisited it. And as a result, every agency was terrified to use any kind of actual merit-based assessment for hiring because they were afraid they would run afoul of this consent decree. Luckily for us, we revisited it along with the Department of Justice, and we got out of the consent decree. We actually found the original plaintiff actually was still alive. Lovano was his name. And we actually, finally said, okay, 43 years later, we think it's time to get rid of this consent decree, and they agreed to that. So for the first time ever now, we have kind of we've eliminated the risk that the agencies were worried about, which is if I use a technical assessment to judge somebody in their employment process, I might get sued, under some type of disparate impact theory. So we are now doing that. So number one, there's a long way to answer your question, but so like the way we're going to evaluate people is they actually have to demonstrate merit. So there's lots of private sector tests, as you probably know, Code Signal, all these other things that every single private sector company uses where they're like, hey, basically, let me give you a coding test if you're applying for a software development job. And then we can level you and figure out, are you a, GS5 or a GS15 based on that? And then we can do secondary stuff like obviously an in-person interview or other things to make sure that, you're actually a good fit for the organization. So that's kind of thing number one we have to do on the front end. Does that make sense at least? And kind of, a little bit of a perspective
it
about how we
totally
got here?
does. It is kind of wild to think that, last year or a few years ago, or just 4 months ago, Joe and I could literally say that we're like coding experts.
I'm a 10X engineer.
Yeah, that's right. And apply.
I know.
I'm a COBOL expert. COBOL, I can never remember.
Hey, COBOL expert would be very much in demand. It's COBOL, no T.
COBOL,
but,
thank
you. Cobalt is the mineral. There's a cobalt mineral and there's a cobalt.
Cobble, yeah.
Yeah, I never know if it's cobble.
Exactly,
I want to say cobble because it's like cobbled together across IT systems. But COBOL.
That's actually really good. Okay, I didn't think about that. Okay.
Actually, but on the second part of Tracy's question, okay, so once they're in the office, and again, because it's not a for-profit entity, like how does the government currently go about evaluating how someone did this year, and what would be the optimal way for the government to evaluate how productive someone is in their state? And this is a problem in private sector too. I'm pretty sure that if you went into Facebook or Google, et cetera, they would also not have a clean answer of like, which software engineer is more productive or contributed more value than the other one?
Yeah, no, you're absolutely right. Look, this is not a problem that's unique to the government. But what I think is unique to the government is historically, basically, everybody gets an A in government. To give you a perspective, most agencies rank people 1 through 5 at the end of the year on their performances, 1 being the worst and 5 being the best. And if you look historically over long periods of time in government, about 80+% of people get ranked a 4 or a 5. Okay, so meaning basically, everybody is in, kind of like woebegone and well above average. And then about 0.2% of federal workers get ranked a 1 or a 2, meaning that you're performing below expectations. So number one, like we've had no system that actually recognizes like outstanding performance, and quite frankly, unfortunately, no system that actually holds accountability on the other end of the spectrum. We're changing that. We've already put out regulations for the most senior executives, what are called the SES, which are the most senior executives, where we effectively, for the SES, have put out a regulation that requires a forced distribution, so a cap of 30% of 4s and 5 rankings, which we think is appropriate to actually distinguish people, in terms of their performance. So number one is we got to reform the system, period, and we're working on that, and you'll see more regulation from us on that. Number two, you're actually right, which is, look, like sometimes the metrics are hard, right? So, you don't really want to measure like lines of code that somebody produces because obviously all code is not created equal. But, what I think does work in the private sector is, look, managers are responsible for their frontline workers. They meet with them one-on-one. They have, weekly, they have a sense of what they're doing. They provide feedback along the way. Like, I think the performance management ongoing process works better in the private sector. In the public sector, what I found is instead of managers, we use the term supervisor, which I think actually, unfortunately, does a disservice to what the job is. Like, I don't think the job is necessarily supervision. The job is to manage, meaning, are they working on the right stuff? Are they doing the right things? Do they need training for this kind of stuff? And historically, we haven't done a great job on that. So one of the things that we just did, for example, is we just rolled out a brand new training program that's mandatory for all supervisors, specific to this issue on performance management. So to teach them, like, what does a one-on-one look like? Those of us who grew up in the technology industry, the first book that we were all assigned to read was Andy Grove's Only the Paranoid Survive, which I still think is a fantastic book. I don't know if y'all have read it. It's actually a really awesome book.
I have read it years ago.
Like,
I have read it. Yeah, keep going.
Yeah, I mean, basically, he literally talks about, like, what is a one-on-one meeting with your, team member? Like, what should it look like? And it's like, it's very much like management 101 stuff, but I think the honest answer is, like, most people don't get that training. And so as a result, we have had a performance management culture where we have inflated grades, and we have basically once or maybe maximum twice a year people actually get feedback. So it's totally unfair to the employee, and it's also just unfair to top performers who are not actually getting differentiated reviews and differentiated compensation.
I was just about to ask, just to be 100% clear, compensation is going to be tied to performance.
Correct.
Okay.
Correct. Yes.
All right.
Yes. And again, it's not that it hasn't been before, but the problem is if everybody's a 4 and a 5 and you have a finite bonus pool, then you're peanut buttering out the bonuses, basically. So, like, again, just, Tracy, just to give you a sense, like when we gave guidance on this SES, these very senior executives, when we said there's a 30% cap, we also said we think 60% of the bonus-based compensation should go to that 30% of the individuals. And, that's we can argue whether it's 60% or 80%, but the point is, like, let's actually really pay for performance and let's differentiate compensation as opposed to giving everybody a $300 or $500 bonus, which in the scheme of things has little retentive or incentive value for employees.
So you mentioned project management just then, and I was looking at some of the press releases and documentation that you put out as part of this program, and there really is an emphasis on getting project managers. And I am very curious why that particular role seems to be in short supply, because I know someone who moved from a completely different industry into project management for a graphic design company. They had never done it before, and it didn't seem that hard.
Okay, so I'm going to distinguish between project management and product management, which is, I hope we wrote product management in our stuff.
Oh, did I misread it? Oops.
Well, I don't know that you did or not. We may have put it in there, but what we need is what I would call a product manager job, which is, a product manager in my mind is basically somebody who sometimes they come from an engineering background. They might actually have been developers themselves, but they're kind of people who sit between the engineering organization and the end user customer. And they listen to the customer and say, great, okay, tell me your problems. What are you trying to solve? And their job is kind of to translate that into ultimately, in tech speak, what we would call a PRD, a project requirements document for the engineers to develop against. So, like, that's the role we need. So in a well-functioning engineering organization, you have developers, you have designers, and then you have product managers. And the product managers probably aren't putting their hands on the keyboard actually, typing, ones and zeros. But they are literally that go-between between like the end user customer and then the requirements that ultimately drive the development process.
It's interesting. I feel like that's something I've really come to appreciate in working for a large organization, how valuable translation skills are, because you have this one part of the room that knows one very specific thing, and then there's these generalists on the other end that have some vague thing, and that person who could sit in the middle and talk to both sides is clearly is a valuable person. So you mentioned, like, the one thing that comes up a lot in a common theme on our podcast is like the importance of this sort of like tacit organizational knowledge, things that are like cannot simply be written down. They do not exist necessarily in one person's head. They're just things that are sort of collectively known, process knowledge and so forth. How do you think about that in light of the fact that these are 2-year roles? And, again, maybe in some cases someone will do 2 years, then continue their career in the federal government. But especially given the pay gap that emerges specifically for technologists, like that's probably you're taking on the one area where the pay gap probably gets the widest over time. How do you think about fostering and maintaining that kind of knowledge, especially given what you laid out at the very beginning, which is this sort of, I don't know if crisis is the right word, but these looming retirements of all these people that do have years of accumulated knowledge about how things really work?
Yeah, so you're absolutely right, which is, look, we have to balance kind of the 2-year time period against the need for actually the organization being able to maintain these systems once people leave. So let me I'll give you a real world example, Joe, just so you have it, because it might be helpful. So in my organization, OPM, we own the retirement process and retirement for, several million annuitants, basically, who have, kind of completed their professional careers.
Yeah.
And we are it's a very, I won't go into the details, I won't bore you, but there's literally, it's a ridiculously manual paper-based process where for years we have had people literally filling out paper applications as recently as the beginning of this year, and sending paper by postal mail and all kinds of stuff. And we literally have a mine in Boyers, Pennsylvania, which is very fun if you ever want to come see it, where we have hundreds of millions of file cabinets of people's retirement records that we consult.
We'd love to. I would love to. I've always wanted to go like those like huge like under mountain like big like
yes,
Iron
it is.
Mountain.
That's
they
what it
literally
is.
bury a lot.
It is Iron Mountain.
Under Mountain. I'd love to check out
the
one
Indiana Jones warehouse for government bureaucracy.
I've always wanted to check out one of these places. We'll arrange that after the episode.
All right, we're gonna work on that one together. Anyways, I bring that up to say, okay, so look, we've luckily we've had a small team of developers. Joe Gebbia, who you guys may recognize that name, he's a co-founder for Airbnb. He joined the administration even actually before I got there, but he's been kind of housed in OPM, and he has like a team of like 3 developers and a design person. And they've been completely redesigning this retirement application. So we now have what we call ORA, the online retirement application, where instead of paper, people actually can go, in the year 2025 onto a, computer and type in their information, upload their documents. It gets routed to the HR, and it's vastly better than what we've had. So I bring this up to say, look, I think this to me is a good example, which is all those people are going to disappear at some point in time, and then the responsibility for that application is going to shift to the existing CIO organization within OPM to maintain it, to integrate it with other systems. And so a requirement of being able to do that development process for Joe and his team is, look, they have to do documentation, they have to do training of the team. Look, I think it's not an insurmountable problem. I just think it means as part of your process, you just have to anticipate that there is going to be a time where people are going to disappear. And quite frankly, it's a smart thing to do anyways, because we just know, and look, this happens in private companies all the time. Look, people's average tenure in private companies, I can tell you in Silicon Valley, it's way less than 4 years is what the average tenure of an engineer is. So these are not new things. They are new things to the government, which is this idea of kind of knowledge capture and knowledge management, kind of in light of the fact that people might not be there for their entire career. But I think it just means as we've designed this program that we have to have the appropriate level of documentation, of integration, of source code notes, and all those things that are, you would do in a normal circumstance to recognize that. Now, look, Joe, in the perfect world, I hope people love it and they're like, wow, this is exactly where I want to spend the rest of my life. And that's awesome. If they want to do that, like we want to keep them in government. But, I think we'll also have to deal with the practical realities that the current generation of, people are not thinking about, 3, 5, 10 year,
This new year, swap someday with today. You've already got the idea, so make it real in 26 with a pro-level website. GoDaddy makes it easy with the lowest priced website builder, guaranteed. Ready to build a confetti-ready site in minutes? New customers start for free at GoDaddy.com. That's GoDaddy.com to get the lowest priced website builder, guaranteed.
You can get the news whenever you want it with Bloomberg News Now.
I'm Amy Morris.
And I'm Karen Moscow, here to tell you about our new on-demand news report delivered right to your podcast feed. Bloomberg News Now is a short 5-minute audio report on the day's top stories. Episodes are published throughout the day with the latest information and data to keep you informed.
Yes, there are other products like this from a variety of news organizations, but they usually rerun their radio newscasts throughout the day. That's not what we do. We create customized episodes that can only be heard on Bloomberg News Now.
And we don't wait an hour to publish breaking news. When news breaks, we'll have an episode up in your podcast feed within minutes, so you're always getting the latest stories and developments.
Get the reporting and the context from Bloomberg's 3,000 journalists and analysts. We're all over the world. Listen to the latest from Bloomberg News Now on Apple, Spotify, or anywhere you listen.
What are you doing to streamline the operational side of the process? Because I imagine you mentioned culture before. If the pitch is come work for government, it's important, but you're going to be lower paid and you're going to have to constantly deal with paperwork and put together, RFPs that have 7,000 requirements and things like that. That's a tough sell to someone who's used to the whole move fast and break things culture.
Yeah. So anyways, let me just be totally clear, which is we are not going to move fast and break things because we can't quite do that in government. We can move faster than we currently do, and we can afford to take some risks, but we generally don't want to break things because, people do need to get their Social Security checks, and, the IRS needs to actually make sure you get your tax refund. So, but it's a great question. So look, there's a couple things that we're doing both inside and outside this program. So outside the program more generally, one of the big things that OPM is driving along with OMB, kind of the Office of Management Budget is we're working with all the agencies to basically what I would call do headcount planning and reshape the priorities for the organization. So there's a huge amount of government is very good about adding things to the plate, and they're very bad about actually ever taking anything off. So every time something new comes down from Congress, we add, thousands of more people, we add stuff to the plate, and then we have this list now of 20 things, probably 5 of which we've been doing for 20 years, and quite frankly, nobody even remembers why we're doing them anymore. They've just now become embedded into our culture. So part of the exercise in order to kind of make the throughput faster and to make sure that an engineer isn't sitting on their hands dealing with, crazy bureaucracy is we have to go back and look at prioritization and actually remove services that are no longer statutory and they're no longer valuable to the American people. So that's the exercise we've started. That's the exercise that we're is ongoing right now. But the purpose of that will be not only to make sure that we're hopefully spending our money in the right places, but will also be to remove layers that ultimately slow down the actual work product of government. The second thing we can do is, as I mentioned, we're really trying to kind of change the performance management culture in government and eliminate barriers to people being able to move through the organization and change the idea that you can't take any risk. I mean, obviously, that's a big cultural challenge that we have in government. So everything from down to what's your performance plan look like? Your performance plan should have, efficiency. It should have, some measured amount of risk taking in there. So things that, again, will speed the pace of deployment and make sense. The third thing we're doing is, and this is, again, you guys asked me, how is this program different from other programs? As we hire these 1,000 engineers, ultimately they will live in various agencies, right? So Dr. Oz at CMS says, it's look, I need 75 engineers to do, kind of important projects there, or obviously Department of War, have lots of stuff. So they're going to live in those agencies. But what we're not going to do, which is historically where I think these programs have failed, is if you drop these teams just into the blob that is the federal government, they're going to have a terrible experience, and they're going to get lost, and their 2 years will literally go by without them actually having accomplished anything. So our whole goal with this is keep these teams together. So what I'm hoping from Dr. Oz is there's going to be a team of 75 engineers who are going to be a team, and they're going to work on the projects that he thinks are the most important projects. And of course, they have to integrate with the existing CIO organization because so much of what we do has integration backends and all that kind of stuff. But we got to make sure that happens because otherwise, you hire a random, intern and you plop them into an organization and they get swallowed by the beast. Basically, it's understandable why that happens. So we've got to think about the organizational implications of bringing people in and make sure they're set up for success. And my expectations are, and certainly the conversations that I've had with all the agency heads are that they understand that, and they understand that for them to achieve what they want to do, they have to create the organizational structure that enables these guys to actually do what they're there for.
Yeah, I think that this is another thing that we could probably say from firsthand experience is You come to a big organization, you spend a long time, maybe the first year, of just getting to know the lay of the land. Who are the people that you should talk to, et cetera. It's a real challenge. It's a real challenge being effective of actually accomplishing anything, the amount of time. I've been at Bloomberg, and
We've
they're
all
still
experienced
Yeah,
it,
they're
yeah.
still. I've been here 10 years, and there's like, who do I call about? It's just like the nature of large organizations. I want to talk about people who you say, okay, like we need to do something about the fact that all these people are going to retire, and there is this pipeline, et cetera. Setting aside optimal levels of how big the federal workforce should be, et cetera. One thing that I could see as a bit of a problem about maintaining a career is if federal workers do not feel that they are respected in their jobs. And there is rhetoric that is that you hear. It's like federal governments, they, again, some people it's like, oh, they're leeches. They're part of the deep state. They're all woke and they spend money on this and that's waste. But even that spending looks like what I observe as spending in the private sector, et cetera. And then, there's, at least from this administration, there's been these sort of seemingly from the outside and probably from the inside, capricious layoffs or arbitrary layoffs. And so if you respect this workforce, then how could you possibly have just like cut so arbitrarily? I mean, this is what it seems like. When you think about building a talent pipeline, do you think about this dimension, and do you agree with the sort of premise of the question that it's a challenge, that no one is going to work at a place if their bosses to some extent sort of think they're, do not respect them?
Yeah. So the short answer is yes, like absolutely. This is a critical part of making sure that the federal government is an attractive place for the people who are there and also the people who, we're trying to recruit in. So I got a million thoughts. Let me try to see if I can keep them in the time we have remaining. So I'll tell you one thing. So just to back up, as you know, I worked at Andreessen Horowitz, and Ben Horowitz, in my mind, is one of the best CEOs, best managers that I've ever learned from. And I had worked for him for literally 10 years prior. So for 26 years of my life, I've had the benefit of learning from Ben. The most important thing I learned from him is exactly what you described, which is when you have restructurings in companies, basically you have broken trust with your employees. Okay, so particularly in the startup context, right? Like, when we were in startups, we personally recruited every single person into that company, and we told them how we were going to conquer the world and how awesome we were going to be, and we believed it. We weren't like lying to them, but it turns out we were wrong. Like the market changed, we didn't have enough money, and we had to live through this in our loud cloud opsware days. We had to lay a bunch of people off. And so you've immediately broken trust with those employees. So you are, from that day forward, basically in a situation where you have to rebuild that trust, right? So you have to demonstrate to them that, it wasn't capricious and arbitrary, and that you're not like lying to them and a jerk, but that you actually do care about them. And it turns out, through no fault of their own, their next door neighbor who sat in the cube next to them, unfortunately lost their job because we couldn't afford to pay them anymore. So I say that only to say, look, I recognize that very clearly. I understand that. And if you literally go back to the testimony I gave when I went through my hearing, I said that very explicit. I think that's important. All that being said, I think, look, the way to think about, let me just give you the context of the headcount reductions that happened in the government, because I think there is, in my mind, at least some misinformation out there that I think is worth talking about. So let me give you some numbers. You've got a very sophisticated audience. As of the end of this year, roughly about 317,000 people will have exited the federal government. Okay, we started the year at about 2.4 million-ish, roughly, in terms of civilian. These are civilian employees, by the way, so forget about the armed services because my organization doesn't touch that. About 2.4 million civilian employees will be roughly 2.1 million civilian employees as of December 31st of this year. At the same time, we hired about 66,000 employees, so on a net basis, call it 270,000 roughly kind of net departures from the government. If you go back to that 317,000 number, 92.5% of those people took some form of voluntary retirement. So we had this thing called DRP, Deferred Resignation Program. That was literally half of it. 154,000 people took that, which was an 8-month severance that we gave to people to voluntarily leave government. And then the rest of it was, there are some other programs. The acronyms aren't relevant for your listeners. They're called VERA and VSIP if people want to look them up. But those are other voluntary kind of, retirement programs. And then only 7.5% of people were removed through either RIFs or what we call probationary employees, which is in the government. If you've been there for 1 or 2 years, depending upon the job, you're kind of the closest thing to an at-will employee that we have in the federal government. And so there were about 7,000 of those probationary employers who were removed, and about 17,000 people who were ultimately RIFed, reductions enforced as a result of restructurings. So I say that, number one, I want to be totally clear with your listeners, not to make light of any of this. Obviously, those are real people with real jobs and real families and stuff. But the numbers, again, I think bear out what we tried to do in the government, which is tell people that things were changing, tell people that, we do have a different view as to what, we think the federal government should be doing, and give people an opportunity to voluntarily say, okay, this is not what I signed up for, which is a very noble thing to do, and say, it's time for me to go do something different. So 92.5% of the people who left the government did so because they decided, this wasn't an environment they wanted to be in. So that being said, now look, I totally agree with you, which is we have to demonstrate to the people that are there and to the people who are coming in that, we obviously care about them and that we think they do valuable work. And I think that's the case for the vast, vast majority of people there do great work. Like any organization, yes, there are some people who are not doing great work, and we have a system that makes it very hard to hold them accountable. We're going to try to fix that. But look, that's true of any organization. So I don't think it doesn't make sense to kind of demean the broad federal government based upon the work of a few. But we have to do that. And we also have to be honest and transparent with our people, which I believe very strongly in, is look, we can't be all things to all people. Like we're running $2 trillion deficits. That's not sustainable. And so, look, we got to be smarter. We have to use technology to find ways to improve efficiency. We have to think about if we're doing 20 things, are all 20 of them still required? Do they still add value? Because ultimately, we're stewards of the taxpayer dollars. Like, this is not our money we're spending. And so I think it's incumbent upon everybody, and this is the message that I'm trying to get across to my team and to the rest of the government, is efficiency doesn't mean just cutting costs. Efficiency means, are you thinking about delivering a better service, but doing so, at or below like what you do today because you're thinking about organizational changes, you're thinking about technology. Like, to me, that is just, like, quite frankly, required of anybody in any organization to do. And so that to me is like what I'm trying to convey to people. And yes, that means that there may be some jobs that are impacted because of technology, but those things are going to happen whether, we want them to happen or not. The question is, do we actually set up the workforce and do training and do all the kinds of things we need to do to make sure that people have opportunities in light of what is a very, very rapidly changing, technological market?
So I get that part of the problem that you're trying to solve is an operational one, this idea of like a COBOL programmer who's been there for decades and he retires and walks out the door and no one knows how to do what he was doing, or no one understands the system that he's basically had control over for ages. But at the same time, we're talking about a decent amount of turnover, a lot of new employees, if this goes the right way. How are you, I guess, guiding for safety? Are there any sort of like institutional guardrails that you're putting in so that the government doesn't actually end up breaking things?
Yeah, I mean, look, there are, you will hopefully appreciate this, but look, there are a ton of institutional guardrails. In my mind, like, the problem is we have too many institutional guardrails. And again, rational people may disagree with me, but, I can just tell you, like, the entire culture of everything we do, everybody I've talked to in government, and luckily we've had lots of kind of impact on making change early on, everybody is like, we can't do that because of X, right? And the answer is either because, like, it's statutory, and the honest answer is when you dig and dig and dig, the reality is it's not statutory. Like, we've built up this, like, urban myth over time that something is statutory. Or, as I mentioned, because, like, I'm terrified that I'm going to get a GAO report, an Inspector General report, or a congressional inquiry. And, like, we have built such a compliance culture that we are just literally, like, unable to do anything that actually is kind of modern and, forward thinking in terms of government. And so this is what I'm trying to do. And as I told you guys from the beginning, like, yes, this is not the private sector. We're not going to take crazy risks. We're not going to go put everything on black, in the casino. But we can have a rational conversation, which is, okay, like, what are the risks we're taking and what's the upside? So if you'll give me a minute, let me give you a very, very tangible example for your listeners. So I mentioned to you that we handle retirement services, and it's a very manual process. And so, like, it takes us a really long time to get people formally retired. So you quit from, you retire from the government on September 30th. In the current process, it takes 60, 90, 120 days sometimes for you to actually get a check, because we have this ridiculous manually paper process that takes forever for us to calculate what are you actually entitled to and to make sure you're getting the right money and all that stuff. So that's a huge burden on retirees, right? You've been getting a paycheck every 2 weeks for the last 40 years. And now I'm going to tell you, like, sorry, like, go manage your cash flow some other way while I'm doing this. Like, that's terrible in my mind. And it's a complete disservice and completely disrespectful to people who are retiring from the government. So we have a process in the retirement services thing called interim pay, right? Which is, as the name sounds, right? The idea is, okay, can we get you some money on an interim basis that may not be 100% accurate, but at least helps bridge this gap between when you retire and when you get your actual annuity check. Okay, so going into, and then couple this with, we've got this massive, we had a lot of exits in government. So the 317,000 I mentioned, not all of those are retirees, but like on average, we have about 100 to 150,000 exits a year. So we're more than double the number. So, and as a result, there's more than double the number of retirees that are happening. So you've got this terrible paper process, like massive volumes, and we're just going to make life miserable for all these people who can't get money. So I asked the team, I said, okay, how many people go through interim pay today? This is kind of pre our change. And it's about like 30% of people. And I was like, well, what's the problem? And they're like, well, that's how we've always done it. So, again, part of the answer was statutory, which it's not statutory. And they're like, well, there's huge risk to the system because if we pay somebody more and then they die between the time we paid them their interim payment and we get their actual annuity, there may not be any assets left into the estate, and so we might compromise the fidelity of the trust fund, okay? Now, keep in mind, this is a $1.2 trillion trust fund that is actually cash flow positive, so among trust funds for retirement, it's actually very rare, but we earn 2.5% on government treasuries a year, which is horrendously bad because we're only allowed to invest in government treasuries, but notwithstanding that, it's actually still cash flow positive and fully funded, like almost in any circumstance. So we finally went through the math, and I said, let's go through the math, and let's assume, we get it wrong X amount of time and all this other stuff. And we did a bunch of math, and I said, look, if we're wrong 100% of the time, it could cost us a couple $1 million of overpayments out of a $1.2 trillion trust fund, but we can shrink from 90 to 120 days, the time somebody gets a payment, to either 0 to 7 days if we put more people through this interim pay process. So in my mind, like, this is just the most obvious thing to do. And we are doing it, by the way. We decided to do it. But like, it's a great example, at least in my mind, of where we have so ingrained in the culture that risk, any kind of risk, is bad without actually people being willing to have the conversation to say, okay, like, what is the cost of that risk relative to the upside opportunity that taking that risk entails? And I'm perfectly happy. I told them, I said, look, you don't need to protect me if it turns out some congressperson wants to yell at me because like I took a modicum of risk in order to like make hundreds of thousands of retirees' lives better and not have to like take loans out after they've given their career service to the federal government. Like, I'm totally fine defending that. I think that's a perfectly rational answer. So that to me is the issue.
I have one last question, and maybe I'll sort of ask you a little bit to put your VC hat on, because maybe you will go back to VC when this rolls over. But who knows? Someone who knows a lot about technology. So we had an episode recently with Tyler Cowen where we talk about one of the weird things.
Oh yeah, he's great.
Yeah, is that the AI, we haven't even really talked about AI, so this is my AI question. AI, the tech, makes your jaws drop when you see it. On the other hand, the impact so far on the economy or the real world is sort of muted. It maybe it's like you might have, given the capabilities, you might have expected more revolutionary change. And his thesis that he put forth was like, we're really not going to see that sort of meaningful, impactful diffusion of the tech until we have organizations that to some extent are built ground up from AI. That, yes, you can maybe get some productivity gains here and there by putting AI into some existing workflow, but that the real breakthroughs will come from whether it's companies or so forth that are truly AI native from day one. I'm curious, when you think about, again, going back to the VC world, does this feel intuitive to you that the real deployers will be AI native? And then does that have any implications for, like, we're not going to have a revolution, I guess, hopefully, at the federal level. We're not going to have a complete destruction and starting over. Does that have any implications then for thinking about how AI will be diffused within federal processes?
Yeah, so obviously, Tyler is a brilliant guy, so far from me to disagree with him. But let me give you just a couple thoughts on what he said. So look, I guess I generally agree with most of what he says, which is, and this is true, by the way, I think, of adoption of most new technologies, which is we go to the common use cases and we think about incrementality as the first thing to do it. So if you go way back when, Mark Andreessen told me this, so if it's made up, I'll blame him. When we first had movies, actual moving pictures, they were just plays basically that people filmed, right? So like they weren't like producing them. They wasn't new content. It was literally just we said, wow, we have this cool thing called a camera. Let's film a play and then go show it in a thing. Now, it's obviously that's not that relevant to this conversation, but my point is just like we tend to go to these very common incremental use cases for things. And so, look, I believe that if you look at any major Fortune 500 company, I guarantee you that every single board conversation is, what the heck are you doing about AI? And how do I get 3 to 5 to 7% greater EPS growth relative to last year because you can fix my customer support problem or stuff like that. So I think that's what's happening right now. I do agree that, yes, what often happens is then there will be a new generation of companies, and we see this in the venture capital world too already, which is the most obvious use cases that people did is there's a ton of companies who have customer support applications for AI, and there's a ton of companies who have, how do we help lawyers read documents better using AI? And that's great, and those companies are fantastic. But the real breakthrough is going to be, yes, like when someone says, okay, we're not just going to make Salesforce.com more efficient, but like we're just going to rethink customer relationship management with an AI-first mentality. And like the AI should know who my customers are. It should anticipate what I want to do. And it should send me emails and texts and say, like, you haven't talked to this person in 5 weeks. And I just saw that they, spoke at this conference and they talked about this and, you're not following up on it. So that's where we will get. And I have no doubt we will get there, quite frankly. And look, I'm an optimist by nature. You have to be in the venture capital business. But yes, I would agree with him generally. I think that's right. What does it mean for the federal government? Very simple, which is that if the private sector is incremental, the federal government's going to be like, 100x incremental relative to 100x less incremental, I guess is the right way to describe it. But that's, in my mind, that's okay. Like, so again, I've told everybody in my team, I'm not asking you, I don't want you to go build like the 2040 AI plan because we have no idea what the heck that's going to look like. That's a total waste of our time. What I want you to do is look at a process you do today and figure out, can you use an AI tool to help you get 3, 5, 10% greater performance out of your organization, right? So we do a ton of, I'll give you a very simple example. We do a ton of regulation writing, obviously, because, that's what we're ultimately in the business of government is producing regulations. And we're about to put out a regulation. We got 40,000 public comments on this regulation. We literally assigned each one of those 40,000 comments to a person to read and to draft a response to. Now, to me, that's just insane, right? And I'm not saying that like the AI, we should just like the AI should do it, but like clearly AI is very good at, summarization, at, helping people think about stuff. That's all. If we did that, like we would unleash so much creativity and opportunity in government. If we just said, take the very basic stuff we're doing today and use your, companion ChatGPT or XAI, whatever your favorite tool is, and just, eke out a little bit of productivity. So anyways, that's how I think about it. So yes, look, government is we're not going to transform government overnight, but what we're trying to do and what the U.S. Tech Force is trying to do is, can we get the right people in here who understand those things so that we start to drive ourselves forward so we don't wake up 5 years from now and find that we're the last dinosaur, basically, and, the world has passed us by.
So you sort of mentioned it just then, but can you talk at all about what kind of platforms you're using currently or what kind of models? Because, I'm sure some people would find it very ironic if the federal government was using DeepSeek or something like that. And I'm curious whether you lean towards like an open source thing or a closed source thing because of privacy concerns.
Right now, the honest answer is we're at the very, very early stages, which is most of what people are doing. It literally, this may make your head spin because it made mine. Until about a month ago, we did not even have ChatGPT on our government desktops. So like, I literally would sit there on my phone and ask ChatGPT questions, my personal phone, just to be totally clear, on my personal phone. And then I would go back to my work laptop and do stuff. So as of about a month or two ago, we actually have ChatGPT. We have XAI now. We might even have a third one. I don't even know. Oh, and of course, we're the government's a big Microsoft client, so we have Microsoft Copilot. For an individual user in government, that's basically the state. That is like the state of kind of advanced automation. Basically, is we literally have it on our laptops now. For the development work that's happening, you're absolutely right, which is, look, there are major security issues that we all have to think about. Look, I'm a big believer, as you can imagine, in open source, and certainly our firm, Andreessen Horowitz, you've seen Mark make lots of public comments about this. So I think the government will use open source and can appropriately do so. Clearly, we're not going to use like the DeepSeek commercial version.
Yeah.
But, so much of that stuff is open source. And if you bring it in, to your environment and you make sure that you got the right security standards, there's tremendous value to develop on open source. But I would just to give you a sense of where we are, I would say we're very, very early in that journey in government.
I have one last very quick question, which is how much of a constraint is drug testing on new hires nowadays?
I wish I had a really smart answer to your question. I don't know the answer to that. I have not seen it. It hasn't shown up as some like big red flag where we're losing people in the recruiting pipeline because of that. But the very honest answer is I don't know. But I will find out.
I think that's a good question. I'm actually very curious
Yeah,
about drugs
me
in the
too.
workforce in general. We should do more on that. Scott Cooper, thank you. No, for real. you hear about it. My barber was talking about how hard it was to hire because he's like, everyone is sort of.
If somebody, I would just say, Joe, if somebody clips that and puts it on, the quote's going to be, Joe is I'm very curious about drugs in the workforce. That's going to be a great clip. Yeah.
We'll get our producer. We'll clip it. We'll get ahead. We'll get ahead of that one. Scott Cooper, thank you so much for coming on Odd Lots. That was really appreciate your take your time. Very helpful, and we'd love to stay in touch and hear more about how these projects evolve during your tenure.
Great. Thank you both for your time. I appreciate it.
I thought that was great. I love these conversations. I mean, because I think they're just, I guess, the sociology of them, right? Like, that's what these conversations are really about. And especially, we talk about some of these pathologies that replicate from the public to private sector, et cetera, that are both, like, they're really interesting sociological questions.
The Department of War needs to get a bunch of ping pong tables and free snacks to recruit the most cutting edge tech workers, right?
With a matcha bar.
That's right.
Yeah, I wonder if they're experiment. We should have asked that, whether they have a matcha on tap at the office and whether that could move the dial.
But it's also interesting, again, there's that cultural, sociological aspect, but it does apply to large bureaucracies and private organizations. And I think everyone at some point in their lives will experience this type of unnecessary paperwork, whether it's in their jobs or when they're applying for a driver's license or whatever.
Yeah. You know what? Like, this is like where I have like the sympathy for like sort of like modern life, large, complicated things. How can the individual with our, how could you navigate insurance? How can you navigate all this stuff? It like drives you crazy at any scale. I do think, and this came up also in our conversations with Jennifer, and I believe it, that there is more to a career than pay, right? Mm-hmm. But I also think that's like a very real issue, especially when you're talking about the tech workforce specifically, where we know that you can just like make an absolute fortune. Yeah. And in many cases, you can make a fortune as a very young person. You be in the right company at the right time, and many overnight multimillionaires in Silicon Valley. So it's not just the late stage, although that's where it becomes the most obvious. The pay is a very tricky situation.
Well, I do think the emphasis on time constraints for the tech force, that's really interesting. And that's kind of a shift, again, a cultural shift from the way people have perceived government jobs for a long time. And I can imagine, like if you're a young tech worker, maybe you're having trouble getting into the private sector, just last year. No, 2 years ago. Yeah. Remember, there was the wave of like layoffs, right?
Yeah, absolutely.
And now everyone is recruiting because of AI. But
you're to your point. Like there are many talented tech people. If they're not right there in the sweet spot, we even know that's not what it used to be.
So I can imagine like you go to the government for 2 years, and it's an educational process. Yeah. And you can take some of that knowledge away from you when you then go into the private sector. Although that also opens up the question of rotating doors between the government and private companies. But maybe that's a topic for a different day.
I just add, I do think there is, and it's not just this administration, but I think it's been very notable, at least with some parts of the administration or some parts of the rhetoric. There's this sort of like vilification of bureaucrats, which is, again, sort of a long time thing. Like bureaucrats has sort of been a kind of a pejorative. A bureaucrat's a real thing.
The B word.
Anyway, I do think that's an issue. And I also think, maybe we should just bring back civil service exams everywhere. And if you could, no, seriously, and if you could pass this test, you can get a job. Like it's Lindy, it's like famously, go back thousands of years in China. It's like the big test.
I was about to say, do you know about the Chinese civil service exams? Those are so interesting and crazy. Shall we leave it there?
Let's leave it there.
All right. This has been another episode of the Odd Lots podcast. I'm Tracy Alloway. You can follow me at Tracy Alloway.
And I'm Joe Weisenthal. You can follow me at The Stalwart. Follow our guest, Scott Cooper. He's at S. Cooper. Follow our producers, Carmen Rodriguez at Carmen Arman, Dashiell Bennett at Dashbot, and Cale Brooks at Cale Brooks. For more Odd Lots content, go to Bloomberg.com/oddlots, where the daily newsletter and all of our episodes. And you can chat about all of these topics 24/7 in our Discord, discord.gg/oddlots.
And if you enjoy Odd Lots, if you want us to go to Pennsylvania to look at a bunch of file cabinets, then please leave us a positive review on your favorite podcast platform. And remember, if you are a Bloomberg subscriber, you can listen to all of our episodes absolutely ad-free. All you need to do is find the Bloomberg channel on Apple Podcasts and follow the instructions there. Thanks for listening.
That business idea you've been sitting on? This new year, stop waiting for the perfect time. GoDaddy Aero uses AI to build your website, logo, and marketing in minutes, not months. No tech skills, no excuses. Just your idea made real. Get started at GoDaddy.com with GoDaddy Aero.
I'm Barry Ritholtz, inviting you to join me for the Masters in Business podcast. Every week, we bring you fascinating conversations with the people who shape markets, investing, and business. CEOs, fund managers, billionaires, Nobel laureates, traders, analysts.
One for both the S&P since Liberation Day. Coming up this week, what we have is not a stocked plate. What we are looking at is jobless claims on Wednesday. Before that, we get Fed meeting minutes, get some housing data, but otherwise pretty light on that. Also focus very much in Washington, D.C., and we will be getting more on Ukraine and Russia and a possible peace there. Coming up this hour, Cameron Dawson of New Edge Wealth with stocks near record highs. Bloomberg's Skylar Montgomery Koenig with the dollar on course for its weakest year since 2017. Plus, our conversation with JetBlue CEO Joanna Garrity on the airline's outlook for 2026 and beyond. We begin this hour with stocks stalling out after approaching new record highs. Cameron Dawson of New Edge Wealth writing, the biggest question for 2026 is whether or not everything else can strike back and deliver the earnings growth that is necessary to unseat the narrow Mag 7 leadership next year. Cameron, I am so pleased to say, joins us now. Cameron, thank you so much for being with us and happy holidays. Great to see you. This broadening out trade and the real question behind it, when will we get the data and the information to understand whether it really is valid?
It really is a show me story in 2026 as to whether or not the equal weight S&P 500 can deliver on what are some pretty high expectations for earnings growth next year. If you look over the last 3 years, you've been in an environment where the largest parts of the market have driven the vast majority of the earnings growth, which is why you've had the vast majority of returns come from these Mag 7 names. But that's expected to narrow, not quite flip, but narrow in 2026. So you can see it in something like the equal weight S&P 500 having expectations for revenue growth to accelerate from 1.5% in 25 up to 5% in 2026. So a lot is riding on this idea of EPS delivering. And of course, that will be a show me story as we move through the year to see if there is upside to those numbers or if yet again we'll be in an environment where Mag 7 gets revised higher and equal weight gets revised lower.
So you add to this story something that happened last week. There actually was a big piece of news last week. NVIDIA had this agreement with Grok, which is a chip designer, some $20 billion valuation of this company, doubling it over the past couple of months, and raising questions about the dominance of NVIDIA, but also whether there is a shift in narrative around the AI story to one that is more efficient, more useful, and cheaper for some of the end users.
I think no better way encapsulates this idea of potentially a narrative shift is looking at some of the non-profitable AI-related names. They, of course, were leaders coming out of the April lows and saw an absolute frenzy as we moved into the fall with September and October rallies that were truly eye-watering. But what's been fascinating is that they have not participated in this latest move higher. If you look at something like the Goldman Sachs Non-Profitable Tech Index or look at something like ARK, those indices have not made new highs, which just suggests that maybe, just maybe, there's some rationality entering into this market, which we would welcome and see as a good thing, because that kind of rally in unsustainable, unprofitable names is not something that we would see as healthy for the market.
What do you expect from M&A in, I mean, not just the Mag 7, but in AI? I was pretty stunned after seeing that Grok deal when I looked on the FA function on the Bloomberg terminal to see free cash flow at NVIDIA is just gone parabolic, right? Last year it was $27 billion. This year it's $60 billion. Next year it's expected to be $95 billion. I mean, they are just raking in cash and are able to deploy $20, $30, $40 billion without even thinking about it.
Yeah, I think it's a really good question, and it raises the question of where we sit in the semiconductor cycle, because we do know that at the end of the day, semiconductors are a cyclical business. And if you go back to prior cycles, you typically do see earnings grow by 100, 120% plus in up cycles. Then, of course, you do hit an inevitable down cycle. And we're now in an environment, if you look at the overall SOX index, that earnings are up about 150% off of the late 2022 lows, which just suggests that possibly we are closer to the end of this semi-cycle than we are to the beginning. But I think it's also very arguable that this semi-cycle will go further and last longer than prior ones, simply because of the secular tailwinds of something like AI. But it's important to remember that it's always this time is different with cyclical areas. If you remember last time it was the Internet of Things and we were putting chips in everything, and that's why we weren't going to have semi-cycles anymore. I think the real question will be is how much further can this go? And is that free cash flow that NVIDIA is generating today something that we can extrapolate into perpetuity? Possibly not.
What happened, Cameron, to the terror of Liberation Day? I mean, the economic uncertainty that we were all wringing our hands about, right? These tariffs that admittedly have been muted a bit by the drop in the dollar, almost 10% year to date. Is any of that a concern next year, or have we realized that it's actually no big deal?
I think that if we were to see the tariffs as a concern, it's really captured in this conflicting kind of headline We got a headline over the weekend saying that bankruptcies are at their highest levels since 2010. And then you pull up corporate profits in overall in the US, and they're at new highs. And so this suggests that tariffs are hitting things like smaller businesses harder. They're also hitting smaller consumers harder who have a higher propensity to spend of their overall incomes. So when you put that together, it really encapsulates this idea that tariffs exacerbate the K-shaped economy. They hurt lower income consumers, they hurt smaller businesses much more than they hurt larger businesses and higher income consumers.
I just wonder, Cameron, how long you can see this rally continue unless you get participation that does broaden out. This idea that you can see an economy that's growing at the fastest pace in 2 years on headline GDP. Yes, it's noisy, but a lot of it's data centers. It's not actually the mom and pop stores that are declaring bankruptcy.
The one thing that does give us a little bit of solace in thinking about this broadening out is contrasting where we are today in breadth measures versus where we were last year. Last year at this time, you only had about 20% of names trading above their 50-day moving average. It was an incredibly narrow market, which we thought made it more fragile. If you look today, that stat is at 64%. So it doesn't necessarily mean that we are immune to everything, but it is encouraging that we are seeing broader participation in the rally, that it's not resting on just a small handful of names. So using the banks as example, if the economy was really falling off a cliff, we don't think that we would be seeing bank earnings revised higher nearly as much as they are and banks hitting new all-time highs. Some of that rally might be a little bit extended. But I think it's important to note that there are still some signs that cyclicality is being well bid in the equity market, which just give us a little bit more comfort that things aren't as extended or maybe broadening out in a better way. Cameron
Dawson, with sun pouring in from a lovely place wherever you are, we will be sticking with you. You will be sticking with us of New Edge Wealth. Matt, you talked about the Grok deal with NVIDIA, and I found this just fascinating. What we saw last week on Wednesday night. It was almost like trying to be buried, right? That NVIDIA would enter into a non-exclusive licensing deal and hire most of Grok's employees. Grok is a language processing type of outfit, and this idea that they are trying to get more competitive with the likes of Google and their chips in a way that could avoid some sort of antitrust claw. It just highlights how dominant they are with the cash that you were talking about.
Yeah, I think it was a really fascinating deal. The timing was an interesting part of it because it's largely gone unnoticed, right? And yet it was a huge $20 billion deal. The thing is, they just have so much free cash flow. In fiscal 27, they're looking at estimates are for $150 billion. So you see a lot of these big AI companies, including OpenAI, doing deals quickly, reportedly without many lawyers or bankers, and spending a ton of money because they want to take advantage of the valuations and the cash they're getting right now.
And they can get the dominance of the field, given the fact that they have that endless cash, and they're doing it to try to solidify some of the potential competitive threats. We'll kind of parse through this throughout the show, because I do think just because they bury it doesn't mean that we have to bury it. Right now, let's get you an update on stories elsewhere this morning. Here is your Bloomberg Brief with Yahira Anand. Yahira.
Good morning, Lisa. President Donald Trump says Ukraine and Russia are, quote, closer than ever before to a peace deal, but said it might take a few weeks to get it done. Ukraine's President Volodymyr Zelensky says the peace framework is 90% agreed and that U.S.-Ukraine security guarantees are 100% agreed, but major sticking points remain, including the future of Ukraine's Donbass region. Meanwhile, Israeli Prime Minister Benjamin Netanyahu meeting with U.S. President Donald Trump at Mar-a-Lago today to discuss issues in the Middle East, including Gaza and Iran. The meeting comes as tensions between the two leaders have increased, with Trump having previously warned Israel against taking actions that could undermine his peace efforts, and Netanyahu facing political pressure at home to take a tough stance on Gaza and Hamas. And China kicking off maneuvers around Taiwan, including live fire drills near the Taiwan Strait. The move comes after the U.S. announced a major weapons package for the self-run democracy. Taiwan's presidential office called the drills a serious threat to peace and stability. That's your Bloomberg Brief, Lisa.
Thank you so much, Yahira. Up next, closer than ever for Ukraine.
I really believe we're probably, Mr. President, by far closer than ever before with both parties.
20-point peace plan, 90% agreed, and U.S.-Ukraine security guarantees 100% agreed. Prosperity plan being finalized.
We've got more on that just coming up next. Bloomberg's Tyler Kendall joins with some of the details from New York. This is Bloomberg Surveillance. Welcome back. What we are seeing this morning is stocks trying to get back to that fervor, that Santa Claus rally that Matt was just explaining does consist of now. This is the race into year end. It is not continuing with some of the fervor that usually happens at this time of year, down about 0.25% for S&P futures. But interestingly, Russell 2000 futures unchanged. And this, to me, Matt, is really the question. Can you get that broadening out that so many people are counting on to really lead the market higher in 2026? And if you can't, is it still sustainable?
Yeah, actually, the small caps, though, have done really well over the last couple of months in hopes that the Fed would continue to cut, right? They're helped the most. I think 40% of the Russell 2000 is unprofitable or some giant figure like that. So they really need those rate cuts. And that's where the Fed really matters going into 26.
So let's take a look. 2s, 10s, and 30s. What you have seen is a rally. You've seen the best year for Treasuries wholesale going back to 2017, although Matt could point out that at the beginning of the cutting cycle, maybe it sort of fudges exactly where we've been. Nonetheless, you are seeing that 2-year yield pegged at 3.5% or just below 3.47%. The 30-year yield has hovered, though, around that 4.8%. To your point, Matt, there is a feeling that just cutting on the front end is not going to help the long end, especially with ongoing questions around who the buyer base is going to be next year for Treasuries.
Yeah, you know, it's interesting. Cameron Dawson mentioned that story that I think more than 700 companies have filed for bankruptcy this year. And they listed the reasons. Inflation was number one, but rates were number two before tariffs. I thought that was really interesting. So if rates continue to come down, that'll be really helpful, obviously, to the smaller businesses that have gone bankrupt in this environment.
Yeah. Meanwhile, in the metal space, and this has been sort of the ongoing debasement trade and a question around whether it truly is that, you had seen prices go parabolic in silver, truly just shocking gains, particularly over the past week and a half. Suddenly you're seeing a little bit of froth coming off of that, down about 5%, 4.8% now in pre-market trading. But a question here about whether this is real or whether this is speculation. And it comes in the heels of a real question that's been bleeding out in the gold market throughout the bulk of this year.
Yeah, whether or not this is the debasement trade was the subject of conversation in last week's shows that I was hosting, because you haven't seen the dollar really fall that much. I mean, it's like 8% year to date, right? From the peak, it's not even 12%. But the thing is, maybe currencies around the world are also coming down to some extent. So the question is, what's driving gold and precious metals higher? Silver obviously has industrial uses, so it's a different story. But the rally in gold has been eye-popping as well, right? 70, 80% year to date.
Yeah, and some people speculating it could continue based on central bank buying. This really has to do with the geopolitics of the moment, which seem to be in focus, certainly in Washington, D.C., under surveillance this morning, closer than ever for Ukraine.
I really believe we're probably, Mr. President, by far closer than ever before with both parties. If it went really well, maybe a few weeks. And if it went poorly longer, and if it went really poorly, it's not going to happen.
20-point peace plan, 90% agreed, and U.S. Ukraine security guarantees 100% agreed. U.S. Europe Ukraine security guarantees almost agreed. Military dimension 100% agreed. Prosperity plan being finalized.
Here's the latest. President Trump and Ukraine's President Zelensky hailing major progress made over the weekend toward a potential peace deal with Russia. However, talks failing to produce a major breakthrough. Bloomberg's Tyler Kendall joins us now. Tyler, thank you so much for being with us. So do we have any sense of what the progress really was that was made over the weekend?
Hey, Lisa, good morning. Well, at this point, we saw both sides really tout that there is optimism here, right? We know what the big sticking points still remain to be. President Trump yesterday saying that the thorniest issue on the table is, of course, the future of any potential land concessions, as he's previously suggested that Ukraine is going to have to give up territory in the eastern Donbas region as part of any future deal. It is our understanding that there has been an agreement reached in the draft proposal that would include a referendum vote on what happens happens to that eastern region. But Ukraine needs to see some critical conditions met first, including that Russia would withdraw its troops. The other big part, of course, security guarantees. What are those going to look like? Both sides, again, hailing progress, as it is our understanding, and we reported earlier this month that the U.S. has put on the table something that could mirror NATO's Article 5 mutual defense clause. We are now learning this morning that Zelensky did ask President Trump directly yesterday at Mar-a-Lago for those guarantees to extend to 30 or 50 years. Now, this White House has repeatedly said that responsibility is really going to fall on our European allies, which is why it's important and notable that the pair of leaders did have a call with European leaders yesterday after they met face to face. But to your question, Lisa, one of the biggest questions here is what is Russia really going to agree to? That is, of course, what we've seen when it comes to engagement on the Ukrainian side. But in his call yesterday with Vladimir Putin, President Trump said that Russia is still not interested in a ceasefire before any potential peace deal. And we've heard openly from Russian officials that there are some parts of this now 20-point plan that are non-starters, including the proposed size of Ukraine's post-war military. I will say in one potential sign of progress, we did hear from the Kremlin that they have agreed to create 2 working groups. That was a proposal put forward by the U.S., and those are the people that are going to run point to continue negotiations between the 3 countries.
Tyler Kendall, thank you so much for that. Cameron Dawson of New Edge Wealth still with us. And Cameron, how much do you count on some of the rhetoric that we've heard over the weekend as something concrete that is, just since this is what we do, tradable in the sense that this could be the emergence from a war state in Europe?
Well, we continue to just watch one thing, which is oil prices and gasoline prices as far as how much a war in Europe matters for U.S. markets and U.S. earnings. And we continue to be in an environment where gasoline prices are falling. It's pretty incredible. Over the last month or so, we've seen 30 cents off the daily national average gasoline price come out. We're now at $2.80. And that's such a far cry from the high of $5 that we reached in the aftermath of the initial invasion of Ukraine by Russia. So as long as you are in an environment where those energy prices remain contained, it's likely something that the overall market, at least in the U.S., continues to look the other way and not see it as a major driver of impacting returns.
And there's been no impact, even though we talk about Venezuela a lot. Obviously, it's important for foreign policy and potentially human rights. There's been zero impact really on oil, right? We see Brent just creeping above $60, but not much more.
And maybe just diesel prices. That would be the one thing to watch with Venezuela because they have heavy sour crude, which is very important for diesel production. And so that's been a market that has been a little bit tighter than what we see in just normal gasoline prices. And so as we think about the impact of energy prices, that is a major wild card for 2026. Over the last 3 years, we cannot underappreciate how important falling energy prices has been, not just for headline CPI, but also for the U.S. consumer. It's effectively been a tax cut for U.S. consumers. So each and every month, we've been in an environment where year-over-year gasoline prices have been falling. This is a boon for U.S. consumers. And if it were to turn in the other direction, that could certainly be a headwind for consumption as well as headline CPI for 2026. It's a wild card. It's not our base case because of some of these dynamics of oversupply, but it's certainly not something that we should ignore.
How much is that outweighed, Cameron, by the run-up in electricity prices that the consumer faces, sometimes 200% of what it was a year ago, the run-up in natural gas prices that the consumer faces because that's the dominant power source used for data centers? I mean, AI is pushing up energy across the spectrum other than oil.
And certainly, we're seeing it in elections as well as coming into top of mind for consumers. And so just as they're potentially getting this tax cut on the pump side of things with cars, you're seeing that pressure in overall electricity prices. And there's a great argument that this is what creates the perception of higher inflation than what we might get in overall statistics because of the dynamic of frequency bias, meaning that you go and fill up your car more frequently, you pay your energy bill at your house more frequently. So you feel those prices going up a lot more than you feel the prices going down of certain goods that you buy less frequently, which is one of the reasons why we continue to see this high levels of readings in things like University of Michigan surveys on outlooks for inflation, even though when you contrast that to what the bond market is saying, the bond market continues to be very optimistic that inflation will fall back down towards the Fed's target, with five-year forward inflation break-evens and swaps looking at just about 2.4%. So there is a contrast there into the inflation we feel as consumers and then the inflation that is perceived or expected by bond markets.
Spoken like someone who truly has traveled this season. Cameron Dawson of New Edge Wealth, thank you so much for being with us, and happy holidays and happy new year. Coming up, my conversation with JetBlue CEO Joanna Garrity on how the airline is gearing up for a key year ahead. Plus, Guy Johnson with your morning movers. Silver pulling back after that record rally. Meanwhile, copper surging to new record highs. From New York, this is Bloomberg Surveillance. Good morning.
Thanks to AI, Samsung's photo editor is much more powerful.
Generative Edit lets user reimagine surroundings, lighting, texture, and even the perspective.
The best idea comes when we think from the user point of view, not from the engineers.
Our goal was to create a powerful AI tool that lets users express their creativity safely and effortlessly.
It's always exciting.
It's supposed to be that Santa Claus rally time, and we're not feeling it, at least right now. But still, when you take a look at S&P futures, you can see pushing toward all-time highs, even though you are down about 0.25%. Matt, how far are we away from that 7,000 mark? You've been doing calculations over there.
I'm not a
on
math
your slide
whiz,
rule.
but it looks to me like 1% away from 7,000 in the cash trade, because we're at 69.30.
Yeah, this has been another double-digit year. It's been more than 20% the previous 2 years. Right now, we're up some 18, 19%. On the NASDAQ, you're up 22% year to date, with people expecting more to come next year, which is sort of the interesting aspect of this. The euro just losing a little bit of luster versus the dollar, still around that 117.63 mark, where it's been hovering for the past couple of trading sessions. A bit into treasuries, down 2 basis points ahead of the Fed meeting minutes that we get later this week, 4.11%. And copper up almost 2%. It was up 5% earlier in the session, surging ever higher. Why, I guess, is the question. Is it physical demand? Is it speculation? Is it a little bit of everything? A lot of people looking to Dr. Copper for some signals.
Yeah, to me, copper is almost more fascinating than silver, right? Precious metals make sense as a safe haven if you're worried about any number of things. But like silver, copper has industrial uses even more, arguably, and normally you see copper surge when giant economies like China are building ghost cities. They're not doing that right now. I guess we're building data centers, but I wonder what people are using it for.
The reindustrialization of the world, are we seeing it in the price of copper, or is it speculation about the industrialization of the world? 3 hours away from the cash open, here are your morning movers with Guy Johnson. Guy.
One of the reasons why copper might be higher is because people are building a lot of data centers. And that's evidenced in the stories that we're watching this morning. Lisa, let's start with the first one. Digital Bridge Group. So this is a private equity company. Now, remember a few weeks ago, SoftBank sold out of its Nvidia position. Apparently there were tears. Now we're starting to see evidence maybe of how that money is going to be deployed. This is a private equity company. It's based out of Boca. It's based out of New York. It's based out of LA. It invests in data centers. And this is why SoftBank is interested in it. The stock is up by 34% pre-market. Advanced talks for SoftBank to buy this company. Now, it has bought private equity companies in the past, hasn't done so for a while. This is going to be interesting to see how this one turns out. So keep an eye on that. Tech generally is a little softer today, though. One of the reasons why some of the futures picture you were talking about, Lisa, just a moment ago, is indicating that we are going to maybe move down. Tesla's one of them, Nvidia's one of them. Nvidia's down by 1.26%. I can't find a decent reason for this other than the fact that we saw a decent pre-Christmas tech rally, and maybe some of the chips are being taken off the table after Christmas, but I can't find any decent reason for it. So let's get on to the metals trade. I'm not going to do copper, but I am going to do silver. Let's talk about some of the silver stocks. First, Majestic Silver. Great ticker, AG, obviously. That is for the periodic table fans. Down by 2.76% this morning. The reason for it? Looks like silver's going to get choppy now. It's had this incredible run up. As you can see, we'll move it on a board and show you what's happened with silver. It's a gold story as well. You've seen it here in Europe this morning with Fresnillo. But you're starting to see silver maybe just moving off a little bit. You can see it over there, just a tick lower. But it's producing a decent response in some of these stocks. But silver's had an incredible run. Year to date, up 161%. So silver's certainly moving some of the stocks this morning. You're also seeing some of the miners moving here in Europe on the back of that copper trade as well. Lisa,
thank you.
Back over to you.
Thank you so much, Guy. Wonderfully said, and everybody's trying to bet on the physical economy heading into 2026. On our radar this morning, President Donald Trump saying Ukraine and Russia are, quote, closer than ever before to a peace deal. Ukraine's President Zelensky calling the framework 90% agreed with U.S.-Ukraine security guarantees 100% set, but warns that clashing over the Donbass region remains a hurdle. And it comes, Matt, right after we saw Russia lobbing a slew of missiles over at Kyiv over the weekend, raising questions about how serious Russia is about some sort of truce.
Yeah, I think it's, obviously it's a horrendous war that has continued for far too long. To me, one of the most fascinating threads was Sergei Lavrov, who I thought had been on the outs, the Russian foreign minister, made a comment over the weekend that Europe is now the problem. He said, since Donald Trump has come into power, the U.S. is no longer the problem. We've fallen into line, right? But Europe still continues to confront Russia in ways that he doesn't like. And I just thought that was pretty telling.
It was telling, and yet you saw rhetoric from President Trump saying that Europe is great, Ukraine is great, Russia is great, everyone's great. And it raises this issue of where is their daylight, right? We haven't really understood what the sticking points are going to be, the 90% done. And also, if it's 100% guaranteed that they're going to have some sort of security guarantees, why not just count on NATO? A lot of questions here.
Yeah, I think the Donbass region is probably the biggest sticking point. How much land Ukraine is going to have to secede. And one of the big problems there is that it may not be legal, even if it's agreed by Zelensky and Trump and Putin. The country may still have to vote on it, and it's very unpopular in Ukraine to cede land.
Yeah, meanwhile, we're really focused domestically on what's going on in the AI space. NVIDIA striking a licensing deal with chip startup Grok. The deal announced just before Christmas looks to give NVIDIA an edge in the AI race, particularly with language processing units. Under the agreement, Grok CEO Jonathan Ross and other executives will join NVIDIA. However, financial details were not released, except that Grok is valued some 3 times what it was a couple of months ago at $20 billion. And it's a non-exclusive licensing deal to try maybe to avoid some of the regulatory or the antitrust concerns, while also hiring 90% of the employees from Grok. I mean, it just highlights what the playbook is for tech giants that have more cash than they know what to do with.
Exactly. That's the most important point. They have so much cash, right? And this is an acqui-hire. I hate that portmanteau, but that's what it's being called, because they're paying essentially $20 billion to get the employees of a company that was valued at less than $7 billion just a few months ago.
Yeah, I mean, this to me is going to be an interesting playbook going forward. And how much can they get away from some sort of regulatory scrutiny and Washington, D.C. scrutiny by structuring it this way? Meanwhile, Bank of America CEO Brian Moynihan saying he expects the Trump administration to de-escalate trade tensions next year.
To go from a 10% across the board to 15% for the broad base of countries is not a huge impact. And that's where our team says it's starting to de-escalate, and that you're starting to see the resolution of the discussions into 15% here, 17, different numbers.
Moynihan adding that China deals are a special case due to the national security interests, rare earth minerals, and artificial intelligence. It does seem, as Matt was mentioning earlier, that we have left some of that behind in terms of trade tensions. What happened after Liberation Day? Well, we kind of just surged from there.
Yeah, exactly. And I mean, Moynihan thinks that or says that Trump is going to de-escalate from 10% to 15%. Well, he didn't mention the fact that we started out at 2%, right? So that's really not a huge de-escalation if you look at it in whole.
Well, and this really goes to the question of how much the consumers are able to absorb, which is the reason why we are watching the travel sector so closely. JetBlue's CEO saying the company expects to see the benefits in sales and cost efforts next year. I sat down with Joanna Garrity to discuss the airline's 2026 outlook. Take a listen. I want to start with just how this fits into the strategy of JetBlue right now to make the airline truly profitable for a sustainable period of time.
Yeah, thanks for the question. Great to be here and have you in Blue House, JetBlue's first foray into lounges. This is very much part of our Jet Forward strategy. We've been working very hard for the last several quarters on really turning towards premium and trying to make sure that we're offering more opportunities for customers who want to pay a little more. And the lounge is part of that. Our transition to a first-class product next year, a domestic first-class product, would be part of that. Our Premier card, or even more as a cabin, and really excited to start seeing all of that come to life in 2026.
All of the big airlines have talked about loyalty and how important loyalty and premium offerings is to their profitability going forward. How is it different for JetBlue? Because there isn't the sort of obvious business customer that typically fuels the loyalty offering.
I mean, we're a leisure carrier. We tend to get, a nice share of business customers because they love the product. We're back at the top for Net Promoter Score, so really proud of that. But at the end of the day, this is really designed around trying to make sure that customers who travel for vacation have a reason to come back again and again, and providing them with a little oasis of peace. And really through our loyalty program, we want to reward people who choose JetBlue because they love the product, the service, and what we offer.
You have already offered Mint and other premium rollouts. How has it been going?
It's been great. Mint's been a very strong source of revenue for JetBlue for well over the last decade. And so we're not new to this. We have a brand that, definitely associates with more of a higher end leisure customer, providing more to customers at a very reasonable fare. And we want to make sure that we offer something for everybody across the full spectrum, whether you want sort of a dialed down experience, still free Wi-Fi and great legroom and great snacks and drinks, TVs. But then if you want to pay a little more, you have the opportunity for a lounge, our Mint class for transatlantic, and then when we launch domestic first later this year, that's going to be a great product offering for customers who want a little more.
So I was shuttled into here through very long security lines and lots of people with screaming children trying to get to different destinations for their warm holidays. This is the busy season. How is it looking in terms of demand, given the fact that there were some hiccups in the past couple of months, but at this point, people are getting back to what they originally had?
Yeah, 2025 has been a very tough year, whether it was the macro setback or the government shutdown or the list goes on and on. We're really looking forward to the holiday season. Bookings are coming in strong. As we go into 2026, we're optimistic that the consumer is healthy and that we're going to start really ramping up the initiatives that we have been working really hard for the last year to execute to and seeing the benefit as we move through 2026.
How long do you think it'll take before you start to actually turn profitable and sustain that?
Our goal next year is to break even from an operating margin perspective, and that's the first step back to profitability. We have a great team here. Everybody's pulling for us. We're doing all the right things, whether it's our focus on operational reliability, Net Promoter Score, all of the premium products that we're launching, our laser focus on costs, and really trying to make sure that we're delivering a great product offering for customers, because JetBlue has this wonderful brand and this sense of people want to love us and they want to see us succeed. And 2026 is going to be our year with everything we've put into place.
Because 2025 was not the year for a lot of airlines.
Tough year for airlines.
There were a lot of issues. And you talk about the government shutdown. This has been a big discussion among a lot of the airline CEOs where they've said we just can't make up that kind of revenue. So there will be some sort of hit. Have you disclosed any kind of revenue loss as a result of some of the shutdown?
We haven't disclosed any kind of revenue loss. We've said that we remain on track for Q4, and I think we're pleased with what we're seeing in terms of bookings coming in for the balance of the month. We definitely saw some softness, obviously, during the government shutdown, but we're recovering coming out of that. I think most have shared that. But it was definitely an impact, and unfortunate that the airlines were put, right in the middle of that shutdown. All the great air traffic controllers and the TSA workers, they need to be, cast as essential workers. We really need to make sure that, if anything, this industry is so essential to our economy. Think about all the people who were traveling for weddings and funerals or doctor's appointments that were displaced because we couldn't get on the same page in Washington, D.C. So we're really hopeful that, we've turned a page there and that we can move forward, looking at that end of January date with, a little bit of nervousness. But I'm confident that D.C. will pull it together and get us in the back end of that.
Yeah, you somehow, being an airline CEO probably wasn't in your bingo card that you'd be well focused on healthcare legislation with your fingers crossed heading into January. I'm wondering how much you're hoping to attract a new class of customers versus capitalize on the ones that you have that might be willing and able to pay a little bit more with some of the new offerings.
Yeah, it's a little bit of both. We know we have customers today.
पीके स्टोरेजेस में एसएल जा चुका है. नेचुरल गैस एसएल इज ऑलरेडी गॉन. ठीक है, रुकने की कोशिश करी बट ब्रेकआउट हो गया. वो कैंडल ओपन इक्वल टू लो बनी, ब्रेकआउट जा चुका है. 3 पॉइंट का एसएल इज ऑलरेडी गॉन. देखते हैं अब क्या करता है, फेक ब्रेकआउट ना हो. एक तो मोमेंटम ही नहीं हो रहा है क्रूड ऑयल में, ऊपर से सडनली मोमेंटम हुआ है नेचुरल गैस में बट नॉट होल्डिंग। कल सपोर्ट एरिया से बाइंग अच्छी आई थी, फिर थोड़ा देर कंसोलिडेशन किया, देन अगेन मूव। तो ऐसा जा चुका है, उसमें होल्ड मत करना।
Really dominating the fields in a lot of different ways. They say it's going to be very hard to be a more budget-focused airline. How do you fight back? How do you sort of create a viable business model at a time when you do see this consolidation of profitability and travel in the biggest airlines?
I mean, it's definitely hard. We talk about the need for a more level playing field. When 4 carriers have 80% of the domestic seats, that's a real problem. You know, we fight very hard in D.C. to try to make sure that we're heard, that the challenges we face, whether it's cost pressures, the lack of scale, the lack of, consolidated purchasing, the, inability to get access to gates. We just bid on a gate, a Heathrow slot, and we were denied it. And so, while I maybe understand why it went to a legacy larger carrier, those are little things that add up over time. And the smaller carriers really need to be given a fair shot to win in this environment. And that's not happening right now. So we're focused on what we can control. We're focused on a whole series of initiatives under our Jet Forward program. It's getting us moving in the right direction. I'm excited about what it's going to bring. But we do need the government to kind of make that a more level playing field so smaller carriers can more effectively compete.
In the meantime, you do have this cooperation with United. You've been expanding in a host of different places. Is that the template going forward? Maybe not consolidation due to the recent issues, but in terms of the previous merger that was denied, but going forward, having some sort of partnership with major airlines to expand the routes.
Yeah, we've got 50 airline partners across the globe, and now we have the Blue Sky partnership with United. That is most certainly a part of trying to provide more utility to our loyalty program and providing a broader global network for our customers when eventually in Q1 they can book a JetBlue flight on United.com and vice versa through our interline agreement. And so we're excited about what it's going to bring. Does it solve the problem fully? No, it doesn't. But it's definitely a meaningful revenue initiative that gets us back moving in the right direction.
Do you anticipate consolidation at any point in your future, or is that sort of on the back burner still?
That's on the back burner. We're really focused on Jet Forward. I'm really excited with the progress we're making. We're seeing it. We're seeing improved operational reliability, improved customer scores. We have not let the grass grow under our feet in 2025. We've executed a whole series of revenue initiatives. We've kept our costs under control despite pulling a 1.5 capacity this year. So 2026 really is the year that we should reap the benefits of all these initiatives that we put into place in 2025.
That was JetBlue CEO Joanna Garrity speaking with me just in the past couple of weeks after opening their first lounge in JFK. Right now, let's get you an update on stories elsewhere. Here is your Bloomberg Brief with Yahaira Anand. Yahaira.
Hi, Lisa. China is vowing to expand government spending. Beijing plans to boost expenditures and strengthen the spending power of local authorities in an attempt to balance growth and contain debt risks. It plans to spend more on, quote, new productive forces like advanced manufacturing and tech innovation. Meanwhile, President Trump saying his administration knocked out a big drug facility in Venezuela last week. The strike would be the first known land attack on the country since the administration began its campaign against Venezuela. This comes as the president ramps up pressure against the country's president, Nicolas Maduro. And North Korea says it conducted a long-range strategic cruise missile launch drill over the West Sea Sunday as it continues to showcase its weapons capabilities amid regional tensions. The country's news agency says it was carried out to test counterattack readiness and combat capabilities of its long-range missile units. That's your Bloomberg Brief. Lisa.
Thank you so much, Yahaira. Up next, the year of dollar softness.
2025 has been a year of dollar softness. The dollar has been softer, but we shouldn't overread that. The bid for U.S. assets, including the dollar, on balance continues.
Bloomberg's Skylar Montgomery Koenig joins us next as we look ahead to the possible debasement trade, or is it? This is Bloomberg Surveillance. trying to get that holiday feeling, that holiday spirit into the equity market right now. Not really feeling it. Seeing right now declines on futures, lower by about 0.2% on the S&P. Still, as Matt pointed out earlier, about 1% away from that 7,000 mark as we do end the year near record highs. Meanwhile, a bit of dollar strength here, although just 117.67 on the euro dollar cross, and the 10-year yield getting a bid down almost 2 basis points to 4.11%. Copper, check it out. We have faded an almost 6% rally earlier in the session, now up just 0.6%. To Matt's question earlier, who's buying it? Well, I guess some people are asking that question and fading some of the earlier gains that we had seen. Under surveillance this morning, shifting gears to the year of dollar softness.
2025 has been a year of dollar softness, but most of that dollar softness was built into the first few months of the year. It's really been steady as she goes since the summer. That's noteworthy. It's suggestive of something else we've been saying all along, which is, the dollar has been softer, but we shouldn't overread that. The bid for U.S. assets, including the dollar, on balance continues.
Here's the latest. The U.S. dollar posting its worst week since June, with Bloomberg's dollar index showing the greenback on course for its steepest yearly drop since 2017. Lots of questions around debasement. Bloomberg Skylar Montgomery Koenig joins us now. And Skylar, thank you so much for being with us. Before we get to the dollar and the path ahead, I'm curious your view on how much you consider gold and silver when discussing whether we are seeing truly a debasement trade take hold.
Yeah, I mean, I think the one place that you can see investors really pivot away from the dollar is in COFR data. So central bank reserves have pivoted away from the US dollar, but it's not landed in one currency specifically because there is no clear alternative, which is the issue. Now, I bring this up because there's also been a pivot into gold, and I think that's increased enthusiasm for assets generally that are more out of the norm. And for the dollar, it's not a big impact because it's a small flow, but for gold, it is very much a big flow relative because it's a smaller market. So I think it's definitely symptomatic of that trade, but it doesn't necessarily mean that you're going to have big dollar downside because COFR reserves, the share for the dollar has been declining for something like 2 decades now. And you've had big cyclical dollar bull markets in that period. So it's a small flow for the US dollar, especially as it still dominates trade flows, it still dominates financial flows, but it's a big flow for gold.
How much is a weakening dollar a consensus trade heading into 2026?
I think it's more mixed than maybe the headline numbers tell you. What you tend to see actually is at the beginning of the year, if there's not a strong bias, you tend to have consensus go towards dollar weakness. And that's because you've had dollar overvaluation on a number of metrics for a very long time now. Now, I think the issue is those metrics is they don't take into account productivity gains. And so on that measure, you'd say valuations should have a structural break higher because the U.S. has been more productive than a lot of its developed market peers. So I think, when there isn't a clear bias, as we had at the beginning of last year, which was actually for dollar strength, you tend to see dollar weakness come out as the favored trade at the beginning of the year in year ahead outlooks.
I have a pretty smooth brain, so I can't think of too many factors at once. I just look at rates, right? And in terms of the terminal rate that futures are pricing in right now, it's 3%. If we don't go that low, do you maybe get a dollar with more strength than the street's expecting?
Yeah, I think certainly. So there are two factors that I'm really thinking about next year for the dollar. The first is that we had this risk premium priced in on Liberation Day. Now, that premium has compressed as some of your more world-listing policies from the U.S. administration has come off. So we no longer have the big threats to the Fed's independence that we had previously. And you've also had more positive growth drivers like fiscal stimulus. Now, I think that compression still has a room to run. And you can see in the gap that's opened up between, say, euro dollar and rate differentials that there could be some move still in that. But I think also, as you say, the Fed is kind of priced at what I would consider as a dovish extreme, which points to rate differentials also moving in the dollar's favor in 2026. The market's still looking for a terminal rate around 3%. That's in line with the Fed's estimate of neutral. So it's arguably a floor for pricing, because going lower would imply a recessionary dynamic that would boost the dollar as a safe haven in any case. But a 3% terminal isn't a ceiling for the Fed, I don't think. We've already repriced terminal higher twice this year from the Fed's perspective in terms of you've had that neutral dot kind of edging upwards as the economy is held up very strongly. So I think certainly you could go higher from here, and that skews the risk to being dovish Fed expectations being disappointed, and that's supporting the dollar.
Bloomberg scholar Montgomery Koenig, thank you so much for being with us this morning. And Matt, I should start more of my questions with, I have a very smooth brain. That's fantastic. I love it.
She mentioned productivity and all these other factors, and I'm, as a male, sometimes incapable of thinking of too many things at once, right?
Don't categorize all men like that. All I can say, I'm going to stand up for the male contingent here. Now, look, there is this question of what is the main driver at any given point. And right now, it has gotten incredibly muddied because a lot of people are talking about rate differentials possibly being the main driver. Other people pointing to the question of, well, is the Fed truly independent? Something that you picked up.
Yeah, I would question the Fed's independence now and especially next year. I mean, what could happen, I think, is still in question.
What could happen is coming up next. We're going to be speaking with Deborah Cunningham of Federated Global Investment, Terry Haynes of Pangea Policy, and Savvy Sith of Raymond James as we dig deeper into the airline sector as we do all travel. This is Bloomberg Surveillance.
Next year, you have the hallmarks of a potentially pretty exciting year.
Balanced portfolios make a lot of sense heading into 2026.
Setting this up for a year where you're going to see a lot of churning, but have moderate returns.
We see a huge amount of appreciation across the AI names. There's a question of which ones and how long can that run for.
Respect the trend, but don't ignore the risks as we go into 2026.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Good morning. Welcome back to Bloomberg Surveillance. Stocks marching toward new records, but taking a little bit off this morning as traders bet on stimulus and growth. Precious metals in focus with prices of gold and silver dipping a bit after a parabolic rally. Copper, meanwhile, surging on that real world demand. And President Trump closing out the year trying to tie up what has been an elusive peace deal between Ukraine and Russia. Matt Miller in the hot seat today. So glad to have you as we play tag here on Surveillance. John is out on paternity leave. Anne-Marie is off on vacation. Matt Miller, I am so pleased to spend the next couple of hours with you. I'm just wondering, given this rally is 1% away from all-time highs, what will it take to get it over the edge?
Yeah, well, I think we typically have Santa Claus rally in the last 5 days of December, first 2 in January, that averages a gain of 1.5%. Right now, we're only up 0.3% in the first 2 days of that. So we could still easily get there. And it looks like the market wants to, despite the fact that futures are off a little bit today.
It seems like the bet is on a broadening out, and you are seeing a little bit more of that this morning with the idea of losses in S&P futures and NASDAQ futures, but not necessarily in Russell 2000 futures. And this idea, you need to see that. There has been a shift in the conversation around AI, and I think it's worth mentioning that Grok NVIDIA deal that we saw last week with a question of what this signifies going forward, that NVIDIA is trying to consolidate its market share to get a non-exclusive licensing deal with a company where they're going to hire most of the people and possibly get a more efficient chip to put out there on the docket. It just highlights how things are shifting in terms of narrative.
Well, only a few months ago, industry experts would have told you nobody's even close to catching up with NVIDIA in terms of the technology. And then we got the Google TPU story, which I think changed that calculus a little bit. But look, the M&A is part of the animal spirits. The IPOs we've seen, part of the animal spirits that have essentially eliminated bears from this market. In terms of equities, everyone is a bull.
Yeah, right now, everyone's a bull heading into next year, which raises the question, how much more bullish can people get? And what do they need to see to possibly shift that view? Precious metals highlighting this concern about some sort of debasement trade or haven trade, or maybe it's just the real economy. And what we're seeing there, you are seeing copper prices retreat after being up some 6% in pre-market trading, now up 0.2%, just as people look to some of the stockpiling going on and losing those gains as we speak. Silver, meanwhile, down almost 6% after a rip-roaring record run. And what we have seen in the bond space, and this is interesting, so much depends on next year what happens with the Federal Reserve. The 2-year yield started this year at 4.23%. Currently, it is 3.47%. The 10-year is down from 4.55%, currently 4.47%. 4.11%, the best rally going back to 2017. The 30-year yield started this year almost in the same place that it is now, around 4.8%. Matt, it just highlights how you can move the front end, but the long end rests on something completely different.
Yeah, absolutely. And I tend to broaden out my look at rates to at least November when we had the election, right, and to September when the Fed started cutting. And if you look at it over that time frame, you've seen an even bigger rise in 10-year yields. So I know that this administration wants to get the 10-year yield down. They want to get mortgage rates down. They want to lower interest rates for companies that have driven a lot bankrupt, but they haven't been successful thus far.
Meanwhile, right now we are looking at a pretty quiet week as we head toward that New Year's celebration on Thursday. Thursday will be a closed day. I'm sure everybody is going to be traveling and enjoying their families. We are going to be getting, though, tomorrow some meeting minutes from the Federal Reserve. We're also going to be getting jobless claims later on this week on Wednesday. A real question here about any read or tell from some of the information that we're getting, given the fact that people say the GDP print from last week or the jobs report that we did get from the previous couple of months have been so messy that you have to wait until early in January to get a cleaner read. Coming up this hour, Debbie Cunningham of Federated Hermes as Wall Street pushes for a year-end rally. Terry Haynes of Pangea Policy as Nancy Pelosi predicts big Democratic wins in 2026. And Savvy Sith of Raymond James as holiday flight cancellations deliver a costly blow to airlines. We begin this hour with stocks holding near record highs as we start the final trading week of 2025. The future of the Federal Reserve very much in focus. Bank of America CEO Brian Moynihan saying an independent Fed is critical for the health of the markets.
They're a lender of last resort. They're there to stabilize markets and price. But other than that, you shouldn't know they exist, quite frankly.
So you don't worry about all this, hand-wringing of political interference with the Fed once that new position is.
The market will punish people if we don't have an independent Fed, and everybody knows that.
Debbie Cunningham of Federated Hermes writing, while the Trump administration attacks in the committee have intensified worry in the financial markets, we believe the Fed will prevail. This does seem to be the preeminent belief right now in markets. Debbie joins us now for more. Debbie, why do you think that the idea of Fed independence is kind of behind us and that people have sort of closed that story out in 2025 and look to a sort of more normal Fed in 2026?
Well, I think what we saw in 2025 was a surprised and then ultimately a divided Fed. We still don't know the full ending to the Lisa Cook story. We do know the ending to what the Supreme Court has thought about as Fed independence and a different type of body compared to some of the other ones. We saw President Trump go from, supporting Chair Powell to trying to fire Chair Powell to being told he can't fire Chair Powell to submitting to trying to find other replacements for him, interviewing replacement candidates for him for his expiration of his chair term in 2026. So I just feel like what we've seen so far has been a bit of a upheaval and turmoil within the Fed, that now that the independence has been, solidified, I think that will not be the case going into 2026. However, what I do think will be the case is that we see less voting that is all in alignment. I think we will see more dissents. We've already started to see them in the last three meetings. And I think that will probably continue. And, what we've seen historically as hawks, centrists, and doves will become even a little bit more pronounced in their voting.
So do you think, Debbie, that people are overpricing the chance of rate cuts next year?
I think they are, at least from what the Fed is telling us with their, their dot plot, their series of economic projections. They are looking for one. Our official call right now, as we transport into 2026, is for two, one in the first half, one in the second half. But I think ultimately, although the pace of lowering rates has modified from where it was when we started 2025, the ultimate terminal rate, Lisa, seems to be the same. I mean, it's not going below 3%. And that's where I think the bond market is settling in. That's why you see, the 10-year rallying at various points. That's why you see a range trade that is really more indicative of actual technicals and market conditions, as we head into year-end, supply and demand, repo market, issues all seem to have more of a influence on rates on a day-to-day basis for this, last trading week of the year. But ultimately, when you look at the terminal rate for the Fed, over time, it's still at 3%. It's just 3% a year earlier.
I wonder how you view liquidity right now, given your position and given that we're now have eclipsed $8 trillion in money markets. It seems like there's a lot of cash sloshing around the system. And we have pretty decent growth, right? Even though it's hard to look at these economic data points, 3.8% GDP, maybe only 2.6% inflation. What's your view on sort of the macro picture?
I think the macro picture at this point is that the worst is behind us. We really, when we went into 2025, were toying with the potential for some sort of a, substantial growth slowdown into a potential recession. That's behind us now, though, at this point. We think the worst quarter, obviously was the first quarter of 2025, and the consumer continues to be employed, so the consumer continues to spend, and the consumer is the one driving the economy in this recovery that we have been experiencing. So I think slow growth will be the case. I know not a lot of people like that from an equity market standpoint. It doesn't get the same sort of splashy results that a faster growth economy does. But I believe that when you look at liquidity markets, when you look at broader term fixed income, slow growth is not a bad place to be, and we've seen that certainly in the gathering of assets in the liquidity market, as you said, recently passing the $8 trillion mark.
Debbie Cunningham of Federated Hermes, thank you so much for being with us, and have a wonderful New Year's celebration as we assess what's going on next year. It is sort of this contradiction, Matt, that we're talking about the potential for slow growth, and everyone's talking about how consumer sentiment is down. And then you saw the GDP print from last week come out, which was the fastest pace in 2 years. And it sort of raises this issue of, are we seeing an economy entirely powered on data centers? Well, human beings kind of wonder what their existence is and wonder what the path is going forward and lose confidence in their futures.
I mean, I find the term K-shaped kind of annoying, but it seems to be prevalent across a range of different industries and paradigms. I mean, certainly in M&A you see it. Certainly in terms of profit growth you see it. Certainly in terms of the consumer you see it. So I just don't understand how 3.75% is restrictive. I mean, are we really looking at a rate that's 75 basis points too high and still growing at a 4% clip?
Okay, so this is the debate, right? For mom and pop stores, not so much. You talk about M&A. Where is the M&A happening? Yes, it's happening across the board. It's happening out of necessity, right? Because companies want to get bigger, banks in particular, also industrials. But you're also seeing the ongoing tech M&A because companies can, right? We talk about NVIDIA and Grok and the $20 billion valuation. They're just sort of minting money. But we also have another deal that could potentially be announced this morning. We're hearing that SoftBank could be announcing Digital Bridge. This question of that race really driving a lot of this activity. Yep. And without that, what happens, right? How much is left? And is it restricted for who?
Right. Without that, you only have the lower half of the K, right? And I guess that's the problem. 17 companies filed for bankruptcy through November. And obviously that's worse than we want to see it. And that's all due to interest rates and inflation. But inflation, I think, is something that you shouldn't forget, right? Because the last print looked soft, but companies still have to pass through more of this tariff costs.
I'm very much with you, and we'll be watching that coming up. Right now, let's get you an update on stories elsewhere. Here is your Bloomberg Brief with Yahaira Anand. Yahaira.
Hi, Lisa. Policymakers for the Bank of Japan are signaling more interest rate hikes are ahead. A summary of the bank's December meeting shows board members raised concern over the benchmark rate, calling it the lowest level globally. Currently, the BOJ's key interest rate sits at a 30-year high. Meanwhile, Ukrainian President Volodymyr Zelensky says he asked President Trump for U.S. security guarantees lasting as long as 50 years. Zelensky spoke to reporters after the two leaders met yesterday in Florida. Current proposals outline a 15-year security term with the possibility for extension. President Donald Trump says Ukraine and Russia are, quote, closer than ever before to a peace deal. Meanwhile, silver pulling back from all-time highs as traders take profits from this year's record-breaking rally. A weaker dollar and rising geopolitical tensions boosting precious metals during the end-of-year rally. Silver is on track for its best annual performance since 1951. That's your Bloomberg Brief. Lisa.
Thank you so much, Yahira. Up next, winning the House.
So if the Democrats win the House back.
No. When? When the Democrats win the House back, then we will. Right now, the Republicans in the Congress have abolished the Congress. That ends as soon as we have the gavel.
Terry Haynes of Pangea Policy joins us next as we preview 2026 in Washington, D.C. From New York, this is Bloomberg Surveillance. Good morning.
Renewable energy is the only path to a future prosperity. Renewable energy is creating foundation for a renewable civilization. We just cannot put our civilization under limited fossil fuel resources. Renewable energy is everywhere. It's almost zero cost. It is unlimited and renewable.
Failing to get that Christmas and New Year's and holiday spirit into the markets right now. The Santa rally kind of fading just a touch, down about 0.2% on S&P futures. You see a bigger move on the NASDAQ, although Russell 2000 about flat in early market trading. Meanwhile, just a touch of dollar strength after a pretty weak month. We are seeing 117.59 down by about 0.1%. The euro versus the dollar cross a stronger dollar. Meanwhile, 10-year yields down about 2 basis points to 4.11. They have declined from some 4.55% at the beginning of this year. And copper coming off some of the earlier highs. We saw that up now 6% in pre-market trading. Now we're only up 0.3%. A real question of Dr. Copper. Is there a tell here? Who is stockpiling copper? Is it all of us as we build out data centers? Under surveillance this morning, a focus in Washington, D.C., winning the House.
So if the Democrats win the House back.
No. When? When the Democrats win the House back, then we will. Right now, the Republicans in the Congress have abolished the Congress. They just do what the president insists that they do. That will be over. That ends as soon as we have the gavel.
Here's the latest. Former Speaker of the House, Nancy Pelosi, predicting congressional success for Democrats in next year's midterm elections. A recent Gallup poll finding Americans' approval of the current Congress is at just 17%. Bloomberg's Tyler Kendall joins us now for more. Tyler, as we set up into next year, the midterm elections seem to already send a message to Washington, D.C. How have you seen the messaging shift from both sides ahead of the midterm elections?
Yeah. Hey, Lisa, good morning. Well, that polling that you just showed is pretty brutal, but it does highlight the fact that this Congress has only passed fewer than 40 bills so far this year, which hovers near record lows. So you've really seen Democrats on one side try to highlight what they say should be other policies put forward, but that their hands are tied because they don't control both chambers of Congress and the White House. And the White House try to tout what they've already put into effect, right? We heard President Trump tell Politico on Friday that the midterms are going to be all about pricing, in his words. As we've spoken about multiple times on this program, the administration has tried to shift the messaging when it comes to the issue of affordability. And you were just discussing that GDP number from last week. President Trump coming out and touting that growth while we've seen consumers really remain downbeat. That means that we're going to see the potential for a few different policies going forward here, right? Republicans want to tout what they've already done, including many of them saying that we're going to get large refunds come tax season. many of them also floating that we could see another reconciliation package next year. But there are also going to be those big headwinds. And that's what Democrats have been highlighting, including that we could be staring at another government shutdown come January 30th. And there still hasn't been any movement when it comes to a potential health care deal. Lisa, I'll give you the upshot here, which is that Democrats only need to net 3 seats next year in order to flip that chamber. That is how slim the margins are. We are talking about the House, but also worth mentioning in the Senate. The math's a little bit more tricky, but Republicans have seen some senators in key seats say that they're not going to run for re-election, like Tom Tillis in North Carolina and Joni Ernst in Iowa. Those were some seats that Republicans were banking on.
Tyler Kendall, thank you so much for that. Right now, Terry Haynes of Pangea Policy joins us for more. Terry, it does seem like 2025 was the year of Trump. President Trump dominated a lot of the news. We did not see a lot of congressional action. How different will 2026 be?
Well, I think people in markets feel that they're pretty well worn out from 2025 and the kind of Washington action they saw across the board. I told markets that I thought 2026 was going to look like a frenzy because you'd see Trump and Republicans doubling down on what they did and do the maximum amount of possible to make sure that they put the best case before the public, that they ought to continue with a Republican trifecta in Washington.
Hey, I thought it was interesting, Terry, that Trump and the party kind of campaigned on an anti-neocon, like we're going to focus on domestic issues and get out of foreign policy disasters. And now they focused almost solely on foreign policy and are bombing different countries. And it looks like now maybe even a land strike on Venezuela. Does that continue into 2026?
Well, I think they'd dispute the premise. Certainly, the big beautiful bill is about domestic, and to the extent it's about international, it's about making sure that that what you get in American industry is reshoring and a much better and bigger defense industrial base. But I do think you see continuing that pretty muscular foreign policy because that's part and parcel of what the competition with China is all about.
So do we get in? I mean, it looks like we may agree to a 30 to 50 year commitment in Ukraine. At least those are the reports from Zelensky this morning. And do we get in a land war in Venezuela, or do we attempt regime change again in South America?
Well, I think what you're seeing on both the United States and China's part is grasping for, pushing against kind of hemispherical dominance around. Certainly a lot of what China does in the South China Sea and beyond is about hemispherical dominance. Pushing on Russia and Europe on trade is about hemispherical dominance. China being the biggest trade partner of South America is about hemispherical dominance, and it's a big reason why Trump and the Congress both are focusing on pushing back against that, whether you're talking about what happened in Argentina, what is happening in Venezuela, what happened in Colombia, and so on.
We heard Nancy Pelosi talking about how Democrats are going to take control of Congress come 2027, certainly the 2026 midterm elections. There is this question about what the Democratic agenda really looks like. And there's been a battle for what priorities the Democrats really want to put forward. How different are they from what President Trump is doing?
Well, they're different in a lot of ways. I think Mrs. Pelosi, of course, is in her exit interviews phase, and you're a leader of a party, you're always closing, right? You always be closing, and But I would say to you a couple of things, Lisa. One is that it's way premature to suggest that Democrats are going to take anything over. Simple math is when you've got at least 10% of the seats up for grabs through retirements and whatnot, and you need such tiny margins to hold. Right now, almost a year out, anything could happen, and that certainly wasn't the plan in 2016 that Republicans were going to hold both houses, and yet they did. That said, I think that Democrats, frankly, want status quo more. You know, on margin, what Democrats want is going to be less desirable by markets because it's just going to pile on more debt and deficit. That is what the progressives in the party want that have the energy and the money in the party. What Republicans are trying to do, not cheerleading for him, but I'm just saying, is trying to figure out ways to lessen debt and deficit to some effect, and show markets that, frankly. And Bessent has said that this is a 3 or 4 year process, but he's hoping that they can get there by the end of it.
So, Terry, you don't think that they're going to sign off on $3,000 or $2,000 checks come early next year and expand the deficit?
Oh, I think there will certainly be some deficit expanding actions taken. It'd be naive for anybody to think that politics is about some ideology, and fundamentally these days, I think it is not about ideologies. Certainly, if you accept the premise that Trump bestrides Washington, then you're seeing a fairly non-ideological president. But I think they'll cut some checks? Yeah, I think they probably will. Do I also think that they have it in their ability through a couple of different times and a couple of different ways through the winter and spring to do something about Obamacare that lowers the debt deficit? Yeah, I do that too.
Terry Haynes of Pangeo Policy, thank you so much for being with us, and have a wonderful New Year celebration. Coming up, more from our conversation with legendary investor and co-founder of Oak Tree Capital Markets, Howard Marks, plus Guy Johnson with your morning movers. SoftBank in advanced talks to acquire Digital Bridge Group. Those shares up more than 30%. From New York, this is Bloomberg Surveillance. Good morning. A bit of a soggy start the last trading week of 2025. We are seeing futures lower on both the S&P and the NASDAQ, about 0.2% loss on futures in the S&P. NASDAQ down 0.4%. Russell kind of catching up to that, or catching down, I should say, down about 0.1%. Still, we are up 18% on the S&P so far this year. Matt, what are we? 1% away from that 7,000 mark?
Yeah, on the cash trade, I think we closed at 69.29 or 69.32, around there. So about 70 points away from 7,000, which isn't meaningful in any other sense than it's a big round number. So if we hit that by the end of the year, I think markets would be pretty excited.
Yeah, they're hoping for that Santa rally to get to that big round number. Meanwhile, the big round number in 2s, 10s, and 30s is that yields have actually gone down considerably this year, at least in the 2s and 10s denominations. You are seeing on the front end of the yield curve, we started the year at 4.23% on that 2-year. Now we're seeing 3.47%, down a full basis point. 10-year yields started the year at 4.55%. We are currently below 4.11, down 2 basis points. The 30-year yield has basically been pinned at this 4.8% level. 2 hours away from the cash open. Let's head over and get your morning movers with Guy Johnson over in London. Guy, over to you.
Morning, Lisa. Metals and tech. Those are the two themes you need to think about first thing this morning. So let's start with the metals, then we'll do the tech in just a second. So silver. We know it's down this morning, but it's had a great run. So silver stocks have had a great run as well. AG, this is First Majestic Silver Corp, just one of a number of silver names this morning, therefore pre-market that is giving back a little bit of ground. People are talking about a bit of choppiness in this space. Gold had a great run. The miners did well on the back of that. And you can see silver. Look at that run that it's had, particularly at the back end of the year. Just beginning to give a little bit of that back now. Are we going to see some choppiness going forward from here? Are those stocks going to be reacting? 160% to the upside on silver year to date. That's a phenomenal move. Okay, so let's stay with the metals theme, but kind of go from the top to the bottom in terms of the table, right off the bottom, in fact, and deal with uranium. This is Energy Fuels Inc. This is a company that is based out of Denver. It is a company that mines in Arizona and mines in Utah. It does uranium, and it also does rare earths as well. This morning, it's out with news that it's doing well on the revenue and the sales front when it comes to the uranium sales story. Why is this important? Uranium stocks have had a fantastic run this year. Why have uranium stocks had a fantastic run this year? Because uranium goes goes into nuclear power plants, which goes into data centers via the electrons that flow out of them. So that takes us to the data center story. It's all related into this narrative. And that takes us on to our last one, which is Digital Bridge Group. Remember, we saw SoftBank selling out of NVIDIA a few weeks back. We're now starting to see maybe some distribution of that money. Advanced talks, we understand, for SoftBank to acquire Digital Bridge. What is Digital Bridge? It is a private equity company. It's based out of Boca. It's based out of New York. It's based out of LA. What does it invest in? Yeah, you guessed it. Data centers, amongst other things. And the Advanced Talks story this morning driving this stock sharply to the upside, as you can see. We're up by, let's call it a third, 33%. Lisa, back to you.
Thank you so much, Guy. Great work, as always. On our radar this morning, President Trump saying he made a lot of progress in talks with Ukrainian President Volodymyr Zelensky over a possible peace deal this weekend. Zelensky asking the United States to consider providing Kyiv with security guarantees that would last 30 to 50 years. Also, President Trump holding another high-profile meeting in Florida today, this time with Israeli Prime Minister Benjamin Netanyahu. The two aiming to boost a U.S.-brokered ceasefire in Gaza, which faces challenges as it moves into its second phase. And lastly, silver pulling back from all-time highs as traders take profit from this year's record-breaking rally. It's on track for its best annual performance since 1951, rising some 161%. Meanwhile, copper surging to a fresh record close, extending a stunning year-end rally fueled by concerns over tighter supply. Markets are capping off a year of seismic shifts, from the dominance of AI to historic trade tensions to the Fed's independence under threat. Earlier this month, I spoke with Oaktree co-founder Howard Marks about his latest memo exploring if there's a bubble in artificial intelligence. Take a listen.
The unproductive bubbles I would describe as financial fads. Portfolio insurance was one, subprime mortgages was another. Financial activities that become fashionable, zoom into popularity, get overhyped, and then recede. But then there are bubbles which are based on technological progress, starting with the steam engine, the railroad, the radio, the automobile, computers, internet, etc. And these actually push society ahead and change it irreversibly. But in the process, there's a bubble surrounding their implementation, which is overly accelerated and overly financed and goes to excess and end up destroying a lot of capital, but leaves society greatly changed. And I'm sure that AI is in the latter category in terms of effect on society. And the question is, will the implementation prove to have been excessive in scope and in the way it's financed?
Just because something is excessive doesn't mean that you can't invest in it.
No, but when investors hate everything and won't touch it with the 10-foot pole, chances are it's going to be on sale because nobody has pushed up the price. In fact, their disinterest has pushed down the price. But when everybody likes something, is excited about something, chances are it may be overhyped and overpriced. So you just have to be careful.
So that's where we are right now. You said you can invest and you can participate, but you just have to be careful. What does being careful look like? Does it mean focusing more on debt versus equities, more on equities versus debt, more on small companies versus big ones? What does that look like?
Well, what I say in the memo is that it's okay to lend for activities, even if they're uncertain, but not if the outcomes are purely conjectural. I mean, in order to be a smart lender, you have to have good visibility on the extent to which the thing is likely to repay interest and principal. If it's just purely conjectural, it's not. You shouldn't be a lender. And in fact, I think the memo says that where that's the case, you should actually, if you want to participate, you should be in the equity, so at least you get the upside. The lender has no upside. You make a 9% loan, all you're going to get is 9%, no matter how well the thing does. You certainly shouldn't do that in activities that have a high probability of not paying off at all, because then you have unlimited downside and limited upside. That's absolutely the wrong combination.
So you think right now, in some circumstances, the equity might actually be a better option than the debt because of that potential upside?
Yes, exactly, because the point is that if you go into some startup which has let's say a small possibility of a raging success, you wouldn't lend to it because you have a high probability of losing all your money and no probability of participating in the success. That's a bad trade.
So you always talk about this risk-reward pendulum, the risk and fear, the sort of fear and greed pendulum right now. And yesterday we saw Oracle come out and talk about having to borrow more money, having to spend more, and people are selling off the shares. Does this make you feel good? Does this make you feel like there actually is some discretion?
Well, yeah. Well, I think that it's Buffett says the less prudence with which others conduct their affairs, the greater the prudence with which we must conduct our own affairs. So when other people are acting imprudently and mindlessly and carefree, we should be worried. When other people are showing appropriate concern, that's a positive sign that the market is applying some discipline. Some of the greatest moments that I've seen, some of the greatest signals of danger in the markets have been when people were not applying any prudence at all, like in 2006, for example. So if people are reacting harshly to aggressive, possibly risk indicating activities, yes, that's a healthy sign. And this market seems healthier than the 2000 market to me.
How concerned are you that we get a Federal Reserve that's more accommodative for a variety of reasons that leads to even more risk-taking? This idea that not only did the Fed cut rates, indicated more rate cuts, but also is adding to its balance sheet in a way that could potentially prop up demand.
Well, I was thinking about this when I was waiting to see you today. Most of the people listening to this program, including me and you, are interested in the free markets, and we think free markets should set the prices of things. The Fed manipulations are a form of price controls. They control the price of money, and if the Fed puts money artificially cheap, then it induces behavior like risk taking. It forces people into riskier activities because the returns on safe activities are so low. It tends to reinforce the view that there's a Fed put, that if there's a problem, the Fed will solve it, and that contributes to risky behavior. These are all bad things. And, I believe that the Fed should be passive most of the time and only come to the rescue if the market is, if the economy is seriously overheated and tending towards hyperinflation, or seriously underactive and not creating jobs. I don't think that's the case right now. I don't think and you can see in the divided open market committee that there's a difference of opinion. So I don't think that action on the part of the Fed is compelling right now. And, there are people who think that rates should be a lot lower than they are today. I just don't see the merit in that.
Right now, going forward, I remember back in 2015, 2016, 2017, when rates were incredibly low, you were saying people just need to lower their expectations for returns. Right. Because ultimately, you have to look at the risk-free rate, and you don't want to reach too much at a time where people are greedy. Right. Where are we right now in terms of what types of returns people ought to expect based on the current income rates?
Well, the lower base interest rates are, everything scales off that. So, the Fed funds rate at 3.5 is below history. These are not high rates. They're only high relative to the last 15 years. But this is a low rate. So everything scales off that. Most things will give moderate returns. In the debt area, I think prospective returns are moderate, okay. Not lush, but not inadequate. The trouble is that the S&P, based on its PE ratio relative to history, appears to be priced to provide a very low prospective return. Historically, if you bought at this PE ratio, your return over the next 10 years averaged in the very low single digits. So I think we're in a moderate return scenario. The problem is that how do you get a high return in a moderate return scenario? And most people's resort is to take a lot more risk. And that's something I don't like to do, other than when it's compelling.
You had a personal note, an addendum at the end, and we led off with that idea of what artificial intelligence and machine learning will do to the labor market. It's something clearly on the Fed's mind, clearly on investors' mind. You're talking about concerns that there is going to be cannibalization from human jobs. How do you see this playing out? How are you kind of grappling with this when you look at investments, when you look at fiscal deficit, when you look at the backdrop for the financial system?
Well, look, Lisa, here I'm not talking about investing or economics. I'm talking about society. And it's very worrying to me. And, I've gotten some very nice response from people I respect to the memo. And one of them said he thinks we've seen this in response to the Internet over the last 25 years. But it has not raised unemployment because the Internet eliminated white-collar jobs that were replaced by blue-collar jobs, like, people who pick stuff in warehouses and send it out in e-commerce. So job count is not down, but job quality is down. And I think that this is very worrisome. And as I said in the addendum, when we lost jobs to automation and offshoring, I think that coincided with the opiate epidemic, and not only in amount, but also in location. And I think it's a natural consequence of people sitting around all day. And even if we can find a way to replace their income, I worry about purposelessness. And, we get so much from our jobs other than a paycheck. And you can't replace that stuff.
Wise words from Oaktree Capital Management co-chair Howard Marks. I could listen to him all day. Such deep thinking at a time when everybody is banking on the artificial intelligence trade and wondering what it's actually going to do going forward.
Yeah, I think first of all, I could listen to him all day as well. And he's an incredibly smart man who says some really prescient things. I think in terms of artificial intelligence, for me, when I try and link it back to the market, the most interesting thing will be how damaging it is to software companies. And, venture capital tends to invest very heavily in software companies because of the model. It's much easier for them to predict out revenue streams. But a lot of those companies will have lunch eaten by AI, because why would you buy a pre-programmed package when you can program it yourself?
Yeah. Meanwhile, up next, we're going to be talking about the resilient traveler.
Demand has been resilient. Right? Every time there's cold water poured on the environment, it seems like travelers want to come back.
More from the conversation with American Airlines CEO Robert Isom coming up. This is Bloomberg. A bit of softness this morning that does deepen, particularly at the Russell 2000 ahead of the open. A little bit of a bid into treasuries. I guess people trying to reassess ahead of 2026. Under surveillance this morning, the resilient traveler. Airlines are in the midst of a record-breaking holiday season. Sat down with American Airlines CEO Robert Isom, and we asked him about consumer demand. Take a listen.
You'll see us open up more secondary cities in Europe. You'll just see us do more flying into the hubs of some of our partner carriers. And international will probably outgrow what we do from a domestic perspective, but the two are connected. And, I'm really pleased with our domestic operation. We're going to always have the best domestic network. And, you go back, a number of years and domestic, outperformed international. And we're going to be ready for domestic doing well and international doing well, premium doing well, and really pleased with where we're at.
You've been working on upgrading the entire fleet, and that's something that's been really important for you, especially as you get some of these premium offerings in place. How much have some of the slowdowns, supply chain issues at Boeing and Airbus hampered that ability to really retrofit some of the fleet?
Well, where we stand today, we have the youngest fleet in the industry. We made a tremendous investment from about 2014 to about 2020. And we brought on well over $30 billion of new aircraft. So we have the youngest fleet in the business right now. But on top of new deliveries that we're taking, we don't have any retirements planned. So we're reconfiguring our 777-300s and our 777-200s. We're putting flagship suites on those. Even domestically, we're doing work on our 320s and 319s. But we still depend on new deliveries. And from that perspective, we have a lot of dependence on Airbus to deliver the 321 XLRs, Boeing to continue to deliver the MAX 8s, and hopefully be ready to deliver the MAX 10s that we have on order in 2028. Right now, my only push to the OEMs is deliver on time, deliver a quality product, stick to it. Before you ramp up, let's make sure we can do what you're on the books to deliver now.
Just taking a step back, in the airline industry more broadly, there's been this huge focus on the supreme product, the luxury product. And I wonder what you see in terms of bookings next year, whether it really is the premium product that's continuing to lead and the robustness that you see there while other things fall off. Is it bifurcated in terms of the bookings and the demand, or do you see a wholesale sort of rejuvenation in the interest in travel and ability to spend and pay the prices that actually are there?
Well, I'll just start with this. Demand has been resilient, right? Every time there's cold water poured on the environment, it seems like travelers want to come back, as evidenced by bookings for the holiday season, and as we take a look into the first quarter of next year. I have confidence, though, that overall people want to travel. And in people wanting to travel, I also think that, whether you're more economy focused and budget minded or you're premium services, everybody wants more. Everybody wants better control. Everybody wants more comfort. So I don't think that there is going to be any going back in terms of offering product at any level of the spectrum of offerings. But for us, as we go forward, you'll see us with our lie flat seat offering. That's going to grow by 50% over the next few years. Premium seating, 20% over the next few years. Whether you're a business traveler who've always wanted, more of that, comfort and ease of touch, or you're a leisure traveler, there's much more of a demand to really have a better experience.
That was American Airlines CEO Robert Isom earlier this month. And joining us over the weekend has been a number of people who could not get where they wanted to do. Airlines ran into some challengers over the weekend as winter weather led to cancellation of more than 1,500 flights. Savi Sith of Raymond James was delayed. She is now on the phone. She did write, though, earlier, we estimated each canceled flight typically costs airlines $40,000 to $65,000 in lost revenue and incremental costs. Savi, who was on one of those canceled flights, joins us now by phone. Savi, is this typical of the winter season? Is this something that is surmountable given the difficulties that airlines have had so far this year?
Hey, good morning, Lisa. Yes, doing some deep research here in Detroit, but this is typical. We always kind of plan for winter disruptions. The nice thing about winter, at least, is that you see it coming and you can plan a little bit ahead. But there's always disruptions. I think the good news is if you look at how the cancellations are going, most airlines are recovering fairly well. It doesn't help travelers that are stranded or get their travels delayed, but airlines are recovering fairly well, and that's good news. And you're not seeing any meltdown so far.
So how bad is it this year compared to last year and the year before? And how do you factor that into your earnings estimates?
Yeah, so this year it's interesting. There are some airlines like JetBlue that are seeing kind of fairly elevated levels of cancellations and higher than last year. Delta more recently with this weekend weather hit in the Northeast and the Midwest is starting to see a little bit of pickup and so slightly up year over year. But there's interesting ones like American that's actually seeing fewer cancellations this year than last year. So it really does vary across airlines. And for the most part, I think investors will look past some of these kind of weather-related events and will be focused on just how demand is holding up as we look into 1Q in 2026.
Are there airlines, Savi, that deal with it better than others? Are there airlines that make the consumer experience better than others, or are they all awful?
What I would say is this year we've seen everybody handle it fairly well. There are some airlines like Delta or Allegiant where, they do kind of compensate passengers better. But again, I think for passengers, it's less about compensation and more about how quickly they're able to recover. And unfortunately, during the holiday season, planes are packed. It's really hard to reaccommodate passengers very quickly. But again, going back to the fact that the recovery from these cancellations seem to be fairly quick, that's a good sign for travelers, and we're seeing it across the board for most of the U.S. airlines. So it's a good sign overall.
Savi Sith, we wish you luck getting to where you need to go. Savi Sith of Raymond James, thank you so much. It is usually a pretty miserable experience, certainly if you ever get canceled. Have you ever gotten canceled?
Yeah, but travel in general. I mean, if you're flying in luggage class, it's horrible, no matter which airline you're on.
Well, if you want to make it more fun, add some young children. That's what I've heard.
Yes.
I think that always makes it a lot more fun. Coming up next hour, we've got Jay Pulaski of TTPW Advisory, Dana Telsey of Telsey Advisory Group, and Veronica Clark of Citigroup as we do look ahead to Fed meeting minutes as well as jobless claims. From New York, this is Bloomberg Surveillance. Good morning.
Next year, you have the hallmarks of a potentially pretty exciting year.
Balanced portfolios make a lot of sense heading into 2026.
Setting this up for a year where you're going to see a lot of churning, but have moderate returns.
We see a huge amount of appreciation across the AI names. There's a question of which ones and how long can that run for.
Respect the trend, but don't ignore the risks as we go into 2026.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowitz, and Anne-Marie Hordern.
Good morning. Welcome back to Bloomberg Surveillance. Stocks marching toward new records, but stalling out just a bit. Although traders are betting on stimulus and growth in 2026, prices of gold and silver dipping after parabolic rallies. Copper, meanwhile, surging on real-world demand and a focus on the consumer during the shopping and traveling season, with economists looking to January for a cleaner read on economic growth. Matt Miller in the hot seat alongside me. And Matt, it does seem like people are looking to get a cleaner read in January. Nonetheless, we do get some signs today from the meeting minutes coming out tomorrow, as well as jobless claims on Wednesday.
Yeah, I mean, we'll get a little bit now, and jobless claims, I'm going to say they'll be between 210 and 230,000. But no, we've had such messy data, right? The inflation data I find difficult to believe, although maybe I'm wrong. The growth data also was incredibly strong, but very backward looking. So we need more.
And it seems like right now a lot of people are counting on the Fed, as well as potentially the one big beautiful bill and the stimulus checks that people get in the form of tax breaks come early next year, to really fuel this rally and needing it to broaden out. Because right now what we have seen so far in 2025 is something of a repeat from what we've seen over the past couple of years, which is the dominance of tech names. It's starting to shift, though, the narrative just slightly around the edges.
Yeah, you're starting to see a slowdown in, although still incredible growth, Mag 7 earnings, and a little bit of catch-up, hopefully, for the S&P 493.
Yeah, at the same time, you're wondering how much this is a debasement trade, how much this is just the real world, how much the precious metals are giving a sign, or whether this is simply just an aspect of this particular rally and is one of the new hotspots. Right now, you're seeing copper join that rally, up almost 2% in pre-market trading. It had been up almost 6%. It just raises this question, especially as you see stocks off by about 0.25%. You see a bid into bonds. Is this a haven trade? Is this a talk about some sort of reacceleration of industrials? I mean, a lot of question marks around this one.
Yeah, there are, and it's also going to be very light trading. I mean, you and I are at work, but many people are not this week.
No way.
And then you tend to see some swings or moves that don't necessarily make a lot of sense. I have faith that Santa will come.
Oh, is that right? You're still waiting for Santa?
Yes.
Okay.
I mean,
2026?
We've had a couple of good days last week, and we could have some good days this week. I think because there are so many bulls in this market, we've got to be up by January 3rd.
You heard it here first from Matt Miller, who's still waiting for Santa Claus. Coming up this hour, we've got Jay Pulaski of TPW Advisory, with stocks trading near all-time highs. Danny Telsey of Telsey Advisory Group breaking down the retail sector, and Veronica Clark of Citigroup expecting unemployment to tick up in December, and we get those numbers in January. We begin with this hour with stocks edging lower, with precious metals turning rather volatile. As Matt was saying, not a lot of people out there, so maybe that's part of the issue. Jay Pulaski of TPW Advisory writing, we think next year might be the year where the downside of a smaller U.S. trade deficit manifests in a weaker U.S. dollar. A weak dollar should support commodities. Jay joins us now. Jay, thank you so much for being with us. Happy holidays. Let's start with that. I think it's a really important point, this idea that what we're seeing in commodities has to do more maybe with the dollar than it does with some sort of broad-based industrial demand. Can you explain?
Thanks, Lisa, and great to be with you and Matt. And I wasn't planning on working until I got the invite to come on and be with you folks this morning. So I agree with you, Matt. But to your point, Lisa, I think people have kind of abandoned the idea that the tariffs would have a big impact on markets. And so I think it could be a surprise when we think of risks for next year, because we are pretty constructive. When we think of risks, we worry about higher inflation driven by the fact that we have to restock now fully tariffed goods. And then the idea that we have a smaller U.S. trade deficit, which leads to less money being available to come back into the U.S. from foreigners and buy U.S. treasuries, which could suggest that maybe we have further backup in long rates. And the combination of those two things, I think, is what could challenge equities at some point in U.S. equities in particular, at some point in 2026, namely rates going to a level on the long end that worry growth investors and put a cap on the upside of U.S. equities.
Why haven't we seen this so far, Jay? I mean, this is something that people have been talking about all year, that what we've seen in the metals space really is a debasement trade of the U.S. dollar, and yet we've seen the best returns for U.S. treasuries going back to 2017. Can you square that circle?
Yeah, I mean, treasuries, okay, they've had the best year since 2017, but they're up about 6%. So we don't really pay much attention to that. We believe that commodities have a real valid reason for their performance over the past year, and we think that performance is going to continue. And that is the fact, very simply, that digital eats the physical, right? So we all talk about AI. Without physical, without silicon, without copper, without water, without aluminum, you don't have any AI. So we have been and remain bullish on the miners. We've had a position in copper miners all year. We hold that position. We think it's going to continue to do well. And we're also very constructive about energy, particularly oil, which is a segment of the market that people don't like. So we like things that people are already invested in, as well as things that people have yet to cotton on to.
Hey, Jay, how do commodities play into equity rally expectations? I mean, if we have a continued rise in the BCOM and if oil actually gets a bid, how does that work into, the bullish forecast for equities next year?
Yeah, well, Matt, the thing that really counts for equities is earnings, right? And so for all the talk about uncertain data and questionable data, market doesn't care about that. The market cares about earnings, and earnings have been good, and earnings are forecast to continue to be good. Look, we are running the U.S. economy hot. We are stimulating in China to defeat deflation. We are stimulating in Europe to build up defenses. And so there's a lot of fiscal spending going on. We're still in a global rate cutting environment. These are the things that support commodities, and they also support emerging markets. We think 2025 is going to go into the record books as year one of the first year of a significant shift in global equity leadership away from the U.S. to the rest of the world. EM equities outperformed the S&P. They doubled the S&P. They're up 32% year to date. And for the first time in my memory, really going back to the beginning of the EM age, EM has better fundamentals, better macro fundamentals than DM. They have better growth, lower inflation, lower debt levels. And so we think, and by the way, expected to have better earnings growth than the U.S., both in 2026 and in 2027. So we think we are at the early stages of a significant multi-year period of EM and non-U.S. equity outperformance. We pair that with the commodity side. We're deeply underweight fixed income, and that's really been the setup for us for about 18 months. It's worked out well, and we think it's going to continue to work out well. We are at the beginning of big moves in EM equity and commodities. So
you like EM. What about EU? Because it's been shocking to see the gains, even in local currency, right? The DAX up 22, 23%. The IBEX in Madrid up like 50%. And if you're a dollar investor, it's been even better. Does that continue? Because I don't really see the drivers there.
Well, we've talked about European banks on this show for many, many times.
Banks,
Lisa
yes.
knows for sure. And EUFN is up 60% year to date, massively outperforming U.S. banks. And guess what? The top 7 European banks trade at a 60% discount by market cap to the top 7 U.S. banks. Again, just an illustration of how much room we have to go. The U.S. outperformed for 15 years. And so there's just massive gaps in terms of valuation, in terms of relative upside. And for the first time, Europe is actually doing things, because we're making them in the U.S. under this administration, doing things to control their own fate. And you talk about how the European markets have done. Here's a really interesting stat. For a euro-based investor, the S&P is up less than 3% this year. Okay. And this is why we think that the flow into U.S. assets is going to start to reverse. People talk about U.S. exceptionalism. We think it's coming to an end. As I said, EM has better fundamentals. And so there's an opportunity, we think, in Europe and in Japan. But our preference is where we're most heavily overweighted is in emerging markets, both in China, very bullish China. And again, Lisa knows we've been bullish all year. Massively outperformed the S&P, and we're very bullish Latin America, and in particular, Brazil. We think Brazil is setting up to have a major rate cutting cycle, and we like Latin America quite a bit.
Yeah, Jay, I was going to ask you about China, since I know you have been bullish all year and you have done well with that particular trade. How much is this a tactical trade, and how much is this a structural trade where you think that China is essentially going to win the AI war?
Yes, all of the above, Lisa. We think there's really 3 reasons to be constructive on China. The first is that China's fighting to defeat deflation. And as it succeeds, and we think it will, that's going to be very constructive for corporate earnings growth. The second is that we think there's a rapprochement going on between the U.S. and China under this administration. We wrote our whole monthly about it up on Substack. Trump embraces the tripolar world. And so that rapprochement, when Trump visits China in the spring, we think will include a signal for U.S. investors to buy Chinese equities. And for the most part, U.S. investors have not, particularly institutional, have not been active in China equities since the first Trump term. And then the third and most important is what you brought up about AI. We think very simply that China's lead in electricity and generating electric power and its open source AI is a combination that's going to be more successful globally than the U.S. combination of fossil fuels and closed source AI. We really think it's the quantity of electrons are more important than the quality of semiconductor chips. And this is, again, why we think Chinese tech is so compelling. It trades at about a 50% discount to the U.S. It's completely owning the China tech stack. China has made the decision, in large part because the U.S. has forced it to make the decision, that it's going to develop its own tech stack. It's well on its way to doing so. And the open source model allows China to embed AI into the physical. So it's called embodied AI. It's the digital AI plus the physical robotics, and it's leading to autonomy and the focus on autonomous vehicles and autonomous systems. And that's where we think the real story is going to be in 2026 and 2027. And China is way ahead of the U.S. on this front.
Jay Pulaski, thank you so much for being with us and for taking a break of your break to join us. Jay Pulaski of TPW Advisory. We appreciate you joining us. Right now, let's get you an update on stories elsewhere. Here is your Bloomberg Brief with Yahaira Anand. Yahaira.
Hi, Lisa. Israeli Prime Minister Benjamin Netanyahu meeting with U.S. President Donald Trump at Mar-a-Lago today to discuss issues in the Middle East, including Gaza and Iran. The meeting comes as tensions between the two leaders have increased, with Trump having previously warned Israel against taking actions that could undermine his peace efforts, and Netanyahu facing political pressure at home to take a tough stance on Gaza and Hamas. Meanwhile, Chip Wilson, the founder of Lululemon, is launching a proxy fight to remake the company's board. The Wall Street Journal reporting Wilson has nominated 3 director candidates. Wilson reportedly does not believe Lululemon shareholders will trust any CEO picked by the current board and is aiming to change the board before executive decisions are made. And a winter storm is sweeping across the U.S. with a mixture of snow, ice rain, and strong winds. The National Weather Service warning of whiteout conditions and even possible blizzard conditions in the upper Midwest. The storm is expected to produce freezing rain in New England, thunderstorms across the eastern U.S. and south, and widespread strong winds over the next 48 hours. Stay home if you can. That's your Bloomberg Brief. Lisa?
Sounds like a lot of fun. Thank you so much, Yahaira. Up next, the morning calls, plus Dana Telsey of Telsey Advisory Group with what to watch for in the retail sector next year. This is Bloomberg Surveillance.
It really is a show-me story in 2026 as to whether or not the equal weight S&P 500 can deliver on what are some pretty high expectations for earnings growth next year. A lot is riding on this idea of EPS delivering. And of course, that will be a show-me story as we move through the year to see if there is upside to those numbers or if yet again we'll be in an environment where Mag 7 gets revised higher and equal weight gets revised lower.
That was Cameron Dawson of New Edge Wealth as everyone looks to that broadening out trade right now in markets on the margins. I guess that the Russell 2000 is performing less badly, but not really. It still has clawed down to meet up with the S&P, lower by about 0.25%, dragged down as the session grows older. The NASDAQ lower by almost 0.5% in early market trading. Time now for the morning calls. First up, Stifel reiterating its buy on NVIDIA, believing its deal with Grok can extend AI infrastructure leadership. Next up, JP Morgan lowering its price target on KB Home to $50, expecting a weak fiscal return next year. Those shares lower by about 0.1%. And finally, Truist lowering its target on Vail Resorts to $234, highlighting a lack of snowfall at its Colorado and Utah resorts. Those shares up by about 0.1%. The snow hit the East Coast this year, not the West Coast for everybody who traveled out there for wonderful moguls and such. Let's stick with the consumer as focus shifts toward the new year. Dana Telsey of a Telsey Advisory Group writing, heading into 2026, we expect events, higher tax refunds, and more accommodative interest rates to drive a continued recovery in discretionary spending, especially among younger consumers. Dana joins us now in person. Thank you so much for being here.
Thank you for having me.
It's wonderful to get your insights as we all look at our gifts from the holidays, decide which ones we need to return. What's your read on how well this season really did perform for retailers broadly across the sphere?
I think holiday season was solid. I think those increases, 3.9%, 4.2%, very much in line with expectations. These 10 days after Christmas are very important too, whether for returns, for gift card redemptions, all very important to see what it looks like. But the product newness drove demand, and with the K-shaped economy that we have, you're definitely seeing at the higher end and the lower end looking for value. And that's where you saw some of the traffic, whether it's the Walmarts, whether it's the TJXs. They were there. The last 10 days before Christmas, as always, is where you got the real bump up in terms of top line.
I'm fascinated by the bifurcation between Walmart and Target. because I had seen them previously in kind of the same box. But Walmart has done so well this year, and Target has disappointed. Why?
I think overall what you've seen from Walmart and Target store standards have fallen. You haven't seen the same innovation and product newness. You haven't seen the same forward momentum of movement, particularly with technology, where Walmart is anticipating what the customer needs. And they really have modernized their whole store format. The Walmart of today is not the Walmart of 5 or even 10 years ago.
If we see a K-shaped economy, do we get Dollar Tree, these Family Dollar kind of discount stores doing well? Because if I look at the stock performance, I don't see Dollar Tree taking off.
I think overall you will see those dollar stores perform. Keep in mind that in 2025, the focus on tariffs, who imports goods from China, was impactful certainly to the dollar stores, and now lapping tariffs should be a benefit to them over time. Who you saw as share gainers, it was all the off-pricers. I mean, whether it was Burlington, Ross Stores, or TJ Maxx, with the diversification of the assortment that they have, they captured customers.
What's fascinating to me is you're talking about how this was a solid holiday season, and yet we're talking about a bankruptcy potentially at the end of this month of one of the biggest retailers, of Saks Fifth Avenue, which faces more than $100 billion of a debt payment. A lot of people are wondering whether that will actually happen. Can you square this story? The idea that we're talking about robust sales, a steady consumer, albeit picky or choosy or whatever you want to say, at the same time that we could see a bankruptcy of one of the biggest retailers out there?
Well, when you think of who's gaining share from that, you look at the new brands that both Bloomingdale's and Nordstrom are putting on their shelves, stocking in their stores. They're gaining share. Just across the street on 59th Street, Bloomingdale's just opened a new extension to their 4th floor with newer brands, whether it's Victoria Beckham, whether it's Valentino, Totem. They have a whole new assortment of goods out there that, frankly, perhaps if not for this change, you would not see those brands in Bloomingdale's. And you're seeing it in Bloomingdale's and in Nordstrom.
How much is this a pattern that you expect to be repeated? That we're going to see wholesale bankruptcies of some retailers that are not keeping up with the new product, while others, I'm thinking of Walmart or I'm thinking of Bloomingdale's, continue to gain share. It's sort of the big get bigger, can invest in technology, and you see wholesale bankruptcies on the other side.
Financial leverage is very important in order to keep the operations of a retailer running smoothly. You get into trouble with financial leverage, that's an issue. It always takes a lot to kill a retailer. They don't just die overnight. Take a look, for example, at Blockbuster from many years ago. And certainly we'll have to see what happens with that debt payment of Saks that's coming due very shortly. But certainly when one is weak, others can gain strength. And that's what you're seeing in Bloomingdale's and Nordstrom.
We talk about Bloomingdale's. Obviously, it's a great store. It's an iconic department store across the street here. But it's owned by Macy's. Mm-hmm. And that stock is down 30% this year. Mm-hmm. What's Macy's doing wrong that its Bloomingdale's is doing right?
I think overall, the bold new chapter strategy that the CEO of Macy's, Tony Spring, has put in place, they're making advancements. And you're seeing some change in Macy's also. You look this year at Macy's and what they've done, whether it's backstage with the off-price in their assortment, whether it's what they're doing with luxury, whether it's what they're doing with their own brands, and frankly, the store experience. The investments that they've made into the top 125, 150 stores is outperforming the core. And I think you're going to continue to see the assessment of the footprint of Macy's continue to be architected towards their best performing stores over time.
So you like Macy's? I mean, is this a buying opportunity then, this dip?
I think Macy's is an opportunity. I think when you think about next year and you frankly think about the enhancements that they've made to assortment, both in Macy's and Bloomingdale's, it's not expensive for where it is. And you look at the landscape of department stores that are public companies, it's Macy's, Kohl's, and Dillard's. Macy's has an opportunity on valuation to move higher.
Dana, do you think that early next year we're going to see pretty big price increases across the board for retail goods?
You're going to see more price increases coming, but keep in mind this innovation and newness that we have, you don't have a comparative. So we'll have to see what those prices look like. Consumers are cautious and discerning, but they'll buy what they don't have.
Dana Telsey, wonderful to see you. Thank you so much for being with us today. Happy New Year. Dana Telsey of Telsey Advisory Group. And just want to bring this to you. Evidently, Digital Bridge Group shares have been halted due to news pending. And Matt, this comes with the reports that potentially SoftBank is in discussions to buy this company.
Yeah, that's right. Bloomberg News reporting, according to people familiar, that we could get an announcement as soon as this morning. A more than $7 billion purchase from SoftBank. Of course, that's almost exactly what Masayoshi Son got when he sold his NVIDIA stake. So he said he cried tears at that loss, but now I guess he'll find some joy in buying Digital Bridge, which, interestingly enough, this used to be Colony Capital, right? This was Tom Barrick's shop, taken over by Mark Ganzi after Tom bought Mark's business.
More on that coming up. Tears of sadness turning into tears of joy, as Matt poetically put. Coming up, legendary investor and Berkshire Hathaway CEO Warren Buffett is retiring at the end of the year. We'll take a look back at how he changed investing forever. From New York, this is Bloomberg. Well, a soggy day. I know that Matt is hoping for Santa to come back and steal the day. Right now, not happening. What we are seeing is a little bit of softness, down 0.3% now on S&P futures, grinding lower as the session grows older and bringing along the Russell 2000 as well as the NASDAQ. Although the day is young and there aren't that many people at work, as Matt Miller has mentioned also several times. Euro gaining just a touch, or losing just a touch versus the dollar. The dollar gaining a little bit, 117.63. A bit into bonds, although less than earlier, down 1 basis point for 12% when you round up. And copper now up more than 2% after a rip-roaring rally. Focus very much on deals this morning. 1 hour away from the cash open, Guy Johnson has some really interesting morning movers. Guy, over to you.
Really interesting. Father Christmas definitely coming, Lisa, for Digital Bridge Group shareholders. Looks like the stock is now halted. Looks like we are going to get some news this morning. This was on a report that we heard earlier about the fact that there was advanced talks between SoftBank and Digital Bridge, which is a private equity company based out of New York, based out of Boca, based out of LA. It does data centers. As Matt was saying a little bit earlier on, remember that SoftBank sold out of NVIDIA to fund these kinds of acquisitions. We're now starting to see evidence of that. And the stock is up really strongly. Halted, as I say. We'll wait for that news maybe to come out a little bit later on in the morning. But the stock's certainly popping on the back of that. For one group of shareholders, Santa Claus is still very much in action. Let's talk about some of the other metals. You were mentioning copper just a moment ago, Lisa. Let's talk about silver. We've talked about some of the silver stocks. Look, I think you're going to see some volatility around some of these names. This is Majestic, First Majestic Silver. You're getting this in other stocks as well. This morning you're getting in some of the gold names too. The stock is down by 4 points. There's 4.3. What you've had is a big move up in silver. We're now down, let's call it circa 5% on silver this morning. It looks like the correlation between obviously what is happening in the physical market and what is happening in terms of the movers in some of these stocks is pretty well aligned. And you're getting a big drop this morning in some of these silver stocks, some of the gold names, some of these stories represented around the world. And as it is the season for stretchy pants, I thought we'd finish with Lululemon. Chip Wilson, the founder of Lululemon, launching a proxy fight. He wants to get a few seats on the board. He's looking for 3, I think. This is a Wall Street Journal story that's been reported in the last few minutes. The stock's not moving much on the back of it. We're down by around 0.2%. But after Christmas, Lululemon feels like an appropriate stock, maybe, that we should be looking at. Lisa, back to you.
Guy, thank you so much, although some would argue that stretchy pants are always in fashion, that maybe they should be used for other purposes as well. Meanwhile, I did want to mention this because as Guy was talking, we did get some breaking news that Digital Group will be acquired by SoftBank for $4 billion. This is a 15% premium from where it closed on December 26th. Digital Bridge will continue to be separately managed and will operate as a separately managed company. They are going to be bought for $16 per share in cash. This according to a statement, and we will wait for those shares to start trading once again, but largely expected, Matt. As we were reporting, Bloomberg reported, speaking to people familiar with the matter, this was the plan, possibly with that cash that Masayoshi Son got from selling his NVIDIA shares.
Yeah, that's right. He got, I just went back and looked, $5.83 billion for selling his shares in NVIDIA. He said that he actually cried when he made that sale. And now he's going to use almost all of that money for Digital Bridge. Although it's interesting, Digital Bridge shares in the pre-market were up at 1.54%. So this 15% premium is going to be a disappointment to some of the speculators that were active in the pre-market this morning.
Well, we will check back when the shares are resumed trading once more. In the meantime, we wanted to take a look back at one of the most legendary investors. Berkshire Hathaway CEO Warren Buffett is retiring at the end of this year. Here's how the Oracle of Omaha changed investing forever and what's next for the company he built.
If investors had a Hall of Fame, Warren Buffett would occupy his own wing.
People from all over the planet look up to him, read his biography, hop on a plane to go see him talk.
He took a failing textile mill and turned it into a $1 trillion conglomerate. It has insurance companies, Dairy Queen, railroads, and energy businesses.
For decades, Buffett's investment savvy has led Berkshire Hathaway to beat benchmarks.
One of the biggest asset managers today, which is Vanguard, the entire philosophy is no one's really going to be able to beat the market, so you might as well not even try. Well, okay, no one besides Warren Buffett.
If you look at the total returns, Berkshire blows the S&P 500 away.
The legendary investor Warren Buffett.
So when the 95-year-old announced he would retire at the end of 2025,
Greg should become the chief executive officer of the company.
It marked the end of an era at Berkshire Hathaway and left everyone with one massive question. Warren Buffett is one of the richest people on Earth, but his lifestyle doesn't exactly scream it.
He lives in Omaha. He lives in the same house he's lived for many years.
Stop waiting for the perfect time. Arrow.
The year, silver and gold regaining their
Arrow.
News when you want it with Bloomberg News Now. I'm Kara in Moscow. Stocks little changed at the open. This comes amid a lack of catalysts in the final trading days of the year. Silver and gold regaining their footing after a plunge from all-time highs. The S&P 500 little change. So is the Nasdaq. The Dow Jones Industrial Average down 0.2%. 10-year Treasury yield, it is at 4.12%. Gold is higher, up 1.2%. And spot silver higher as well, up 4.8%. Global equities remain on track for a third straight annual gain, with the MSCI's World Gauge up around 21% this year. Watching shares of Meta, they're up 0.6%. It's agreed to buy Manus, a popular Singapore-based artificial intelligence agent with Chinese roots. It's an effort to build a business around its massive AI investment. And we get more with Bloomberg Markets reporter Valerie Teitel.
Manus is essentially a Chinese tech company. It was hailed as the next DeepSeek. So really interesting to see a U.S. tech company acquire a company with Chinese roots and whether that becomes a flashpoint in U.S.-China relations.
And that's Bloomberg's Valerie Teitel. The deal values Manus at more than $2 billion, according to people familiar with the matter. We did get a look at the housing market this morning, with home price growth in the U.S. ticking up in October as cities in the Northeast outpaced Sun Belt metro areas. A national gauge of prices climbed 1.4% from a year earlier. That's according to data from S&P Cotality Case-Shiller. And that followed a 1.3% year-over-year increase for the index in September. Turning now to the war in Ukraine and new complications for President Trump and his efforts to reach a peace deal. Vladimir Putin said he would revise his country's negotiating position after the Russian leader claimed Ukrainian drones targeted his residence. Putin told Trump of his decision in a call yesterday, even as Kyiv cast the Russian allegations as a fabrication aimed at derailing the peace process. We get more on what this could mean for negotiations with Bloomberg's Greg Sullivan.
Now, in some ways, this doesn't necessarily change much because up until now, Russian President Vladimir Putin has shown very little willingness to back off his already maximalist demands, including for territory that he wants Ukraine to cede that his forces have not been able to militarily control yet. So while they are signaling that they are entrenching, toughening their position, the Kremlin spokesman today declined to say how exactly they would toughen that position. And already it's been a pretty tough negotiating stance with little sign that they are ready to make concessions to try to reach this agreement for a ceasefire.
And that's Bloomberg's Greg Sullivan. Saudi Arabia told the United Arab Emirates to withdraw its forces from Yemen and halt support for armed groups there, escalating tensions between the oil-rich allies over the conflict in the divided nation. The comments come after Saudi Arabia bombed Yemen's port city of Mukalla. This is after a weapons shipment from the United Arab Emirates arrived for separatist forces in the war-torn country. China has fired dozens of rockets into waters near Taiwan as part of its most expansive exercises in decades, testing President Trump's support for the self-ruled island after a major U.S. weapons sale. The People's Liberation Army conducted a second day of snap drills today, simulating a blockade of one of the world's busiest shipping lanes. President Trump has indicated that the U.S. has hit a dock facility along a shore as he wages a pressure campaign on Venezuela. Trump declined to say if the military or CIA was involved or where it occurred. We get more with Bloomberg's Kate Sullivan.
It's extremely notable given, this appears to be the first disclosed or known land strike on Venezuela. This is something that the president has been previewing for quite some time now, so it doesn't come as a complete surprise. But I think there were questions about whether this was just going to be posturing, when the president was talking about carrying out these land strikes on Venezuela. It's, of course, part of a larger pressure campaign on Maduro, on the Maduro regime.
And that's Bloomberg's Kate Sullivan. Iran's president has sought to appease protesters by pledging to revise planned tax increases, saying demonstrators have, quote, legitimate demands. His comments come in the wake of a collapse in the local currency to a record low, pushing up food prices in the Persian Gulf nation of about 92 million people. Eurostar has suspended all trains between London and Paris, Amsterdam, and Brussels due to a problem with the overhead power supply in the Channel Tunnel that connects France and the UK. President Trump is once again turning up the pressure on Fed Chair Jay Powell. He told reporters that he is a favorite to succeed Powell, but he won't name that person until next month. And we get more with Bloomberg's Tyler Kendall.
Well, when it comes to President Trump talking about his favorite to lead the Federal Reserve, he did say that he will announce him when the time is right, in his own words, though went on to indicate that we can't expect a decision within the next month. It comes as the White House is continuing interviews for the position. Bloomberg News has confirmed that President Trump will meet privately at Mar-a-Lago with BlackRock's Rick Reeder as we zero in on the top 4 candidates. Our reporting indicates that includes Reeder alongside current Fed Governor Christopher Waller, who interviewed with President Trump earlier this month, and then, of course, former Fed Governor Kevin Warsh and the NEC Director Kevin Hassett.
And that's Bloomberg's Tyler Kendall. Well, during a news conference yesterday, the president also mused that he might fire current Fed President Jerome Powell. He also said he was considering a gross incompetence lawsuit against Powell related to an ongoing renovation project. The domestic box office delivered tepid growth in 2025, with cinemas struggling to return to pre-pandemic sales. U.S. and Canadian theaters took in $8.76 billion this year through December 28th. It's an increase of 1.6% from 2024. That's according to researcher ComScore. And again, the S&P 500 is little change this morning. That's news when you want it with Bloomberg News Now. I'm Karen Moscow, and this is Bloomberg.
While Buffett has bet on technology in recent years, his misses on those opportunities will always sort of linger.
The change in leadership also risks reviving a long-standing debate.
A conglomerate is not a thing that has stuck around. We've seen many conglomerates, such as GE, fall apart in recent years and sort of be split up.
Buffett's presence at Berkshire won't be disappearing overnight.
He'll remain as chairman, and I think his influence will still be felt by the company. He's a major shareholder of the firm, and while he's slowly divesting that stake and giving it to his children's foundations, I think his legacy will long be felt.
But Abel will be taking over many of his duties, including the writing of Berkshire's annual letter to shareholders.
This is a big change because Buffett fans have been poring over that letter over the years because it's full of witticisms, investment advice, pearls of wisdom. There's also the fact that he's not going to be taking Q&A at the annual meeting next May in Omaha.
Morning. Welcome to Berkshire Hathaway.
He was talking for 4 to 5 hours every year and taking questions from people that follow him all over the planet. That is going to be a big change because Buffett's personality is unmatched in the investment world.
Shares of Berkshire Hathaway are up nearly 10% as Warren Buffett wraps up his final year as CEO of the company. Let's get you an update on stories elsewhere this morning. Here is your Bloomberg Brief with Yahira Anand. She'll be there in just 1 second as we parse through the breaking news of what just happened with Digital Bridge. Let's head over to Yahira right now.
Hi, Lisa. We start with Ukrainian President Volodymyr Zelensky saying he asked President Trump for U.S. security guarantees lasting as long as 50 years. Zelensky spoke to reporters after the two leaders met in Florida yesterday. Current proposals outline a 15-year security term with the possibility for extension. President Donald Trump says Ukraine and Russia are, quote, closer than ever before to a peace deal. Meanwhile, 2 helicopters crashed mid-air in New Jersey over the weekend. 1 person was killed and another was critically injured, according to authorities. The FAA saying the helicopters crashed moments after taking off from the Hamilton Municipal Airport. The FAA and NTSB are investigating the collision. And in sports, the New England Patriots have clinched the AFC East after a 5-touchdown performance from Drake May, edging out the Buffalo Bills, who lost to the Eagles. Elsewhere, the 49ers beat the Bears in a thrilling matchup among the NFC's top teams, with the number 1 seed still up for grabs. And the Pittsburgh Steelers and Baltimore Ravens will face off in a winner-take-all game next week for the division title after Pittsburgh lost to Cleveland 13-6. That's your Bloomberg Brief. Lisa.
Thank you so much, Yahira. Up next, setting you up for the day ahead. Plus, Veronica Clark of Citigroup expecting the unemployment rate to tick up in December. From New York, this is Bloomberg Surveillance.
In my mind, there's too much fascination with the Fed. We're a country that's driven by the private sector. The idea that we are like hanging on the thread by the Fed moving rates 25 basis points, it seems to me we've gotten out of whack. They're a lender of last resort. They're there to stabilize markets and price. But other than that, you shouldn't know they exist, quite frankly.
You don't worry about all this, hand-wringing of political interference with the Fed once that new position is.
The market will punish people if we don't have an independent Fed, and everybody knows that.
As Bank of America CEO Brian Moynihan over the weekend. Right now, it seems like the market is just softening, looking for that Santa Claus rally. Heading into year-end, just about 1% away from that 7,000 mark. What you are seeing softness in S&P futures. You are seeing a bit of a continued sell-off in small caps. Russell 2000 down 0.4% after being flat just a couple hours ago. NASDAQ down 0.7%. In the bond space, 2s, 10s, and 30s. You are seeing a bid across the board, including in the 30-year space, which hasn't seen love this year, stayed around the same level going back to earlier. Right now, we're seeing 2-year yields at 3.47% rounded up. That is down from 4.23% at the start of this year. I do want to just mention Digital Bridge. SoftBank has agreed to acquire the firm for $4 billion. It is a 15% premium to the close on December 26th. Those shares had been up, as Matt was mentioning, more than 50%. Now they are up about 10%. They have resumed trading. We will get you an update on that in a bit. Counting down to the opening bell, here's your trading diary for the week ahead. At 1 p.m. Eastern, President Donald Trump meeting with Israeli Prime Minister Benjamin Netanyahu. Tuesday, ADP employment data, Fed meeting minutes. Maybe we'll get some read on the January meeting. And on Wednesday, we get jobless claims. Thursday, everyone is off. Turning to some of the data we'll get to kick off the new year. Veronica Clark of Citi writing, we continue to expect another slight increase in the unemployment rate to 4.7% in December. Veronica joins us now. Veronica, thank you so much for being here.
Thanks for having me.
Happy holidays.
Happy
I'm just
holidays.
wondering from your perspective, how much the data that we got earlier this month was actually valid and that people are discounting it too much.
Yeah, I think there's a lot of that going on. And if we saw the unemployment rate next Friday, the first week back to work, if we saw that at something like 4.7, I think people will believe it a lot more because, there's a lot of issues with the November, October data. We don't know how much the government shutdown affected the measurement of those months. But December should be relatively clean. And if it stays pretty high, I think that's a more concerning sign for people.
How come this labor market is weak? I don't get it because you've got incredible earnings growth, right? So corporate America is doing very well, and there are no new people coming into this country, right? There's no immigration. The demographics trend, like everyone's old. There are no young people. Like it should be companies are fighting for employees.
Yeah. I mean, there's been this, issue of, is it labor supply? Is it labor demand? We've been dealing with this for a couple years now. Back in 2024, when we saw the unemployment rate increase, the excuse was also it's more immigration. I don't think we can use immigration to explain the bad data, different sides of immigration to explain bad data. But I think what's happened is that labor demand has just weakened more than labor supply. And that's why you've seen the unemployment rate rising. It's this low hiring, still low firing dynamic. But I would be worried that low hiring can only last for so long before maybe you do see some layoffs.
So is that because technology and AI have made the few employees that companies hold on to more productive?
I'm a little hesitant to conclude that that's what's happening now. That might be part of the story, absolutely, and we could see larger productivity gains from AI longer run. But this really started a couple years ago. This really started maybe summer of 2023 when we saw this pullback in hiring. And I do worry that it started in more rate-sensitive sectors like manufacturing, small businesses. The pullback has really been there. And so, it doesn't necessarily matter if equities are doing well and earnings are fine. Small businesses are going to be more rate-sensitive.
Are we bringing manufacturing back? I thought we were bringing manufacturing back, right?
We have been losing manufacturing jobs, I think, every month this year. But that predates this year also, and it is a rate-sensitive sector.
Well, this sort of speaks to the question of, is the Fed restrictive? And this is the big debate. Restrictive for who? Because on one hand, you do see companies filing for bankruptcy at the fastest clip going back to 2020. On the flip side, you see AI companies screaming ahead, Digital Bridge being purchased for $4 billion at a 15% premium. So can you square that?
Yeah, I mean, there's this bifurcation across all parts of the economy. I think there's a lot that has already been said about the K-shaped economy for consumers. Higher income consumers are spending, but we definitely see that in sectors also. And the smaller businesses who are more rate sensitive, I think rates are restrictive here.
So you expect a significant number of rate cuts. Let's just postulate that we do see an increase further in the unemployment rate to 4.7% as you expect. What does that mean for January 28th?
Yeah, I think they're going to be cutting.
Really?
Yeah, so we are penciling in another cut in January, another one in March. And it's just this kind of idea that you've clearly gotten more concerned on the labor market side of your mandate if the unemployment rate is something like 4.7 that we think we'll see in December. We will have hopefully more inflation data by March that we trust again, early 2026 data. If you're seeing inflation slowing and data that you believe again, and you're less concerned on the inflation side of the mandate, you're more concerned on employment, why wouldn't you be at the midpoint of neutral, which would be cuts in January and March to get you there?
The counter argument is if you get rate cuts, potentially 2 by the end of March, at the same time that you have the one big beautiful bill, the tax refunds, and potentially an additional $2,000 stimulus or whatever else might be coming down the pike, don't you risk reigniting inflation that never died?
Yeah, I'm not so concerned about that right now. The inflation driven by lower rates, more stimulative monetary policy, you would expect to see it first in a sector like housing, and you definitely don't see that yet. You don't see those signs yet. Home prices have been slowing. New rents have been slowing a lot. We already know that in the inflation data, there's this lag issue of shelter inflation. That's going to, I think, be slowing all of next year. All of the potential fiscal stimulus, maybe larger tax refunds, the business tax incentives that were part of the bill from the summer, those can help support growth. But I would worry that the main determinant of if people are spending or not is if they have a job and what their labor income is. And that we have seen slowing already. And you would think consumption would slow then, too.
Veronica Clark, thank you so much for being here and for holding down the fort for the economics team at Citigroup. Veronica Clark of Citigroup Global Markets. It is going to be interesting next year on January 8th, I believe, when we start to get the December data that people think is actually the clean data, how much it gut checks or confirms what we've already seen.
Yeah, I'm looking forward. I'm actually excited to get CPI because the last reading we got included some zeros from October. I'm not an economist, so I don't get why they did that. But it feels to me like we're still looking at inflation that's 50% above the Fed's 2% target. I haven't experienced the $2.82 gas prices that we keep hearing about.
Well, maybe you need to travel out west to Iowa or somewhere where there is a low gas price. What we are going to be speaking about tomorrow, we do get some ADP numbers, as well as, of course, the meeting minutes from the last Fed meeting. We'll be speaking with Kayla Sater of State Street, Mark Cabana of Bank of America Securities, Dana Doria of Investnet, and Chris Maher of Ocean First Financial from New York. This was Bloomberg Surveillance. Good morning.
You're being sold an AI future where you're obsolete or irrelevant. That vision is wrong. At Palantir, they're building AI that helps workers and unlocks their full potential. American workers are our nation's greatest strength. AI shouldn't eliminate them. It should elevate them. Palantir is here to tell their stories. From factories to hospitals, AI is freeing people from drudgery, letting them do what humans do best: create, solve, build. Palantir, making Americans irreplaceable.
Hey, Max Shafkin here. On the latest episode of Bloomberg's Everybody's Business, Stacey Vanek Smith and I have gathered the best and brightest of business podcasting. We're going to dissect the biggest stories of 2025.
That's right. We are talking with Odd Lot's Tracy Alloway, Felix Salmon of Slate Money, and Robert Smith of Planet Money.
But TikTok, to be clear, has been banned all year. Like, it is still banned.
It's a law. It is a law of the United States of America.
It was such a good time.
It was a good time. You can find Everybody's Business wherever you get your podcasts.
Bloomberg Audio Studios. Podcasts, radio, news.
Hello and welcome to another episode of the Odd Lots podcast. I'm Joe Weisenthal.
And I'm Tracy Alloway.
Tracy, I feel like I just do not have any feel right now on like the state of the consumer, really. I mean, you hear K-shaped economy, labor market slowing down, then it's like lowest layoffs in years. You go outside, everything looks booming. Like, I just have no feel right. I know consumer sentiment is terrible, but consumer sentiment is terrible for years, and people keep shopping. I have no sense of it right now.
Consumer sentiment actually came in higher than expected most recently.
True.
Big surprise. But I was going to say, are you not out shopping for Christmas presents?
It's insane, right?
Yeah, there's a lot of people buying a lot of stuff.
People buying a lot of stuff.
But I think this gets to the K-shaped economy point, which is if you have a cohort of wealthy people who are buying more, it more than offsets the lower income people who are buying less at lower prices. So it's really hard to tell.
It's really hard to tell. One thing that definitely feels different, if you look at aggregate measures of household balance sheets, like this is something that is very different than sort of like pre-great financial crisis. The general view is that the American consumer or the American household has a very big cushion. Yeah. There is a lot of home equity built up. That is not a thin layer. Obviously, anyone with money and any sort of investment account has done phenomenally well. We're recording this December 12th. Yesterday, I think the S&P 500 hit yet a new all-time high. So if you have any sort of home equity buildup, if you have any sort of investment, you're doing very well. On the other hand, of course, people are stretched from years of inflation. We know that hiring has slowed down. We know that, we see these headlines, delinquencies for cars have like shot up, but I've been seeing these headlines for years. I don't totally know what they mean or how apples to apples they are with the past. I just don't know. I'm very confused.
Yeah, you know what's really interesting to me, just from a financial perspective?
Yeah.
If you look at some of the bonds that were actually built on consumer loans, the weakest ones are now from the 2020 to 2022 period.
Oh, see, this is another interesting element of measures like delinquencies and why I sort of wonder how comparable they are because, okay, partly a delinquency measure is a snapshot of a moment in time, right? A snapshot of health. But it also inherently reflects something in the past because it reflects, what were lending standards at the time.
Right, exactly.
And so,
and that was a period of low interest rates. Everything was booming on Wall Street.
Everything was booming and stuff. Yeah, give money to anyone. Anyway, we need to get a better picture of exactly what's going on. How stressed is the consumer? How much do these delinquencies just reflect the profligacy of lenders during the boom times when rates were nothing, et cetera? And yes, we need to figure this out, especially we're in the middle of shopping season and all that stuff. So I'm very excited to say we really do have the perfect guest. We're going to be speaking with Ricard Bondebo. He is the Executive Vice President, Chief Strategy Officer, and Chief Economist at VantageScore, a credit scoring company. Ricard, thank you so much for coming on the podcast.
Thank you for having me. It's an honor.
What is VantageScore, a U.S. credit scoring company? What do you do there?
So we're the largest credit scoring company in the United States, and we were founded almost 20 years ago by the three credit bureaus, TransUnion, Equifax, and Experian. And we were sort of created with a very specific mission in mind to sort of drive greater competition in credit scoring. Prior to us, there really wasn't a lot of choice in this space. We were also there to drive more innovation and create the most predictive scores, which was a big ask from the banks at the time, and also to be able to expand access to millions to enable everyone who really is creditworthy to be able to get access to credit products.
You mentioned the banks just then. Can you expound a little bit more on your customer base?
Yeah, so we used, obviously, the primary use case that most people think about when it comes to credit scores is for lending, right? When, you're applying for a loan and they want to evaluate whether or not you're going to be able to perform on that loan, they'll often pull your credit score as part of that process. But it's used in many other stages as well. So, for instance, many people who are applying to rent in a new apartment building may also get asked for it when you are trying to get a utility bill.
Definitely in New York, you get asked for it.
Yes, you certainly do. And utility bills, telephones, anything that involves a long-term commitment on payments, generally now, you'll often get asked to provide your credit score.
So just explain further, you were started by whom 20 years ago?
We were a joint venture by Experian, Equifax, and TransUnion, the three national credit reporting agencies.
So what is the difference between these major companies that we've all heard of that provide a credit score, et cetera, that they founded you? What do you do differently than them?
Well, so what they do is they're the ones who collect all this data from lenders and others on your credit performance, right? So they're called credit bureaus. They collect that. They're highly regulated. But then most lenders can't just make sense of all of that data on its own. They need some guidance to help to translate that into, well, what does that mean? Right? And so that's where a scoring algorithm comes into effect, right? And so the scoring algorithm helps to take in all these hundreds of different factors about you to try to then determine what does that mean about your propensity to pay.
You mentioned predictive analysis as well. What exactly is that and what's that based on?
Well, so when credit scores are created, right, the goal is to try to evaluate what is the likelihood of somebody's going to default on a payment over the next 24 months. So when you see that score, the score is actually a translation of a probability, right, or an odds, right, to evaluate what is that risk.
And how did we end up with the system of FICO scores in the U.S.? Because it has an interesting history.
Well, back in the day, Fair Isaac, they created the first sort of known credit score. They were the first ones to realize that there was
Is that what the FI on Fair Isaac? Is that FICO? Does it stand for
Yes.
Fair? Oh, okay.
Yes. And so let's go back a bit, right? So in the old days, lending was not necessarily the most fair system that there was, right? When I call up your previous employer, they may call your landlord. They may just ask around. And if they don't know anything about you, there was a lot of judgment involved in lending decisions.
A lot of racial discrimination as well.
Well, that certainly was built into that system, right? And so then there was a law created, the Fair Credit Reporting Act, that said, you can't do that. You need a better system that is fair and that is a better quantitative ability to assess people's risk, right? And that created then this need to be able to consolidate all this quantitative information in a way that lenders could easily use it. So FICO was the first, Fair Isaac at the time was the first to create that, and they did very well doing so. But then there was a need for competition, innovation, and there was a lot of frustration around the time of 20 years ago that there was only one game in town, and it didn't score about 20% of the US population. It still doesn't. And then a lot of lenders felt frustrated. Like, if it doesn't work for 20% of the population, there's a problem. We need something different. And so then bureaus took the unusual step of actually coming together to create an alternative, and that became VantageScore.
Interesting.
Can I, as a consumer, go credit score shopping?
So first of all, there's different ways to use it, right? So a lender will typically choose the credit score that they're going to use for being able to underwrite a loan with you. And often, they'll use many more factors than just a simple credit score, right? Particularly the more sophisticated ones. However, when you're trying to understand what your situation is, there are lots of different places you can go. You can either go to the credit bureaus, you can go to the likes of Credit Karma. There are many different services out there.
But I can't force the lender to look at a specific
Don't look
score.
at that score.
Yeah, look at this one over here. It's great.
Get a second opinion.
No, I'm afraid not. That's not how it works. It's really, the lenders try to determine what is the most appropriate score for their product. And there are many, many different scores out there. There's scores that are, in some cases, built specifically for types of products like auto loans. And there are other scores that, like our scores, that are generic that can be used for any type of product.
So you collect more data, and you mentioned that there is this wide swath of the population that wasn't being captured by the credit bureaus. What do you do additionally on top of them to expand the pool, find potentially credit-worthy borrowers that they had been missing before?
So the thing is that the quality and the types of data that's been collected by the credit bureaus has improved significantly over time.
Okay.
And so when we started creating our algorithms, we're in, the current version that's now being adopted for mortgage is the version 4. We're releasing version 5 this year. We actually go and rewrite the whole thing each time, so that each time we can come up with the most accurate way based on the current data that's available and our current ability to understand how consumers are behaving, because that behavior changes over time. Other companies, what they've done is they built a model a long time ago. They don't like to necessarily reveal to everybody how it works, the secret sauce, right? So when you're seeing there's a chief risk officer and there's a new model coming along, either you want to understand that it's going to behave very similarly to the previous one to be okay with it, or you need a lot of transparency in how it works so you can get comfort in this new model. So I think there's the big divergence in strategy. We go back to Boots and redo everything from scratch each time, but in the same time provide an awful lot of transparency and a lot of tools so that lenders can get a really good understanding of exactly how this is going to work and how it's going to behave in different situations, and they can test it out, right? Whereas the other one is still working with many limitations that have been in place since the very first models. And because of those limitations, that's a big difference in why we score a lot more people. So I'll give you a very concrete example.
Sure,
for instance, one of the limitations that the others have is that if you haven't had any credit activity for the past 6 months, that you're not going to get a score. So you can just imagine somebody that works for the military, has been deployed overseas or anything else, right? But the good thing is, starting about 15 years ago, the bureaus started collecting and storing data so we could use time series data, because who'd have thought that time series data could be useful in prediction, right? Completely strange idea, right? So with VantageScore 4, we started using trended data, time series data. And with that, obviously, we can see back 24 months. So yes, if there's a gap in 6 months of history, it's important, but we're still able to see what happened before then, right? And that gets rid of tens of millions of people when you have that constraint. There are other constraints in there too. So people that are new to credit, so if they haven't had a full 6 months of history, again, they won't get scored. If they aren't any trade lines, they won't get scored, right? And so what we've been able to do is to deal with those constraints in a different way by A, using time series data, B, using some other data points. So we were the first to use utility payments and rent. I mean, who'd have thought that your ability to pay your rent could somehow, again, be useful in trying to assess your risk, right? And so including those new different types of data, realizing that these constraints can be changed now that you have time series data. But then also, guess what? Math has evolved as well, okay? And so what we realized too was that you can be really smart and use some new methods like, some AI methods, for instance, like clustering, to really understand, well, look, here's a group of people and they behave in a certain way. And by doing that in a better way, we can then figure out what is the best way to measure this group of people here versus this group of people here. And doing that well enables you to build much more predictive scores. And so that's an important nuance too, that not a lot of people always realize, is that it's not one formula that's calculating everybody's score. People will get, depending on what their credit file looks like and their history looks like, they'll get divided into different segments, and then each segment is scored according to that. And that, again, increases the ability to score people accurately and score
Selling you a future where you're obsolete, or worse, identical. At Palantir, they're witnessing something different and revolutionary. From reindustrializing the nation's defense base to shipyard workers building faster and frontline workers boosting productivity, AI is transforming work across the nation. AI is not replacing American workers or flattening them into conformity. It's unleashing what makes each one irreplaceable: their judgment, their craft, their creativity. When American workers become more powerfully themselves, they own the future. Palantir, making Americans irreplaceable.
Hi, I'm Zing Sing. And I'm Simon Jack. And together we host Good Bad Billionaire, the podcast exploring how some of the world's richest people made their fortunes. And we are back with a brand new season of Billionaires. Yes, movie megastar Arnold Schwarzenegger, America's richest self-made businesswoman Diane Hendricks, and co-founder of Snapchat, Evan Spiegel, to name just a few. And we're asking you to decide if they're good, bad, or just another billionaire. Good Bad Billionaire from the BBC World Service. Listen on bbc.com or wherever you get your podcasts.
How do the models deal with breaks in previous consumer patterns? Because we have seen some major ones in recent years. So after the pandemic, we had a phenomenally tight labor market, and we saw a lot of wage growth for lower income, a lot of spending that was sort of unprecedented in many ways. How do models actually incorporate that sort of big shift in the trend?
So I think that's something really important to try to understand, and it's not easily understood by many. So give me a second here. I'll try to break this down.
When people say, give me a second, I have to break this down, please break it down.
You can have a minute.
Yeah, you can have a minute.
Honestly, that's kind of what I enjoy most about listening to your podcast.
Yeah.
And so, look, the first thing to understand is that this credit score is not an absolute measure of risk. It's a relative measure of risk. Let me break that down for you, right? So what it means is that a score, if somebody has a score of 720 in 1 month and then somebody else has a score of 720 3 years later, the risk will be different. And the reason for that is very deliberate. When we are evaluating a person, right, because of the laws of the Fair Credit Reporting Act, right, we're allowed to look at the things that are about you. But there are things that are going on at the same time in the economy that impact risk of the population as a whole, right? So that's why it's so important when you're looking at things like credit scores to understand when was that score pulled, right? Because the score of 720 in 2017 had a very different characteristic of a score of 720 in 2022. Okay. Now, but the thing to bear in mind is it's an excellent relative measure of risk. So at any one given point in time, somebody with a 720 is going to be much better performing than somebody at 630. And at the same time, somebody at 840 is going to be much better than both of them. Okay. And that holds consistently true. And so that's why it's very important to include when you're making lending decisions. But lenders have to be thoughtful, right? They have to, as they're making decisions about how many people they want to be able to underwrite and how to think about risk, they need to also start thinking about these external factors as well so that they can then set their underwriting criteria to meet the kind of level of risk that they're willing to take on.
I had never thought about this, but of course that makes so much sense. So it's like I could have an excellent credit history, I could have ex-employment, pay all my rent. But for example, if the economy is going down the tubes, I may still yet be a risky credit because I may lose my job at some point. And so this idea that it kind of has to be relative because the underlying conditions that affect everyone, they're outside of our control, but they are still important from the perspective of the lender.
Exactly. And at the same time, if you get declined for a credit card, you can't be told that the reason you're getting declined is because unemployment has hit 5%.
Okay.
Right? That doesn't work. The laws are very specific. The reasons for why you're not getting the top score have to be explained, and they have to be based on attributes and data, obviously, that are specific to you.
What's the most important external factor when it comes to credit scoring? Because I've heard arguments for, obviously, the labor market, the unemployment rate, but also wage income and therefore real disposable income. How do you weight those different factors?
I think if you're a lender, it's going to really depend upon what types of consumers you're lending to, right? Particularly now, we're seeing such divergence across consumers in terms of who's doing well and who isn't. And so, for instance, if you are a lender focused on people that are kind of below prime, let's say that not completely subprime, but that near prime group, and you're focusing on auto loans, and you're in regions like Texas or in certain areas, then obviously understanding the economic conditions that are affecting those people, like a lot of those people would be working in certain types of industries. What is employment like in those types of industries, right? Or is it people that are in the gig economy, right? And so it is quite nuanced. It's not necessarily one thing, and it's going to depend. Whereas on the other extreme, if you're handing out black cards and your audience is incredibly affluent, then again, it's less about the risk, because at that point, your risk of default is probably 1 in 10,000. So they're just trying to make sure that it is absolutely risk-free.
Right. So someone in a highly cyclical industry, like, I don't know, truck drivers in Texas or something that were taking out auto loans would probably be seen as riskier, or the labor market would depend more for them. Whereas if you're taking out a black Amex card or something like that, probably real disposable income.
Yeah.
Okay.
So you mentioned different segmentation. People talk about this K-shaped economy. Is that real, or is that a meme?
I absolutely believe so, but I think that it's a little bit more nuanced.
Okay, good.
And so, one of the things that we spotted late last year and we're tracking into this year was that we weren't the first to see that it was a K-shaped economy, but a lot of people were making the assumption that the K-shaped economy was being driven by income levels. But when we were looking at the data at the time, we were seeing that those that were in sort of the higher income level, in our case, that's 150,000 above. So that's not your, people who are running hedge funds and et cetera, and, but still it's the relatively better to do cohort. They were actually seeing the highest year-over-year increases in delinquency rates at the time. So we knew that, okay, hold on a second, it isn't as simple as this. So, we spent a lot of time and sort of a lot of banks, and we kind of collaborated with them to try to understand what's really then the differentiator. And then what seemed to be really a part of this is wealth. So, a lot of people don't necessarily differentiate income and wealth, but they are separate. Yeah. And so, when you're looking then at a high income cohort at the time to try to see like, okay, well, which ones are doing well and which ones weren't, home ownership was the biggest differentiator because they had a bigger cushion, something they can rely on. And then obviously other aspects as well, like stock ownership and small business ownership, et cetera. But home ownership is the one that has the bigger effect because there's more people in the US economy that own a home than let's say, has a stock portfolio.
Wait, talk more about mortgage rates, because this feels pretty key when you're talking about the K-shaped economy, which is if anyone who bought their house before 2020 is probably a very lucky person and has locked in a low mortgage rate. I think mortgage rates are still, even after the rate cut, we're at like 6% or something versus, I think at one point they got down to like 3% right after the pandemic.
People like 2.5% mortgage. It's crazy.
Yeah. And so if you bought a house then, you actually have this like massive cushion, as you put it, versus someone who's buying a house now or in the past couple of years.
In a way, I see there's a bit of a silver lining when it comes to housing, right? We have seen rates come down this week. No, hopefully, they will continue to come down next year. There's a lot of debate, obviously, even within the Federal Reserve as to exactly the speed at which that's going to be accomplished. And obviously, there are many other factors that can impact that. But the reason we see a silver lining is for two reasons. Okay, as interest rates comes down, obviously, for people that own homes, that's their biggest monthly payment. Right now, there isn't much point for many to refinance given that where the interest rates are. But if it comes down a bit more, it'll make much more sense for a large tranche of homeowners that have higher interest rates to be able to make that switch. So we'd expect a bit of a refinancing boom as it hits a certain level. But the other thing that's really exciting about what's happening in the homeownership space is that this year, the FHFA changed the rules about what credit scores can be used in mortgage. So historically, they've used a very old version that's from the 90s of the classic score in mortgage applications. And that was actually not deliberately done so. It was just that it got written into the rules. And then since then, as a recommendation, but then it became kind of the de facto a monopoly in that space. And the problem is that's a model that went through the last crisis. And the Federal Reserve of St. Louis actually found that it didn't work well at all in that situation. In fact, it saw a bigger rate of increase in delinquencies amongst those that were prime than it did amongst those that were subprime. So the rate of increase, which is not how a model's supposed to work, surprisingly, right? And so what's happening now is that they have allowed for VantageScore 4 to be used. And the reason I say that is that it's A, because as I mentioned before, a lot more people will now have the ability to get access to home ownership. So that will create a bit more demand. Okay. Right? Which is great. And the other thing to think about too is who are these people that get access to this, right? It's a lot of people that are not necessarily in the areas that have been so crazy with house price increases, right? There are a lot of rural communities. Like, so if you look at the state where there's the biggest difference between scoreable people with the new score, it's actually West Virginia. Huh. And so those economies could certainly do really well from a change to more people having home ownership. And then the second thing too is obviously RMBS is really important. Had some challenges back in 2008, 2009, right? And so having a better performing
challenges
model.
Is a very modest way of putting it.
I heard about those challenges.
Yeah.
I think they came up a couple of times.
I was educated in the UK, pardon me. We have a tendency to understate things. But so, having a newer, more proven model, one that's, worked so well in credit card and other things for the past 8 years. It's become the most used model in many other segments. So having a proven model that's newer and more predictive, it should help as well with reducing the systemic risk in the RMBS market.
Just to go back very quickly, because it sounded important. Can you just clarify a little bit more? What is this rule change such that could unlock additional source of demand here?
Okay, so when a bank before wanted to submit loans to Fannie Mae and Freddie Mac, they could only submit those loans using the FICO Classic score. Okay, which is actually 3 different scores. We'll go into that another point, but anyway. And there used to be like a cutoff that if you didn't have 620, then you couldn't be able to submit it. You could go to an FHA loan, but those are more expensive, right? But you couldn't necessarily get a normal conforming loan that goes to Fannie Mae or Freddie Mac. So that's now changed. First of all, that minimum limit of FICO has been removed, and now they are just updating all the pipes to allow them to use VantageScore as a choice.
I see.
So now there'll be a choice. Lenders can choose which score they want to use, and they can make their own evaluations about which one performs better.
Okay, so let's go back to starting at the end of last year, and you saw that increase in delinquencies among people with decent incomes. Maybe they didn't have as much wealth. Talk to us about the numbers. How big were these numbers? How much did they catch people by surprise? And what is the story there about why there was this delinquency pressure?
Well, so the good thing is it's evolved a little bit since the end of last year. But, when we're looking at this data then, again, look, high-income earners, not surprisingly, have lower delinquency rates than middle-income earners and that had themselves lower delinquency rates than the lower income, right? But not a lot of people were looking at that kind of year-over-year trend and the momentum, right? I'm always looking at momentum because I'm trying to get an early read on kind of how things are developing. And so at the time, actually, let's go back a little bit because I think it can explain a little bit more about what's going on in the economy. Is that all right?
Please.
So when the pandemic happens, right, a lot of stimulus comes in, a lot of forbearance programs are put in place. And as a result of that, so many people's credit health and the way that they appear on the credit files improved dramatically. As they were paying down their credit cards, they were building up their savings. It was a good situation, temporary, but good. But then 2021, 22 starts creeping in, and we start seeing that, this is not a persistent situation. This was a one-off, right? And we started seeing delinquency rates starting to come up again, right? What we saw, which shouldn't be too surprising, particularly given that was when inflation was kicking in a big way, was that those that were initially impacted and who were showing the biggest rises were the lower income households, right? So for the first sort of 6 months, 9 months, that was the group that was seeing the biggest year-over-year increases. But then what we started seeing was that come 2023 forward, we actually started seeing that then the middle and higher income households were starting being impacted too. And that's probably related to the fact that lower income households had less disposable income, but they also had less savings put away so that, they're the first to feel the pain. But then when there's this consistent imbalance between your inflows and your outflows, right? Even if you have, 30,000 or 50,000 that's put away, that's going to start depleting. And that's what we started seeing happening, even with these higher income households, because at the same time, they were hit by so many pressures, right? Biggest rent increases I think we'd ever seen came into effect those few years after COVID, right? We saw things on, car prices, costs of auto financing going up through the roof, and then various other costs also went up substantially. And so it's not that higher income people were immune from this, right? Also, as an economist, a lot of people always talk about, hey, when inflation kicks in, it disproportionately impacts lower income households because the cost of bread, the cost of milk, etc. It's not like high income people buy milk that's 100 times more expensive, right? But the reality is if you look at people's big outlays, many of those actually scale with income. Rent, for instance, people that earn more tend to rent higher. Other big outlays such as childcare, education, and other things, they also have been scaling more with income. Now, obviously, there's a level of income that that does not apply to, but if we still talk about that cohort, 150 to 250 or so of household income, they're definitely seeing that they felt the pain too. It took them longer before it started impacting their delinquencies, but they did start feeling the pain. The good news, though, is that as we started looking at the second half of this year, right? So we still saw those delinquencies and high incomes rising very heavily at the beginning, the first half of this year. But since July, and I've got data from October, so of the 3 of the 4 months since July, we've seen that higher income households came down. So that's a good sign. And the reason I say that's a good sign is not because I'm a fan of making the K-shaped economy even more so, but the fact that so much of the U.S. economy is driven by spending. And you mentioned earlier that high-income households disproportionately impact that. And so if that dries up, that has a knock-on effect on the whole economy. So to the fact that we're seeing that cohort, that those delinquencies are starting to come down, I think they're
Your best way to get informed first thing in the morning, right in your podcast feed. Hi, I'm Karen Moscow.
And I'm Nathan Hager. Each morning, we're up early putting together the latest episode of Bloomberg Daybreak U.S. Edition. It's your daily 15-minute podcast on the latest in global news, politics, and international relations.
Listen to the Bloomberg Daybreak U.S. Edition podcast each morning for the stories that matter with the context you need.
Find us on Apple, Spotify, or anywhere you listen.
I always wondered, how useful are big shopping events like Black Friday or Christmas in terms of gauging consumer sentiment? So you always see the headlines. You certainly saw them this year, record Black Friday spending. But then you also see people break down that spending and say, well, actually, it's because everyone is so pressured. They really need the low prices, so they're buying everything now. How useful is something like that to you?
You can always see trends, right? And so from one perspective, it's always good to look at a number of different things, such as spending on Black Friday, Cyber Monday, etc., because there are nuances into how people have been spending for those weekends over 20 years. But still, if you look at the last 3 years, you can start to see things that are happening. But the thing that I haven't been able to get my head around is how much of that year-over-year increase in spending on the holidays is driven by the prices of the goods going up versus people buying things that would have traditionally been more expensive or splurging more. That, for me, isn't obvious. And I think that, again, when trying to understand how the economy is going, it's so important, if you're looking at it from a spending perspective, to actually look at the different merchants. Right? So how's McDonald's doing? What are the trends there? What's happening in high end? How is LVMH doing versus Walmart, etc.? Because again, even though I said that, there's a silver lining and that high income consumers are seeing declines, middle income have come down, but they're still increasing. And low income are staying persistently high, around 8% year over year increases in their delinquency rates. And so we're probably next year going to see more households struggling to make ends meet than we saw this year. I still don't think that there is, just looking at the trends, going to be any kind of major break point. But the thing to bear in mind with that, though, is that if you look at here, this situation, and you look at, for instance, JP Morgan published that, the amount of cash people have in their checking accounts is coming down. So it just means that there's more of a challenge if there's a big shock to the system at some point. Not that I can foresee any shock to the system, but it's always something to be a little bit wary of.
Before we go on, I want to go back to something you said very quickly. You said, okay, intuitively, people with higher incomes are going to have delinquencies at a lower rate than people with middle incomes, and they're going to have delinquencies at a lower rate than people with lower incomes. That's not intuitive to me, actually, because I would also imagine that underwriting is very different, et cetera. It's not obvious to me why higher income people default less than lower income people, because I would imagine lenders know their income and they're going to scrutinize the loan of a lower income person much more intensely, et cetera. So why should this trend exist, given that they don't get the same loan terms or same loan availability?
No, they don't. And, a high-income household will buy typically more expensive than a car than a low-income household will. But higher-income households tend to have more of an ability to squirrel some money away, or they tend to have other assets that
the lender knows that. The lender knows that the higher income household is going to have likely more savings, and the lender knows that the household that's in a very tight income probably has very little cushion in the form of what we call wealth. And so why doesn't that just get baked into the underwriting standards?
Well, in ways it does, right? And so, when you're underwriting a loan for, let's say, somebody who is high income and has a good credit history, your expectation of their default is going to be incredibly low, right?
Yeah.
So that's built into the pricing, and that's built into, and you obviously don't just look at a credit score, you look at what their income is and various other important metrics to be able to determine the appropriate amount that you will lend them, et cetera, right? But higher income consumers may not need to take on as much debt as a proportion to their income as lower income households to get through what they need to do, right? And so if you look at, for instance, a high income household, how much of their, even though, for instance, probably housing and car costs are some of the biggest outlays they have, proportionately, they're probably less than for lower income households, right? And so, a lot of it has to do with that proportionality, but then also just that, again, they will tend to have a bit more reserves so that they can ride through situations.
Talk to us about auto delinquencies. Those have been rising, and obviously there's a lot of lending going on. Again, Tracy mentioned the sort of 2020 to 2022 vintage. Car prices themselves are going up. So not only have the rates gone up, but we've seen a tremendous amount of auto inflation. So sort of stress at every level. We see the numbers going up. What do those tell us?
It's a fascinating story. There's been a lot of interest that was paid attention to auto loans because, suddenly in 2022, everybody started seeing these auto loan delinquencies going up much faster than other types of loan delinquencies. And it was having a profound effect, obviously, on auto lenders and the economy as a whole. And, everybody's trying to explain, well, you see, we got a bit too loose during the period of COVID and other things. And they started adjusting their lending criteria, right? So they did adjust their lending criteria around 2023 for most of them. But then we still saw that despite that, the delinquency rates kept persistently increasing. And then when we looked at the data, we actually saw that they had actually had an impact by adjusting their lending criteria. We saw that the delinquency rates among subprime auto loans reduced quite dramatically after that. So they did have that effect. But we saw that the delinquency rates on near prime and prime continued to go up, and that was what drove that increase. And so we realized there's something more going on here. And also, why is it's so different? So we went back a long time. We went back to 2010 to try to understand kind of what's been going on, because not many people look at it from that time scale, but it's actually quite fascinating because back in 2010, auto had the best performance of any loan product at the time. It was the least risky loan
This was
product.
always the narrative that Americans will never give up their cars. Even if they lose their job, they can sleep in their car and live in the car, which is very dystopian. But that's, I remember hearing that story literally from a banker who was actually working on bundling phone loans. And he was like,
that's the other thing, right? No one will ever give up their phone.
Give up their phone.
Yeah.
So at that time, it performed well, right? And people did not default as much on that as on other products. But then we've seen it has transitioned over that 15-year period to now, the first quarter of this year, it was the riskiest credit product out there.
Wow.
And it then subsequently, student loans started coming in, and that's another story. Those delinquency rates are at historic levels. But on the auto loan side, we then try to understand what's causing this, right? And so what we've seen was that there's a number of factors, some of them obvious, some of them a little bit more subtle, right? The average cost of a car has gone up an incredible amount. And what we're seeing is then the average loan value for auto loans has increased more than any other loan value. And that may sound like, okay, but if you think about it, mortgages tend to be the one that grows the most because house prices have appreciated so much over time. So the fact that the average auto loan has grown more than the average mortgage has over that 15-year period is telling, Okay. Secondly, obviously, there is this double whammy. So not only is the car more expensive, but then more recently, interest rates have been higher, right? And so, they're now going to have to pay more, not just for the principal, but also the interest. But I think one of the things that has caught many consumers off guard is, okay, so they're in the dealership, they're being shown some numbers. Some people get it and they go like, okay, yes, we can still do that. We can make it work. We can just about make and stretch, because also I think people are trying to buy either the same that they had before or slightly better. Right? Not many people like downgrading, okay? Mm-hmm. And so they think, well, it's the same car and yes, it's a little bit more, but we can make ends meet, right? By looking at these numbers. But what they often forget about is that insurance has gone up significantly, as have just the cost of ownership. Repair costs have also gone up substantially. And so when all those things then hit them, they can be in a situation where we just can't make it work. And so that's not good. And the key piece of this too is, look, the good thing is of all the loan products, mortgages are performing pretty well. Okay, they are increasing, but they're still much, much lower than they were back in 2010, and obviously much lower than 28, 29. But if you default on a mortgage, it takes some time before anything really happens, right? With an auto loan, they will come and they will take that car away from you. And given that, so many people rely on that car to go to their job, to make their income, to do other tasks that are important, like their shopping or taking their children to the school or other things that they need to do, people don't willingly just default on these auto loans. And so I think it is a sign that correlates with the fact that, more households are struggling to make ends meet.
How much insight do you have into leverage? And the reason I ask is because we've seen an explosion in buy now, pay later programs. Virtually every site you go to now has 3 different options for getting a loan for a small amount. And only a few of those, my understanding is, are actually reporting to the credit bureaus. And I can also imagine if you're a lower income person who is perhaps more pressured, you're probably going to turn to a family member and say something like, hey, can you loan me, $500 to make it to the end of the month? And there's no way that credit scoring bureaus are going to have insight into things like that, informal loans.
The credit data that comes from the credit bureaus is still incredibly predictive and useful.